futures pointing to losses of around 45 points right now, pointing lower by 0.4%. Over in Germany, the DAX looking potentially to lose around 81 points, pointing lower by 0.3%. So yes, after 2 days of gains, a little bit more caution across the European equity space this morning, Anna.
Yeah, absolutely. Let's check in on some of the individual stocks that could be on the move then this morning. Charlie Wells giving us a bit of a heads up on some of these a little earlier. Let's start with Euronext. We spoke to the boss of Euronext, sounding pretty buoyant and bullish about the volumes going through right now in the trading business and the stock trading business. Interesting to see that investors seem to be impressed on the revenue side, but also on the cost side. So that's one that we'll be watching. Marks & Spencer, M&S also in focus as they continue to beat a path back to recovery after that cyber attack knocked them off course last year. So we'll watch to see what that does to the share price. They're expecting profits to bounce back to the growth seen before the attack. So that's of interest to investors. And also Lanxess, as Charlie was telling us, that we are watching that one. Evonik, Brenntag upgraded, Lanxess downgraded at Jefferies. So that's an area of focus for the markets. The shares in Lanxess have rallied strongly. So we'll see what this one does this morning. Guy.
Okay, let's talk about where we go with this market open, give you an idea of what is exactly happening. We're expecting a slight softening when it comes to European equities this morning at the get-go of trade. Let's show you some actual numbers. The FTSE 100 down by a touch, 0.1%. Basically, this is going to be the picture. I think it's kind of 1/2% across most of Europe this morning. The sector breakdown story could be quite interesting. It's taking a little while to get everything going. I've got the stock 600 down by 1/10%, the FTSE down by 1/10%. That's all I've got at the moment, to be honest. So I'm going to hand things over to Tom. What do you got?
Brilliant. Thanks, Guy. Yeah, top of the list right now, tech. That sector is performing relatively well. So far, up 0.4%. It's now moved. It's basic resources that's top of the list. Tech is still in positive territory, but right now it's basic resources up 0.8%. That's your top gainer right now across your sectors. Just 4 sectors in positive territory right now. Basic resources, energy, utilities, and tech. On the downside, the biggest losses coming through media. Interestingly, that sector's performed relatively well this week, down 1.7% right now. So biggest losses for media, biggest gains right now for basic resources, currently up 0.9%. I mentioned the silver price. That is no doubt a factor, which is up about 2% on silver in the session today, Anna.
Yeah, just digging into the media sector and seeing what's on the move there. It's pretty broad, actually. So many of them in negative territory. ITV, WPP, Pearson. I think there's an ex-div on 1 or 2 in that sector, so we'll leave that one. Gilts, let's have a look at where we are on the gilts market then. We have, of course, got the inflation data out this morning, and we saw that came in a little lower than had been anticipated. We saw the labour market data a little weaker than expected yesterday. So all of that added up to a reassessment of how many hikes we'll get from the Bank of England. And traders duly took down their expectation of hikes this morning. And so that feeds into the gilt market with a drop at the 10-year horizon of around 6 basis points. They're actually fairly sizable. We are seeing that is in keeping with the rest of Europe. That is the direction of travel we're seeing for the rest of the European market, bond market space, but a little bit more pronounced than the move we see elsewhere, Guy.
Okay. Let's talk a little bit about what is happening as a result of all of this. Joining us now, Freddie Lake, Managing Partner over at Latitude Investment Management. I'll just be reading through some of the details of what you've got in the portfolio right now. How's it doing?
It's doing all right.
Yeah?
I think the main things is we didn't have any software earlier in the year, so avoided that.
That's a good thing.
Yeah, exactly.
Don't
have any tech hardware, so we've avoided that rally too.
Excellent, well
done. But we're sort of carving through as our clients hopefully expect us to.
So what are you doing? Are you changing the portfolio? How are you adapting? We seem to be moving into a world of higher yields. How does that change your outlook on what happens here? Do you feel the need to get involved in the tech hardware story? Do you think that's got legs? How are you thinking about what you do next?
So we've made very few changes this year. We bought Kroger shares in the US, which is hardly the most exciting thing to talk about. But other than that, nothing done in the portfolio in 6 months. In terms of the tech hardware, no. I mean, the music's playing at the moment. The few people are spending extraordinary amounts of money. It might work, but I think the prices are pricing in a very, very positive outcome for those sort of companies.
They're trading on decent multiples, aren't they? Aren't some of these stocks looking like
the
earnings are good?
Decent multiples of current earnings. Yeah. Earnings estimates being 2, 3, 4 times higher than they were a year and a half ago. And the point is, do you want to capitalise that level? Are they going to earn 2, 3, 4 times more money forever? In which case their share price, as the discounted sum of cash flows should be 4 times higher. Or is this a demand cyclical build? And I'm firmly in that camp.
You're firmly in the camp that this is cyclical, it will roll over. And you keep a more defensive portfolio. And part of that is reflects, you mentioned Kroger, so there are retailers in there, aren't there, Freddie? And let's talk about, you've got Tesco as well. And I wonder, with that in mind, your exposure to the UK grocery space, I wonder what you think about the fact that we've seen Rachel Reeves, the Treasury, consulting with the industry, talking about whether there might be the appetite to bring in voluntary caps on certain basic products. What do we think about this?
Well, I can imagine how those consultations went. I think it's ludicrous. I don't think it's a workable policy. These, companies make very, very thin margins. It's one of the most competitive sectors in our whole economy, and it is one of the most competitive grocery markets in the whole world. So prices are as low as they can be physically delivered. So if you try to cap the price of any goods within that space, you're going to have unintended consequences, whether that's on the farmers and producers and suppliers, or whether that's on other prices elsewhere.
So these are not high-margin businesses, as you point out, but the political realities mean that this is the path the government is sort of looking at. Is it deliverable? Might supermarkets have to give ground on something else?
Well, I don't think it's workable because, if you make a sort of 3% margin as a system and many make less than that, how much of that can you eat into before I have to take the money from somewhere else or fire people or do something else which is going to have negative consequences? So I think it's the wrong fight to pick.
Are you worried about the consumer right now?
Broadly so, yes. Particularly in the US, where it's gone from quite bullish consumer down over the last 3 or 4 years, and that's been really notable, and not just in the bottom sort of quartile, say, but going into the middle consumers as well. It's really weakening the consumption around discretionary goods in the US. In the UK and Europe, it never really got that good, so it's still quite bad, but the delta hasn't been changing so much. But it's one of the reasons we prefer things like, staple retailers, grocery retailers, which would be a net beneficiary of consumption weakness because people eating out go back to grocery, people getting delivery go back to grocery, things like that.
There's a bit of a reprieve in the bond markets today. Gilts are performing relatively well on the back of slightly softer inflation data. We'll see if that's short-lived or not. How close? When do higher yields become a problem for your equity holdings?
So we are very deliberately positioned in the more value end. Our portfolio is trading on 13.5 times earnings, and the less expensive your shares are, the less the share prices tend to be impacted by higher yields, just from a price perspective. Within the businesses, we buy very indebted by businesses, so they're not leveraged, so they don't have high interest payments in general. A couple do. And then we have some financial businesses that will be net beneficiaries of higher yields, like JP Morgan, things like that. So we think higher yields will actually be a positive overall for our portfolio, but we wait and see.
Despite the fact that you've got quite a lot in short-dated bond markets, it sounds like you're almost painting a sort of slightly deflationary picture. Is that what you're setting yourself up for here? You got lots of the portfolio in short at the front end of the curve?
Yeah.
Why?
The reason is, it's basically been a flat yield curve for quite a few years now.
Yep.
So you're not really getting paid any kind of premium to taking that duration risk.
Yep.
And when I look at the economy and think, what could be the next big issue? It is government debt. It is fiscal balances. It is, not being able to pay our bills. And when you pick on all the countries around the world who it might fall more on, I think the UK is quite squarely in the, high up that list. So taking on duration risk when the cause of the problem, as we've seen in the last few days, could be whipping higher bond yields, doesn't make any rational sense to me when you can get paid. I think we're getting 4.8 on average in our short-dated bonds. So
is there a risk to the upside? Is there a risk that we get an inflationary surge and you get a crisis and that basically forces the Bank of England to hike?
Yes.
You're not positioned for that?
Well, if we were in the longer dated stuff, we'd lose money.
Even more, yeah.
Whereas we're in 6-month bonds.
Right.
So they won't move on a change in rates.
Okay.
They're very short dated.
It's
always cash-like.
Right. So that's almost cash. That's not a 2-year.
No, we're not really in that sort of stuff. We're very, very short.
And you're in US stocks quite a lot, not the tech names. So how are those performing when so much of the conversation is all around those big tech names? You talked about Kroger, but what does the rest of the US portfolio look like, especially when you've got more big tech listings coming?
Yeah. I mean, if I'm honest, so far this year it's been relatively anemic. Some of the stocks are doing well. I mean, in terms of the businesses, the average of our portfolio is growing 15-16% a year over the last year through Q1 reported earnings. Estimates for the next few years look the same. So the operations of the business are are exactly in line with the last 5 or 10 years. And we do expect share prices to perform in line with that over time. But everyone's ignoring it at the moment. I mean, the drumbeat of AI and hardware and chasing memory stocks and all the suppliers
and big listings coming, does that mean that everyone's even more distracted and the oxygen gets sucked out of all of those conversations that you're talking about there?
Yeah, in the short term, and I think while the music's playing, that might continue. But it can't continue forever. And, you know, we're starting to see signs of life in the portfolio even in the last couple of days, you know.
Freddie, I want to ask you about an idea that maybe seems pretty far-flung right now, which is that there is a resolution to Iran and that Strait of Hormuz reopens. Would you change? How would you position for that scenario?
So we probably wouldn't make any changes around that either. You know, we feel we're relatively sort of neutral to that. We do own Shell, so that's been a marginal beneficiary. But as you've probably talked about, you know, the energy stocks have hardly rallied. I mean, it's up 25% this year. Oil's up 100. So it's not expecting oil prices to stay higher forever. And is that because there's a short-term benefit?
Oh, don't expect it to stay there. I was wondering if it's, you know, there's a short-term benefit, but actually there's demand destruction perhaps lies at the other end of this.
It could be. I mean, the way I've read it, and who knows what the market's thinking, but is that, you know, people are expecting higher oil prices for 3 to 6 months, but then it will fade. So it's a sort of one-off bump, which it will be to the P&L, but not something you capitalise. So unlike higher earnings in AI, where you're capitalising 3 or 4 times in your PEs, in energy they're not. But other than that, I don't think we have huge exposure, positively or negatively.
Come back to the portfolio structure. Effectively, a large chunk of your portfolio is in cash.
In the Horizon Fund, yeah.
Yeah, in the Horizon Fund. Would you... Is that deliberate? Are you waiting for an opportunity? Is this the sort of the Warren Buffett in you, waiting for something to happen?
I hope there's a little bit of Warren Buffett in me. No, that fund is for lower risk clients, so it's kind of always got half in non-equities.
Are you positioned more broadly there? Are you waiting for an opportunity?
No, within equities we're seeing extraordinary opportunity. Already, yeah, right now. So, you know, we are very keenly writing to our clients, talking to them about the Global Fund, which is 100% invested in stocks, saying this feels like as opportune a time to be investing in these sorts of businesses as we've seen in the last 10 years. So I'm quite bullish on large swathes of the stock market and broadly the market in general. But I think the dominance of the tech hardware story, the size, the scale, and the overpricing, in my opinion, that's the risk to the market. But underneath it, it looks very healthy.
Okay. Nice to see you. Thanks for stopping by to see us. Always appreciate it. Very late, managing partner at Latitude Investment Management. Let's take a quick look at the Core 6 and see what is happening there, just to get an idea of what is going on. As you can see, fairly mixed picture. Defence stocks on the front foot. Actually, ASML is having a fairly good day. Nestle is a little softer. Keep an eye on Perrier and what's going on there. LVMH and Novo Nordisk are both softer as well. Let's deal with the details of what is happening. Charlie Wells is here.
Good morning, Guy. Let's kick it off with Marks & Spencer because they're in the green this morning, up some 2.5% this morning on the back of a strong earnings report with indication that they see growth ahead. Now, this was crucial for Marks & Spencer because they have spent the past year recovering from a devastating cyber attack, and they've really been trying to move from the story of recovery to one of growth. Now, analysts have been questioning this kind of flip in the narrative, but it's looking like the market, at least right now, is liking what it's seeing there. And this is really interesting too, because we've seen a number of UK and European consumer companies actually report stronger than expected numbers. And there's been a lot of concern about the economic uncertainty, a lot of this stemming from that conflict in the Middle East. But right now, a lot of these consumer companies looking strong and the market liking what it's seeing. But let's flip and take a look at an opposite narrative, because we have H&M down this morning, well over 1%. Now, again, this is a company that really has been struggling with margins. We saw some warnings from a number of analysts talking about the path for this company as they face intense competition and, again, that consumer story. So we're getting sort of conflicting stories from some of these consumer names that are performing well and then others like H&M that are really struggling. So the market trying to kind of parse through some of these numbers. Euronext, now they had a strong earnings report. They beat expectations. Volatility has really helped this company. They also saw a boost from the Greek market and ETFs. And the market this morning liking what it's seeing here for Euronext Euronext, really getting that boost from volatility as we've seen so much trading up 6.5%. Experian, let's bring that up too, because they met expectations. They had something of a mixed earnings report. Market not liking that, right? Down in the red this morning. Experian, no, again, a challenge there for this company because of that earnings report. They even announced a $1 billion share buyback, but in the red this morning. Let's end on chips, right? This is the story of the day. We've seen so much interest here. We're in the green, right? They had a bad day yesterday, but we're starting positive here. ASML up, Infineon up, and a number of the other major players up. But let's see how the day unfolds, right? Because we saw a lot of volatility yesterday. We saw a dip and then an increase in some of the indices. So again, chips are going to be in focus throughout the day this morning ahead of NVIDIA earnings.
Absolutely. Charlie Wells, thank you very much indeed on some of the individual stocks on the move this morning. Coming up, this is Guy Johnson's favourite story. Bloomberg understanding the UK Chancellor has privately proposed voluntary price freezes on some grocery prices. We'll have more on that story next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets. So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics. Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Welcome back to the opening trade. 17 minutes into Wednesday, the 20th of May's trading session. And European equity markets, yes, they're a little weaker, but not at all as weak as the futures picture had been suggesting. Maybe the FTSE 100 is, but that's down around 0.4%. But elsewhere, we see a pretty flat performance coming through on the CAC and the DAX, and the AEX boosted by tech. So that one is actually in positive territory. Quite a focus then, Guy, on things happening in the UK today.
Yeah, so the FTSE is underperforming. We're also watching what is happening in the gilt market. Today's inflation data, a little bit more benign, maybe the markets, or economists, I should probably say, were anticipating. And maybe that buys a little bit of time for the Bank of England to hold off. The two words you need to know about this morning's inflation effect are base effect. Sam Unstead is here, and he's all over that story. Good morning.
Good morning.
That's it, isn't it? Is this a reasonable reflection of the inflation picture in the UK?
I would say it's a reasonable reflection of where inflation was heading before the whole world was kind of upended by the war in the Middle East. So, so as you just mentioned, inflation a little bit lower than expected on the headline, almost all mechanical, almost all of it. So water bills going up by less than they did the year before, vehicle excise duty, there was a timing thing about package holidays, like all these different things have all come in and have, if you like, artificially pulled their headline rate a little bit lower. Without all of that, may well have been that inflation actually got back to the 2% target without the effects then of petrol prices going up, of sort of the overall effects of oil coming through, a little bit in food prices, a little bit in various parts of the report. But yeah, the main reason that it's gone down is all mechanical.
Do you think a cap on food prices will bring us back down to that 2% target? So the Chancellor has suggested this is potentially a voluntary solution, and has been in conversation with the supermarkets about a potential voluntary price cap.
Yeah, so I think actually what making it or describing it as a voluntary price cap, that is effectively what already happens in the UK's grocery industry, because it's extremely competitive. Yeah. So if you live in this country and you see, say, adverts for Tesco or Aldi, most of those adverts are focused on we are matching the prices of our competitors. So very often when you get a little bit of a spike in food prices, there is an element of that that's capped anyway, because it's so competitive in the grocery market, and the companies within the sector want to get you through the door much more than that. They're willing to eat some margin to make sure customers keep coming through the door and then keep coming through the door for years to come. That likelihood is that this will have almost no effect at all on the actual inflation rate.
There's the politics. There's a lot of politics in play right now, isn't there? And maybe this camp competing with what could be other emergent camps to talk about the cost of living and the things they're trying to do to bring down the cost of living. What about within the retail space then, Sam? We've had numbers out from Marks and Spencer's. What's the story there? Which is part food, but obviously
their numbers themselves are very heavily affected by the cyber attack that they had last year. So their profit fell almost entirely because of that. But food did very well. I would say for Marks and Spencer, who do enter this debate relatively often, but not quite so vociferously, the comments in there are very, very pointedly about pressures that they're facing from extra employment costs, extra taxes, regulation, and aiming that specifically at the government. So as we were kind of just mentioning, the atmosphere now between the retail sector and the government is getting more and more fraught.
Can you imagine a price cap on Percy Pigs? Well, I mean, that's what we're potentially talking about.
Well, that sounds good for consumers, doesn't it? But I'm not sure that Percy Pigs is supposed to be anybody's,
potentially very
basic staple product.
They're clearly a staple if you go into M&S. You can't walk out of M&S without some Percy Pigs. Was that just me?
I think that,
there are alternatives.
No, I'm with you, Tom.
There are alternative Percy Pigs or pig-like
products.
Sweet products.
Simon Manstead, thank you very much indeed. Bloomberg Markets Today editor. Let's get back to another part of this inflation story, and that's what's happening with oil, of course. Right now, Brent is actually lower by 1%, but still around and just above that 110 per barrel level on Brent. This is traders weighing, of course, President Trump's latest threat to resume strikes on Iran. Joining us now is Jemima Pasechi, Bloomberg's Horizons Middle East and Africa anchor, of course. How seriously do you take the latest threats from President Trump? We've talked about the whipsaws. He's threatening again military action on Iran.
Yeah, well, it's customary for President Trump to make these types of threats. We've seen it many times throughout the course of this, by the way, almost 3 months war. It's been going on for almost 3 months now. Once again, yesterday, he said that they would strike Iran if they don't come to the table and agree to a peace deal. He was asked when that could happen. He said, well, we're giving giving them a window of 2 to 3 days. It could be Friday, Saturday, Sunday. I mean, the thing is, he's made these sort of threats before. He's given deadlines before and tends to extend them. So we can't take them perhaps too seriously or at his word. But I think what we can piece together from all of this is there has been a huge, once again, diplomatic push, not least by Gulf states, and he specifically referenced the fact that Saudi Arabia, Qatar, and the UAE are pushing to get to a diplomatic solution. At the same time, the Vice President, J.D. Vance, also showing some more of a constructive tone and saying that military operations would only be their plan B. Plan A is still to somehow get to a negotiated framework. But, you know, this comes back to what we've been discussing the last couple of days. They're still miles apart on some of those key issues, the main two being the Strait, obviously, which is still effectively shut, and the nuclear file. And that is not taking into consideration all of the other matters that hugely matter as well for the Gulf nations, including the proxies and the missiles and the drones that Iran are sitting on.
North Atlantic apparently does border the Gulf, because apparently NATO's talking about getting involved in...
I was wondering where you were going with that, yeah.
Why?
Yeah.
What is the remit here that gets NATO involved?
Yeah, so you're talking about the plan that we reported overnight that NATO are considering assisting with the passage of vessels through the Strait in July if there isn't a full reopening by then, a full unconditional reopening by then. Look, President Trump has criticized NATO many times for not doing more to help them. And remember, NATO obviously is a defensive alliance. They don't have a pretext to get involved in this militarily. But our latest reporting suggests that if the Strait is not fully opened by July, then they would look to activate a plan to help get the vessels passing through. Now, the problem here is the mechanism. Clearly, the U.S. are trying with their own version of the blockade. They tried for a couple of days with Project Freedom. It's not so easy to get ships through the Strait because it is unsafe, it's dangerous, there may be mines there, and there's still the real possibility that these ships get attacked. So it is unclear what type of technical support NATO would provide. And then on top of that, according to our own reporting, it's not unanimous. There are many within NATO that have their reservations about getting involved as well. And ultimately, if they do go down this route, it wouldn't just have to be NATO. It would be a coalition of multinationals. So it would be, you know, beyond UK, France. It would be probably Gulf allies and some Asian countries as well.
Yeah, I think it's really interesting the way that this conversation is evolving, the role that NATO is thinking of playing, and interesting in our story that they talk about how the longer this goes on, the duration of the conflict is perhaps changing that view at NATO and having them reassess.
This becomes a security risk for Europe. It becomes a risk towards the North Atlantic basin.
Yeah, and here in Europe, we're very cognizant of the fact that the conversation around NATO in the United States has developed in such a way that President Trump is expecting a lot, and he wants support, doesn't he? And he's been threatening and in some places actually actioning, removing troops. So we had a story recently that the Pentagon is cutting army brigades in Europe from 4 to 3. It's not clear what that does to the overall troop levels in Europe, but this is also obviously weighing into those at NATO and what they're thinking about. Right?
But as Jemana says, it's meant, in theory, it's a defensive organisation. In theory, it doesn't have a global policeman role.
Correct. Yeah, and that was the reason to not get involved in the first place.
Yeah, precisely. Yeah. Trump has certainly changed it, but in terms of energy security, does that now get folded in to that narrative?
One thing to be mindful of as well, July, right? And all the energy analysts out there, including Jeff Curry, who was on Bloomberg TV yesterday, is saying that June is going to be crunch time for energy markets. So you keep an eye out on physical supplies there. If things really tighten, as all the analysts and experts are expecting, then maybe we have to see some action in July.
Jemana, thank you very much. Jemana Pasechi bringing us up to date on everything that's developing in the Middle East. Coming up on the programme, we'll get back to the US economy as Kevin Walsh takes the helm of the Fed. We'll talk to Mark Giannoni, who's chief US economist over at Barclays. What should we expect from the new regime? This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to the opening trade. We are 30 minutes into the Wednesday session, and actually, this is a slightly brighter picture than the futures had suggested. Yes, very modest gains of 0.1%, but as things stand, we could be set for 3 straight days of gains for European stocks. Very modest, of course, on the benchmark. You're seeing losses here in the UK. FTSE 100 down 0.2%. Media, so some of the big advertising names are under pressure today. The DAX is gaining just 12 points so far, and the CAC count adding 10 points as well. Basic Resources, some strength coming through for that sector. The miners on the back of stronger silver prices. Guy, what do you see?
A market that's being pulled in 2 different directions, and to your point, that is effectively balancing out to a kind of a headline index level that is going nowhere in a hurry. So we've got 273 up, 304 down. Let's call that 1 for 1, reasonably balanced. Volume's actually a little light, which is interesting. Let's turn our attention to what is happening with the leaders this morning. What is interesting, actually, given all the turbulence around the chip sector this morning, is we do have ASML up. There you go, 2.55% is what we are seeing. Elsewhere, Euronext, we talked to Stefan Buchner a little bit earlier on, the volatility that we are seeing in global equity markets at the moment, certainly feeding through very nicely into his business right now. That stock is up by nearly 7%. And Marks & Spencer on the back of its numbers as well on the UK high street, up by 2.14%, bouncing back from that big technical issue they had with the hack they had on their business. That's starting to maybe fade. Marks & Spencer up by 2% this morning. Downside, actually, a big focus there once again on the grocery sector. So we've gone from M&S to Tesco. It is down by 2.24%. We've already talked about what is happening in terms of the UK's view on what we could see with prices. Rachel Reeves talking about maybe fixing prices for groceries. That stock doesn't like that. Orkla's actually in a similar space. Its numbers don't look particularly good this morning. Up in the Nordics, down by 6.38, 6.4%. Similar story with Experian as well. Its numbers not being welcomed, down by 4.5. So there's a theme there between these 3 stocks as to what is happening with that narrative. Anna.
Let's get up to date with some of the other stories we're focused on this morning then, Guy. Chinese President Xi Jinping has warned against resuming military operations in the Middle East as he began talks with his Russian counterpart Vladimir Putin in Beijing today. The meeting between the two of the biggest backers of Iran comes a day after President Trump said he'd held off on a new bombardment of Iran at the request of Persian Gulf allies. Bloomberg has learned Goldman Sachs and Morgan Stanley have secured the lead positions for SpaceX's upcoming initial public offering. Billionaire Elon Musk's rocket, satellite and artificial intelligence firm is targeting a $2 trillion valuation. The listing is expected to raise up to $75 billion, making it potentially the largest IPO in history. And the European Union has agreed the text of its long-awaited trade deal with the US. Under the agreement, the EU will remove levies on US industrial goods in return for a 15% ceiling on tariffs. The European Parliament and EU countries will now vote to ratify the finished text. President Trump has threatened to hike tariffs on European cars if the deal is not in place by July 4th. Guy.
Okay, let's turn attention to what is happening over at the Federal Reserve. Incoming Fed Chair Kevin Walsh taking office later this week under pressure of calls from President Trump to cut interest rates. This comes just as we see a surge in inflation concerns, pushing bond yields, particularly in the kind of longer end space, to multi-year highs. Mark Giannone, Chief US Economist at Barclays, joining us around the table to discuss. Good morning.
Good morning, guys.
Is Walsh going to hike rates or cut rates?
I don't think he's going to do much in the near term.
Okay.
I think
neither.
Neither in the near term. I mean, later next year, we anticipate the Fed is still going to cut, but clearly market pricing has shifted now. Markets seem to be expecting now a rate hike from the Fed.
If the market continues to push and price in that hike, will the Federal Reserve have any choice but to follow the market's lead, do you think?
I don't think so. I think the Fed is going to be looking really at the macro factors. It's going to look at the inflation picture, at overall economic activity, and it's going to make a decision based on that.
So not behind the curve?
Not, well, you know, I think they're going to look through that oil price shock, we think.
What assumptions are you making about how long the oil pressure continues, how long the Straits of Hormuz continues to be closed, with that forecast that you still get a cut next year from the Fed?
Right. No, it's a great question because WTI futures, for instance, or Brent futures show a pretty rapid decline in crude oil prices. We take the assumption that oil prices are going to stay slightly more elevated through the rest of this year. Actually, we follow our energy analyst forecast that thinks that Brent may end the year at around $100, with WTI slightly lower than that, and then gradually come down. So with this somewhat more extended price shock, if you want, or oil price shock, we think there's going to be some pass-through to core prices.
Okay, so some pass-through to core prices. There's an expectation, there seems to be a factor in terms of the bond sell-off. They're saying that there's going to be additional spending coming through, not just from the US, but other nations as well. But predominantly, of course, they're going to have to fund the war. Defense spending is going to go up, and other commitments from the US as they continue to absorb, of course, that tax bill that was put through. How concerned should we be about the US deficit, about how much borrowing is being pushed through by this US government right now? To what extent is that top of mind for you as we think about the pressure at the long end?
Oh, that's very much top of mind. And I think we get to see this reflected now in bond yields. Now, the thing is, the fiscal outlook looked better a few months ago, right? With tariffs bringing in a lot of revenues, with no expectations of really rapid increase in defense spending, and now with the war starting, the tariff revenue, some of the tariff revenue declared illegal, which means that the outlook for revenues on that front are going to be lower, and on the spending side, likely higher. So we expect deficits to actually increase substantially. We're not sure that this is going to provide a big fiscal stimulus, though, because offsetting that, we are going to have, we expect, like a significant slowing in consumer spending towards the second half of this year. In particular, with income having slowed for households pretty significantly over the past year, and then also the oil price shock that we are seeing now that forces households to cut back on other spending.
Okay, so that's where this becomes about growth then, and not just about the inflation dynamic, Mark.
Yeah, I think the Fed is very much balancing the two things. So now they are facing a very difficult shock, right? Inflation is moving to the upside. On growth, I think the prospect for that are that we are going to see some slowing on the consumer spending side later this year. And so the Fed has to balance these two things. Yeah. What they don't want is the inflation shock to translate into second and third round effects on the core.
So you see the consumer weakening for the reasons you've described, but inflation could go higher, is being driven higher by the oil dynamics. Is it also being driven by the AI capex build-out? What is the effect of that on the US economy?
Absolutely, absolutely. We've seen AI capex last year in 2025 boosted GDP growth by about, or at least aggregate spending by about 80 basis points. So out of the 2% growth that we saw last year, 0.8 percentage point of that came from spending on AI-related activity, right? In data center to some extent, but more importantly, software, computers and equipments and peripherals. We expect some similar contribution this year in 2026. So very strong boost coming from that. And that also raises the stock market and provides some wealth to consumers.
The overall AI effect on the US economy is a separate conversation perhaps, but one that Kevin Walsh has shown some enthusiasm for, but he thinks it's deflationary. Is this just a timescale question? Does it become deflationary? Does it become deflationary in the time horizons that you're expecting rate cuts?
We don't think so. We think, I mean, to your point, this is it's really the time scale that's important, right? So in the near term, we see a very strong demand here in investment, in boosting activity overall related to the buildup, and also bottlenecks building up, right? We see a lot of prices moving up in that relates to chips and memory and so on. So that's also affecting the consumer to some extent. So the disinflationary part is going to be later on, when the productivity improvement that everybody seems to be expecting are finally realized, so that we can actually produce at lower cost. This is going to be down, several years from now, we would expect.
Okay, so it's jam much later tomorrow. Can I just talk about kind of where we are now? Nominal growth this year, strong in the United States.
Yeah.
How real is that growth? You've got a deficit that is epic by kind of historical standards. You've got an AI build-out that is substantial. If those two effects start to fade, where does it leave the US economy?
So that's the thing. I think that's the key point, is that consumers, we think, are the ones that are driving the economy for the most part, right? That consumer spending represents 70% of aggregate spending. So far, the consumer have been in great shape. They've earned a lot of income in recent years. They've seen asset value go up a lot, so they've been spending a lot. Now we think that with the price increase and with aggregate income actually slowing, they will have to slow their consumer spending. So we are looking at like 1% growth in consumer spending in the second half of this year on an annualized basis, maybe leveling off later on at around 1.5% growth, but no longer the 3%, 4% growth that we've seen in recent years.
Yeah, that's quite a markdown, isn't it? 3 to 4% to 1% in terms of consumer growth, consumption growth. The jobs market was looking quite perilous. It may be perilous as a stretch, but it was concerning people towards the end of last year, and then the data seems to have suggested there's a bit more resilience in the jobs market of the US than maybe we had feared at the end of last year. How confident are you that the US jobs market holds up through the rest of 2026? What is the labour market looking like right now for you?
Right, the labour market is really interesting in the US. So we've seen, in recent years, we saw like very strong job gains, right? That in 22, something like 500,000 job gains a month, then moving down towards like 300,000 job gains a month and so on. Over the past 3 months or so, we've seen only 50,000 job gains a month. So we think this is the result of two factors taking place. One is businesses are cutting back on no longer growing their jobs at the same pace as before. The hiring rate has come down substantially over the past year. Businesses are basically the demand for workers is actually quite a bit softer than what we've seen in the past. But simultaneously, what we've seen is a very significant slowdown in the supply of labor. So workers coming from abroad, of course, immigration has been cut back very, very significantly. And at the same time, we are now at a phase where people are retiring in much greater numbers. So the domestic labor force participation is actually coming down as workers are exiting the labor market. So as a result, what we see is a much slower pace of job gains, month after month after month, but not really an increase in the unemployment rate. If anything, the unemployment rate is stabilizing, maybe drifting down. We expect actually the unemployment rate to continue to drift down this year, even though the pace of job gains would be at around, let's say, 50,000 jobs a month, and then drifting down to about 25 and closer to zero later on.
And so, I mean, is the AI effect, is that there? Is that in the numbers yet? I take on board the fact that you said you expect the unemployment rate to go downwards, but in terms of those jobs that are going, or the reduced demand for labour, Is that an AI effect, or is it too early for that as well?
No, I think so far the AI, if anything, is helping on the demand for labor, right? In the build-up.
To build the data centers.
Exactly, exactly. So I think this is, for now, it's still a positive. I mean, the negative, we're not so convinced. I mean, I know there's a big narrative out there that eventually all the jobs are going to disappear because of AI. We are somewhat skeptical about that. We haven't seen this in the past, right? With technological revolution that are sort of general purpose technologies that would lead to an aggregate reduction in employment. We haven't seen this in the past. This time could be different, but this is like far down the future.
Yeah, it's your world of banking that's causing some concern.
Yes, lower value human capital
from one of your competitors. Mark, thank you very much indeed. Mark Giannone, Chief US Economist at Barclays there with a deep dive view and analysis, of course, on the current health of the US economy. And tying into that US economy, of course, is the AI story, as Mark was saying. Part of that will come down to NVIDIA, and those earnings are coming up, of course, after the market today. We're going to talk to Claire Pladel-Bourry, fund manager at Liontrust, as the world's most valuable company reports after the bell. NVIDIA earnings in focus. Analysis next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back to the opening trade. 8:46 here in London, and we do have it all looks red, but it's not red by very much. We're down by 0.1%, if that, on these major markets. So not really very into negative territory. US futures are actually pointing higher a little. It is a handover of negativity from Asia that we perhaps have in mind, and that was tech related. But actually, the tech sector is actually doing well in Europe today. It's up by 0.7%. So Tom, we don't have necessarily that read across from the drama in the Kospi into the European session.
That's The drama has faded, hasn't it? At least for now. Let's think about what else we are watching throughout the day. Then the nominee for Bank of France Governor, Emmanuel Moulin, appears before the National Assembly at 10 a.m. UK time. Some lines have been dropping from him already. Italian Prime Minister Giorgia Meloni meets her Indian counterpart Narendra Modi in Rome, and Russia's President Vladimir Putin is in Beijing. And at 7 p.m. UK time, we get the Fed minutes. 9:20 p.m. UK time, NVIDIA results. Let's take a closer look at what to expect from those NVIDIA earnings then, and bring in Claire Blader-Bouvry, fund manager at Lion Trust, joining us now. And of course, NVIDIA sits in your funds. Claire, good morning. Thank you for joining us. So, as an owner of NVIDIA, what are you going to be scrutinising from the earnings?
Probably the most important forward-looking indicator for us are purchase commitments, because this doubled quarter on quarter in the last print. We went from 50 billion in Q3 to 90 billion last quarter. And this is essentially NVIDIA locking out the supply chain. It's no surprise to all of us that the supply chain is very tight. We all hear about there not being enough memory to go around. TSMC silicon is a meaningful bottleneck. Optics is the same. Well, NVIDIA have got between 2/3 and 3/4 of the supply of these key components through 2026 and into 2027. So we're expecting a significant step up again.
So to be clear, this is NVIDIA's purchase commitments for its suppliers, or purchase commitments from hyperscalers for NVIDIA chips?
Purchase commitments to suppliers,
precisely. Suppliers, okay. So that for you is an indication that they have continued control over that supply chain?
Absolutely, because the risk going into this print and really throughout this year, we think, is not about demand. We do not think that is a risk anymore. This is solely a question about supply. 6 months ago, the market was focused on, are we overbuilding? The biggest risk now is, can we build fast enough to keep these earnings moving in line with the stock prices of the entire ecosystem?
Is NVIDIA the way to play that, though? Or are some of the Asian memory suppliers the way to play it? Are they a cleaner, more monetizable kind of short-term play on how this AI build-out story is going to develop? Have we moved on from NVIDIA to those kinds of companies?
Well, that's exactly what the market has done over the past 6 months. You look at the stock prices of SK Hynix, Micron versus NVIDIA. And right now, we see more...
Is that the correct move?
Possibly in the short term. I mean, what the market has done, and we've all spent a lot of time doing, is following the bottlenecks. And over the past 6 months, those have been particularly in high bandwidth memory. Optics has been a key one emerging. But right now, the first derivative of the AI trade is now offering the most compelling valuation. And what we saw last quarter with NVIDIA, and we're expecting to see continue throughout 2026, is a re-acceleration in their top line and on their bottom line. So NVIDIA grew earnings about 50% last year on year. A very admirable achievement for a company of that scale. That's set to grow almost 100% this year. So right now, we will be trimming some of those Asian component suppliers, because yes, they are pure plays on some of these bottlenecks, but their stock prices also moved an incredible amount in the past couple of months.
Can I ask you about the life of some of the products that NVIDIA puts into these hyperscaler businesses and others? Because the life of them and the period over which you depreciate them was something of a topic of conversation for quite a while. And you've got some interesting stuff in your notes about how the installed base becomes more valuable, not less. Explain how that can be possible.
Absolutely. We do think that there has been a misunderstanding about this, because with NVIDIA architectures, they've now got a 1-year release cadence, and you buy the latest and greatest for training your large language model at the frontier. So that's Blackwell Ultra right now, moving to Rubin next year. What happens to Hopper, which was the prior architecture, even Ampere, which was 6-7 years ago, is that those N-1, N-2 architectures move to inference. And inference is when customers actually monetize these assets. So the ROI on these architectures, they actually go up, not down. And what we've seen right now, because we're in such an acutely demand-supply constrained imbalance, is that the prices for Hopper they've gone up 35% year to date in the cloud.
Yes.
And the reason these get so more valuable over time is because they're optimized by software.
Yes.
And that's the whole CUDA ecosystem moat.
And one of the reasons why the market's attention switched to Asia was because of the memory story. We've also seen a lot of businesses trying to follow NVIDIA and trying to grab some of that market share, and some of them arguably trying to, managing to deliver higher profits as a result. But does NVIDIA need to worry about that competition or not at all?
Competition from
others who are trying to do what NVIDIA does?
Well, it comes down to locking out the supply, and so these.
It's not about Rubin and what it can do versus the competition. Then.
Well, Rubin is definitely a massive leap forward versus competition, and what we saw from Google with the TPU last year, TPU version 7. This is very competitive with Blackwell. That does change with Rubin. Google moves to its next TPU architecture, and Rubin particularly moves to a more memory bandwidth intensive architecture, which is really, really crucial for inference. It's got about 2.4 times more memory bandwidth. And that's really, really important as we move into the agential era, which is highly more compute intensive.
Yeah.
It still does come down to capacity at TSMC and capacity with these memory players. And these ASICs players just do not have that same weight.
Can I everything costs a lot in this industry at the moment, and you're making that point very clearly. Are we as users, are corporates as users, paying the correct price for the AI that they are consuming at the moment? And if they did, would they use the same amount or would they use less? Are we being subsidized at the moment by the industry? And you look at the cash flow story for what we're using. And does that need to change?
So we expect the cost of AI to continue declining. And the cost of inference right now, it's about 1,000 times cheaper than it was last year.
Right.
And you achieve this through technological progress. Every time NVIDIA moves to a new architecture, this brings down cost per dollar, cost per
But the companies
per
are still
watt.
burning money.
The companies are burning money, but that's only because they're continuing to invest. The hyperscaler capex, if we look at this, it's slated to be over $700 billion this year.
Yep.
If there's a sort of 12 to 24 month hiatus between standing up this infrastructure and then actually producing revenues from it.
Yeah.
Andy Jassy sort of painted this clearly in his shareholder letter last quarter. And because the hyperscalers are seeing ROI on the capacity laid 2-3 years ago, they continue to invest, but more than what the revenues are. So we think the right metric to be looking at is revenue inflection, cloud revenue inflection, not free cash flow. Okay. We're expecting free cash flow to actually be materially negative for all the hyperscaler players next year. But the crucial point is that revenues are now inflecting. We saw this from Google, 63% year on year.
Claire, thank you very much. Claire Playdale-Bouverie joining us from Lion Trust. Let's get a broader take on the markets. From the Markets Live team, Adam Linton joins us on set. So, Adam, the focus of your day, is it NVIDIA or something else?
Well, it's definitely avoiding anything to do with Arsenal, but yeah, obviously, NVIDIA is absolutely key. I mean,
meet Tom.
Exactly.
I don't know where he ditched the scarf.
One little celebratory lap, surely, of the studio.
Oh, no, I mean, Instagram is not getting open today. It's been absolute turmoil. But in terms of what I'm watching, of course, NVIDIA is the big one. I mean, it's essentially a macro data point at this point. And when you consider how narrow the leadership in the rally has been since late March, and tech's been at the center of that, and NVIDIA accounts for like 75% of AI infrastructure, then of course it's important. I think, if you park aside yields for the moment, the problem is the backdrop for NVIDIA earnings is always just so difficult. I mean, we're expecting to see another kind of beat and raise quarter from NVIDIA, but the problem is that we've seen that for the last 4 quarters, and the market reaction has been getting increasingly negative. And NVIDIA last quarter, I think they're down 5.5% the day after earnings last time, and when NVIDIA goes, the US stock market will go. And so that's obviously a cause for concern, particularly in the current environment where people are questioning the impact of high yields. What does this mean for equities? So if you do get NVIDIA coming in a little bit soft, yes, I know your price earnings multiple is a little bit lower than previously, then this could potentially be a little bit of an inflection point for the market.
Okay, Adam, thank you very much indeed. Bloomberg M Live strategist Adam Linton with that look ahead to NVIDIA. European stocks currently across the benchmark a little softer by 0.2%, but you are seeing some reprieve in terms of the bond markets, at least for now.
I'm going to check in with Adam, make sure he's really okay. Sounds like he's had a tough day. European equity markets then on the back foot, but not by much. US futures flat to positive, in fact. So Nasdaq futures up 0.4%. That is it for the opening trade. The pulse is next. Have a good day, everybody. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Supply shocks weigh on the global bond market after long-end Treasury yields hit their highest level since 2007. We discuss the outlook for European monetary policy with Pierre Wunsch, the National Bank of Belgian governor. That exclusive interview is live this hour. Plus, the Chinese president, Xi Jinping, warns against more military operations in the Middle East as he hosts the Russian president, Vladimir Putin. So there is a lot going on, especially overlaying all of this is, of course, this uncertainty. Given where we are in geopolitics, U.S. stocks are actually rising before NVIDIA earnings. So traders really waiting for a couple of earnings. NVIDIA probably the most anticipated update on the state of AI and its economy when it reports after the close. Today, what investors want to focus on when it comes to NVIDIA is what they have to say about ramping up production and fending off competitors. Look at Sterling. Again, we're still in the middle of this leadership battle, 133.86, and Brent crude 109.84. This is a picture for the European markets map. There has been a very clear way, actually, of the U.S. ending up with some sell signals followed by Asia, and then that's filtering through to Europe. So Europe a little bit tentative, I guess, again, waiting for what happens with the Strait of Hormuz and NVIDIA, seeing as what an AI economy also means for disinflationary pressures. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in just a moment, we discuss the global bond sell-off and inflation fears with Banu Baweja, Chief Strategist at UBS Investment Bank. But first, it's also a major day for geopolitics and the AI trade, so let's go straight to Bloomberg's Charlie Wells. Charlie, we start, of course, with what's going on in China.
That's exactly right, Francine, because in China right now, we have Russian President Vladimir Putin speaking with President Xi Jinping. You said geopolitics were front and center. That is right. You also mentioned that global bond sell-off and inflation shocks, and key to all of this is energy. Now, one of the main topics of discussion in China has been this Power of Siberia 2 pipeline from the Yamal Peninsula into that beating heart of the Chinese economy, northeast China. And now what we know from a spokesperson this morning from the Kremlin, the parameters of a deal for this pipeline have been agreed, but there are still nuances to come here. So this is really important to Russia. They need to diversify because their sales of natural gas to Europe have been cut off because of sanctions. China needs this too to diversify, to get more energy, not from the Middle East. Now, both of these partners need this as they navigate an increasingly tense geopolitical situation. Key to geopolitics, we know, is tech. Jensen Huang, NVIDIA CEO, was in China with Trump just a few days ago when he was making a similar trip to visit the president of China. Now, what we're hearing this morning is that talks between Samsung and its largest labor union have broken down. Let's flip and take a look at what's going on with these negotiations, which are key to that tech supply chain, because Samsung is the largest maker of memory chips in the world. We know that as that tech boom has really boosted South Korea, workers in Samsung have demanded more of those profits, but Samsung has said that their demands are excessive and they face a work stoppage from Thursday. So that could be a significant hampering to that tech supply chain, just as NVIDIA earnings are due to drop later today. Let's flip and take a look at what the smart money is thinking about with NVIDIA, because there are high expectations here. We know that there is a lot riding on this. This is potentially the major market catalyst, but what analysts are saying is be careful, brace yourself, because high expectations mean that actually we can see earnings slips in the market after these earnings drop. So what the smart money is saying this morning is brace yourself.
Charlie, brace yourself. Thank you so much for a terrific update. Charlie Wells there with some of our main stories. Now, bond yields holding at elevated levels, piling pressure on global equities, with the U.S. 30-year yield actually touching its highest level since the eve of the global financial crisis in 2007. Let's bring in Banu Baweja, Chief Strategist at UBS Investment Bank. Banu, always so good to speak to you. I'm looking at bond yields, and people are worried.
Yeah, and what's the interesting part of this is that, in fact, inflation is just a very small part of what is happening, because if you look at the backup in yields, a good chunk of this has been in real yields, especially if you look at the back end, right? At the front end, you've seen inflation expectations go up, as you would expect. But if you look at the 5-year, the 10-year, the 30-year, the vast majority of the increases in real yields, term premium has gone up, people have heard a little bit about the fiscal, but primarily it's about nominal growth, especially in the US, and that's the infection spreading, the bond market sell-off spreading to the rest of the world. I think we make too much about idiosyncratic sell-offs in places like gilts because we worry about the local elections and so on. But frankly, it's coming from strong nominal growth in the US, and that's where the shock to the bond markets is percolating from. So the question is, are the markets right to, celebrate growth as much as they are? And we don't think so, right? Because we think the U.S. consumer will slow down. I mean, you're seeing real disposable income growth pretty much close to zero. You have fiscal checks in the mail right now, which is supporting real PCE spend. But with very low savings rates, with real disposable income growth flat, like growth is at zero, on top of that, you get, even if it's temporary, an inflation shock that's going to hurt their real disposable income even further, that slows down the consumer.
So, but I mean, we've been trying to understand this for quite some time, right? Does it mean that we're going to get an equity correction if you look at the bond market?
So I do think that the equity market, I think we've got to start with the energy market. What is the energy market saying, and what is the equity market then saying? The energy market itself, the financial market, is very benign. Right, the physical market has once again begun to perk up. So if you look at jet fuel, you look at naphtha, those prices have once again begun to go up. Whereas if you look at implied vol in the financial market, like if you look at not just in the equity market, not just VIX, if you look at implied vol of oil, that itself has halved. So I think the market completely believes that this conflict is very much in the rearview mirror. And I think that's a leap of faith. I think that's a bit too optimistic, because this could linger or this could worsen. That's a possibility. As a result, and that, I think, will matter for equities, right? I mean, the big issue for equities in the US, of course, is AI. But what about European equities, right? European equities have also followed US equities up, except for the last week or so, they have followed US equities up. Now we're looking for 16, the market is looking for 16% EPS growth in Europe. That's high in the face of what we're seeing in Hormuz.
So, Vanna, if we go back actually to what your expectation is for the Middle East, does this drag on? Because there's no clear, to me, military solution or diplomatic solution in sight.
Look, it is pretty binary, but if to get off the fence, I think one would have to say that the possibility of the physical market being right and the financial market in energy being too low, so the financial prices of oil rising towards the physical, I think that should be the modal probability in the near term, right? Eventually that the curve is backwardated and you will see lower prices, we get that. But where will oil settle? I mean, I think even 6-month future could be too low, given the way these negotiations have been stalled again and again and again. It doesn't inspire confidence. The market doesn't want to know, because the market is so focused on the AI trade, legitimately, because, I mean, if you look at the earnings, they have been very strong. I mean, Q1 earnings are around 18%. The market in the US is now expecting about 21%. That's sort of almost a unidimensional focus on the AI hyperscaler CapEx spend, whereas I think this is a slow motion impact on, particularly in a few sectors like the consumer, like financials. These are sectors that have been hit the most in prior supply shocks. And even in these sectors, the market hasn't put pen to paper as yet in terms of the downgrade. So I think it's still early days, and I think consumer and financials in particular are in harm's way.
So what does it mean in terms of what you favor? I know there's a couple of banks that prefer, for example, Japan 30-year bond, saying the yield curve is a little bit too steep. Do you go there or do you go elsewhere?
So the yield curves have become quite steep in Japan, have become quite steep in the UK. So these are places where now value is beginning to emerge. But I think if I was to stick with fixed income first, I think the first thing that we've got to look at before we look at duration is what is being priced into the money markets and the front end of the bond markets. That you've depriced 2026 cuts, I get. That you have no cuts priced for 2027, I do not get, right? So if the market is worried about inflation today, it ought to be worried about growth tomorrow. This is a growth inflation hit. This is not just an inflation hit. Growth will come lower. So I think 2027 pricing is incorrect. I think that's where we've got to be receiving rates in the very front end. In the equity market, the rotations that the market was engaging in prior to this crisis, which is Europe in favor of US, value in favor of growth, and I think those rotations, small cap in favor of large cap, I think those rotations are once again likely to reverse. So US, while in absolute terms, even the US could be in harm's way if this conflict continues, it certainly does outperform Europe in that situation. And I think large caps outperform small caps. And also, I think growth will likely outperform value in that.
And the UK then has its own set of problems.
For sure. I mean, I think here we have to worry about sort of a quick pass-through of inflation. But then after that, you will see growth again being hit. So I think we're actually not looking for rate hikes from the BOE this year at all. We're looking for cuts starting 2027.
Yeah, so we're going to speak to the Belgian Central Bank governor in just a couple of minutes. What's your killer question to him? I think he's listening.
So the question really would be how much inertia do you think this inflation hit is going to have? And at what point do you start really worrying about growth more than you worry about inflation, especially the ECB, right? I mean, because the ECB is so squarely focused on inflation, but they still have to be cognizant about growth moving forward. At what point does that switch become more obvious.
Yeah, and for the moment they've been very careful in that. Banu, as always, thank you so much for joining us. Banu Baweja, UBS Chief Strategist. Now, coming up, we'll discuss the outlook for European monetary policy with Pierre Wunsch, the National Bank of Belgium governor. That exclusive conversation is up next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario.
Well, that was the Bundesbank president, Joachim Nagel, giving his take on the outlook for rates and saying the ECB may have to do something to respond to the energy supply shock. Now, the impacts, of course, of the Iran war are dominating the outlook for central banks here in Europe as they grapple with rising energy prices and sustained pressure on government bonds. For another perspective on the ECB's policy path, I'm delighted to be joined by Pierre Wunsch, governor of the National Bank of Belgium. Gouverneur, thank you so much for being with us. How does the bond sell-off actually influence your thinking, good morning, about the ECB's next step?
Well, honestly, it does not really impact the way we think about the problem. And it's, of course, a very difficult situation because the nature of the uncertainty is more geopolitical or political than it is, coming from the economic activity. So we have to balance the value of waiting and having a better view of what's going on the ground in the Gulf. But at the same time, at some point, we will have to react because we are already at 3% inflation. I guess the fixing is at 3.5 now. And that's the focus we should have, is inflation development.
Yeah, so do you think it's more likely to get a rate hike in June? Again, if you only look at the bond sell-off, you either say, well, look, inflation really is a problem. Look at what the markets are doing. But at the same time, it tightens financial conditions.
Well, we are in the beginning of an inflation problem, and of course the economy is not as strong as in 22. So the comparison with 22 is not a one-to-one. At the same time, I think we are at a stage, and actually in April I was already slightly in favor of hiking in April. I could agree with the decision, which was to wait, because again there is a value in waiting. But at some point, I think we have to be positioned to the risk that inflation would be, again, as it was after the increase in inflation in 22, that it would have some persistence. And I heard the question from the previous panel. It's very difficult to have at this stage a view on how persistent inflation will be. The impression we have is that if we look at B2B, that the pass-through will be quite fast. We hear signal that even the technology of or governance of price change is not the same as in 22. In 22, people were surprised by the pickup in inflation. They are not this time, so they will maybe react faster in some segments of the economy where they can. On the other hand, and I have to be balanced in what I'm saying, we don't see anything on the wage front. I mean, the wage developments are very benign.
So, Governor, do you think, I mean, at this point, given what we know, do you support a move in June for the ECB unless there's a quick resolution to the war tomorrow?
Well, I've already said, I guess, even a number of weeks ago, that if the conflict is not resolved by June, that I think the likelihood of a hike is quite high. But we don't know. I mean, we don't know what could happen. I mean, you know, if there is some form of agreement before a meeting in June and we see oil forwards falling off a cliff, you know, then we might decide otherwise. But, you know, as such, if the conflict is not solved by June, it is bad news because, you know, it's always difficult to read into markets forwards. But I guess some of what we see in the pricing is based on the idea that this conflict is going to be solved sooner rather than later. And you hear a lot of noise or discussions about the fact that, you know, there is a disconnect or there might be a disconnect between the prices we see for oil and the reality that there is a shortage and that we are drawing on the reserves, you know, in the West, but probably also in China.
Governor, I mean, what do the data since the March projection, but also since the April meeting tell us in terms of where we are in the scenario? Baseline, adverse, or severe?
On oil, we are closer to adverse. Gas is lower. We had actually growth in Q1 was not too bad. It was 0.1, but if you correct for Ireland, which is, you know, very volatile, we're at 0.2. So at this stage, based on the forwards and I mean, certainly the March projection, and if you compare it to the adverse, we're in a slowdown. We're not in a recession. We have inflation going up, but not spiking. So it's still okay-ish. But again, the market projections are really, at some point it's binary, you know, either the conflict is solved and then it's going to be better than we have, maybe in the scenario, or it's not going to be solved and it's going to be worse. So I wouldn't infer too much from where we are today. We have the luxury to be able to wait until June. That's our next meeting, and then we'll see where we are. But if we are at the same stage in June, it's actually bad news, probably.
Yeah, I mean, given the pressures that you've seen, both on inflation, as you were saying, on economic activity, do you worry that we're already in a stagflation environment?
I guess at the margin, directionally, we are moving in that direction. Are we in a stagflation, you know, recession combined with high inflation? No, but we are moving into lower growth and higher inflation. So, yeah, directionally, we are moving in that direction. I'm not saying we are going to fall into a stagflation. Again, it depends very much on what's going on in the Gulf.
But so what's the appropriate monetary response to, I guess, stagflationary, you know, soupçons, like indices? I mean, can you kind of cut rate? I mean, what can you do in terms of tweaking rates without giving too much of an impression that you're too aggressive?
Well, it's a fine balance. I mean, of course, it's much easier if the shock is a demand shock on the downside or upside. It's much easier to react. We know that the recommendation in the literature when we have a supply shock is not to respond too fast. Mm-hmm. At the same time, if you look at history, you know, the episode of high inflation, inflation way above targets, were always episodes with basically, you know, a negative supply shock. So that's where we need to find a balance. We were a little bit late in reacting last time. The situation is not the same, and it's a fine balance. And again, on that balance, I was already, in a way, I had a slight preference for hiking already in April.
So the market is betting on 3 rate hikes, actually, this year. Does that feel too much or about right?
again, that seems, I mean, reasonable to me, but we are not in a world where we are going to a sort of middle scenario. Again, at some point it's more binary. You move to a better situation and oil prices start going down, or the conflict doesn't end fast enough, and then oil prices will go up again. So I see the market forwards more as an average of very different scenario, potentially very different scenario, another sort of base case which is likely to materialize. So I think we have to have that in mind when we consider what would be the appropriate reaction. Depending on where it goes, it might be more, it might be less. But it seems reasonable to me, considering the uncertainty where the market is.
Okay, so realistic scenario. Governor, you also recently argued in a paper that if Europe wants to, stay the kind of welfare-creating powerhouse that it has been, it needs to become a more flexible and agile union. What would your priorities be for Europe to stay that way?
Well, actually, in a way, the observation was that probably the fact that we are lagging behind on the innovation front, especially when innovation is of a disruptive kind, be it AI or EVs, that Europe is not the first mover. And that probably reflects deep societal preferences. And in a way, the question was, maybe we just want that. Maybe that's a reflection of our priorities, and then maybe it's fine. The question is, what will be the cost going forward of being late on those innovations? And it's not so obvious. You can of course copy, and there is diffusion of technology, but we're not the first mover. But then there is an argument that considering the combination of different structural challenges, population aging, climate, and others, that we need to wake up and be better at these more disruptive innovations. And probably the world is moving in that direction, where technological progress is going to move ever more into the AI and robotics direction, which is more disruptive than the incremental progress we've seen in some industries where Europe is good. I mean, we have a current account surplus, so it's not that we lack competitiveness in all sectors. Yeah. But when it's becoming disruptive and you have to change fast, you don't have things under control, then we are not comfortable with that in Europe. And I think it's a deep societal problem, much more than something that you can solve by having these grand plans and even more European integration. I think more European integration would be welcome, but it's probably only at the margin that it would help on that front.
But Governor, very quickly, is this a misunderstanding of the new geopolitical realities for Europe?
I think Europe has to get used to the fact that we are not anymore in a world which is rules-based and where, politics is just about, or geopolitics or diplomacy is just about negotiating rules and then following rules. We are in a more transactional world, and we're going to have to learn to deal with, preserve what can be preserved of the old world with friends and people that still want to follow rules, but where we are confronted with more transactional powers, the US and China, then we have to be able to, collect our cards, because our cards are in different compartments. We have to collect them in a deck of cards and be able to play the game that we are requested to play with China and with the US. And that's much more than just following rules that have been negotiated in international fora.
So interesting. Governor, thank you for your time. We always really appreciate you giving a little bit of your busy schedule. Pierre Wunsch, Governor of the National Bank of Belgium. Now, after months of negotiations, the European Union has finally agreed the text of its long-awaited trade deal with the U.S. Under the agreement, the EU will remove levies on U.S. industrial goods in return for 15% ceiling on tariff. Let's get more from Oliver Crook, Bloomberg's Chief Europe Correspondent. Ollie, good morning. So what's the latest from Brussels? The chair of the European Parliament's International Trade Committee is speaking.
Yeah, we just heard from him, from Bernd Lang, and he was just talking about basically that he was quoting the Rolling Stones and starting his press conference saying that you can't always get what you want, but if you try sometimes you'll find you get what you need, and that they managed to get what they needed from this trade negotiation within the European nations to try to sort of present it back to the United States. And you'll remember Donald Trump has set the deadline of July the 4th, the 250th anniversary of the beginning of the United States, that the EU really needs to bring into power this trade deal that was a handshake between Ursula von der Leyen and Donald Trump July of last year, still not into effect. And so they've basically made the progress that is required. It will have to go back to the Parliament for a vote, back to the member states for a vote, but this has really sort of picked up the cadence about getting this trade deal over the line. What is interesting, Francine, is within this, they have added a couple of notes, and this is what he was referring to in this press conference, that within this deal now from the European side, there is a suspension clause. There's a clause that basically gives the Europeans an ability to suspend this trade deal in the event of any sort of additional tariffs from the United States, any other sort of unpredictable behavior from the United States. And the other point, Francine, that I think is very significant here is there is still a massive debate about derivative products from steel and aluminum. Those now fall under those 50% tariffs from the United States. The Europeans are very unhappy about that. They would like to see the derivatives moved out of that 50% column and into the 15% column that is governed by the rest of the deal, and they want to see that happen by the end of the year. And if it doesn't happen, Francine, you could have the trade negotiations again be reignited. So for the Europeans, you know, this is the step forward towards that deadline from the Americans, from Donald Trump. So hopefully on track to get it over the line by July the 4th. We should say, Francine, that, you know, the last thing that the Europeans need right now in the sort of face of stagflation is another trade war with the United States. So really putting the pressure on and trying to get that over the line.
Ollie, thanks so much. Oliver Crook there, Bloomberg's chief Europe correspondent. Coming up, President Xi and Russia's Vladimir Putin meet in China. We'll talk geopolitics with Sebastian Mallaby from the Council on Foreign Relations. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacquet here in London, and these are your top stories. Supply shocks sway on the global bond market after long end Treasury yields hit their highest levels since 2007. Pierre Wunsch, the National Bank of Belgium governor, tells us the euro area is at the beginning of an inflation problem, but says the bloc is facing a slowdown, not a recession. Plus, Chinese President Xi Jinping warns against more military operations in the Middle East as he hosts the Russian President Vladimir Putin. So, as we were saying, the Russian President Putin meets the Chinese leader Xi Jinping in Beijing to strengthen their alliance just days after U.S. President Donald Trump's visit. Now, state news agency Xinhua reports that Xi told Putin that a ceasefire in the Middle East is imperative. Well, joining us now is Ross Matheson, Bloomberg's chief Asia correspondent, Jumana Bersetchi, Bloomberg's Horizon Middle East and Africa anchor is also here. So, Ross, if we start with you, good morning to you both, but why are there talks now in Beijing so soon after President Trump was there?
Well, actually, this trip was scheduled before Donald Trump's trip was planned to China. This was, in fact, to mark something specific, which is the 25th anniversary of a friendship agreement between Russia and China. So this was planned around that. And, of course, Donald Trump had delayed his initial timing of his trip to China because of the conflict in the Middle East. So they ended up being really close together. That's probably not a bad thing for Vladimir Putin. I mean, he gets to showcase today the extent of the Russia-China relationship so soon after Trump was there. He's been receiving really the same level of pomp and ceremony and fanfare that Donald Trump did from the Chinese, so kind of putting him, in his eyes, perhaps at that elevated level of importance. He gets to maybe listen to what Xi Jinping has to say, if anything, to reveal about his conversations with Donald Trump during their meetings, and hear especially again what Donald Trump may have had to say about the conflict in the Middle East. So the timing's not terrible for Vladimir Putin, but it is purely by coincidence.
Jumana, I mean, President Xi is saying that the Middle East ceasefire is imperative when meeting Putin. Does that actually make a difference?
Well, so far, China have had a pretty hands-off approach. And remember, in the run-up to that summit last week, there was expectation that maybe President Trump would be able to get China to exert some influence on Iran to get them to sign a deal. And of course, China remain and have been the largest buyer of Iranian oil. So the assumption was that maybe it might lead to some form of a diplomatic breakthrough. But China didn't commit to anything, even though President Trump attested afterwards that China committed to, number one, not supplying Iran with any military equipment, and two, their affirmation that they do want to see a full and unconditional opening of the Straits, and they agree with the U.S. that Iran should never go on to develop a nuclear weapon. Today, in the readout from that Putin summit, Xi has actually gone a little further, saying a comprehensive ceasefire is imperative, restarting the war is even more unacceptable, and adhering to negotiations is particularly important. Top of mind here, Francine, are these comments that President Trump has been making throughout the course of this week, once again threatening to go down the route of kinetic military action unless Iran go back to the negotiating table and agree to the terms that the U.S. are putting forward on a peace deal. So China clearly wants to see a resolution. At the same time, the two main players here, that is the U.S. and Iran, still remain very far apart on their respective stances.
Yeah, and we'll get back to that, and also the Strait of Hormuz. But Roz, I mean, you were talking about the pomp and the parade that Vladimir Putin saw, which was not unlike what President Trump saw just last week. I mean, does it mean that Vladimir Putin is back as a global power player?
Well, to some extent, he already was, because he was in the deep freeze for several years with the U.S. under the administration of Joe Biden, obviously over his invasion of Ukraine. But he's spoken multiple times with Donald Trump, quite frequently, and Donald Trump veers between warm words of praise and admiration even for Vladimir Putin, and sounding quite frustrated with him for the fact that this war is still ongoing. So certainly that relationship has changed since Donald Trump came back into the White House. And he has, of course, maintained his relationship with China, numerous visits, in the intervening years, 2023, 2024, and onward. He and Xi Jinping have maintained that relationship because it's a relationship that mutually suits them both. So certainly he's had that access. Has he had some setbacks? Absolutely. You can see questions about Russia's leverage and influence with the collapse of the regime in Syria, for example. And again, in Iran, you know, Russia's a strong ally of Iran, but hasn't really been visibly involved in this conflict in terms of supporting Iran. It benefits on higher energy for sure, but showing the limits as well of Russian power overseas. But certainly there seem to be plenty of leaders who are lining up and happy to talk to the Russian president.
And Jemana, NATO's considering our Hormuz mission to protect ships. I mean, this is something that the U.S. had also floated a couple of months ago, and we weren't sure how that would work. So what's the latest on that?
Yeah, absolutely, Francine. And this comes from our own reporting, Bloomberg reporting overnight, quoting sources close to NATO saying that they're thinking about going down this path of introducing a mechanism whereby NATO would get involved with the safe transit of vessels going through the Strait if the Strait is not fully reopened by the beginning of July. So still a couple of months away. And remember, NATO have come under a lot of criticism by the president, by President Trump, for not being more involved when it comes to their attempts to help to reopen the Strait. But still, a lot of questions here, Francine. Number one, even in our own reporting, we say that this is not a unanimous decision. There's still many countries within NATO that have reservations about getting involved, particularly because they are, by definition, a defensive alliance. So their position has always been they would only help with these peacekeeping efforts once the war is over. The second point comes back to the actual technicalities of it all. The U.S. have attempted to reopen the Strait. Remember, they tried with Project Freedom for a couple of days. That was aborted. And in reality, it is still very difficult to get the vessels through. It is safe. It is unsafe. It is dangerous. There's the real possibility of mines exploding. You would need extra equipment. You need surveillance tools and a whole bunch of other assets to be deployed in order for that system to be beneficial and actually successful. So as it stands, it's still a proposal from NATO. We don't know if it is going to go ahead, but it comes back to the baseline issues here. The Strait is still effectively shut, and Iran and U.S. are still very far apart in terms of how each one of those are viewing Iran's nuclear capabilities and ambitions.
All right. Thank you both for joining us, Jemana Barsetchi and Roz Matheson. Now, for more analysis on the geopolitical and, of course, how it plays into the wider AI race between the U.S. and China, let's bring in Sebastian Mallaby, Senior Fellow at the Council on Foreign Relations and author of The Infinity Machine, a biography on DeepMind co-founder Demis Hassabis that is also a bestseller in a number of countries. So congratulations, Sebastian.
Thank you.
Look, I don't know when, I mean, we're all looking at pictures together of President Xi with his Russian counterpart, you know, praising the strength of their relationship, but talking about reinforcing bilateral ties. Like, what does that tell us about the state of geopolitics right now?
Yeah, I think the central fact of geopolitics right now is that the US, and particularly President Trump, overestimates his power to shape the international system. So he thinks he can bully Europe and take Greenland. Well, there was a bit of a backlash. He thinks he can go to Iran and easily subjugate them, maybe bring about regime change. He finds himself with an oil crisis. You know, he thinks he can go to China and get them to help with Iran. And the next thing we know is he's got Putin visiting. So across these different areas of geopolitics, there's this fake assumption that it's all as easy as Venezuela, where they just abducted the president. It's not that easy in the world, and America is overestimating its power.
But what does it mean for China? I mean, China is also going through big changes economically, and yet I don't know whether President Xi is a real winner in all of this reshuffling.
Sure. So China is in this paradoxical position where its domestic economy is not good. If you set aside just the recent uptick in inflation, which is purely a product of oil prices and the war, they basically had, you know, almost 4 years of deflation. They're not out of their real estate slump. They have a terrible demographic challenge. There's lots of things which are bad. Even their great tech companies are not very profitable. If you were a shareholder in BYD, great electric cars, but you didn't make any money in the last year, right? No. So there's lots of problems with China, but what they are optimizing for is not economic success or the happiness of their consumers. It's power. They want power, and they're good at power. And that's why, you know, if you look at tech, they are very good at the cutting edge. They are very strong in, you know, not only rare earths, but sort of, you know, electric vehicles, pharmaceuticals, the materials are used to make the pharmaceuticals, the kind of precursors, all of that. China is like strategically encircling what it sees as a sort of, you know, choke points that he can use to have leverage over the West or over other countries. And they're good at this. And, if America just says, oh, they have a demographic bust, we're fine. No, that's a mistake.
But Sebastian, power for what? So at the end of the day, is it because they want to win a race, be it on AI or other things with the U.S., or is it because they want to be the greatest superpower, or is it because they want to be so powerful that they can take Taiwan and no one can say anything?
Yeah, I think there are sort of, outgrowths of the fact of having power, like being able to absorb Taiwan. I think they would like to do that through the threat of a blockade. They don't want to invade. Xi canned all his generals just a year or so ago. So he may not be in a position to do a military action in Taiwan, but he would like to absorb it. So there are those kind of goals. But actually, I think China fundamentally sees power as an end in itself. After, those long centuries of humiliation, it wants to regain its position as the most powerful and feared country in the world.
Does China need the U.S.? And actually, if we go on to this AI race, I keep on hearing they're only 3 months behind, 6 months behind, maybe LLM. This feels like it's around the corner.
Yeah, absolutely. So the best measures I've seen are, if you want to be precise, an 8-month gap between the frontier AI models in the U.S. and the best models in China. But 8 months is not very long, and China is faster and better in other respects. So it's better probably at productizing the AI model, turning that into a useful thing in industry. They serve their models much more cheaply than American models, which is positive for the diffusion of the tech. So they have advantages as well as this slight disadvantage in where their frontier models are. So I think net-net, China is kind of almost there, almost up to where America is. So again, the lesson here is we have near parity, and we shouldn't think of the US as able to push the Chinese around.
So what does this mean for the U.S.? Because I know, last week there was this delegation, mainly of chief executives, and it seemed that President Trump's main objective was actually getting deals. It wasn't necessarily getting an agreement on Iran or trying to help with Ukraine. It was business deals for the financial companies, the tech companies. NVIDIA was one of the last chief executives to be added to the trip. Do they want a deal?
I think fundamentally, America needs to have a sort of perspective shift on its AI policy and its competition on semiconductors and all that. Instead of saying, we will have the AI, the Chinese won't, and will dominate, which is kind of what the Biden administration decided back in 2022 when it first imposed these chip export controls. Give up that idea. There's going to be near parity. China is a technology superpower. The US is a technology superpower. What we should be talking to China about is not how do we get ahead of them. It's how we should do a joint deal where we prevent AI from proliferating to rogues. That could be criminals, it could be terrorists, it could be rogue states. And with models like Mythos coming, which can just completely destabilize global finance and do other horrible stuff. And this is not theoretical anymore, this is real. We have now AI that is super destabilizing. So just as with loose nukes in the Cold War, we need an equivalent of the IAEA and the Non-Proliferation Treaty to stop that from going viral.
Do you think anyone's really looking at it? I know, and you spent 3 years actually following, Demis Hassabis to try and understand what they're building. We hear from a lot of these chief executives that they worry about it, but actually because they're in this, race to build it very fast, they don't have really time to think about the ethics.
That's right. So Demis Hassabis would say, as the leader of DeepMind, he would love to make AI safe. But just making AI from one lab safe when there's 6 other labs, and several of them are in China, that doesn't make the world safer. So what he's done behind the scenes in the past is, for example, he suggested to Rishi Sunak, the former UK Prime Minister, why don't we have a beginning of an AI global discussion? And the result was the 2023 summit at Bletchley Park. I think now he's also doing things behind the scenes, but he said to me, actually, if I succeed, my idea for what we should do next, people will think it was Donald Trump's idea. I don't want to take the credit. The way you're effective in this game is you act a bit quietly.
Do you think we'll see something on that front from the US?
I think because the power of these models is getting so scary, I think we will see something. Already the US government has done a 180 from saying, let's just accelerate AI, to suddenly saying, oh, we're worried about Mythos. They've effectively taken control of the rollout of Mythos away from Anthropic, the lab that created it. And they've said, you don't get to decide, Anthropic, who your customers are going to be. We are deciding who you're going to give this model to. So the US government has waded in. They're scared of this technology. They see the need to control it. They want to regulate it. And by the way, guess which government likes regulating the internet? China. So there is a shared interest there between the US and China, and we ought to be leveraging that joint interest.
Sebastian, thank you so much for joining us. As ever, Sebastian Mallaby, their author and senior fellow at the Council on Foreign Relations. Now, coming up, we discuss the concerns of shaking up the world of private markets. That's coming up next, and this is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning. Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Now, Joachim Nagel, the Bundesbank president, says the ECB may have to respond to the economic challenges arising from the conflict in the Middle East. Well, he spoke to us alongside François Villeroy de Gallo, the French central bank chief, on the sidelines of the G7 meeting in Paris.
This whole conflict started more or less 3 months ago. Now we know that this energy supply shock is more persistent. So we are moving away from our baseline scenario. And so this is, I guess, I believe, a fair description of where we are at the moment.
But does that mean that we are now in an adverse and severe scenario? How are you thinking about it? Because that's the framework the ECB has put up for us to think about.
It is, as always, we will take our decision on data. We will come together in June, and then we will have our decision based on data. But I alluded to it. There is it's a higher probability now that we are now away from that baseline scenario. That means that maybe we have to do something.
And one of the big questions is about the secondary effects and whether or not this inflation is spreading from just the energy headline level to the broader core. What is your analysis of that?
Can I first insist on the fact that figures are very volatile if you look at financial markets. So we shouldn't focus on data points, but look at the trend. As Joachim just said, as this conflict is lasting for longer, we have to look at more structural, long-term consequences. To give 2 obvious examples, we discussed financial stability and the bonds market situation. We also have to accelerate our energy diversification and reducing the dependency of most of our countries, starting with Europe, from fossil energy. It's obvious, but let us not limit our response to an emergency answer. On the monetary answer, I think the data will matter more than a precise date. And this is focused on the second round.
So for the market's expectations, so they say that there's going to be 2 to 3 rate hikes from the ECB this year, beginning in June. Are you comfortable with that analysis? Do you find that that is a correct interpretation of what we've seen so far?
I guess it's not helpful to speculate about maybe the numbers or when do we what. I think this is not helpful. I think this meeting-to-meeting approach based on the data that we have on that meeting, this is the right way to do it. So we showed our commitment over the last 4 years. We hiked 10 times, we lowered 8 times, and we will show the same commitment when we're coming together for our next meeting.
We think of the French... Yeah.
Can I add on markets 2 things? We are not market-driven, we are data-driven, obviously. That said, through markets, there is a tightening of financial conditions, and it already plays a role in fighting inflation threats. So we will see, and I think that this is the most important commitment. We showed it in the last 4 years, but European households, European firms can trust us, ECB, Bundesbank, Banque de France, to bring inflation back to target. And this is, believe me, the most important commitment.
Okay, we'll come to you shortly. Well, that was the ECB Governing Council members, of course, Joachim Nagel and the outgoing French Governor François Villeroy de Galhau. Now let's finish the hour with private markets. Yes, it's going through something of a reckoning period at the moment. Joining us now is Jed Laskovitz, Global Head of Private Markets and Customized Solutions at JP Morgan Asset Management. Jed, thank you so much for coming to see us in London. Look, private markets have been building up quite a lot of dry powder. We're just talking about it in the break. Is that leading to difficult conversations between LPs and GPs about extending investment periods?
Yeah, private markets are now a large asset class, $21 trillion. And I think what we're finding is investors are thinking about really 2 ends of the risk spectrum. Mm-hmm. At one end, there's where can they place capital in asset classes that perform well in inflationary environments, provide a degree of protection, low volatility, yield, stable returns, areas like core infrastructure, essential services, massive demand for core infrastructure. We were just talking about the utility deal announced a couple days ago, now the world's largest utility. Utilities are hot again after being kind of pretty quiet for a while. And then the other end of the spectrum, and while there are some challenges in the 21 to 23 vintages, and we were talking about unsold companies, there's still a lot of excitement about the opportunity in AI. And if you're ignoring private equity and private markets, you're ignoring a large part of the market.
But are you still expecting some kind of shakeout? If you look, for example, at zombie fund managers, how many will have to wind down?
Yeah, I mean, you bring up a great point. Manager selection is incredibly important, and understanding your manager's experience, what they've done, their track record, all of those things. And yeah, in a world where there are higher rates and it continues to put pressure, the IPO market and the M&A market, although it was a good first quarter, it was really dominated by mega deals. As this continues, it will put pressure, but at the same time, there are incredibly strong growth opportunities in private markets and private equity in particular.
So, Jed, I mean, going back to the data center deals, how are you structuring some of those deals given your size? How much is it on infrastructure? How much of it is on real estate and other funds?
Yeah, we're at the power end of the infrastructure side. Think about the lights in this room, essential services, heat, water, electric, and you bring up a great point. Energy demand is surging. After about 20 years of energy demand being flat in the U.S. and Europe and the U.K., it's growing at 2 to 5% a year. And people say, well, 2%, it's not that much. But when you compound that over 20 years, and also you've got electrical grids and utilities where it's been very hard for CapEx to keep up with depreciation. So the amount of investment required, McKinsey estimates that there's $100 trillion needed to enter this market in the next 20 years, out to kind of 2040. And at the same time, there's been $1 trillion raised in closed-end infrastructure funds over the last 5 years. So there's going to be a tremendous amount of capital needed to continue to fund this. And we haven't even talked about the energy transition, which is just essential for Europe and essential, to meet increased energy demand.
But Jed, we've also had this 10-year, backlog in PE exits at this stage. So what does that mean? Are you concerned about PE unable to sell their assets? Could the secondary, part of private markets exceed the size even of the primary market if they can't get out?
I think this relates a little bit back to the depth of private markets because companies are staying private for longer. because there are benefits to doing that. I mean, we just co-led, and Bloomberg led the story. We co-led the Databricks Series L. We got to know Databricks, around the Series B as a client, and then first invested in the Series J. And the fact is that companies can stay private for longer, and the ecosystem to provide liquidity in the secondary market and in the form of continuation funds where you believe there are strong companies and good investments exists. So I think the fact that there is more liquidity in the private equity market within the ecosystem is a good thing. It doesn't mean there aren't challenges and companies that might have challenges as higher rates persist and the M&A market isn't quite there with the amount of breadth that it needs in order to unlock some of those earlier vintages.
And Jed, also, I mean, the conversation is really changing, around retail. And actually, do you think retail investors and retail capital will form a significant part of private credit's future expansion?
Yeah, I think broadly speaking, across the alternative asset classes, absolutely yes. Yeah. And I do think private credit will continue to play a really important role in individual investor portfolios. I do think any asset class that has taken on that significant amount of flow in a short period of time, will from time to time have its challenges. And there was the AI wobble, but by and large, it's been idiosyncratic. I do think when you think about a diversified alts allocation, real assets, private equity, private credit, over time, individual investors will need to build a more diversified allocation, and the opportunity for things like the LTIF and the LTAF, regime in Europe, and the different structures in the U.S. provide opportunity to provide that level of diversification and advice. One of the questions that gets asked is, how come that market hasn't grown faster? Well, it's the education gap, and I do think these things take time. I mean, look at the ETF market. Now it's kind of grown to trillions from zero. So these things take time, and I do think it's an important facet for individual investors.
So interesting, Jed. Thank you so much for joining us today, Jed Laskovitz, Global Head of Private Markets and Customized Solutions at JP Morgan Asset Management. So that's it for the Pulse. We'll have plenty more throughout the day. Up next, Bloomberg Brief, and this is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, future is on the rise after a stock's 3-day losing streak. Yields retreating from multi-year highs. NVIDIA front and center today. Investors awaiting the chipmaker's report card and seeing about its growing competition. And state primaries test President Trump's grip on his Republican base ahead of the midterms. Let's get a check now on the last few hours of action around the world and markets. We'll start in Tokyo with Alice French for the latest from Asia. Alice.
Good morning. Yes, look, a down day for us here in Asia with the Nikkei seeing actually its 5th straight day of declines. That's the longest losing streak since January. I think a lot of people taking money off the table in the AI trend ahead of NVIDIA's earnings. Kospi as well, another down day. Some news that the Samsung Union is planning a strike, really hitting sentiment there, although Samsung stock itself did manage to pare some of those losses later in the session. And moving away from stocks into bonds, we had some relief for the bond market today from a stronger than average demand for the 20-year bond sale. The yield on the 20-year JGB actually dropping as much as 10 basis points at one point. But of course, those yields are still up there, close to multi-decade highs. There is still quite a lot of jitters around those kind of yields and the fiscal concern that's hitting the stock market as well, I think. But yeah, NVIDIA's earnings are really going to determine where things go from here.
Yes, I have a feeling that's going to be a global story. Alice, thank you so much. That's Alice French. Now to London for a look at Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. So yes, we are seeing some yield relief across the continent here in Europe as well, particularly in the UK, which has had such a tough time in the bond market recently. What we have seen is the softest inflation rate coming from the UK in about a year. So we're seeing a decline in that 10-year yield of some 9 basis points, kind of outcompeting on that decline today. But again, still, those rates are elevated given some of the uncertainty that we've seen here in the UK. Let's flip and talk about stocks, because it's been a really interesting story yesterday that Euro Stoxx 600 had a pretty strong day. They were buoyed on the back of some pretty significant earnings reports showing strength from some of these companies. But there's been a little bit less movement, at least so far today. So trying to see how a lot of these companies kind of return some of the earnings, and again, waiting for those NVIDIA results, which have implications for semiconductor companies here in Europe.
Charlie, thank you so much. Charlie Wells there in London. A similar story here in the United States. A little relief on yields, if you like, but really we're so much more elevated than we were even just yesterday morning. Like, look at the 30-year yield. We're above 516, down almost 2 basis points, albeit. At the front end, 408.69, so much higher than we were at the end of last week even, but we are down 3 basis points today. Now, part of the reason is oil dropping, and dropping more precipitously in the last few minutes. You see New York crude, which has rolled over to the July contract. That's trading at 101.83, well below where we were yesterday. And Brent crude down more than 2%. It dropped, like I say, just another few cents in the last few minutes. We are seeing futures pointed higher today. NASDAQ futures in particular, possibly with some NVIDIA optimism out there, but we are coming off the back of 2 days of declines just this week alone. All right, let's get to some individual movers. Here is Chloe Melly in London.
Good morning, Bonnie. NVIDIA is, of course, the big story of the day ahead of the earnings later today. And investors are very keen to hear about efforts to ramp up production and to fend off competitors. And it seems that the market is overall quite optimistic, quite positive ahead of the earnings later. And we have got shares up about 1%. It's also, those earnings are also going to be about the general health and state of the AI economy. And so seeing the broader chip making sector move on the back of that, and Intel in particular actually up about 4% in pre-market trading. And finally, we have got Carver also in focus this morning, the restaurant chain. It has beat analyst expectations, and this really pushes back against fears of a broader downturn in that restaurant business. And there's one item in particular that did really well, and that is the pomegranate glazed salmon. So it might be a little bit too early in the day to talk about fish, but that was a very big boost for that company, and we're up almost 7% in pre-market trading on the back of those results.
Sounds delicious. Chloe, thank you so much. Chloe Melly there in London. Coming up this hour, we're going to be speaking with RBC's Amy Wu Silverman. She'll join as she sees investors going from wait and see to full-on FOMO. Investors staying focused on NVIDIA earnings today, though, scheduled for after the market close. Results from the world's most valuable company should give us an update on the state of the AI economy as we see record investment across many industries. Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, we are expecting particularly data center revenue to grow more than 85%, 88%, I think is the exact number. I mean, will that be considered a good quarter for NVIDIA?
I mean, typically, in fact, in recent quarters, NVIDIA's come through with earnings beats, and the markets and investors have reacted negatively to that. There's been this stretched expectation versus delivery in terms of how investors think about this company. That's up about 18%, the share's up about 18% year to date, and that has underperformed the broader semiconductor space. I think you're right. Look, the data center part of the business is absolutely front and center for NVIDIA. That is essential in terms of thinking about GPUs and the move from Blackwell to Rubin. And so it's the demand picture out of the data centers, the forecast that's going to be really, really interesting. Yes, you're right. For the current quarter, first quarter, sales overall for the business expected to come in at about 80% increase for the first quarter. But it will be the guidance in terms of giving us an indication around demand. There's very few signs that demand is letting up for these AI accelerators that NVIDIA produces. It may be more about whether or not they can actually supply that demand and whether or not they continue to have that hold on the supply chain to meet that demand. And that will also be in focus for investors with these earnings.
So we have a little bit of a problem with Samsung and its largest labor union. Talks broke down, and that's threatening a chip plant supply. It could actually, if it continues on, disrupt the whole global chip supply. Tom, what's the story?
Yeah, look, this is the world's largest supplier of chips, so this could have a major impact on global supply chains at a time, of course, when the markets and global economies and companies are wrestling with higher chip prices, and particularly high bandwidth memory, which Samsung provides quantities, huge quantities to data centers. So this has significance to the AI story, but also more broadly as well. If indeed this strike goes and comes through, it could happen on Thursday. But we know that workers there are pushing for a cut of the profits. Samsung stock, again, up more than about 100% year to date. That has performed very strongly, particularly because the pricing around these chips has increased, the massive demand and the fact that there is a shortage of supply, and Samsung has benefited as a result of that. Workers now want a slice of those profits. So at this point, we're getting very close to the deadline, and negotiations remain very, very heated. They are saying, the workers' union saying, they are getting ready to strike. We'll see if it happens. Again, if it does, it will be significant for the supply chain around semiconductors.
Absolutely. Also significant for Silicon Valley workers, Meta has begun its cuts, 8,000 jobs globally, and we've already heard of Meta starting in Singapore.
Yes, and to be clear, we knew that this was coming. This had been flagged. Bloomberg has reported on it, but this is the day when it happens. So obviously, on a kind of personal level, very significant for those employees affected at Meta. And coming just a day, and we discussed this yesterday, after Meta was looking to shift roles, about 7,000 roles and 7,000 workers into additional and different roles. Now they are starting to implement those previously flagged 8,000 job cuts, as you say, starting in Singapore, and those memos will be dropping into the inboxes of other employees throughout the world of Meta today. And they started, as you say, in Singapore, 8,000 jobs. That's about 10%, almost 10% of Meta's overall workforce.
Massive, massive amount of jobs. Tom, thank you so much. Bloomberg's Tom McKenzie there. Over in Beijing, Chinese Premier Xi Jinping and his Russian counterpart reinforcing the two nations' ties on President Vladimir Putin's state visit. Discussions between the two included the conflict in the Middle East. Bloomberg's China economy and government editor Alan Wong joins us now from Hong Kong. So ostensibly and for most of the real reason for this visit was to talk about the Siberia 2 gas line, Alan, but apparently the two talked a lot about wars, and not really the Russia-Ukraine war, but more about the Middle East. What did China tell Putin?
Yeah, that's right. They spent a lot of time talking about the conflict in the Middle East. And China made very clear that it wants peace back to the region as soon as possible. And the Chinese President Xi Jinping said that resuming the war is unacceptable. This coming just hours after U.S. President Trump said that he threatened a big hit to Iran if it doesn't agree to the terms for ceasefire. So yeah, that's what Xi told Putin. And in addition to that, they did signed some agreements spanning trade, technology, and other areas of cooperation. But the overall takeaway is just that China and Russia's ties are ironclad, and then both leaders exchanged really warm words about one another, with Putin saying that one day apart is like 3 autumns, which is a Chinese saying that people used to use to describe how much one misses the other. So overall, the trajectory of that relationship is very clear, even if the situation in the Middle East is less so.
So then what kind of leverage does China have over Russia on the issue of the Middle East war? I mean, Premier Xi can say what he wants, but essentially Vladimir Putin can also do what he wants, and it's not going to affect the relationship, is it?
Yeah, given that they have repeatedly vowed to uphold their no-limits partnership, I think they will not be talking about such strong terms like leverage or bargaining chips. They'd be using a lot of rhetoric to signal that they're on the same page on many things while signing agreements to deepen their actual relationship. So it's unclear just whether China actually wants to put any pressure on Putin to help bring an end to that war. And I mean, China's role, even outside this relationship, has been quite not easily understood, because in public it has always called for a ceasefire, and it has helped mediate on the sidelines. But I mean, has it really put its thumb on the scale to end the war or do anything meaningful to help reopen the Strait of Hormuz? It's less clear. But there are plenty of reasons for China to accelerate that process, because we're seeing just how the economy slowed down. The economy's growth slowed down across the board based on data released just days earlier. And that's just one economic reason for China to do more on this front.
Amazing context, Alan. Thank you so much. Bloomberg's Alan Wong there in Hong Kong. On trade now, the EU officials gathering to finalize the long-delayed US trade deal before the July 4th deadline set up by President Trump are still talking. Bloomberg's Oliver Crook joins us now from Brussels. So what's the latest, Ollie?
Yeah, that's right. So until about 2:30 in the morning, you had deliberations on the EU side finalizing the text, the final law, to bring in this trade agreement between the United States and the Europeans. Remember, this began as a handshake deal almost a year ago between Trump and Ursula von der Leyen. There have been a number of different delays, but now we have, hopefully from the European side, the finalized text of this law, and to basically bring into effect the trade deal that was agreed to about a year ago. Now the next steps is it'll have to go voted in Parliament at the European level, has to be sort of okayed by the member states. But Vani, interestingly, there were a couple of things that were added into the text here that I think are worth mentioning. For one thing, there is a suspension clause from the European side if the U.S. does anything that basically violates the trade agreement or does something completely unpredictable or threatens, for example, another set of tariffs. That's the sort of safety measure the Europeans have put in there, that they could suspend the trade deal. There's also a sunset clause. This is a trade deal that will expire theoretically from the European side, needs to be renegotiated, validated by the end of 2029. They changed that. Originally that was going to be in March of 2028. That means that was going to actually have to be renegotiated during the Trump presidency. They have now changed that. So those are a couple of the sticking points that have still been sort of put into this text. The real question now, Vani, will the United States react to that? Will these stipulations sort of be acceptable to the United States? When we spoke to Jameson Greer a couple of weeks ago, he said he wasn't too happy about it, but I guess we'll have to wait for Truth Social over the next couple of weeks to see if there's objection for the United States and if we can get this deal in place before July the 4th, which is, of course, President Trump's deadline.
Yeah, or his stated deadline, at least. Oliver, thank you so much, Oliver Crook in Brussels. Now to other top stories trending on the terminal this morning. UK inflation falling to its lowest in more than a year. CPI rose 2.8% in April compared to 3.3% the previous month. However, the decline is expected to be short-lived. The BOE predicts inflation to accelerate for the rest of the year due to the energy shock from the Iran war. Standard Chartered CEO Bill Winters seeking to reassure staff following backlash from his remarks on using AI to replace, quote, lower value human capital. In a memo, he wrote, I know this may be unsettling when reduced to simple headlines or a quote out of context. Standard Chartered plans to eliminate close to 8,000 support roles over the next 4 years. Meantime, over at HSBC, CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he was urging employees to adapt rather than resist the technological shift. HSBC is weighing deeper job cuts that could impact around 20,000 roles. Coming up, a victory in Kentucky for President Trump's candidate, a strong signal of his tight grip on Republican voters still. More on that story next. This is Bloomberg.
Are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The winner of the race tonight is not so much Ed Gowron. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Ed Gowron, President Trump's endorsed pick for a congressional seat in northern Kentucky, victorious, and defeated longtime House Republican Thomas Massie. It was a strong sign of the grip that the president has on Republican voters. Joining us now from Washington is Kate Ackley of Bloomberg Government. It's interesting, Kate, because the president's national polling figures and, favorables are really in the dump, right? I mean, at the worst ever, really, of his second term. But was this frustration in particular with Massie, who had been sort of the 14-year incumbent, or a vote for the MAGA movement?
Well, this was definitely the MAGA movement came in with full force, spending big money in this race against Thomas Massie. It's always difficult to defeat an incumbent, but this so far this year, President Trump has a pretty good record of the people that he's taking on losing. We saw it this past weekend, even with Senator Bill Cassidy in Louisiana losing his primary against a Trump-backed opponent. And so President Trump's record of who he's, the winners he's picking in the Republican Party and reshaping the Republican Party to the way that he wants it to be, the candidates that he wants to win, he's racking up a pretty strong record so far in this midterm election cycle.
Massive amount of money went into this particular election, though. Does that take something out of the coffers for November, or will they just raise more?
Well, there was also outside money from groups that are not necessarily specific to MAGA, if you will. We saw the AIPAC, the American Israel Public Affairs Committee, come in and also spend big against Thomas Massie, who has voted against funding for Israel issues on Capitol Hill before. So there was a real coalition here of outside groups, including President Trump and the MAGA outside groups coming in and spending against Massey. And, I think some of what my sources are telling me, looking ahead to next week, a week from yesterday, on May 26th, there's a big primary coming, a primary runoff in the Texas Senate race. And that's one where a lot of my sources are saying Republicans are costing themselves a lot of extra money. They've got, of course, incumbent Senator John Cornyn in a runoff against Ken Paxton. And that already, I think we tracked as of yesterday, in that race, already $161 million, that includes the Democratic side as well, have been spent in advertising alone. And I mean, so it's 161 million and counting. So, Democrats are feeling pretty good about their chances, given that as of yesterday, President Trump came in and endorsed Ken Paxton against Cornyn. Political insiders in Washington think that Cornyn has a better shot of winning against the Democrat in the fall.
All right. Kate, just in terms of the Iran war, the Senate seemingly even more opposed than it has been now to the president's war in Iran. I mean, does that matter, even if it votes against the war?
Well, so here's the thing. It ties in with these primary races. Senator Bill Cassidy, who lost his primary over the weekend, again, to a Trump-backed opponent, he changed how he's been voting on that and is now voted with, some Republicans, but the Democrats on that. So, as more people lose their primaries, as, Senator Cornyn loses this runoff, how does he vote? And what a lot of people, Republicans and Democrats in Washington, are saying to us is that the Senate Republican majority is going to become more and more ungovernable, if you will. It's harder to corral them if you have people who are not running for re-election, those who've lost their primaries, those who don't feel as strong a bind to doing what President Trump wants them to do.
Kate, fascinating. Kate Ackley there of Bloomberg Government in Washington. Coming up, President Trump under fire after a clause in his IRS lawsuit settlement is unveiled. More on that and a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
For your front page news, first up on the Washington Post, bipartisan skepticism of President Trump's deal to resolve legal claims against the government. The deal involves a $1.8 billion fund to compensate targets of so-called weaponized justice. Now, addendum posted on the DOJ's website says the IRS would be forever barred and precluded from pursuing unpaid tax claims against Trump, members of his family, or his businesses that arose before the settlement was reached. Next up, the Financial Times reporting EU governments are discussing whether former ECB President Mario Draghi or ex-Chancellor Angela Merkel could represent the bloc in potential negotiations with Vladimir Putin as momentum gathers to reopen formal channels with Russia. Foreign ministers will discuss options next week in Cyprus. Washington and Kyiv express support for the idea. And the Wall Street Journal reporting officials are scouring records of trades made before Trump's social media post on March 23rd to look out for insider trading. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Taking a breather, futures on the rise after stocks' 3-day losing streak. Yields retreating slightly from multi-year highs. NVIDIA front and center. Investors awaiting the chipmaker's report card amid growing competition. And state primaries, testing President Trump's grip on his Republican base ahead of the midterms. Let's take a look at these markets then, starting with bonds. As you can see, a tiny bit of relief, but we're still higher, particularly at the long end, than where we were this time yesterday, with the 30-year yield at 516.58. Look, we got that repricing last Thursday, and we haven't really ever come back from that. We were at 402, 401 in the middle of last week on the 2-year yield. We're now firmly close to 410, and it hasn't changed that much in spite of this drop of 2 to 3 basis points. We're seeing that around the world, by the way, as well. A slight drop in Japan even, although the yen is above 159. Let's take a look at equity index futures and oil, because we're seeing this quite substantial drop-off in oil, but it's important to note that the December contracts are still at records, both for Brent and WTI. Also notice that even though the spread was narrower yesterday, we have rolled over to the July contract on WTI. It is at 102.44 right now, and as you can see, equity index futures pointed higher. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. NVIDIA is in the green this morning ahead of its much anticipated earnings, and investors will be really keen to hear about efforts to ramp up productions and also efforts to push back against competitors. And it seems there's actually a fair bit of optimism in the market ahead of those earnings. And so we're seeing NVIDIA stock up about 1.5% this morning. And of course, those results are really going to be make or break for the ongoing chip rally. And that's why we are keeping an eye on that broader chip sector as well this morning, where we can see as well a fair bit of optimism there as well, with Intel, Micron and AMD all in the green this morning. Of course, what NVIDIA says about the health of the AI economy is going to be very important for those companies as well. And finally, let's end with a very different sector, with the restaurant chain operator Cava, which has reported results ahead of expectations. This pushes back against fears that there is this potential downturn in restaurant attendance because of weaker consumer spending. And so it seems that Cava is quite resilient in that market, and we're up almost 7% in pre-market trading for that company.
All right, nice move there for Cava. Chloe, thank you so much. Chloe Malley there. Stock futures bouncing ahead of NVIDIA earnings. RBC's Amy Wu Silverman weighing in on what she calls a shopping spree for calls, especially in tech. She writes, in the past month, we've gone from wait and see to full-on FOMO-MOMO right-tail chase. The stats we've seen on option call buying have been nothing short of historic. Amy is head of derivative strategy at RBC Capital Markets, and she joins us now. Amy, I feel like that's been the case the last few times we've spoken. Is this market not a little concerned? Shouldn't everybody be slightly hedged here?
It's a good question. I'm a little concerned, but, you know, I think this comes down to positioning somewhat. If you've been under positioned, then your risk is unfortunately to that right tail. I can tell you from the last time we spoke, a lot more people have jumped in the pools at that all key positioning indicator. I think that is going to start to trend more towards fears of the downside. I think we obviously have to wait for the big NVIDIA print to go first, but you're really starting to see signs now that perhaps momentum on that FOMO chase is getting a little frothy.
Yeah, what is NVIDIA positioning telling us, NVIDIA in particular, and will we get that move that we're maybe anticipating? I mean, we have seen sell-offs after earnings, even though we've seen beats for the last several quarters. Could that change this time?
Yeah, it's exactly right. The last few quarters have been very different than the quarters before that, where there was a lot of exuberance. I can tell you right now that we're in skew inversion. So just to translate that, you are seeing so much call optimism that call implied volatility is outweighing the put implied volatility. That usually indicates, you know, a lot more momentum. If things do work, be getting more momentum. We have gotten to the point where just the pure sheer scale of NVIDIA makes that more and more difficult to do. I think that's why when you break down the last 8 quarters, this was happening more in the earlier quarters than they were in the next few. However, you know, I would never count NVIDIA out. I do think we have to get through this one or the other before we can determine whether momentum overall on the AI trade flags.
Amy, if we do get a SpaceX IPO this week, and obviously it's not a public company, but at what point will you be able to gauge market sentiment around that particular company? How long will it take for, positions to get put on and so forth?
Yeah, that's another great point. It's interesting. Every time we talk about where the inflection point could be, shouldn't we be worrying about geopolitics? Shouldn't we be worrying about the fact that the Strait of Hormuz is still closed? People bring up these fast-track IPOs, SpaceX for one, but also Anthropic and OpenAI, all being factors that can continue this momentum train. I do think, especially when you think about the retail bid that is in the market that essentially came back, acted as another leg of the stool after April, that certainly could be something that still gives a punch to this rally. And, that's not just going to be in the next month. That's obviously going to be towards the end of the year as well if we get that other two big IPOs happening sometime in 2026.
Amy, is the VIX broken, or is it telling us something different now that it didn't used to tell us? I mean, we're at 18 and change. We were at 17 most of last week. And this even with, bond markets going crazy around the world, or at least repricing somewhat.
Yeah, to some degree, you do have to be concerned about the mechanism. I'll give you one really simple point, which is that the VIX is just a weighing of S&P put options, but also call options. So when you have this phenomenon, which people in options like to call spot up, vol up, but all it means is there's much more of a bid to those call options, that's still influencing your volatility, even if it's coming from the right side. So you can see VIX move because of that. But if it's because of a chase and upside, does that necessarily mean fear? So I think that translation mechanism you do have to be wary about. The second aspect of this that I would say is you still have a lot of dispersion. You still have that duck quacking. You get semis zigging one way and software zigging the other way. So on the surface level of the index, it doesn't seem like a lot is happening, but I think we viscerally know that is a lot happening under the surface, Vonnie.
Yeah, it's an interesting, explanation. You tend to just think of the VIX as the so-called fear gauge, and it really has never been that. Stocks that have ripped, you say, Amy, have notably higher volatility than stocks that are down, which means that, we could be looking at an up crash faster than we might see a down crash.
Yeah, to some degree that's happened, but one study we did was we essentially took, since March 30th, essentially the low in the market, all the returns of the S&P 500 by bucket. So, you could be down 15% to X percent, or you could be up 50% to whatever percent. When you look at those buckets and you look at the realized volatility, there's higher volatility on the upside. So, one nuance that I think it's really important to make is this hasn't been a melt up. It's been more of a crash up, and crash ups tend to be less stable than melt ups. It's not a grind to the market.
It seems that this earnings season caught everybody off guard by how good it was, even though previous earnings seasons haven't been bad, right? We've had sort of good earnings seasons for a while now. It's just investors were very much more receptive to this one, it feels like, and were a lot happier when companies met and beat. But we saw massive moves in certain companies. I mean, Intel, the memory chip makers, Cisco. Is that normal, Amy? Is this a normal environment?
No, I don't think so. You certainly have seen outsized realized moves relative to implied moves. But, you've also seen this commentary of everyone has managed to look through the bad for the good. To some degree, that's justified, yes. But, especially when we go back to where that bond volatility has been, when you look to history, that mechanism tends to bleed into equity volatility. I don't think we've seen that yet, but that doesn't mean it's not going to hit. There is a part of this market that's very nervous. You have not seen it hit equity volatility or equity skew to a high degree yet, but I actually do think that it's going to happen. It's just a question of when. Until that, quote unquote, when happens, the party still remains. You still have NVIDIA, you still have these fast track IPOs, but I do start to think you're going to see other metrics start to pick up, like equity skew, simply because of the fact that that momentum factor is going to flag, and people are going to start to scratch their heads and think about what's in the months ahead.
Cannot wait to speak to you at that point. Amy, thank you so much. Amy Wu Silverman of RBC Capital Markets. Now to other top stories trending on the terminal this morning. Goldman Sachs is said to have the lead role on SpaceX's IPO. Morgan Stanley is also listed as a lead bank. SpaceX could file for an IPO as soon as today, aiming to raise $75 billion at a valuation of more than $2 trillion. HSBC CEO George El-Hedary warning that AI will destroy certain jobs and create others. El-Hedary saying on Bloomberg's Leaders with Francine Lacroix that he is urging employees to adapt rather than resist the technological shift. HSBC is weighing deep job cuts that could impact around 20,000 roles. President Trump spares banks from an immigration crackdown. U.S. bank executives have been concerned that the president would force banks to verify the citizenship of new and existing customers. Instead, an executive order issued on Tuesday instructs regulators to advise banks on how to spot suspicious activity and determine customers' true identity. That's seen as a more limited measure. Coming up, President Trump's primary pick for Kentucky wins the race. His grip on Republican voters bolstered ahead of the midterms. We'll discuss next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The winner of the race tonight is not so much Ed Galrine. I'll come back to that. But it's the Republicans of Kentucky Congressional District 4 and their families who I will be a champion for in Washington. They're the winners.
Kentucky congressional candidate and winner of that race, now Ed Galrine, who was handpicked by President Trump. He defeated Thomas Massie in one of the most expensive primaries on record. Back with us is Kate Ackley of Bloomberg Government in Washington. How can President Trump have such bad ratings nationally and yet go into a district and basically defeat a 14-year incumbent, Kate?
Well, he definitely seems to be having this role this election cycle in Republican primaries as sort of a kingmaker. His endorsements, he's got a strong record of success now in Republican primary endorsements. We have another one that we'll be watching next week, of course, as well, where he has endorsed against sitting Senator John Cornyn. So he has another big test. He endorsed yesterday Ken Paxton against Senator Cornyn. But yeah, I mean, it's always a big deal. It's always very hard to topple an incumbent. And so obviously this was an extremely costly race. We saw a lot of outside money, including from sort of MAGA coffers, if you will, but also the American Israel Public Affairs Committee came in and spent against sitting Representative Massey, who has voted against funding for, Israel efforts in the past. President Trump had a real grudge against Massey, who had voted against his, the big, beautiful bill last year and other measures. So, this was kind of a deep simmering feud for a while, but obviously President Trump and his political operation put a lot of weight against Massey in this race and came out with a victory.
Yeah, absolutely. Kate, just in terms of the war in Iran, the Senate has been signaling even more opposition to the war as the weeks go by. What's next, and can the Senate do anything more but signal?
Well, this is an interesting situation, and it ties right in with these midterm primaries that we're talking about. On Sunday, or on last Saturday, over the weekend, Senator Bill Cassidy lost his primary in Louisiana to a Trump-backed, two people advanced to a runoff there, and Senator Cassidy was not one of them, and the Trump-backed candidate did advance. So now we're seeing sort of a new independence, if you will, for Senator Cassidy, who did vote for that resolution yesterday, which was a switch in his vote. What will Senator Cornyn do if he is to lose his primary runoff on Tuesday? Will his vote be sort of up for grabs, if you will, on this and other matters? And what Republicans and Democrats, in Washington are saying, that the Senate Republican majority will be difficult to govern, difficult to stick together. If you have people who have lost their primaries, they don't feel beholden anymore to Trump and what Trump wants. And, they could be sort of wild cards, if you will, in how they vote on that, on Iran war issues, but across the board.
Kate, fascinating. Thank you so much. Kate Ackley of Bloomberg Government there. Turning to tech, NVIDIA is set to report its first quarter earnings after the market close. Analysts estimating sales to have grown 80%, the fastest in more than a year. Bloomberg's Neil Campling joins us now. Neil, what should we be looking out for if you were a mind to look for red flags or even just amber flags at this point?
Morning, Bonnie. I think the questions around the NVIDIA ecosystem for AI that people will be focused on tonight is, for NVIDIA themselves, is there any sort of guidance increase that takes into account China now, which has been discounted in previous numbers that the company reported? Is there any signs that alternative chipsets are being custom-made by the likes of Google or the new ARM chips that were announced recently? Is that eating into any signs in terms of that demand appetite that's out there? The setup, as you say, the numbers themselves are huge in terms of $79 billion of revenue and 80% growth. That growth is expected, the growth rate expected to halve over the course of the next 2 years. Whether that transpires or not remains to be seen in terms of the longer-term outlook, but clearly at the critical juncture of the hyperscale ecosystem. And traders are pricing in about a 5.5% move on the stock either way post-results. Now that's potentially hundreds of billions of dollars. And to put it into context for you, NVIDIA's market cap is far larger than the entire market cap of the country indexes individually in Europe. So bigger than the FTSE 100, bigger than the DAX index, just NVIDIA's market cap alone.
Simply
So
gigantic.
just enormous numbers.
Yeah. Speaking of another giant, Samsung having problems with its labor union, how concerned should we be that we might be walking into a chip supply constraint?
It is a massive concern in terms of chip supply, the knock-on effects potentially as well in terms of the inflationary impacts that we're already worried about in terms of AI and the costs of some of these chips that have risen some 600% in some cases over the last 6 months. I think the main thing here is what happens to the fabrication plants? Do they go offline completely, or will we just be running, will they be able to run with fewer people in the factories? Because the key thing here, Ollie, is that if you take these fabs offline, it can take up to 6 months to come back under full production. And we've got demand that's so high out there right now, pricing so high as well, we just cannot afford to have these kind of supply disruption risks. So the next 24 hours for the whole AI trade are critical in terms of what Jensen says and what happens with Samsung and the unions and the Korean government.
Sounds like a Strait of Hormuz analog just for the chip world. Neil, thank you so much. That is Bloomberg's Neil Campling there. More earnings slated for today. 2 targets set to report before the bell. Let's bring in Bloomberg consumer reporter Maddie Parker. Maddie, what is Target going to tell us about the consumer?
Yeah, Bonnie, hi. It's a great question. I mean, Target, kind of all eyes really are going to be on that turnaround effort that they're trying to push for, and to see if that's still bearing fruits under their new CEO, Michael Fidelki. We know that they've been really pushing on their merchandise and on the tech in their stores as well. Analysts are expecting to see revenue increase, expect to see EPS up as well. But really, as you say, on the strength of the consumer, that is really what investors are going to be most interested in. Target, kind of their turnaround efforts have done well. Their share is up 25% so far this year, but they still have a very long way in terms of clawing back that stock price. And what investors are going to be keeping an eye out is kind of on their outlook for that own turnaround effort in terms of themselves and other big box retailers, considering the kind of business uncertainty and also that kind of subdued consumer demand that's come after obviously the outbreak of the conflict in the Middle East.
And I think Target is one of those big box retailers that's in a little bit more of a unique position because it sort of gets everybody across the income spectrum, right? I mean, of course, so does Walmart and so does some of these others, but Target is positioned to sort of appeal to everybody at its price point, not out of necessity, but just out of, interest. So there's something we can glean about perhaps every part of the US income spectrum here, isn't there?
Yeah, totally. I mean, as you say, their kind of customer base, it really kind of ranges across a whole spectrum of incomes. And obviously, big box retailers often say that at times to compress consumer demand, they're actually quite well placed, particularly in terms of that kind of value-driven proposition. We know that customers are prioritising value at the moment, but as you say, they also appeal to kind of the consumers that are at the higher end of the income spectrum, and they'll obviously be able to push forward in terms of discretionary spend, in terms of how much people are willing to spend on furniture, on electronics and apparel as well. And obviously, those people at the kind of higher end of that spectrum might be able to weather the storm that we're kind of experiencing across retail at the moment a bit better.
We get TJX today too, but we get Walmart tomorrow. Maddie, will we hear anything that we aren't expecting out of Walmart tomorrow?
Yeah, I mean, it's a good question. They kind of, I think people are expecting revenue to increase this quarter as well. Walmart have done decently, but again, as I say, they kind of, I guess people are kind of as interested as they are about how they're doing right now as what their outlook is going forward. We know that customers are kind of, they're reacting to the situation in the Middle East, as we say. But as we say, big box retailers, they do appeal kind of across that broad spectrum. So I think investors will be interested to see kind of how that kind of pans out across all their customers.
Final piece of the puzzle on the US consumer this earnings season at least. Maddie, thank you so much. Bloomberg's Maddie Parker. Coming up, those earnings and Fed minutes on deck in your day ahead. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. close, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Now a look at what's ahead today. First up, we get earnings from Target and TJX before the bell, and then the main event, NVIDIA reporting after market close. Plus, the U.S. Treasury is selling $16 billion worth of 20-year bonds at 1 p.m. New York time. And we get the FOMC meeting minutes at 2 p.m. New York time. That'll be a fascinating insight into the various strands of FOMC thinking. Some micro movers now before the bell. Cava up more than 7%. It had a beat and a raise, defying fears of a downturn in the restaurant industry. Toll Brothers is an interesting one, up another 2+% on earnings mover there. Now, obviously, Home Depot wasn't so great yesterday, but we did see those pending home sales come in better than expected. Orders, as Toll, hit the highest in 2 years. And Intel is up more than 4% now after the management team spoke at that JP Morgan conference. Analysts positive on the presentation on what's ahead for the company. This is your macro picture going into your Wednesday session. Crude a little lower. We've moved over to the July contract. S&P futures pointed higher. Tiny bit of relief in bond markets. That's it for Bloomberg Brief.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Davos, Switzerland, and this is Bloomberg.
This is not simply an AI-driven rally. It's a broad rally.
What we are seeing is the AI momentum continues to move forward.
Were it not for AI, this would be a very, very different story.
You asked me to pick a side right now, I would not own equities.
Just because you're not at 2,000 bubble territory doesn't mean you're not in a bubble.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, looking to snap a 3-day losing run. Equity markets bouncing back, heading into NVIDIA's quarterly earnings report as Goldman is gearing up to take on a leading role in the biggest IPO of the year. One bank CEO is looking to reassure staff following some very clumsy comments on AI-related layoffs.
Here would be my advice. Know your audience before you go speak to them, whether they're students, whether you're employees, whether you're giving a speech. The Standard Chartered CEO is saying that his remarks were taken out of context. But if you listen to what he said, which we played yesterday, they weren't taken out of context. That is what he equated to in terms of AI. He's talking about, in some cases, lower value human capital will need to be replaced.
Yeah, I'm with you. The context wasn't lost here. No. It wasn't lost at all. In fact, he's not the only one that is struggling to really communicate what they're trying to achieve with AI. We've talked about this repeatedly since the start of the week. The pushback over the weekend to some of the commencement speeches across colleges, across this nation, every time AI was mentioned, there is a real branding, PR, marketing problem around this push.
Unbelievable. The second AI was brought up at a number of commencement speeches. I know Eric Schmidt, the former Google CEO, got a lot of attention, but Jonathan, there was a number of them. One individual brought up AI and said, I know you guys don't like it. Booze, booze, booze. Deal with it. That's what he said to this graduating class, that they're seeing the future and saying, where do I have a place in all of this?
We're going to spend some time on this later in the program. We'll also spend some time on this. Check out the bond market. 2s, 10s, 30s. Yields coming in just a touch. That's a relief given the sell-off we've seen in the last 24 hours and the past few weeks. On a 10-year since last Monday, higher by some 25 basis points this morning, down 3 basis points. On 30s, the highest close we've seen on a 30-year yield going back to 2007. This morning, down a single basis point. It's difficult to put a lid on this because there are a lot of forces building outside of the United States.
Absolutely, a lot of forces. This is a global issue, and of course, a lot of this is being driven by inflation expectations and what is happening in the oil market. And the fact of the matter is, to this day, we still do not have an agreement when it comes to Iran. The president spoke about it yesterday, and he talked about the fact that basically he's going to give Iran 2 or 3 days, maybe Friday, Saturday, Sunday, something maybe early next week, a limited period of time to get to an agreement. I'm reading his quote here, or there's going to potentially be a resumption of strikes.
The headline event a little bit later after the closing bell, of course, full coverage today of what's going to happen with NVIDIA this morning in the pre-market, higher by 1.8%. It's had a great run off the lows from the end of March, up by more than 30%. But this has not been the blockbuster story of the last few months in the chip space. That's been Intel. That's been AMD. The gains elsewhere triple the gain we've seen on NVIDIA since the March low.
There has been other names that have just done an amazing job. Intel, you have to think, how much money is the U.S. government actually making right now based off their 10% stake? When it comes to NVIDIA, though, I think for this, and you lead a lot of the analyst research on this, it's either going to be a green light for the entire market to maybe rip and the AI trade to continue, or it's going to be a red light for those individuals that said maybe we're just overexposed, this trade is just overdone, and maybe potentially that's going to be a huge market signal to the downside.
That stock is up in the pre-market. Futures doing better this morning, higher by 0.4% on the S&P 500, following a three-day losing run over that period, down about 2 percentage points on the S&P. Coming up this hour, we'll catch up with Keith Lerner of Truist as elevated yields weigh on equities, Catherine Thompson of the Cato Institute as President Trump threatens a big hit on Iran, and Angelo Zeno of CFRA with NVIDIA earnings on deck. We begin this hour with stocks finding a firmer footing following a three-day losing streak. Keith Lerner of Truist writing rising oil prices and interest rates may finally be starting to stick to what has otherwise been a Teflon market. Keith joins us now for more. Keith, welcome back to the show. It's good to see you, buddy. This market run has been really quite powerful. The rally's been big off the March low. Just walk us through why you think this bull market is still intact.
Yeah, we certainly think the bull market still deserves the benefit of the doubt. That's been our mantra for the last few years. But, early in this month, we talked about this Teflon market. Nothing was bringing it down. We highlighted these risks that we all know about, oil prices and interest rates, which are obviously related, and they have moved up. And, underneath the surface, we've actually seen them bite. Look at retail. The equal-weighted discretionary sector is down about 10% from its highs. Retail sector is down about 10% of the highs, the lowest relative performance since the global financial crisis. So we are seeing things bite, but at the headline index level, it's still about AI. And, obviously we're all waiting for the print today. When you think about why markets have actually been somewhat more resilient relative to these headlines, AI is a common theme for large caps, for small caps, for emerging markets as well. And we think that theme is intact, but also probably likely due for a little bit of a rest here.
Well, Keith, let's build on that. The chip sector makes up about 18% of the S&P 500. We've seen a massive rally off the March low, even with the recent correction in names like Intel, in names like AMD. After the close, we hear from NVIDIA. Higher in the pre-market, had a nice rally itself, but nothing like the gain we've seen elsewhere. Keith, when you look at that sector at the moment, when I speak to the technical strategists, they say this is stretched, it's overdone. Jonathan Krinsky of BTIG is pointing out he thinks you'll get the equal and opposite correction, which means a lot of downside from here for the chip players. What's the more fundamental argument for these names?
Yeah, I'm encouraged by looking at the markets from both a technical and a fundamental perspective, and they're showing somewhat of divergence between the two, because on a three-year rolling basis, the semiconductors have had the strongest performance since the bubble period. The main difference from the fundamental side is, overall valuations for the semiconductors is around the 25 multiple, about half of what it was in 2000. And then we looked at forward earning estimates since last October. If you recall, October was where the market, or at least the tech sector, had peaked before this recent run. So we've seen this big rise in semiconductors, up over 50, 60%, but the forward earning estimates are up 90%. So it's one of those things where I think if I put that together, I do think on a short-term basis, this area is stretched, due for a rest, but the underlying fundamentals are still there. And I think longer term, if we look out over the next, say, 12 to 24 months, I still think there's upside, but I actually think there will be more of a consolidation. And then lastly, John, just, not that I'm a stock picker per se, but you look at NVIDIA trading at a multiple in the low 20s versus some of those other names that you're talking about, which are up 200% and trading at much higher multiples. So there's also divergence there as well as we talk about the industry.
Keith, one sector that is potentially going to benefit the most from AI is industrials, and you recently downgraded them. Why?
Yeah, we downgraded them last week to neutral, so that's more of a market weight. And there's a couple of different factors. I mean, one, going back to the fundamental side, the valuations for a brief period of time went to about a 25 PE. That was higher than actually the tech sector. But the difference is the overall earnings momentum is somewhat weaker for the sector. The tech earnings momentum is much stronger. And then the relative valuations became the highest level that we've seen in more than a decade. So we just saw expectations moved up quite a bit. And it's also a pretty disparate industry. It's not a pure play. I mean, you have defense on one side, you have more the industrial players on the other side. But overall, so again, more neutral. We still longer term, we've kept our long-standing overweight to tech, we're overweight communications, we're overweight energy. Those three sectors, the commonality is they have the strongest upward earnings revisions in the entire market.
Keith, how are you thinking about this market right now, given the fact that the Strait of Hormuz is still closed? We're 8 minutes into the start of the show. We barely talked about this conflict that exists, which is one of the biggest chokeholds in the world.
Yeah, it's pretty amazing. As you all, and I've spoken to experts in the field, I mean, I think if you would have told them that it was still closed by now and where oil prices would be, we would expect oil prices to be a lot higher. But overall, I think it goes back to this AI theme. Because again, the higher energy prices is biting. I mentioned the consumer discretionary equal-weighted sector down 10% and the underperformance there. But if you look at the S&P 500, as we all know, it's 50% tech and tech adjacent. Look at small cap, the small cap indices. A lot of people are saying, hey, why are small caps holding up, relatively well in this environment where more geopolitical uncertainty, higher rates, which is not great for debt, but small cap tech up until recently was up over 40% for the year, trouncing large cap tech as well. So I think all in all, it's still definitely a concern. It also suggests we kind of consolidate. But one thing I want to just point out, when we looked at these big surges in markets over a 30-day period, like we've had for the S&P up until recently, where you were up more than 15%. After that, the forward returns over the next month, 3 months, kind of mixed. But as you look over the next 12 months, the markets have been up 14 out of 15 times with double-digit gains. So what does that tell us? That just tells us underlying momentum is a good longer-term sign, but again, maybe more due for a rest after such a big run off the lows.
Keith, let's talk about the bond market challenge just briefly. You've alluded to this, you're not alone. Clearly the equity market has the warm comfort blanket of very powerful earnings. I just wonder how insulated it is from this. If we can bring up the bond board and just look at 2s, 10s and 30s, there has been a reset higher in yields with 2s at 4%, 10s at around 460, 30s around 5%, Keith. How insulated is the equity market from this?
Yeah, I think this is where we have to also think about, which equity markets are we talking about? Because, we have, like I said, seen some damage on the consumer side. Materials stocks are down 6 or 7%. Industrials down about 4%. You're seeing international developed markets underperform, quite a bit as well. So you are getting hit, and the more this goes up, obviously, the more potential pain. But then the question I think about, this dominant AI theme, let's say, especially as these companies raise more debt, how much of a difference is it going to make for the AI theme if yields move up 50 basis points? We're going to see a slowdown in spending? Probably not. So I still think ultimately for the headline indices, it comes down to AI and tech. I think the higher yields definitely maybe compress the overall valuations for the market, but it's not a showstopper. I just think it's another reason why to expect more of a churn here near term after this kind of V-shaped recovery.
Hey Keith, it's good to see you, as always. Thanks for catching up with us. Keith Lerner of Truist on this equity market. Let's talk about this bond market. So inflation very much in the driving seat at the moment off the back of what's happened in the Middle East. In the UK, downside surprise on CPI, enough to unlock this move at the front end of the UK curve. 2-year gilts this morning, yields low by 10 basis points. Across the curve, you're seeing yields come in. The action, the fireworks further out along the curve, particularly on the 30-year maturity, and you see that worldwide. I'll go through some of the numbers for you. In the US, the 30-year yield, the highest level since 2007. This week in Germany, the highest level since 2011. In the UK, very close to the highest level since 1998. And in Japan, the highest level on record.
It's basically the entire world realizing that there's potentially going to be fiscal pain down the road. They're going to have to spend a lot more money when it comes to these governments. It's a very interesting moment because this week we're going to get a brand new Fed chair, and he is going to have to contend with that bond board.
Sworn in this coming Friday. Looking forward to it. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Good morning. President Donald Trump threatening Iran with a, quote, big hit if a deal is not reached soon. Trump's comments coming just a day after he claimed to call off another attack. Vice President J.D. Vance striking a more positive tone as well, saying progress is being made towards a deal. Those falling pre-market, the home improvement retailer reporting first quarter earnings that beat analyst estimates. Its fiscal year operating margin, though, fell short. Lowe's CEO Marvin Ellison is saying the company remains focused on a total home strategy in spite of a challenging housing macro environment. Global chip supply may be at risk after talks between Samsung and its largest labor union collapsed. Workers at the world's biggest memory chip maker are planning a work stoppage tomorrow. The Kospi fell on reports of the strike. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie later on this hour. Up next on the programme, teeing up another big hit on Iran.
They come to the table, they're begging to make a deal. I hope we don't have to do the work, but we may have to give them another big hit.
Up next, we'll catch up with Catherine Thompson of the Cato Institute, live from New York City this morning. Good morning.
world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg.
Coming up in the next few hours, some earnings. These earnings target 6:30 Eastern Time. Later on, TJX at 7:30. A read on retail in America, and after the closing bell, NVIDIA after the bell, the headline act a little bit later on this afternoon. Into that, your scores look like this. 3-day losing streak on the S&P over that period, down by about 2% on the benchmark. On the S&P this morning, futures bouncing back by 0.4%. On the NASDAQ, up by 0.7%. Helped out, no doubt, by the fact that NVIDIA is positive in the pre-market. Bit of a change in fixed income, some nerves yesterday, settling down just a little bit. 2-year yields down by 3 basis points, 10s down by 3 also, 463.93, and your 30-year coming off the back of the biggest close we've seen, the highest close we've seen on a 30-year yield, going back to 2007, yields down by a single basis point, 516.48. That's the bond market picture. Let's turn to commodities. Crude, Brent down by some 2%, Brent 109, and WTI at around 102. Under surveillance this morning, teeing up another big hit on Iran.
So they called up, they had heard I made the decision. They said, sir, could you give us a couple of more days? I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week. I hope we don't have to do the one, but we may have to give them another big hit.
So here's the latest this morning. President Donald Trump warning of fresh strikes on Iran in the coming days as the White House pushes Tehran to return to the negotiating table. Joining us from Washington, Bloomberg's Tyler Kendall. Hey, Tyler.
Hey, John, good morning. Well, President Trump says that he will only wait a, quote, limited amount of time for Iran to come to the negotiating table. As you heard, he outlined that could be 2 to 3 days or early next week, in his words, amid reporting that the president has been advised that potentially limited amount of strikes could help pressure Iran to reach a deal. Because at this point, the White House is maintaining that Iranian counter proposals have been insufficient, mainly over a lack of discussion over curbs on the country's nuclear program. Though we know other big differences remain, including how Iran insists on full financial relief, payments for war damages, and that it has a role in controlling the Strait of Hormuz going forward. At this point, the White House is making clear that the threat of escalation is firmly on the table, but it's also probably worth mentioning that we heard from Iranian officials earlier this week who vowed to retaliate if the country is ultimately attacked again. At the moment, the White House is keeping up the economic pressure. Instead, yesterday, the Wall Street Journal reported that the U.S. had seized another Iranian-linked sanctioned oil tanker as it ramps up its efforts to crack down on the Iranian shadow fleet. John, Bloomberg News reported yesterday, according to people familiar with the matter, that as the Strait of Hormuz remains closed and the economic impacts compound, NATO is now looking at a potential mission to help secure the waterway if it isn't reopened by July. We should say, while several states have now indicated that they could be in favor of such mission, it doesn't have that unanimous support needed quite yet in order to deploy assets.
So it sounds like potentially NATO is going to come to the rescue in a sense. The president has been putting a lot of pressure on allies for months, Tyler. How soon potentially get some sort of concession from NATO or consensus from all the members to actually go to the Strait of Hormuz, especially help the U.S. open it up?
Well, Amory, our reporting does indicate that July would be the deadline for these NATO member states to make some sort of
decision on whether or not they will deploy assets to the Strait of Hormuz. As you well know, that does align with the annual NATO summit that is happening in Turkey this year. So perhaps that will be where we get a little bit more movement. This, of course, is a significant development since so far member states have been wary at best when it comes to President Trump's demands to help him secure the Strait of Hormuz. In fact, that has led to his threats that he could leave the alliance. Of course, easier said than done. We know that would take congressional approval, which at this point doesn't seem very likely. But it does highlight how the economic impacts have been compounding for these member states as they look to get more oil to the market. It's going to be something to watch because at the end of the day, we know that the White House has maintained that it doesn't need help with securing the strait, but we know that it is something that they would like to see.
Tyler Kendall with the latest in the nation's capital. Tyler, thank you. More from Tyler in the next hour. To build on this conversation, Catherine Thompson of the Cato Institute writing the US is teetering on a knife's edge of not only resumption of hostilities with Iran, but long-term entanglement in both this conflict and the region. Catherine joins us now for more. Catherine, welcome to the program. Are we running out of options to maintain the status quo?
You know, I think we are. I think we're reaching that point. I don't think we're any closer to a deal than when the president was speaking about a week ago. And I think that, you know, in that time, particularly the foreign powers that are involved in this conversation, you know, on our side of these bilateral engagements, the UAE in particular has taken a more emboldened stance. This puts more foreign interests on our side of the table, where Iran is just contending with largely itself. And I think that this sets up a really dangerous dynamic going into conversations on a deal that now has a deadline of 2 to 3 days.
Well, Catherine, when it comes to this deal, I mean, the Wall Street Journal is reporting, but basically we all know that Iran's position on negotiations hasn't changed at all, as much as the vice president and the president said they want to make a deal. If their positions haven't changed, is the United States willing to give up some major concessions at the negotiating table, or do you think the president will actually take the strikes?
I mean, I tend to think that given what we've seen from the president so far, that the strikes are very, very much the option that he's going to view as the best lever of pressure. The problem, as was pointed out in the previous segment, is the threat of Iranian retaliation. We know that that's the case. Of course, we know that, you know, the Iranians would plan to retaliate if they're attacked again. But the problem that this poses for the United States, who's in the midst of a munitions crisis, is that Iranian retaliation would likely come on U.S. bases and personnel throughout the rest of the region. That's going to require more of our most exquisite and expensive air defense platforms to support a defense of our own personnel should that retaliation come. And that's something that we can't afford to treat lightly on our side as a strategic consideration.
That's the retaliation, but what do you think the president will target if he's going to resume attacks?
That's hard to say, right? I mean, limited strikes, especially as was sort of outlined in the previous segment, could mean a lot of things. I mean, I don't know if that includes more energy infrastructure. I mean, I don't think it would include, you know, leadership again or anything like that we saw toward the beginning of the war. But so it's hard to tell, like, what could be considered limited to sort of get the Iranians to the table that wouldn't, you know, trigger, again, large scale retaliation that hurts our bases and our personnel in the region.
There seems to be two different negotiations going on, and Jonathan spoke about this earlier this week. There's a negotiations to open up the Strait of Hormuz, and then there's a real nuclear negotiation. When it comes to opening up the Strait of Hormuz, do you think the Trump administration has now convinced allies to come help?
You know, I think that this is a tricky one, as you guys pointed out in the segment prior, right? NATO requires consensus to come to the table and to provide any support for out-of-area operations. The other, you know, sticky point of this situation for the Trump administration is that basically the Trump administration spent the first year in office, you know, berating the Europeans about doing out-of-area operations. They want focus on the Europeans focus on conventional defense and deterrence of the continent, which is absolutely something that is needed to keep, you know, NATO sustainable for the future. But that's in direct conflict with this ask of now NATO putting together an out-of-area operation, an out-of-area mission to go support the U.S. efforts in Iran. That's going to be a really, really heavy lift for consensus. And I think that I think we're quite far from it. I know we've got some time until the Ankara summit, but I think we're going to have a really hard time convincing some of those holdout NATO countries to come to our aid, because politically it's very, very toxic for them.
Catherine, it's good to see you. Thanks for the input. Catherine Thompson there of the Cato Institute. If it goes on that long, and we're talking about the back end, the very back end of this year, NATO involvement's not a choice, it's necessary. And it's not about coming to anyone's aid. It's about getting something done that needs to be done.
It's about going almost to your own aid. But the president has been pushing them, and then remember, they immediately rejected it, and he said, well, actually, we don't need your help. But the problem is, the United States would need help, potentially, if they don't want to undertake this alone. But to your point, it's hurting their economies more. It's hurting the European economies and our allies' economies a lot more than, at the moment, the higher oil prices impacting the United States.
There's always something to worry about. The words of Steve Orth, the Federated, yesterday on this program, if it can't happen, it won't. Which is quite an interesting mantra. If it's that bad that it can't happen, then it won't.
Well, if that's the case, then potentially what we could see is the United States lift sanctions on Iranian crude, which the Iranian press says was part of the negotiating deal until they get to the actual table, which the White House is basically stomping down. Or we could potentially see the United States give concessions, maybe end the blockade in order to try to get the Strait of Hormuz opened.
Everyone's trying to deal with this in their own way. Did you see the headlines coming out of the UK? Pushing maybe some of the grocery stores, the supermarkets, to cap food prices. That's the push right now in places like the UK.
Well, places like the UK are dealing with incredibly difficult moment because they're also dealing with a different energy complex than we are dealing with here in the United States. It's very challenging there when you look at how high petrol prices are.
Crude this morning, Brent down by about 2%. That's an improvement, but still trading near 110 at 109. Equity futures this morning near session highs, up by 0.4%, heading into the big earnings report later on this afternoon when we hear from NVIDIA. Before we get there, though, a couple of retail players in the mix, Target and TJX, worthy of attention. We'll get Target in just a moment. Full coverage of that. And this, up next, we'll catch up with Ines McPhee of Oxford Economics as the AI backlash builds over the weekend and into this week. Some very clumsy comments coming from one particular bank, and we'll talk about that bank in just a moment. From New York City this morning, you're watching Bloomberg TV.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Three-day losing streak on the S&P 500, the longest losing streak since the end of March. This morning, a bit of a bounce. We're up by some third of 1%, up 0.4% on the S&P 500. On the Nasdaq, up by 0.7, down almost 2% over the last 3 days on the S&P. That follows an 18% rally off the lows. Just a bit of context there. The rally has been really, really powerful. The correction, if we can even call it that, has been very, very small over the last 3 days. In the bond market, some major moves we need to talk about. New levels, a 30-year closing at the highest level since 2007. Yields down this morning by a basis point or two, 516.37. Front end of the curve gets interesting. From a political perspective, we're down about 3 basis points on twos. So the yield is trading above the policy rate over at the Federal Reserve, and we've talked about that repeatedly. Could this Fed really hike interest rates? That's difficult to internalize, at least before year-end, and we can spend some time on that. What's interesting about the political dimension going into this swearing-in ceremony on Friday of Kevin Walsh is just the president backing off a little bit from putting pressure from this institution to cut interest rates.
Twice this week, the president did that. Interview at Fortune magazine, he conceded that maybe that the Fed's going to have to look at the figures after the war is concluded, basically giving a nod to the fact that he understands that with higher energy prices, that's going to maybe mean higher inflation. And then this to the Washington Examiner yesterday, quote, "I'm going to let him do what he wants to do. He's a very talented guy. He's going to be fine. He's going to do a good job." That was what the president said when this reporter asked if he thinks Kevin Walsh will deliver a rate cut.
And let's see if he sticks to the script this coming Friday at the White House when those two are standing together. Looking at energy this morning, we're backing away. We're down by 2% on Brent, around 109. WTI around 102. On our radar this morning, results from NVIDIA due after the closing bell. The much-anticipated earnings set to signal the state of the AI economy, with investors awaiting the company's comments on ramping up chip production and fending off competition. Elsewhere, an important developing story. Samsung workers are set to strike after talks collapsed with its largest union, putting South Korea's economy and the global tech supply chain at risk. The company is the world's top memory chip maker and drives a quarter of the nation's exports. And finally, just dropping across the Bloomberg, Target shares rising in the pre-market, up by 0.5%. The retail giant's first quarter earnings topping estimates, delivering beats on comparable sales and gross margin. Target's forecast also coming in above expectations, calling for growth in net sales in every quarter this year.
So they've been working on a turnaround plan. It does seem to be that it's working. Remember, Jonathan, they had 3 years of weak sales. So this is welcome news. I also wonder how much, when we hear from the executives, and we can get understanding of how much is this about Target's turnaround plan, or is it really also just a resilient U.S. consumer?
The environment versus execution. And I would say for that name, the problem for them hasn't been the environment, it's been execution. So you've got to give them a little bit of credit here. And we talked about this with regards to Walmart as well. Walmart's just executed so well as a company now over a series of years. It's difficult to look at this and say this is all about the backdrop, the environment, the backdrop for the consumer. We've heard about how the consumer feels about this economy. I'd give them a little bit of credit here. Target up by 2% at the pre-market.
Yeah, they're working on this turnaround plan. It actually is working. In the first quarter, they say they saw visits to stores were up 5%. But of course, it's a challenging environment then when you look at where they are in terms of the gap compared to the king, which is Walmart.
That's the economy right here, right now. Let's talk about the future U.S. economy. AI facing a massive week of backlash.
Today, we stand on this edge of another technological transformation. It will touch every profession, every classroom, every hospital. I know what many of you are feeling about that. I can hear you. There is a fear.
University graduates booing commencement speakers across the country when discussing the technology. Now, the Standard Chartered CEO walking back comments after saying AI could replace, quote, lower value human capital. The Oxford Economics CEO, Innes McPhee, pushing back on the negative AI narrative, writing the speed of adoption is critical and it's assumed to be orderly enough for new jobs to be created to absorb those lost. Innes joins us now for more. Innes, good morning. Good to see you.
Good morning.
Let's get into the pushback, the backlash we've got right now. What kind of labour market do you think we need to confront in the next several years?
Well, I think the near-term picture is not one of, mass unemployment and rising layoffs and things. That gets a lot of attention, but I think it's also important to note that if you look at, let's say, the information sector, you're also seeing higher hiring rates as well. So what that tells me is there's a lot of churn in the job market at the moment, but not a big net loss of jobs. So, for a lot of people, it's going to be about what are the skills that are needed to navigate this labour market over the next
What skills do you think will be needed? And do you think we face the same kind of thing that we had to face with globalisation, except this time it's white-collar workers and not blue-collar?
Well, I think when you look at AI adoption at the moment, what is actually being used at in the surveys, it is things like drafting, it's things like automating relatively simple tasks. And really, I think what will end up happening is that there's more emphasis on, kind of the more critical appraisal, the more insights, those sorts of factors. And that will be what's really critical for people to be able to demonstrate, because AI will be able to help with the sort of more day-to-day tasks.
What about the political economy? This is one area where I see the very far right, the Steve Bannons, and the very far lefts, like Senator Bernie Sanders, actually agree on what these companies should be doing because of the potential job losses they're going to mean for the economy.
Yeah, well, I think, look, there's no doubt this is a huge structural change for the economy over the next few years. We've not yet seen the big productivity gains, but we are likely to see over the next couple of years, I think, a bit of a shift in that skills mix. And what we would expect is that you end up with, as you lower the prices of some of these tasks, actually demand goes up. It's what's called Stevens paradox. You start to see more demand coming through. But the phasing of these things, as ever with economics, we talk a lot about long and variable lags and things like that. Well, actually, in this context, that's going to be really important, because you're talking about, potentially a couple of years in the labour market where we have to navigate those shifting plates. So I think policy does have to play a role there.
That's political policy, but if we're seeing potentially shifting labour market and it's going to be bumpy, if we have higher unemployment because of AI, could Federal Reserve rate cuts or any central bank rate cuts actually solve that problem?
Well, I don't think it can solve the problem. As ever, monetary policy is going to be one of those things that actually just tries to help mitigate some of the impacts, offset some of them. But I don't think that's what we're seeing at the moment. We're seeing some churn. We eventually will see, AI adoption spread. We'll see the types of tasks that AI can help with sort of move up a little bit the value chain. And that will ultimately, maybe even mean a sort of disinflationary.
Tasks, do you think, to help current workers, or tasks to eliminate current workers?
So I think it'll be very much labour augmenting. It'll help current workers. I think that's the sort of thing that over time you'll see real wage gains because productivity rises.
You sound constructive.
Yeah.
Oh, yeah.
You really do. Yeah, do you get much pushback when you make this pitch?
Well, it does get, some people agree with me and then others violently disagree with me. I think that if you go back a couple of months and we had this kind of AI dystopia narrative really take hold, and this kind of idea that we would end up with, the labour share really falling and that, we're ultimately going to see a fall in demand. But the thing that I say is, name another technology where that has happened. We have not seen historically a technology that has led to kind of lower demand. We obviously see resources moving around the economy, and that can be painful, and there'll be a role for policy within that.
This is a big picture question. What do you think the Industrial Revolution would have looked like in the age of social media? What do you think that would have looked like? Can you imagine what the pushback would have been like to that?
Yeah, well, I think that's one of the issues here, isn't it? That you've got this narrative where, it's possible for really people to focus in on just one lens of it. And I think, what we try to do is step back and have a broader take on, some areas of the economy are going to face real disruption. Others are going to pick up and move in ways.
I think ultimately, as you know, though, there's a sequencing problem. At least up front, all we see is the higher costs and the risks of job loss associated with this technology. What happens next, I don't know. You're constructive, and I hope you're right. But in the near term, we've got a bit of an inflation problem already. Does this big push contribute to it?
It does, but I think in ways that probably people don't really understand. A lot of people focus on the investment side and think, okay, that's pushing up demand. Remember, there's a big import story that's associated with that. So the net impact on the economy, in aggregate terms, is only a few tenths from the big investment boom. Where I think it is having an impact, particularly on the consumer basket, is the push towards higher memory, higher value add chips is actually sort of crowding out, particularly in an environment where we're seeing some supply constraints via the Middle East situation. That's where we're crowding out a little bit those lower end chips, which are of course in lots of consumer goods. And we think that's probably going to add at peak something like 0.3 to core PCE over the next couple of quarters.
Where have you got inflation peaking? At what number?
So we got 4% for headline PCE and sticking around 3% for a while in the core.
Can you cut with core around 3% if you're Kevin Walsh? Can you make that push?
Well, I think one of the things that he's been very clear on is the forward look, which I think is right, because remember, monetary policy is not going to affect much today. It's going to affect things in 2 years' time. His big idea, his big theme is that, of course, AI is going to be very disinflationary, and they need to look to that and respond to that. So I think that's the narrative that we'll see. It may wobble at times,
sure.
But I think in the near term we see them just staying pat. There's not much to be gained from cutting right now, just as you're seeing inflation peak.
He might find it difficult to get the rest of the committee on board with that view, looking ahead to the future.
That view might work in years' time, but what we just heard is that short term, it's going to be inflationary pressures, and it's very challenging to communicate that, I think, to give an basically excuse, a reason, whatever you think, to cut interest rates.
Ines, it's good to see you. Thanks for being here. Appreciate it. Thank you, sir. Ines McPhee there of Oxford Economics. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Chinese President Xi Jinping stepping up his calls to end the war in Iran. Xi calling for a comprehensive ceasefire, saying, quote, restarting war is even more unacceptable. The comments coming as Xi hosts Russian President Vladimir Putin in Beijing. Target and Lowe's reporting first quarter earnings that beat Wall Street estimates. The business lead of digital payments company Block telling Lisa Abramowitz the consumer appears strong.
Things seem to be quite resilient right now. We're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior.
And we'll get more of a sign with earnings from retailers including TJX and Elf Beauty later today. Meta began notifying thousands of staff they're being laid off. The Facebook parent is cutting around 8,000 positions globally in a restructuring aimed, it says, at improving efficiency and cost cutting. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, awaiting NVIDIA's earnings test.
NVIDIA will print a good number, but not a great number. They're supply constrained. They're sold out for the year, and once you're sold out, how do you beat expectations?
Up next, we'll catch up with Angelo Zeno of CFRA from New York City. You're watching Bloomberg TV.
are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg 10. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Next up on the earnings front, we get TJX at 7:30 Eastern Time. About 15 minutes ago, we heard from Target. Target better than expected, up in the pre-market. We'll stay focused on retail for you throughout this morning. Later on this afternoon, you will hear from NVIDIA after the close. That's the headline act. The Federal Reserve minutes will be interesting. 2 p.m. Eastern Time. Remember that dissent, that hawkish dissent to the easing bias in the statement. All complicated stuff. Very vague, this easing bias in the Federal Reserve statement. But regardless, some pushback from FOMC officials. We'll see if we get more pushback in the minutes themselves. Look out for that later on this afternoon. Noteworthy, Bloomberg Intelligence came out with a survey recently on Kevin Warsh entering the Federal Reserve. More dovish than Powell is the headline here. Over half of our survey respondents thought that he would be more dovish than Powell, while just 9% said he would have a more hawkish bent. The survey from Bloomberg Intelligence, noteworthy.
Definitely noteworthy, and obviously that's because of all the rhetoric surrounding Kevin Warsh and his statements, especially when he was, you could say, auditioning for the job, but this president who certainly wants to see lower interest rates. But as we said earlier today, the president seems to be giving him some breathing room, given the environment we are in, telling the Washington Examiner that, you know, he's going to do the right thing, telling Fortune maybe he has to look at the figures after the war is over. It seems like Kevin Warsh, when it comes to the president's mind, is going to have some time to get his feet wet, and maybe that means we're not going to see an interest rate cut this year.
Here's the direct quote from the president. I'm going to let him do what he wants to do. He's a very talented guy. He's going to be fine. He's going to do a good job. The president of the United States on Kevin Warsh ahead of that swearing-in ceremony later on this week on Friday. If you're just joining us, welcome to the program. Here's the state of things in financial markets. Equity futures firmer by 0.4% on the S&P, bouncing back from a 3-day losing streak, the longest daily losing streak since the end of March, which just tells you how great things have been on the bullish side over the last month to 6 weeks. On the Nasdaq, we're positive by 0.75% on Nasdaq futures. On the Russell, up by about 0.5%. Let's turn to the bond market. 2s, 10s, 30s, yields shaping up as follows. Yields on a 30-year at the highest closing level going back to 2007 in yesterday's session. This morning pulling back just 2 basis points, 30s to 516. 2s still elevated around 4.1% on the 2-year, down this morning by some 3 basis points as well. More data through the week, of course, jobless claims coming up tomorrow morning. Quick check on crude, Brent and WTI pulling back a touch. Brent crude down to 108, a break of that level to the downside. We're down by 3%. Tension still building, blockade still in place, and when you speak to people about what's happening over there right now, we are running out of options to maintain the status quo.
That's right, because inventories are starting to be drawn down, and potentially in the next few weeks and months in certain parts of the world, they're going to hit tank bottoms, and then that's it. And then you're going to potentially see higher oil prices. I will say, with the market pulling back a little bit, you do see, it feels like, the bias and inclination of this president to really want to have a negotiation. He doesn't want to resume those strikes because earlier this week he told us that they were planned and he decided to call them off. Secondly, you're seeing reports here and there, some tankers, like a South Korean tanker earlier this morning, some tankers are able to get through.
Brent Crude at 108. Watch this space. Later on this afternoon, the big one on the earnings front, under surveillance this morning, awaiting NVIDIA's earnings test.
NVIDIA will print a good number, but not a great number. The stock has been sort of underperforming the sector all year long. I think that will continue. NVIDIA has grown so big and become so dominant that it's hard for it to sort of beat that. They're supply constrained. They're sold out for the year. And once you're sold out, how do you beat expectations?
So here's the latest this morning. Results from NVIDIA due out after the closing bell, offering a fresh read on the durability of the AI boom. Angelo Zeno of CFRA maintaining a strong buy and a 12-month price target of 270, writing, "This reflects our view of NVIDIA's expanding total addressable market, penetration into edge devices and software opportunities." Angelo joins us now for more. Angelo, welcome to the program. I want to pick up on that line from a bear on this stock, the lone sell. He calls it an underperform. We'll get into that in just a moment. But this line here, they're sold out for the year. And once you're sold out, how do you beat expectations? Angelo, what's your response to that?
Yeah, I mean, listen, I think, Jensen typically manages expectations extremely well, right? So I do think there is room for upside here. I think when you actually look at the $1 trillion backlog number that he provided back at GTC, expectations in terms of revenue here through the rest of this year and in calendar 27, we think there's actually, with potential upside as they offer, things like Grok and what have you to that pipeline, we actually think there's potentially 10 to 15% upside to the revenue number in calendar 27. Not as much maybe to calendar 26. Is the bar higher? Are the numbers significantly bigger than they have been in the past? Absolutely. But when you look at the valuation of this company, 19 times our 27 estimate, you don't necessarily need to blow the numbers out at this point anymore. What you need to do is to continue to show things being steady in nature. You need to potentially surprise maybe in certain aspects. Maybe you announce a major buyback or something along those lines, given the greater cash flow that you're going to have here over the next 2 years. But I don't necessarily think you need to significantly beat street expectations at this point anymore.
Angelo, this was the blockbuster name. The earnings were massive and people were having viewing parties. Remember that over the last few years?
Yeah.
Feels like the buzz has come off this stock just a little bit. And if you look at the underperformance relative to the sector, explosive moves in AMD, explosive moves in Intel. Why are the fun and games taking place elsewhere?
Yeah, I mean, so it's the bottlenecks, right? I mean, investors love to chase bottlenecks, and you've got bottlenecks really building all over the place. Whether it be memory, which has kind of been out there for a couple of quarters right now, and there is, we'll see what happens with the Samsung strike and what have you. But that continues to be a major bottleneck. Will continue to be a bottleneck. We think through at least the end of next year. CPUs. Optics, it will probably even be more supply constrained as we go into 2027. And even some of these power management component areas, like the onsemi's and even like the Texas Instruments and Analog Devices of the world. So you kind of think about, the bottlenecks out there. There's enormous pricing power and earnings, potential earnings uplift there. But as far as NVIDIA is concerned, we typically don't look at it relative, at least anymore, to the semiconductor industry. We actually compare it more so to the broader S&P 500. And from that perspective, they continue to be an outperformer, given that this is more of an infrastructure play. And I think if you're an investor, you have to look at it relative to those expectations.
Angela, what about the Chinese competitors? Are they good enough right now for the Chinese government to keep NVIDIA out?
Well, it's interesting with how the Chinese government is playing all this. I'd say right now it's definitely the priority of the Chinese government to build that local ecosystem as much as they can. I think if all you're going to do is potentially offer the H200 to China, they'll continue to push back on it. If for some reason you make things a little bit more enticing, I think that then you have conversations where ultimately you could potentially get NVIDIA inside of China. But at this point in time, you're probably not going to get much out of that, and you're probably going to see the local Chinese government continue to emphasize their local players.
I was with the president in China, Jensen Huang, obviously on that trip. And at one point, NVIDIA was talking about $50 billion they could be recouping from the Chinese market. Where are you going to put that number now, end of the year? Does it still remain zero?
At this point, yes. And, maybe to, John's original question in terms of where there could be upside expectations, especially in terms of the revenue numbers. Again, if there was the potential for that number to not be zero, and that, again, is our expectation here for the April quarter and July quarter, and probably for the street, that would, provide a potential catalyst here for shares and upside to those revenue figures.
Angelo, any pushback to the spending from their big customers at the moment that's noteworthy enough just to think about a little bit more in the coming quarters?
No, I'd say probably not here over the next couple of quarters. I mean, I think the one you always have to look out for is Meta. At this point in time, that's the one where they're spending so much, and you really need to see them somehow find a way to monetize that ecosystem and find some revenue attached to outside of just what they're doing internally. You need to find other revenue metrics. Otherwise, you could see the potential for them to maybe dial back a little bit in future years. But at this point in time, you kind of look at just what Alphabet said on their Q1 earnings call, and the expectations, I'd say, from the other big cloud providers, the Microsofts and Amazons. I'd anticipate you continue to see higher numbers, just even for the neo clouds themselves. I think you continue to see that upward trajectory at least through 2027.
Angelo, it's good to see you. Angelo Zeno there of CFRA. Going into this earnings report after the closing bell, NVIDIA used to be the big blockbuster story for earnings season. Just maybe a little bit of that glitter has just come off the stock, just a touch relative to the big explosive moves we've seen elsewhere in the sector. This headline, noteworthy, is coming out of the UK. According to a person familiar with the matter, the UK is to delay the planned fuel duty hike due in September. They're not alone, of course, the UK, in making these kind of considerations. Of course, the US is talking about maybe suspending the federal tax. That's a very different proposal, but ultimately, similar story. There's a lot of pressure on these governments when it comes to costs and fuel prices.
Exactly. The direction of travel is the same all around the world. How do we make sure we keep fuel prices affordable for a lot of people? And for some countries, it's even worse. In Asia Pacific, it's how do we make sure we can offer them the fuel they need, let alone the prices? But as we were talking about earlier, petrol prices in the United Kingdom are just so much higher because of the tax than they are, say, in the United States.
Well, let's draw a distinction, of course. The UK is talking about suspending a hike to taxes. Right. And America's talking about just suspending the taxes, which is slightly different.
Yes, it is different. But again, direction of travel.
Yeah.
This is politically, really, for so many politicians, especially in America. Remember the Biden administration, how when gasoline that summer was $5 a gallon?
And they were tone deaf going into it.
It's a tax every day, especially in a place where people are, besides London, where there's lots of trains. These are driving communities, and you see that tax every single day on the side of the road.
In the UK, inflation slightly softer than expected this morning. That's helping out the bond market, at least in the United Kingdom. Coming up next on the programme, we'll catch up with Mark Lehman of Citizens Commercial Bank, Monica Guerra of Morgan Stanley, Christian Keller of Barclays, and Jennifer Bartashus of Bloomberg Intelligence on Target. A better story from them this morning.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Point in your tennis career did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency you can have results and they could, you know, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences after, before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
This is a global bond market that has a lower and lower appetite for duration.
We don't see too many factors that are going to pull Treasury yields significantly lower.
We don't expect interest rates to come down.
You do need inflation, at least on a monthly basis, slowing for the Fed to be comfortable cutting.
I don't for a minute see how the Fed can deliver rate cuts this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
We've got a small bounce this morning, live from New York City. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. Your price action and scores look like this. Here's your bounce, up by a third of 1%, following 3 days of losses on the S&P 500. On the NASDAQ, up by 0.6. On a Russell, small caps, up by 0.4. In the bond market, new levels to look at. 2s, 10s, 30s. 2s, still north of 4%. 10s, still north of 460, 30s, still close to levels we haven't seen since 2007, 516.37. Yields coming in. That's the good news this morning. We're down 3 basis points on 2s, on 10s, down 3 also. On 30s, down by 1 to 2. Your day ahead is looking like this, shaping up as follows. More retail earnings coming up a little bit later on this morning. You'll hear from TJX at 7:30 Eastern Time. That's 30 minutes away after the closing bell. A big report from NVIDIA. The major earnings report of the day ahead.
That's going to be the catalyst for this entire market, as the semiconductor trade obviously has had a bang-buster year, not just NVIDIA, as you've been talking about names like Intel and AMD, but really what we've seen when it comes to NVIDIA is not just beating enough, but beating at such a high level, clearing this high bar. And really for the market, it's going to be either the green light to continue this semiconductor AI trade, or potentially it's going to offer a reason for pause for individuals who have been saying it's getting a little frothy, we've overdone it.
It's had a nice rally off the low, off by something like 30% from the March 30 low that we've all been talking about at the end of March. But it's nothing like the rally we've seen elsewhere on the semi-index. Elsewhere within that index, you've got explosive moves, 3x the size of what we've seen in NVIDIA, in the likes of Intel, in the likes of AMD. That's going to be a story a little bit later. A story for here and now is the retail story. Target doing better in the pre-market, numbers better than expected, going into TJX in 28 minutes time, and had a Walmart a little bit later this week.
Yeah, so shares for Target have been up more than 25% this year, and we've been talking about what does this mean about the resilient health of the U.S. consumer, but you put it well. Actually, this has to do with Target, their turnaround story, and how desperately Target needed it as they're trying to catch up to Walmart. And this earnings report shows that it is working. And everyone is getting a little bit more optimistic between their turnaround plan and actually how much Target has risen, and also what they're doing in terms of just changes at the store. It seems to be working.
Target up in the pre-market by something like 2%. Also later on, we're also going to get Federal Reserve minutes. This is interesting. Bit of hawkish pushback coming from officials as Chairman Powell steps down as the chairman and Kevin Warsh steps in. And it's interesting that the president is just turning down the volume, dialing back the heat just a touch, going into the swearing-in ceremony on Friday with these comments to a reporter. I'm going to let him do what he wants to do. He's a talented guy, very talented. He's going to be fine. He's going to do a good job.
My question would be, is the president going to take this tone as well on Friday? And on Friday, is it just going to be a swearing in, or is he going to have an audience, and is he going to take questions? And then if he's asked a lot of questions about how he feels about interest rates, potentially, could this potentially change and we see a little bit more pressure on the new income?
As I said in the last hour, let's see if he sticks to the script a little bit later this week. Coming up this hour, we'll catch up with Mark Lehman of Citizens Commercial Bank with stocks looking to snap a three-day losing streak. Monica Guerra of Morgan Stanley with President Donald Trump threatening to resume strikes on Iran. And Christian Keller of Barclays on the growing backlash to AI. We begin this hour with stocks edging higher on the heels of NVIDIA's earnings report. Mark Lehman of Citizens Commercial Bank writing, it's not just a company print, it's a real-time read on AI demand and the health of the entire ecosystem. Mark joins us now for more. Mark, welcome to the program. Let's get the health check. How is the health of the entire ecosystem?
It's definitely healthy, Jonathan. It's headlines every single day. Obviously, we're 3 days from the trial of the century, I guess, and it came and went. But it's still the most important story in the marketplace outside of oil. And we're going to learn a lot today.
Outside of markets, Mark, AI's got a big PR problem. You would have seen the booze over the weekend, the clumsy comments coming from the bank CEO that we've covered extensively in the last 24 hours. You and I have had this conversation. Is that becoming a bigger and bigger issue? And how do they address this?
You know, we did talk about it, and it does not seem to have abated at all. Like you said, it was the bank CEO, it was some graduation speeches. They do have a PR problem, and they've hired the best in the world, and that hasn't actually helped. I think, unfortunately, as my kids would say, it is what it is, in a way. I think there are some issues as it relates to messaging. There are some issues as it relates to what's going on in corporate America. But this freight train is moving as fast as possible, and actually it's accelerating, and it's not going to slow down.
It's the policy story, though, Mark, on the horizon. And maybe I'm thinking a little bit too further out, a year, 2 years into 2028 and the next general. If the public are booing and they're pushing back and they can't get the message on track, I just wonder when the policy story starts to become a stock market problem.
Well, I analogized it to what happened 4 and 8 and 10 years ago when we had Mark raise his hand in front of Congress and all the internet people raise their hands in front of Congress and beg them to regulate them. And I remember watching Orrin Hatch and other people talk about the internet as if they didn't understand it. And unfortunately, I think we're going to see deja vu all over again, and that we don't have Congress really understanding what is actually going on every single day in corporate America. And you're right, the messaging in the general is going to be really, really important. But think about that 2 years from now, 2.5 years from now, in the big election in 2028. We do have one, obviously, in the fall. What's going to happen in the next 2.5 years is going to be, we're going to look back and say, oh my God, we knew this was coming, but it's actually more than we even thought then.
Well, Mark,
so that's what's going to happen.
Forget regulation. What about just a massive tax on these companies? What's the impact of that on the stock market?
I don't see it. I think there's going to be local jurisdictions that obviously make some big moves on that. We saw it overseas in Europe, if you remember what they did with Google and some other things. We saw that in the EU. I just don't see that here in the States. I think it's a big messaging issue. I think it's a big issue as it relates to corporate America, but I just don't see the wherewithal for Congress and the federal government getting involved.
John mentioned the Standard Chartered CEO, very clumsy language, talking about AI and displacement of employees and basically to just use AI instead. How do you talk about it?
Yeah, I don't see it as just wholesale displacement of employees. What we're seeing is the empowerment of employees, and we're seeing the ability for people to just do more with the kind of tools that we're creating. Citizens, we have this reimagine the bank here, and we're showing use cases that are very, very powerful for people. I think it does question how many people you're going to need to do that. But I remember when I started on Wall Street a long time ago, I was the first person to get a BlackBerry. I was the first person to get emailed broadly. And it sounds so archaic right now. But boy, I taught a lot of people back then what it was like and what power it was and how to not be afraid of it. And I think we're seeing that here at Citizens. So this, oh my God, it's everyone's going to be home using AI for their career. I just don't see it. I see the empowerment more than I see the problems as it relates to total wholesale changes in employment.
Well, Mark, that's the important distinction, empowerment or replacement. The BlackBerry was to help you. It was to empower you. It wasn't to replace you. And when we talk about agentic AI, typically we're talking about replacement and not empowerment. Are we getting it wrong?
Well, I think, as I always say, always and never are rarely true. I think everybody being replaced because of agentic, I think, is unlikely. I think that empowerment is really important. And you're right, Jonathan. The BlackBerry seems so archaic and novel, but back then it didn't. I will also say, for the power of some of our young staff members and some of the people who really understand the power of this to really make important strides within our company and all companies around and show the power of it as opposed to the fear is really as important as anything.
I'm old school. I wish we never had the day where we started taking our work home with us, but that's another problem. Mark, let's talk about the opportunity. NVIDIA reporting after the closing bell. I've mentioned this a few times in the last hour. This used to be the blockbuster earnings report. Still is to some extent. Largest company on the planet, of course, but it's lost some of its glitter, I think, over the last month or so, because within the rally in chips, the explosive moves have been elsewhere, Mark. What do you think's changing?
I think it is still the most important company in the world. It shows because it really does power. It's the fuel for the AI and fuel for corporate America right now. I think part of it is just the bigger they are a little bit is sort of the messaging here. You've talked a little bit about the broadening of the chip market and what Intel and AMD have done. As it relates to Intel, the stock may have doubled in the last few months, but it's still relative to that market cap. That's a one-day move in NVIDIA. So I'm a little less worried that move is NVIDIA underperforming. I do think it's the most important company. The bigger story, I think, Jonathan, is what's going on with the big AI companies and the share that's going on, the jockeying between Anthropic, OpenAI, and the others. There's plenty of market cap and there's plenty of investment still going on. That, to me, is still the biggest story, and NVIDIA is going to power all of them.
Follow the talent, Mark. I'm following the talent, and they seem to be going to one, not the other. What's gone wrong at OpenAI?
Well, I think, like a lot of success stories, I think big management issues internally. Obviously, there's been some stories that we've all read about what's gone on inside OpenAI. Anthropic has been really mighty in the last few months. They did, I think, in terms of PR and in terms of their quality of their chips, their quality of their offering, they seem to have won. We saw that with the Iran war and some of the inner fighting that happened with the federal government. That news certainly has seemed to die down. Anthropic's done an incredible job, obviously, over the last year of their story, of their success, of their offering. It's second to none right now. I won't count OpenAI out by any stretch. It's an enormous market. There's too many winners that we can mention right here. But yes, things are every single day we hear a different story. But Anthropic has definitely carried the last few months.
Mark, it's good to see you. Thanks for dropping by and catching up with us. Thank you, sir. Mark Lehman there of Citizens Commercial Bank, heading into this earnings report later on after the close. Let's give an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The European Union finalising the text of its long-delayed US trade deal after months of negotiations. The EU clearing a major hurdle to ratify the pact before President Donald Trump's threatened deadline to impose higher tariffs on autos July 4th. The World Health Organization convening a meeting of its emergency committee as it searches for vaccines to contain the widening Ebola outbreak. More than 500 suspected cases and 131 deaths have been reported in eastern Congo, while Uganda has confirmed 2 cases and 1 death. And Goldman Sachs is taking the lead role in the SpaceX IPO. Sources telling us here at Bloomberg. Morgan Stanley also listed as a lead bank. Elon Musk's company is seeking a valuation of more than $2 trillion. Filing is expected to be made public as soon as this afternoon. And that is your Bloomberg Brief. John.
Vonnie, thank you. It's a topic we've covered so many times. It's crazy how big these companies have got in private markets, and they're not alone. This has been a story of the last decade.
massive, and everyone is excited to read this IPO prospectus. Potentially, we're going to get that today.
They're not alone. SpaceX and then maybe Anthropic, OpenAI, all in the mix over the next 12 months, the remainder of this year. Up next on the program, threatening fresh strikes on Iran.
They come to the table, they're begging to make a deal. I hope we don't have to do the work, but we may have to give them another big hit.
Up next, we'll catch up with Monica Guerra of Morgan Stanley Wealth Management, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We've had a three-day losing run. We're looking to unwind some of that going into earnings from NVIDIA later on this afternoon. Equity futures bouncing back by about 1/3 on the S&P, on the Nasdaq up by 0.6, on the Russell up by 0.4. If you turn to fixed income, we'll start with Treasuries. Yields closing at the highest levels since 2007 at the very long end of the curve. 30s this morning, down 2 basis points, 516.40 on 30s at the moment. I want to turn to the UK, where you see a big rally at the front end of the curve. The 2-year down by some 10 basis points. Earlier on this morning, inflation lower than expected in the United Kingdom, but they have still got a price problem, and the government's attempting to respond to that. So Keir Starmer, the British Prime Minister, noting just moments ago that they will be extending the fuel duty freeze due to the conflict in the Middle East.
It's still very expensive, though, even stopping that hike for when it comes to petrol prices. It's still incredibly challenging. I sent Guy Johnson a message asking how much is it right now. I remember when I lived there, it was more expensive in the United States, but actually how much is it right now? He says it's about 158p a liter. 50% of that is tax. He said in your language, $7.48 would be the price in the United States. So that would be the highest state gasoline we would see in the United States, higher than California.
A massive chunk of that is taxes.
How?
A massive chunk. And all we're talking about here is freezing an increase in the taxes. That's very, very different to just cutting the taxes.
And the conversation in the United States is, we're going to cut the tax, not we're not going to extend it higher. The United Kingdom was actually, even at these current prices, we're planning to hike taxes more. This is why they have an incredibly difficult political problem.
That's the latest in the UK. Future stateside positive by about 1/3%. I want to turn to crude just briefly. Brent and WTI. Brent looking like this, still around 110 at the moment. Let's call it 108.60 at the moment this morning. We're down by about 2.4%. Under surveillance this morning, threatening fresh strikes on Iran.
So they called up. They had heard I made the decision. They said, sir, could you give us a couple of more days? I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week. I hope we don't have to do the work, but we may have to give them another big hit.
So here's the latest this morning. President Donald Trump warning of a return to hostilities in Iran, while Senate Republicans are signaling unease about continuing the war. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, last night we saw the Republican-led Senate advance a war powers resolution in a key procedural vote, marking the first time that this has happened amid a dozen or so attempts since the conflict began. Republican Senator Bill Cassidy of Louisiana was the latest Republican to cross party lines, vote with 3 other Republicans who had been in favor of this measure. Maybe not so surprising since he just lost his primary election over the weekend after failing to secure President Trump's endorsement. We should say that this is largely symbolic. It's unclear if it will pass the full Senate, then it would need to pass the House, then it would end up on President Trump's desk where he would very likely veto it, though it does mark a clear eroding of support when it comes to the conflict in Iran as President Trump weighs additional military action. Just yesterday, he said that he will give Iran, quote, a limited amount of time to come to the negotiating table amid reports that the president has been advised recently that a limited amount of strikes could pressure Iran to make a deal. We should mention that earlier this week, Iranian officials did say that they will harshly retaliate if the U.S. attacks again. But so far at this point, the White House has maintained that Iran's latest counter proposals have been insufficient, mainly over a lack of discussion when it comes to potential curbs on the country's nuclear program. But, John, we know other differences still remain, including at least publicly, such as Iran's insistence on full financial relief, payments for war damages, and also that the country retain control over the Strait of Hormuz.
Tyler Kendall with the latest in the nation's capital. Tyler, thank you. Let's build on some of this. Monica Guerra of Morgan Stanley writing the following. The impact of the strait closure is showing up in economic data. It's likely to influence the midterm elections. Trump needs to find some off-ramps. Monica joins us now for more. Monica, welcome in. Good to see you.
Thanks for having me.
Good morning. Let's talk about the pressure here and start with the problem. Have we got an inflation problem in this country?
Yes, I would say so. You know, the latest print right at 3.8%. That is notable. We've been talking about inflation coming for such a long time now. It started with tariffs, didn't really show up. And then now with oil, that's the thing to tip us over the edge.
And look at how places like the UK are looking to remedy some of this. Maybe they're not going to put up taxes. Great. People need more than that. What kind of remedies will exist in the US ahead of those midterms?
And there's a limited playbook that they have. They could do, you know, a federal tax, you know, freeze or pause. They could cut. But that only comes in at about a less than 20% savings, right, on the actual price. So when you do something like that, you want to have a big impact, and you want to do it right before the election. So doing it now isn't the time. It has a very short window. You could also start doing some, you know, adjustments to the SPR, the Strategic Petroleum Reserve. You could actually, you know, release more supply. But again, that also has a finite window where there's about a month or 2 where you get that relief, and then your oil prices go back up. So when they take those measures, you essentially have to time it with the election.
Will Democrats vote for that, given the fact that this is going to hurt Republicans, higher gasoline prices?
I mean, as far as Democrats, you know, voting for it, this is what's interesting about that is that they're looking to also get ahead on the affordability narrative. So that's what they have to balance. How challenging does this get in the next CPI print? You know, what does that look like? So we have to look at the forward impact, because you wouldn't get implementation until a September or October time period. So there's still time. If it gets worse, then you get Democrats, I think, to the table.
Do you think all of this potentially is going to push the president to make different decisions in Iran than he otherwise would have, looking at dealing with the regime?
I think at this stage, you're looking at a very hemmed-in administration, meaning that the choices are limited, and it doesn't matter at this point how drastic inflation becomes over the long run, because you're dealing with the same issue. We don't have a clear plan for exit, and any plan that we have is going to take additional defense spending, right? Defense investment in infrastructure in order to keep the strait open. So that is a given. And so for us, it's how quickly can they put those resources to work, and how can we work with our neighbors? And that's where the NATO piece comes in.
You can see how difficult they're finding it to maintain the status quo here. Obviously, they want the pressure on Iran. They want them to breach storage capacity for that oil industry to have massive problems. But this is why we're seeing waivers here, waivers there, just to keep energy moving, to get it to where it needs to go, and it's getting harder and harder to maintain the status quo.
Yeah, the Treasury Secretary, basically, when he came in as the new Treasury Secretary, remember how much he talked about on this program, that the Europeans are the ones that also need to help when it comes to sanctions on Russian crude, yet it's this Treasury Department that is extending a waiver for another 30 days for individuals to continue to buy Russian oil.
Monica, I wanted to talk about the Federal Reserve with you, if we can sort of carve out some time to do that. There's a swearing-in ceremony taking place on Friday with Kevin Walsh and the President. It's notable, Anne-Marie's talked about this the past few days, that it just appears the President's turning down the heat just a little bit on the institution as his guy walks in. What are you expecting from Kevin Walsh? What are you and the team looking for?
Well, for us, we think that he's going to continue to fulfill obligation just in the same way that, Powell would, maybe with different language. And I think that that's the important thing. I'm not our, Fed rate strategist, so I won't get into all the details. But as far as we're concerned, we think that we're going to continue to see normal operations and that the big focus right now is going to be on the labor market. Does inflation actually cause weakness in the consumer? Then you get maybe an opportunity for Walsh to act. And that's where you could see those cuts in 2027. So still a longer lead up to that, but we don't think there's going to be a huge, reshaking of the House right away, and that the temperature is going to die down so that the new chair can get settled, get a grasp on the current state of affairs, and then follow the data, follow the labor market as to the next steps.
But ultimately, do you think he's a hawk or a dove?
At this stage, we think that he's in a, I don't want to say if he's a hawk or a dove, okay? Let me just address that directly.
It's only because what we've heard from him, we've heard both Kevin Walsh's. We've heard a hawk of years ago and a dove when he was auditioning.
But this is what's so interesting about it, is that you have the political pressure, right, and the desire to fulfill the president's mandate, right, and goal of having lower interest rate, but also keeping the entire monetary system on track. And so those two things sometimes are in competition. So if you can find a way to do that, and satisfy, both masters, then you have a really successful outcome. And I think that that's what he's looking for. He's looking for those opportunities to not let things get too hot, right, while still being able to fulfill the president's agenda.
I think we all wish him the best of luck. Monica, it's good to see you. Thank you.
Good to see you too.
Monica Guerra of Morgan Stanley Wealth Management going into that swearing-in ceremony later on this week. That will take place on Friday between Kevin Walsh and the President of the United States. A lot of pressure on that institution at the moment. He wants to reform it. He wants to make some changes. I think a lot of people who follow that institution think those changes should be made, but the optics are going to be really difficult because some of the reforms, some of the changes, for instance, let's say PCE is not the right index for us anymore. We want to change that. Okay, that is just going to look like he wants to change it because he wants to cut interest rates to please the person in the White House, even if that might not be the case.
Exactly. It's going to look like you're changing the goalpost just so you can get to the outcome that you want, because maybe there's been undue pressure on you to actually get this job. I will say, though, the Treasury Secretary has one point talked about maybe actually we should be targeting an inflation range, but said you cannot do that until you hit your 2% target, because this idea, you can't be changing the goalpost mid-game.
The good news this morning, yields pulling back by 2 or 3 basis points, back down to about 464 on 10s. Coming up next on the programme, we'll catch up with Christian Keller of Barclays on the growing backlash to AI across this nation. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A better picture so far this morning, up by a third of 1% on the S&P 500. The S&P advancing by a third following a three-day losing streak. On the S&P 500, the longest such losing streak going back to the end of March. Of course, over that period, only down by 2% compared to a much, much bigger rally over the last 6 to 8 weeks. On the Nasdaq, up by 0.7. The main event a little bit later. Nvidia after the closing bell. Before we get there, earnings from retailers across this country reporting, including Target. Target in the pre-market, high by 1.4%. Better numbers from them a little bit earlier on this morning. We'll get numbers from TJX in just a moment. We'll bring those headlines to you. I want to turn to the bond market. Let's just sit on this for a moment. 2s, 10s and 30s, and we'll start with the long end of the curve. And then we'll talk about the relationship between the front end and the long end. The long end of the curve yesterday, the highest closing level we've seen on a 30-year yield going back to 2007. We're seeing this worldwide. Germany, the highest level since 2011. More recently, in the last few weeks, the UK, the highest close since 1998. In Japan, the highest level on record. Lots of reasons for it. The energy shock driving inflation expectations. It's highlighting limited fiscal space in certain places, exposing leadership issues in others, the UK being one. They're not alone, of course, and increasing a lot of uncertainty about the outlook for interest rates. And it's the outlook for interest rates I want to spend some time on, and what the 2-year and Fed policy might mean further out along the curve, beyond 2s, out to 30s, and whether we could see a gap open up between the policy rate of the Federal Reserve and the very long end of the curve. So let me go back to that Bloomberg Intelligence survey and what we might expect from Kevin Walsh. This is their takeaway. Over half of our survey respondents think that he will be more dovish than Chairman Powell, while just 9% said he would have a more hawkish bent. In addition to that, in this survey, they also expect a steeper curve. For Kevin Walsh to drive a steeper curve. And the bear steepener is the most widely held steepener view. So what does that mean? That means you get a sell-off driven by the long end of the curve. Why? Because if you get Kevin Walsh, who's excessively dovish and attempts to force rate cuts when we don't need them, that dovish policy mistake could be seen with higher yields at the back end of the curve. I'm not saying that's happening right now. I'm just saying that's something to watch in the months to come.
What's so interesting about this in Bloomberg Intelligence survey is that actually it's contrary to what we've seen in terms of market expectations. What we've seen is a lot of market expectations change direction, where the market is now pricing in potentially a hike at the end of this year, even though some analysts still have cuts priced in. What we've been seeing in terms of the inflation picture, because of higher fuel prices as well, a big key driver of that, individuals now saying he might have to hike, even though people think, well, no, we heard him be a little bit dovish in audition process. They think he's going to go in a dove. The president seems to be giving him room, I think, to do nothing for the rest of the year.
This bond market is looking for an anchor. And of course, if we address this and this being crude, maybe we can make some improvements to this picture. Right now, crude is lower by 2%. We're down to about 109 on Brent. WTI around 102. The blockade continues. The status quo has its own problems, and we're running out of options to maintain that status quo. That seems to be the takeaway from our program. so far this morning.
Absolutely. When it comes to the crude picture, though, you are seeing stories that could potentially mean a little bit softer in terms of prices. One, you have like a South Korean tanker trying to go through the strait. If that gets through, that would be a very good sign. You have a report from Bloomberg yesterday, our colleagues, talking about the fact that NATO, if the war continues by July, are willing to potentially, if they're able to get unanimous consensus, willing potentially to go help the United States force the strait open. And then what are you seeing from OFAC and the Treasury Department? Anywhere they can find barrels, they're willing to keep them on when it comes to supply.
Brent crude, 109 this morning, and down by a little more than 2%. That's the price action cross asset. Let's get you some news. On our radar this morning, Target, Lowe's and TJX all reporting earnings. Target rising after posting its best sales results in some 4 years, while TJX also higher on stronger than expected guidance. Lowe's, on the other hand, facing pressure after failing to raise its outlook, citing housing market challenges. Elsewhere, Vice President J.D. Vance defending President Trump, saying he does not make his own stock moves.
The president doesn't sit at the Oval Office on his computer on his Robinhood account buying and selling stocks. That's absurd. He's not making these stock trades himself.
Vance adding that he and President Trump are both supporters of banning members of Congress from trading stocks. And finally, President Donald Trump threatening to resume strikes on Iran in a push for a deal to end the war.
They come to the table, they're begging to make a deal, because they're begging to make a deal. I hope we don't have to do the war, but we may have to give them another big hit. We may have to give them another big hit. I'm not sure yet.
The president warning attacks could come in the next 2 to 3 days.
So he gave a timeline, 2 to 3 days, maybe Friday, Saturday, Sunday, something maybe early next week, a limited period of time. That's the window the president is basically giving the Iranians. You heard J.D. Vance, the vice president, in the briefing room yesterday say they want to make a deal as well, reiterating what the president said. But then you have reporting from the Wall Street Journal and just obvious reporting coming out of Iran state media is that the position negotiations in the U.S. hasn't changed. And right now, you brought this great point up throughout the week. There's really two parallel conversations happening. One, the United States is having with its partners and the regime to just try to open up the Strait of Hormuz. Then the second is a long-term negotiation when it comes to nuclear.
Was that a news conference on a building site yesterday?
Yeah.
Is that what that was?
It was a news conference.
A briefing with
basically.
Reporters around the ballroom.
He wanted to show off the ballroom, so in front of the construction site, also brought in photos. I believe he also told the chef at the White House to have breakfast available. I think like bacon, egg, and cheese sandwiches. Yeah, I saw photos of that. Not sure who took them, but I saw photos of that. And then, of course, once the president is done, any questions, he always takes questions, and then it becomes about anything the reporters want to ask.
The food looked pretty good. I'll put it that way. I saw some of the pictures. Let's talk about a big story developing in this country. Let's turn to tech. The backlash building against the rise of AI.
The rise of artificial intelligence is the next industrial revolution.
Today, we stand on this edge of another technological transformation. I know what many of you are feeling about that. I can hear you. There is a fear.
College graduates booing commencement speeches embracing artificial intelligence. The Standard Chartered CEO, Bill Winters, looking to explain after saying the technology could replace, quote, lower value human capital. Christian Keller of Barclays remaining positive, writing the anxiety about machines replacing human workers has not played out. Despite the dramatic rise of automation, there has been no dramatic rise in unemployment. Christian joins us now for more. Christian, let's get into this. It's an important conversation. Do you think there's a big gap opening up between the narrative and the data?
Well, I think if we look at history, and you know, these are not entirely new developments. When we had big technologies, there's always the fear that they would create a lot of unemployment. If you look at it over the past 80 years or so that we have data, you know, it just never played out. You know, it's, first of all, new technology automates, so it replaces jobs, but it also augments, and that often makes people more productive, and new jobs are being created. That is the story that we can document. You know, if you look at the occupation that we have now, since the 50s, every year there were new occupations people couldn't even think of beforehand. So that's why, at least in the immediate future, or even the midterm, until we get to that, maybe, you know, that singularity space where machines do everything, I think that is an overblown fear of of mass unemployment from AI.
Christian, luckily you're at Barclays. If you're at Standard Chartered, we might be having a different conversation. Venkat would never use the kind of words that we used in the last 24 hours, but it's kind of awkward. These CEOs seem to be finding it really difficult to talk about this technology and how it will improve lives and not just replace jobs. Christian, what's the best approach, do you think, going forward to talk about what you think is on the horizon?
I think, first of all, it is about productivity increases, and that is what the market is betting on as well. And so far, if you look at research, a very, very large variation of forecasts. There are some, including Nobel Prize laureates, say this is going to be negligible, 0.1 percentage point in labor productivity each year. There are other studies who are saying 3.5. So the question is, what is more likely? And what we've done recently is we looked at an additional angle from just the AI that is being discussed right now, mainly digital, a large language model. And what we are seeing is now that we are having, physical AI, humanoid robotics. And we think that addition, that combination of the two, will make a huge difference because it increases the tasks that can be automated. And, bear with me, you may think, well, that means more pressure on labor markets, but it also means that the productivity gains could be much higher. And we think that is a positive thing.
In your note, I want to pose this question to you. You say, is it hasta la vista moment for human workers? At some point, though, will we see firms have just a smaller footprint when it comes to employees?
Certain firms, yes. And in certain occupations, it will go down. But as I said, it's really about the new jobs that may be created, that may happen from this. Think about it, the jobs we have today. Many of them, if you'd ask our grandparents, they couldn't have imagined, that you would have these type of jobs that we have today. So I think that is in a way what typically is missed in the debate. And that is really it. And if you have an expansion of the production frontier, it's hard to think that that's a negative thing. Now, I do believe that the tendency towards the income of an economy going towards capital rather than labor, that probably could increase. I mean, there's a lot of evidence for this. You could even have wages rise, but rise less than the overall economy grows. That means like the share that labor takes home versus the share that capital takes home can go down further. There are some issues with that. I think, about distributive policies, etc., taxing capital income. We're not there yet, but those can be solved. The underlying message is you increase the pie. And that, in principle, is a good thing for humans in general.
Yeah, Christian, that's what I wanted to pick up on, and I'm pleased you went there because we've been confronting those forces now for decades, the shift of income away from labor to capital. Can you walk us through, you just kind of touched on it just briefly, the kind of policy response you would anticipate as those forces pick up, if they pick up, in the next decade?
I think what you would see is, I think it's quite straightforward that ultimately if you say, look, capital is taking an increasing share of what the economy creates as income, you would try to have to tax that rather than labor. We have still systems across the Western world really that are very skewed towards taxing labor income. And that makes less and less sense if you have a world where, first of all, also many people, can benefit from it. I think what's important is that the capital income doesn't accrue only to very, very few people, but that is widespread. Then even people who may be seeing their labor income decrease, as long as they participate in the capital income improvements, that would then still be a net positive, even for those who are not maybe at the very top of that chain of where income goes.
Christian, what do you suppose that would mean for capitalism? Would that be a world with a bigger government, more services, more universal basic income? How do you see that playing out?
Look, there's always the end state, right? Where do you get at the final stage? And as I said, there's a lot of room to go where how far, not only AI, but also what we are particularly talking about in our study, humanoid robotics, how far they go and which stages they come. I believe in the short run, that doesn't necessarily mean bigger government, but it means changing our taxation system. I think that seems very clear that you need to modernize it to a world where it's no longer labor is the main source of income.
Christian, thoughtful stuff, and forgive me for getting to the end of history several decades down the road. This was fun. Thank you, sir. Christian Keller there of Barclays on a new important note from them. Their research has been fantastic on the future of the labour force with this technology.
That ending point, though, and what this means for the political sphere is very interesting, because this is going to be top of mind and into the midterm elections this year, but also really, as you mentioned earlier, for 2028. Bernie Sanders last year put out a note talking about how it means AI and all of this could mean 100 million job losses in the United States over the next decade. He wants a robot tax, and you're not just seeing it from him. It's also individuals on the right as well. This is one area of agreement.
Futures this morning up by a third of 1% on the S&P 500. With an update on stories worldwide with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The UK government set to delay a planned hike on motor fuel taxes that was due to take effect in September. Prime Minister Keir Starmer says he is extending the freeze through the end of the year after a surge in costs since the Iran war. It's one of the most highly anticipated financing deals of the year. Sources telling us here at Bloomberg, banks are preparing to sell $49 billion worth of debt to back Paramount's takeover of Warner Brothers Discovery. In sports, the Knicks off to a strong start in the Eastern Conference Finals after storming back to win Game 1. They were down 22 points in the fourth quarter before locking down defensively and coming back to force overtime. Jalen Brunson led all scorers with 38 points. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. 22 points, 8 minutes on the clock. Looks done and dusted. You know, if I was there, and this is bad, I know, I go to bed very early, so forgive me. If I was there, I would have left. I would have walked out of MSG, and that would have been a massive mistake.
I actually went to a Knicks game recently, and I left early because of the shift we have getting up. And thankfully, they were winning, and they were up, and it wasn't a big deal. But I would have totally regretted that. 7 minutes, 40 seconds on the clock, and you're down by 22 points, and you still win. Absolutely unbelievable. You know, I woke up in the middle of the night, and I checked the score, and we were losing, and I was just really upset. But then I woke up for good. Then I watched the whole fourth quarter on the way into work.
Crazy turnaround. Just unbelievable game. Up next on the programme, persistent consumer resilience.
Things seem to be quite resilient right now. We're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior.
Up next, we'll catch up with Jen Bartasius of Bloomberg Intelligence on the latest earnings this morning. Target out earlier and TJX too. Those two names in focus going into Walmart numbers later this week.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We're doing better this morning, up by 1/3% on the S&P 500, higher by 0.6 on the Nasdaq, on the Russell, up by 0.5. Retail earnings from TJX, from Target have been good so far. We'll spend some time on that in just a moment. If you turn to the bond mod, we've had some real headwinds growing in the global bond market. 10-year yields up in 6 of the last 7 full trading days. Over that period, higher by around 25 basis points. We caught up with Barclays just yesterday, Ajay Rajadaksha, who said this: with debt rising faster than growth, worsening inflation profiles, no political will for fiscal reform, there is little reason to reach for the long end. He did not like this bond market at all.
Absolutely not. They don't want to touch it. And Barclays is even, some of their analysts are fearing that we can get to 5.5% on the 30-year potentially if this environment continues. A lot of this has to do with not just what's going on in the fiscal space already, where some of these governments are spending too much over the course of the years. What is happening right now when it comes to oil? How long can we live with 110 basically holding on to Brent? The fact of the matter is, maybe not that much longer when you think of NATO saying, by July, we might have to also do something and go help the United States in the Strait of Hormuz, because their economies are feeling it the worst.
Just on the bond market, that's Ajay's point. At this price, it doesn't get it done. He wants a yield closer to 5%, and right now we're around 464. And at times, at the long end of the curve, particularly in places like Japan, the UK, it has just really felt unhinged. It feels like a bond market without an anchor. Will this be the anchor? Need a much bigger move than this. We're down 2% on Brent and on WTI this morning. Brent at 109, WTI around 102. Consumer squeeze continues. Response at the political level continues to build. It ain't enough. The pressure in the UK is the one to watch. They're freezing a fuel tax hike. They're also considering pushing supermarkets and grocery chains to cap food prices, which anyone who's closely followed economics and the history of economics knows that's not always a great idea.
Not always a great idea. And we saw that play out, remember, in the mayor race in New York, basically giving the current mayor, Mamdani, a little bit of a lesson on economics on how that actually does not work when you cap food prices. What I'm astonished with the United Kingdom, after Guy Johnson told me where petrol prices are right now, would mean north of $7 a gallon in the United States. How are they even considering the hike in September in the first place?
Let's talk about some of those retailers and the consumer squeeze. Under surveillance this morning, persistent consumer resilience.
Things seem to be quite resilient right now. Like, we have seen an increase in spending at gas stations, but consumers seem to have absorbed that, and so we're not seeing any of this stress or consumer sentiment or what's happening with oil prices flow through to actual behavior. Despite some of the stresses and the headlines that you might read, things look pretty good.
So here's the latest this morning. Retail earnings ramping up with Target today. The retailer rising after posting its best comparable sales growth in 4 years. Jen Bartashis of Bloomberg Intelligence joins us now for more. Jen, welcome to the program. We can talk about the backdrop, the consumer squeeze, the environment, Walmart on the horizon. Can we just spend some time on the turnaround at Target and execution? What do you think they're doing right at the moment?
Well, it really comes from a lot of investment that they've made in supply chain and efficiencies. And so when you think about it, although that's kind of the back end of the business, what it translates into is having the right things in the stores at the right times with shelves full. And that makes it easier for them to then run promotions and advertise and bring people back into the stores. And so I think a lot of the tactics that they've employed are turning out to drive some traffic growth, drive that improved result. But it's really stemming from those organizational and procedural changes that they're making at the heart of the organization.
What else do they need to do to catch up with competitors like Walmart?
Well, I think one of the things that happened with Target is, they need to stay true to who Target is. And so I think it's a dangerous path to try to chase Walmart and best Walmart at what Walmart does well. Instead, I think Target needs to get back to that sense of what is it that consumers really love about Target, or Target as people used to be excited about, and focus on those areas and building their brand with the people that care about those products. And that's the direction that we see the management team taking, which is pretty encouraging.
I love that you say that, because that's what me and my cousins used to call it growing up. But they had a fun makeup section, all this exciting stuff in the health wellness space. We used to call it Target. Is that what they're leaning into right now? Is that where they're seeing sales increase?
Well, a lot of their sales are coming from household essentials and from food, which is really not surprising considering that people have sort of retreated to those essentials. But areas that have sparked some growth lately, they've always been strong in beauty. Apparel sales are improving. Hard lines, which is some of the home decor type of items, those sales are improving. And those are the things that are at the core of Target Essence. And so we're seeing that slowly turn. And again, that's helping support the results that we saw today.
Jen, you've seen Target, you've seen TJX. We get Walmart tomorrow. What are you expecting now?
For Walmart, they have been on a roll. They have been consistently pulling in more consumers into their ecosphere and holding them and capturing a greater share of their wallet and spending. The current backdrop is just very conducive for anybody playing in the value space. That includes TJX this morning. That includes Target. That includes Walmart. To continue to have the opportunity to gain share of wallet. And so. There's no reason to think that Walmart isn't also benefiting from those macro trends. We're expecting to see consistent growth from Walmart that we've seen in recent quarters.
They're having a good year, that's for sure. Jen, it's good to see you. Jen Bartash is there of Bloomberg Intelligence. The turnaround continues over at Target.
It continues. And actually, I was in a Target recently, and one thing that you do if you have the app, you can see what you want and what exact aisle it is on. Or you can have them deliver it to your car. You go into that exact aisle. You know where it is. You don't have to waste time looking around. That's sort of the push they're doing when it comes to technology that's actually been helping this company.
Walmart, the next stop. Target this morning, up by 1.4%. The next stop for this market, of course, Fed minutes later on this afternoon, then a big earnings report after the closing bell. You might have heard that NVIDIA reports a little bit later on today. Into all of that, equity futures on the S&P 500 building and bouncing by about 1/3 on the S&P, and advance on the NASDAQ as well, following a 3-day run of losses on the benchmark on the S&P. This morning, the NASDAQ higher by 0.6. To turn to fixed income, lots of jitters, nerves about what's developing at the long end of the yield curve. 30s this morning coming back in by a single basis point, 516.48. 10s at 464. This move in crude won't hurt. Brent and WTI coming back down. WTI and Brent down by some 2% this morning. Brent crude at about 109. Coming up in the third hour of Bloomberg Surveillance, we'll catch up with David Kelly of JP Morgan Asset Management, Megan Welch of Brown Gibbons Lang and Company, Kathy Bosch-Jantic of Nationwide, and Ben Reitzes of Melius Research from New York City. You're watching Bloomberg TV.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income people want income in their portfolio, and they can get that in many ways. You can get that from the Treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is not simply an AI-driven rally. It's a broad rally.
What we are seeing is the AI momentum continues to move forward.
Were it not for AI, this would be a very, very different story.
You asked me to pick a side right now, I would not own equities.
Just because you're not at 2000 bubble territory doesn't mean you're not in a bubble.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Interesting to hear those comments from Ajay Rajadaksha over at Barclays. This is someone who was super bullish at the end of March when this market hit a new low, had a big rally off the back of that. Now, he doesn't like stocks, and he doesn't like bonds either. And the situation in the Middle East has got him a little bit nervous.
When he came on originally and the Strait of Hormuz was closed, and he was doubling down on equities and saying, we're going to see the S&P 500 take off. This train is going to continue because the AI trade. My eyes were coming out of my head because what I was talking to individuals on the ground and commodity experts were talking about how dire the issue was going to be for energy. And that's Ajay that showed up yesterday.
The power of earnings, and that's why he was bullish initially. It's not that he didn't think the situation in the Middle East didn't matter. He just didn't think it mattered yet. He thinks it matters now, with bonds breaking out and yields breaking out to new highs more recently. If you're just joining into the program, welcome to the program, live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts with these scores right here. Equity futures on the S&P 500 bouncing back by 1/3%, following a 3-day losing streak, which amounted to a loss of about 2% on the benchmark. On the Nasdaq, up by 0.6, going into that major weighting for both the S&P and the Nasdaq, the #1 rating on these stock indexes. We'll hear from NVIDIA after the close. In the bond market, new levels on 30s, the highest close we've seen on a 30-year yield going back to 2007 this morning, down 2 basis points. 30s at 5.1585. After the close, NVIDIA. Before we get there, Fed minutes. Now, typically, yeah, this can be a little bit snoozy. This gets more interesting given the pushback we've seen on the committee over the last few weeks.
Right, when it comes to those dissents, it's going to be interesting to go through some of these minutes, also ahead of a new Fed chair arriving, getting sworn in the end of this week on Friday with the President of the United States at the White House. Also politically very different. Haven't seen that happen, Jonathan, since the late 1980s with Alan Greenspan.
Fed minutes coming up a little bit later on this afternoon. NVIDIA after the close. Coming up this hour, we'll catch up with David Kelly of JP Morgan Asset Management, with stocks looking to snap their longest slide since March. Megan Welch of Brown Gibbons Lang on the next phase of defense investing. And Ben Reitzes of Melius Research expecting a beat from NVIDIA. We begin this hour with stocks bouncing back and bond yields near historic highs. David Kelly of JP Morgan Asset Management writing, it's a positive environment for US fixed income, international equities and some alternatives. A little more difficult for US stocks after 3 blockbuster years. David joins us now for more. David, welcome to the show.
It's good to see you.
Let's start with the bond market call.
Yeah.
Is it getting more interesting for you then? 10s, 30s, this back up in yields?
Yes, but I wouldn't overplay this. I think the Strait of Hormuz issue is going on longer than it should, because I think people have, maybe in the administration, have been wrong-footed by the fact that gasoline prices haven't gone up that much. I mean, I know we're at $4.55 this morning, but it's still not as high as it was in 2022. I don't think they realize that the reason for that is because we came into this year with bulging inventories, and that gave us a few months to work down those inventories. But now every week from here on out that the Strait stays closed, that inventory situation is going to get worse and worse and worse. And that's eventually they're going to cry uncle. And I think that, I think when you look at markets, it's important not to look at where we are today, but realize the administration will have no choice but to come to a deal with Iran by which oil flows from Iran and other Gulf states out of the Strait of Hormuz. There is no other solution to this. Now, we need to obviously we need to do something about the nuclear program. We tried to do that before. But ultimately, that's where we're headed.
So you think this administration blinks first, not the regime?
Yes, because the Iranians know that they've got an asymmetric threat. They can, with very little effort, stop oil coming out of the Gulf, and they know that every week that gasoline prices goes up, it's more pressure on the U.S. administration, more pressure on the global economy. So they'll have to. And the deal is, I mean, the Iranians don't have all the cards, but the deal is we're going to separate the Strait of Hormuz issue from the nuclear issue. We're going to get back to something like the agreement that we had, the
JCPOA.
Yeah, exactly. We'll get back to where we were. Yeah, go back to. Yeah, of course, I'm going to say it's better, but ultimately, it's how do you control their nuclear program? What do you have to do to get them to back off? But that has to be separated from the Strait of Hormuz, because the Iranians, that's going to be their bottom line, and eventually the administration will blink.
As an investor then, do you really care what the deal looks like? Do you just assume the energy story is going to be flowing by the end of the summer and just look past it?
I think, there are plenty of risks out here, but that should be your base case, and that's right. And that's why I'm not too freaked out about the increase in long-term rates. I'm not that freaked out about seeing higher energy or long-term inflation priced into tips, because I just think a lot of this is a slight overreaction to clearly a dire situation in the Gulf right now, but one that really, it's only going to end one way.
So, David, just take that a step further. In markets at the moment, and the way things have been priced, in markets where we're pricing more hawkish policy responses, places like Europe, you taking advantage of maybe what you believe is a dislocation?
Possibly. I mean, I think the Europeans and the British and the ECB have been sensible so far in not reacting to what is essentially an oil supply shock in raising rates. I hope they are sensible enough to keep with that, but maybe not. They are, by nature, more hawkish than the Federal Reserve. What I don't believe is, I do not believe this Federal Reserve is going to raise rates. I think it's kind of interesting. The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards. But I think the Europeans probably are more likely to be hawkish for longer than the US, and that does ultimately mean, I think, the gap between US rates and international rates closes, and the dollar comes down, although most of that may not occur till 2027.
I know there's a mandate issue here. There's a dual mandate in the States. There's a single mandate in European central banks, but it's kind of odd we're talking about a more hawkish policy response in Europe when the profile for growth is so much worse relative to the US.
Because they see the potential for inflation getting embedded through the labor market, and that is just what will not happen here. I mean, if you look at the wage growth that we saw in that April employment report, it was up a little bit from March, but it is close to the lowest level we've seen in 5 years. Despite this really tight labor market, the truth is American workers are so dispirited, they won't ask for a wage increase. And if you don't ask for a wage increase, you cannot get wage price spirals going. It just won't last.
I often ask you about this. Is there a union difference as well?
Oh, yeah.
Is that factor important?
Absolutely. I mean, part of its union is because less than 6% of the private sector in the United States is in a union. And obviously it's much higher than that in Europe and in the UK. But there are also institutional things. I mean, in a lot of Europe, there are cost of living adjustments automatically priced in to wage agreements because of increases in inflation. And that doesn't happen in the United States either. So there, I think there's some argument that, yeah, wage growth might be a little stickier in Europe, but Europe does not need to collapse demand. I mean, their demand is weak enough as in Europe and the UK that they've got plenty of other problems to worry about.
David, where does this leave the Fed then? You don't think they're hiking in this environment?
No, I think they're going to work on their golf game for the rest of the year. I mean, what they're not going to do is they're not going to cut in June. And the only question is, I used to think the only question is it going to be 12-0 or 11-1? 11-1 would be fascinating because there has not been a single instance in all the history of the Federal Reserve of the Fed chair voting against the majority of the FOMC. And I don't think it's going to happen now. So I think it's probably going to be 12-0. The other question is there any Fed, particularly regional bank president, who might say, you know what, we should hike. I'm going to dissent in favor of a hike. At some stage in the next few months, you might see that. But overall, the majority of the FOMC is going to keep their heads down, try to get through 2026, see how the situation in the Gulf finally resolves itself, and then see what the trajectory of the economy and inflation is at that point.
Has the risk increased, though, for a Fed chair to dissent?
It has, because we'll have to see how Kevin Warsh approaches this, because he clearly gave the president the impression that he might be open to cutting rates. I don't actually think he is, but he gave him that impression. And so the question is, how does he now square this? But my guess is, he's a smart guy. His job now, the job of the Fed chair, is to try and find a consensus in the committee. It was interesting, Jay Powell talked about that a little bit in his last press conference. That's really the job of the Fed chair. Well, you're not going to form a consensus or build that consensus over the years if you start out by dissenting from all your colleagues on a rate cut.
We've redefined dovishness. It's just getting this Fed to do nothing through the summer.
Right.
That's the big goal now.
And I think one thing that Kevin Warsh has on his side is that the environment has changed from when he was auditioning and interviewing and in front of the Senate hearing. Now there is a higher inflation picture. Gas prices are higher. And seemingly the president does understand that based off these two interviews this week.
Crude's not at 60 anymore. It's got triple digits, and that's a massive change. Let's finish by talking about equities. Massive bounce from the end of March. Huge rally in the semis. NVIDIA after the close a little bit later. Is your attention elsewhere beyond the US?
I mean, it is interesting, the gap between the rest of the world is still beating the US in equities this year, but it's only down to about 200 basis points, so it's by less. I still want to overweight the rest of the world. I do think the rest of the world's cheaper than the US, but there's still this institutional bias in favor of the US equity market going higher. Things like the movement, money pouring into 401ks, stock buybacks, the difficulty getting money out because of capital gains. All this gives a natural upward bias to the US equity market, which is not present elsewhere. So I wouldn't bet against this US market either.
Changing that bias? Are you seeing some headwinds? I'm thinking about supply from some major IPOs. I'm thinking about less buybacks of some of the hyperscalers because they're investing so much money into their businesses.
A little bit, but then it's at some stage over the next few weeks, if I'm right and the administration blinks and there's some agreement, that's another reason to pop the champagne corks.
Culturally, it's so different. You travel the country, and you know what it's like in Europe. In Europe, there's a bias to worry. Absolutely. In America, there's a bias to invest and to buy.
Absolutely.
You just can't change the culture.
And I spent the first 20 years of my life in Europe, and Europeans look at the glass and it's half empty, and Americans look at the glass and it's 3/4 full.
And not much has changed.
No.
From an investing perspective, anyway. David, it's good to see you. Thank you, sir.
Great to be here.
David Kelly there of JP Morgan Asset Management. Equity futures right now in the S&P firmer by 1/3% on the S&P 500, with an update on stories elsewhere this morning. Let's get to your Bloomberg brief with Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. A busy morning of retail earnings. Target rising in the pre-market after it posted its best sales result in 4 years. TJX also higher on stronger than expected guidance. Lowe's facing pressure, though, after failing to raise its outlook, citing housing market challenges. Live Golf starting to lay the groundwork for a potential U.S. bankruptcy filing. Sources telling us here at Bloomberg the league is currently looking for money after its main backer, the Saudi Public Investment Fund, pulled its funding. Global chip supply may be at risk. Talks between Samsung and its largest labour union collapsing ahead of a planned strike at the world's biggest memory chip maker. Workers are set to proceed with the stoppage tomorrow. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. I'm next on the programme, The Morning Calls. Plus, we'll catch up with Megan Welch of Brown Gibbons Lang & Company on the new era for investing in defence. That conversation just around the corner, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Think about it, the jobs we have today. If you'd ask our grandparents, they couldn't have imagined, that you would have these type of jobs that we have today. If you have an expansion of the production frontier, it's hard to think that that's a negative thing. The underlying message is you increase the pie. And that, in principle, is a good thing for humans in general.
That was Christian Keller of Barclays joining the programme a little bit earlier on this morning, given the backlash we've seen to AI, the boos over the weekend to commencement speeches at graduation ceremonies. It's quite something, and the very clumsy communication from one particular bank in focus over in the UK in the last couple of days. Equity futures right now, the S&P 500 firmer by 0.4%. We're bouncing back from a 3-day losing streak on the S&P, the longest daily stretch going back to the end of March. On the Nasdaq, up by 0.7%. Going into the heavyweight earnings report after the close. Nvidia just around the corner. In the bond market, some better news. 2s, 10s and 30s. If you're on this side of the trade, of course. Yields are down by 3 basis points on 10s, 463.53. 30s, the highest close since 07. Multi-decade highs on yields at the long end of the curve. Not just stateside, worldwide. 5:15 this morning.
Interesting what David Kelly said. It reminds me kind of what Steve Oth told us yesterday. If it's so bad, it won't happen. Meaning the U.S. is going to have to blink and potentially make sure that they do something at the negotiating table, some sort of concession, just to get the oil flowing again. That means end the blockade and getting to some sort of agreement to get the Strait open.
Well, let's get you an update on what's happening with crude as well. Brent and WTI. Bit of a pullback today on Brent crude. Crude down by some 2% throughout most of this morning. 2.6% lower now at 108.40. I've repeated this throughout this morning. The takeaway from all of our conversations, this can't continue. And we're running out of options to maintain the so-called status quo.
Well, that's what's really challenging, and a lot of our guests continue to point to this, and David was great on it, this glut that we had going into this crisis. Now, guess what? All those reserves are being depleted, stockpiles are being drawn down, And this is where it can get the next few weeks and months incredibly challenging, especially for Asia Pacific and Europe.
Brent crude at 108. That's the price action. Let's get you some morning calls. First up, Piper Sandler cutting its price target on Home Depot and keeping an overweight rating, saying there's pent-up demand in the home improvement space. Your second call from Stifel, raising its price target on CrowdStrike to 660, saying the company's partners are bullish on growth expectations for the fiscal year. And finally, Wells Fargo trimming its price target on Meta to 765. The analysts still expecting improving cloud revenues and rising backlogs. The stock is up this morning by 0.25%. Let's talk about the situation in the Middle East. The US threatening to resume strikes on Iran if a deal to end the war isn't reached in the coming days. Iran warning today it would retaliate beyond the Middle East if the US or Israel restarts attacks. Joining us now for the latest on the ground is Becca Wasser of Bloomberg Economics. Becca, welcome to the program. I often ask this question, what phase are we in? What phase do you think we're in right now? And how sustainable do you think it is?
Well, right now, the phase that we are in with the Iran war is a phase of purgatory. We're neither here nor there. We're not in open conflict, but there's also no peace either. And this phase is largely focusing on the Strait of Hormuz at the moment, where you've seen President Trump trying to take various actions, whether that is Project Freedom, the blockade, trying to break the logjam in the strait and have it reopen. But right now, I think, we are in sort of a nacho phase where there's not a chance Hormuz opens, which means there's either going to need to be some type of negotiated settlement, which means that President Trump is probably going to need to accept some concessions, or resume strikes, and neither of those are very good options.
Becca, Anne-Marie was talking about the administration just looking for barrels here, there, and everywhere. Sanction waivers here, sanction waivers there. It does raise the question just how sustainable the current status quo actually is before we run out of these reserves. And these reserves have been aggressively drawn down since the end of February, the start of March. Becca, how sustainable do you think things are?
I don't think they're very sustainable. And that's just on the economic dimension. If you look at the military dimension, you have had U.S. forces in the Middle East deployed for several months, right? There was a strong buildup prior to the start of hostilities over 3 months ago. So there's also a U.S. readiness problem from the military standpoint, in addition to the global economic squeeze that we are feeling because of the situation in the Strait. And I don't think that's going to change anytime soon, in part because Iran knows that it has leverage now, and it is going to try and exert that control wherever possible. Even if there is a gradual easing in the Strait of Hormuz, they're still going to saber rattle on occasion to remind the United States and the global economy that they do have that leverage.
Becca, appreciate your time. Thanks for joining us. Becca Wasser there of Bloomberg Economics. We've had this question being asked a few times on this program. What do we hit first? Tank bottoms in the West or tank tops in Iran? The blockade continues.
Blockade continues, and I think the Iranians are actually used to this and can find ways to squirrel away any barrel of oil. What is interesting, though, is the structural shift that might happen for this. Like Becca was just talking about, the Iranians know they have this leverage. Do you think they're just going to go away with the toll now and not actually use it? Of course not.
That's the latest on the Middle East. Let's build on this and talk about the defense sector. Megan Welch of Brown Gibbons Lang & Company writing, the next phase of defense investing is less about the weapon itself and more about the systems that keep forces prepared and operational every single day. Megan joins us here in New York. Megan, good morning. Good to see you.
Good morning. Thanks for having me.
Let's take that quote and just build on it a little bit more. What do you mean by that particular quote?
Yeah, I think so. The defense industry has become a real area of investment for both the public markets and the private markets. The critical funding tailwinds behind it, the increased defense spending across the board has really attracted investors. And it's less about like the F-35 or some of these large platforms. It's more about all the sustainment that goes around it. So all of these systems, the support services, et cetera, are areas where investors are seeing opportunities to be able to get access to the defense market without any of the risk associated with, programmatic delays or cost overruns.
When I often think of this particular sector, I think of very, very high barriers to entry. Do you have to bear that in mind when you think about some of these companies in private markets?
It just depends where in the sector you're looking to invest, but not really. There are ways to play defense and get access to this market without having to, go through multi-year training or multi-year investments and testing. So again, the services, the logistics are part of the O&M budget in the defense industry in the U.S. And that's an area that's pretty insulated from any kind of continuing resolution or defense budgetary disputes between the politics.
What about things like Project Maven at the DoD? Has that changed potentially what companies are going to be working with the Defense Department that aren't traditional or normal that we think of?
Yeah, absolutely. The defense procurement has been broken for decades. That is very well known, both in the defense industry, but also in Silicon Valley, the Valley of Death. There's been a real push in this administration. I know you're laughing, I'm sure you've heard it 100 times, but there's a real push in this administration to change that up. It is a very large ship to turn with a very small rudder. To Trump and Hegseth's credit, they're doing a good job trying to do things like the Gauntlet program or Project Maven, but trying to get more dual-use technologies and commercial-use technologies into defense to accelerate where we are from a warfighter readiness perspective. It's just really hard because fundamentally the defense market itself is structured around annual funding budgets that don't really have multi-year procurement signals. And it's hard for commercial industry guys to be able to understand what does that look like in 3 to 5 years and how can I actually forecast my sales and forecast my supply chain to meet that.
One of the big stories at the DoD right now, and actually what we've heard from the likes of executives at Palantir, is what's going on in Iran will be the first really AI-driven war. When I think of that, I think of Anthropic, because obviously they're using Anthropic on their systems. At the same time, the Pentagon is saying it's a supply chain risk. How does that impact potentially what companies work with Anthropic and the DoD when you think about investing?
So AI is definitely playing a huge role, not only in things like Palantir, but also in robotics and unmanned systems. It's going to be a force multiplier and a real force structure going forward. TBD kind of how it plays out in terms of how Anthropic works with the DoD directly. There's a lot of risk associated with that from a cybersecurity basis and from a technology risk basis, but we're seeing more and more AI-enabled capabilities that allow us to increase our force structure and our presence that we wouldn't be able to do just fundamentally with boots on the ground.
What about the political risk of regulatory concerns? Because a lot of people don't like the idea of autonomous weapons.
Yeah, I mean, so autonomous weapons are, they're very much going to be the future of the warfare, right? So we saw what happened in Ukraine. When we look at where we're competing against Russia and China, we just don't have the bodies, the boots on the ground to be able to match them one for one. And it also takes a lot of risk out of loss of life, right? So you think about having the unmanned wingmen, right? So not having as many airmen in the air and having the risk of loss of life. There's a lot of benefits to unmanned systems, not just out of force multiplier, but to be able to take some of the risk away from loss of life.
Do you see the investment really only and what's potentially going on in this space, the advancements in the United States or elsewhere? Because I see a lot of work that Ukraine has done when it comes to drone warfare.
Yeah, Ukraine has been fantastic. It's been a great case study for the future of warfare. I jokingly say it's kind of like what the machine gun did for World War I. It's been a total change in how we go to war going forward. We are never going to go to war like we did in Iraq and Afghanistan. But yes, absolutely. And internationally, there's been more defense spending and defense investments that we've ever seen in the last 20 years, really since the peace dividend of the 90s. And Ukraine's been the leading, case study of that, of how to be able to use defense technology to be able to have it in a modern warfare conflict.
And it's driven massive change in Europe and attitudes to investing in defense.
Yeah. Absolutely. Investing in defense in Europe, but also in terms of the technology, Ukrainians are the ones that know how to strike down these Shahadi drones. We're sometimes using Patriot missiles to do it. Right. They have their own anti-drone systems that are much cheaper.
And now going to the Ukrainians to learn some of those lessons. Megan, appreciate your time this morning.
Yeah,
Thank
absolutely.
you. Megan Welch there of Brown Gibbons Lang and Company on the future of defense investment. If you're just joining us, welcome. Later on, of course, Fed Minutes, and we'll get those earnings you're all waiting for from NVIDIA in the here and now as we count you down to the opening bell, about 1 hour and 5 minutes away. Equity futures near session highs by 0.4%, higher by 0.75% on the Nasdaq 100. Up next, we'll catch up with Kathy Bostjantic of Nationwide with bond yields near historic highs and the Fed firmly on the sidelines, multi-decade highs on 30-year yields this week. In the last month, we've seen that in the UK, Germany, and all-time highs at the long end of the Japanese curve. More on that in just a moment. From New York City, you're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Equities doing better than okay, bouncing back by 0.5%. The last 3 days, down about 2%. So this is your bounce, just eating into those losses so far this morning. On the Nasdaq, up by 0.8%. Had some earnings earlier on this morning. Target, heard from Lowe's, TJX. Retailers going into Walmart tomorrow. Target up by 2% in the pre-market, adding to a gain of about 30% on the year so far. The numbers from them this morning, the best sales growth in 4 years. The turnaround looks to be going quite well. Some evidence of it this morning.
Looks to be going quite well. We heard from our own analysts about what Target is doing right, which is leaning into why people like to go there, things that people like to buy when they are at Target, and also just upgrading some of the technology around it. I was talking about earlier, I used this app over the weekend before I went to China. I had some stuff to go buy. It told me exactly what shelf and row an aisle all of the goods were going to be at, made the whole thing was a lot more easy.
Super helpful. That's the story at the single name level. Let's turn to the bond market. 2s, 10s and 30s. Lots of attention at the very long end of the yield curve on the 30-year yield, given the close yesterday, the highest we've seen in multiple decades, going back to 2007. Yields this morning down by a basis point, 516.50 on 30 so far this morning. Later on this afternoon, the attention will switch to the front end of the curve when we get these Federal Reserve minutes, following that hawkish descent to the language in the statement at the Fed's last meeting. From there, there's just been a chorus of pushback to the easing bias from several Fed officials, so look out for that in the minutes a little bit later this afternoon. 2s around 4.1% ahead of Kevin Walsh's signing-in ceremony a little bit later this week.
I think everyone's excited for that signing-in ceremony because they want to see how the president talks about Kevin Walsh in the signing-in ceremony, because it's going to be at the White House. It's not going to be at the Federal Reserve. It is going to be at the White House for the first time, I believe, since 1987 it was, with Alan Greenspan. And basically, the president this week, in a number of interviews, 2 of them notably in Fortune and Washington Examiner, pushed back on this idea that he wants to see Kevin Walsh come in and cut interest rates. Said he's going to do the right thing. Also gave a nod to what's going on in the war and the inflation picture and said maybe he'll have to look at the figures after the conflict is over.
The swearing-in ceremony later on this week. Let's talk about the Treasury market. Big move in yields, still holding near multi-decade highs due to inflation fears and some fiscal concerns building worldwide. Ira Jersey of Bloomberg Intelligence joins us now for more. Ira, welcome to the program. I want to spend some time on your survey on Kevin Walsh a little bit later, but let's just start with the moves we've seen at the long end of the curve, not just in the US, in the UK, in Germany, in Japan. What do you think the dominant driver, Ira, is right now?
Yeah, it is what you just mentioned, John. It's that fiscal issues in a lot of the developed markets, right? And the U.S. is part of this, but we're not actually the worst actor when it comes to this. It's really Japan and the U.K. that have been, some of the bigger drivers, and they've been pushing. So it's a tail wagging the dog type of moves, where you see these 10, 15 basis point moves in Japan or the U.K., and then you'll see 5 to 7 basis points in the U.S. and parts of Europe. So it is a global bond sell-off. This isn't unique just to the U.S., but obviously you take note when, as you said, we had a closing high on the 30-year yield yesterday for the worst in almost 20 years.
Ira, when you and I were first talking about these issues more than a decade ago, we were talking about the anchors of JGBs, of the bond market. Those anchors have gone. What is the anchor of the global bond market now?
Yeah, so for the long end of the yield curve, I think it has to be the end user and the real investor, and a lot of those, there still is a lot of demand for long duration assets globally, because we do have a very large, what we call liability-driven investors. So these are pension funds, insurance companies, life insurance companies in particular at that long end of the curve. And they tend to like yields in US dollars at around 5%, 5.25%. So I think one of the big questions here is, do we hold these types of levels? Do they come in and continue to buy and add duration in treasuries instead of doing what they have been doing, which is buying corporates at super tight spreads, but at yields that are 6-ish% or maybe even a little less? And so I think we're at the levels where risk management says, okay, look, yes, the U.S. has a pretty bad fiscal situation, but realistically, they're probably not going to default. It's more of an issue of, do they have to inflate their way out of this debt? I don't want to call it a crisis, but this massive amount of debt that the U.S. holds. And it's an area where pension funds and insurance companies can say, okay, look, we'll buy at 5.25% now or soon, and that has to be what arrests the market. I don't think the monetary authorities like the Fed are going to come in and be buying the long end just because we've sold off 40 basis points in the middle of a war.
Ira, your point on credit is important. Now, I hear this all the time. I'll say spreads are really tight. What do you like about corporates? They'll say all-in yield. But if all-in yield is high and credit spreads are tight, then the bigger bulk of that component of that spread, that interest rate, is the risk-free rate. And if I can get a risk-free, why wouldn't I just buy the risk-free rate if it makes up a bigger component of the overall all-in yield? What's the appetite for credit versus risk-free? Unless you think there is a risk there. And Ira, maybe that's the change, that people consider the sovereign to be increasingly more riskier than maybe some of these corporate credits at the moment.
Yeah, I don't think that that's really the case. Like when I've talked to a lot of investors, it is how do we take the risk, and do we they're not really worried about the U.S. In particular, the U.S. defaulting, right? It's more will the U.S. have to run higher inflation, and if they run higher inflation, does that mean that we're going to have systemically higher bond yields? So that's the bigger concern for a lot of investors, not the U.S. not paying its bills. But to your point, I think that's the point I was trying to make is, as a percentage of all-in yield, Treasury yields now are much higher, and so that makes it more attractive to these liability-driven investors.
We're talking about the longer end of the curve. We started by talking about what the move we've seen in 30s, Ira. Let's tie things up and talk about the front end of the curve and the policy rate. The survey you and the team did at Bloomberg Intelligence, Kevin Walsh is a known entity, but how he'll interpret this particular role at this particular time is largely unknown. Ira, what are investors saying in your survey about what they're expecting from Kevin Walsh relative to what we saw from Chairman Powell?
Yes, so a pretty big majority of investors, about 2/3 of them, have suggested that Kevin Walsh is going to be more dovish than Jay Powell. Now, that's not obvious to some people, including us, because in the past he has been a little bit more, I don't want to say middle of the road, but he's been willing to make some hawkish comments when the rest of the committee has been dovish. And just the opposite might be true as well, where he might say, okay, look, we need to cut interest rates because of reasons that I espouse, not necessarily the president, even though the rest of the committee is somewhat more reluctant to cut interest rates. I think the big takeaway from which I think was interesting from that survey, was that most respondents think, like up to 84%, I think the number was, if I recall well, that they could change the policy framework during his term. So that would say, maybe we go away from the PCE being the target. Maybe we go away from the Fed funds rate being the monetary target, and we use SOFR or something else. And it could be that they get rid of or change the summary of economic projections pretty well in terms of how they express forward guidance. So all of those things are something that is probably somewhat more realistic than the Federal Reserve cutting interest rates in June or July amid inflation inflation with when Kevin Warsh finally takes office.
There's a lot on the table, that's for sure, for the incoming Fed chair. Ira, it's good to see you. Thank you, sir. Ira Jersey there of Bloomberg on a number of issues across the yield curve and in the fixed income space at the moment. Kathy Bostjantic of Nationwide writing, rising inflation should embolden more of the FOMC to formally adopt a neutral bias at the next policy meeting. While new Fed chair Kevin Warsh is likely to prefer lower rates over time, we expect an extended pause. Kathy joins us now for more. Kathy, welcome back to the program. Just describe that June meeting, what you think it's going to look like alongside the SEP, because they've got to put out some forecasts as well.
Yeah, good morning, John. It certainly will be an interesting one, no doubt. But I think what you're seeing is the momentum, as you mentioned, is more Fed officials are saying, you know, why do we have an easing bias in the face of high inflation, which, you know, we think inflation, CPI is bound to go over 4% in April. So really hard to hold on to that. Moving to a neutral bias or risk, neutral assessment makes a lot more sense. So I think that should be rather easy. It will be interesting to see the updated SEP forecast, because in the ones in March, there were really no updates. In fact, if anything, if I remember correctly, they pushed up GDP growth a bit, which is surprising. So how do they recalibrate growth? Where do they see the risk there? How high do they see inflation by year end? And not just headline, I think core. I think what the bond market's really trying to suss out right now, is this just energy, and is it just headline and somewhat short term, or is it possibly bleeding over to core inflation?
Kathy, when it comes to potentially a dovish Kevin Warsh, is it dovish that the market expects rate cuts, or just that he convinces the committee to keep the easing bias?
So I think it's tough right now. I think he's inclined to argue for lower rates over time. I think he would really even find it difficult now to come in and argue that the Fed should, in the near term be cutting rates. Maybe, possibly, there's an opening by year end. And I say that if we really see some resolution in the Middle East and gasoline prices come down and all the other energy prices, and particularly if core inflation is somewhere around 2.5%, that could give a little opening. He does prefer these trimmed mean inflation measures, depending what they look like from the Dallas Fed or Cleveland. Maybe that gives some opening to cut rates. But I think in the near term, even he will be kind of in more of a neutral stance at this point.
Like we saw from the Federal Reserve when it comes to the potential impact on inflation from tariffs, when it comes to the energy hit, shouldn't they be looking through this?
I think yes, and I think largely they do, although there's risk that, as I said, it spills over to core and other non-energy measures, and also inflation expectations. Right, that is kind of the golden goalpost in a sense for the Fed. If inflation expectations become dislodged, they worry that inflation, not just this year but even next year, could run higher, right? It becomes a self-fulfilling prophecy. But what we know is with break-even rates for inflation in the bond market, they're very correlated with oil prices and energy. So our view is if you get some relief there, probably inflation expectations and even long-term bond yields come off the highs that we've seen here.
We're seeing some of that this morning, at least so far. Kathy, thank you. Kathy Bostjantic there of Nationwide on this bond market sell-off in the last few weeks. This morning, yields lower by 2 basis points to the long end, 5.16, 5.17 on 30s. Let's give an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Samsung and Google are unveiling new smart glasses with a launch planned later this year. Built with Warby Parker and Gentle Monster, the devices let users interact with Gemini by voice. Features include directions, calls, translations, and camera-based queries. Goldman Sachs taking the lead role in the SpaceX IPO. Sources telling us here at Bloomberg Morgan Stanley is also listed as a lead bank. Elon Musk's company is looking to raise as much as $75 billion and is seeking a valuation of more than $2 trillion. The Northeast heat wave continuing for a third straight day. Heat alerts in places in Boston, New York City and Philadelphia. Over a dozen daily record highs were set yesterday. A cold front, though, coming in by tomorrow will take temperatures down by 30 to 40 degrees. And that is your Bloomberg Brief. John.
Funny, thank you for the update. Not that last one, but thank you in general terms. Up next on the programme, setting you up for the day ahead. Plus, we'll touch base with Ben Reisis of Melius Research with NVIDIA earnings on deck. We'll also speak to Ed Ludlow, who spoke to Jensen recently, what he's expecting from these earnings after the closing bell.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Jensen typically manages expectations extremely well, right? So I do think there is room for upside here. What you need to do is to continue to show things being steady in nature. You need to potentially surprise maybe in certain aspects. I don't necessarily think you need to significantly beat street expectations.
That was Angelo Zeno of CFRA going into that big earnings report after the closing bell. NVIDIA just around the corner as we count you down to that opening bell. That's not the only thing we're watching today. Here's your trading diary at 11 a.m. Eastern Time. The President speaking at the US Coast Guard Academy. Look out for that. Another commencement address. I imagine AI might not get a mention in this one.
Well, I'm hoping that his team tells him, the second you AI, be careful how you talk about it, because Mr. President, you might get booed.
Yeah, 2 p.m., Federal Reserve minutes. Look out for that. After the market close, we'll get those earnings from NVIDIA. Looking ahead to tomorrow, earnings from Walmart, another round of jobless claims, and PMI data to look forward to as well. On Friday, Kevin Walsh swearing in as Fed chair, the one to watch, heading into the weekend. Equity futures right now, the S&P 500 firmer by 0.4%, a bounce on the Nasdaq as well. On the Nasdaq 100, higher by 0.75% as we await NVIDIA earnings for a read on the outlook for AI. Bloomberg's Ed Ludlow joins us for more. Ed, welcome to the program, buddy. You caught up with Jensen recently. What was the read-through on the business at the moment?
Yeah, the same that it has been for some time, which is that demand is vastly outpacing the industry's ability to supply, not just NVIDIA's. And there is a real beat and raise expectation with an NVIDIA print. Like, no one's going to really focus on the quarter gone. They will want some guidance on the future. So top line growth of 80%, EPS growth 85%, you know, is impressive if they're able to deliver in that environment, you know, some upside to that. But the thing that still needs to be reconciled for so many people is China. It needs to be reconciled, John, because over a period of January through present day, the commentary from Jensen Huang and NVIDIA and the commentary from the president and the outcome of that trip to China has been inconsistent.
Does it really matter, though, Ed? Given that we know it doesn't make up any kind of big proportion of the underlying earnings from that company, does it matter?
Such a great question. It's psychological for lots of people, right? The base case assumption right now is there is zero revenues coming from China. And, you know, NVIDIA has talked about the idea that they see it as a $50 billion per year opportunity. You know, there was a time where China, not just for consumer electronics, smartphone, PC, data center as well, it was the absolutely most critical end market. The capital expenditure story of the hyperscalers in the United States and in the Western world has really changed that beyond the restriction of being able to do business with China. But still people want to know. And, you know, the thing is that Jensen Huang positions himself in the center of that story. And what needs to be reconciled is in March, he said they were ramping up supply chain so they could sell to China. And of course, you saw what the president said on Air Force One last Friday, I believe. It's inconsistent. So I'm just saying on the sell side, at least, their checklist has that in their questions.
It's a point well made. I'd appreciate it. Looking forward to the program. Ed Ludlow coming up a little bit later on Bloomberg Technology alongside Caroline Hyde. NVIDIA this morning, firmer by close to 2%. Ben Rices of Medius Research with a buy rating on NVIDIA and a 380 price target, writing, we expect a strong report with a meaningful beat and a raise. Ben joins us now for more. Ben, good morning. It's good to see you.
Good morning. Great to be here.
Thank you for being here. You've been dreaming of Jensen, according to your note, apparently. So tell us more. What was in the dream?
Well, I probably had PTSD from the stock underperforming for most of the year, at least the SMH, and, you know, by tens of points underperformance of the SMH this year. And I feel like there's a catch-up ready to be done here with NVIDIA because their earnings are accelerating. And I do feel that the stock is priced as if they're going to have a meaningful deceleration, and I don't see it as meaningful as the stock is discounting. I think that it's trading probably under 20 times the real earnings power here by quite a bit. So I think that they need to reassure investors they can grow at least in line, if not better than CapEx at the hyperscalers, and I think they can do that.
Why has it lagged? Why have names like Intel and AMD had these explosive moves, and NVIDIA, which has done well off the lows from March, I think up by something like 30%, but just nothing near the other parts of the market? What's been going on?
Well, when you're this big at NVIDIA, 5 trillion plus, it's really hard to move money around. I kind of make a joke. You have to, if it was Europe, you'd have to put, you know, France on top of England, and it takes a little while. And when you're smaller, under $1 trillion, let's say, it's a lot easier to move capital around. And there's also been these acute shortages. So, you know, it's sort of like whack-a-mole in AI to the upside, where there's a certain shortage and then you go after that, and then another shortage, you go after that, and you go after that, and it's violent. So NVIDIA becomes a source of cash to invest in these acute shortages like semis, like memory, or pick your other optical, et cetera. So actually what happens is NVIDIA becomes a source of cash and then it underperforms. And then a night like tonight might be a catalyst for people to go, hey, wait a second, these guys actually have a pretty good business model, kind of know what they're doing, and they're going to grow pretty well. So maybe we should put a little more money back into the main horse that's driving this whole train. But I think NVIDIA is just fine, and I think it's natural to decelerate, but they still have much higher growth prospects than the stock is discounting, and eventually that works itself out.
Ed, had touched on it when it comes to the Chinese market. In your dream, does Beijing open up for Jensen?
No, it's a bonus. I think that the China thing is actually not a big deal tonight. I think nobody's expecting him to say he's going to sell in China. It would have been nice. It would have been nice. But the street doesn't want to put a great multiple on China either, because it's in, it's out. You don't know who the next president's going to be. You don't know one thing to the next with China. So I actually don't think it's that big a deal. I don't think anybody's expecting it. And it might come up tonight, but it's not something that we're going to put back in our model. It would be nice to have it, though. But I think the more important thing is the CapEx trend with the major hyperscalers and being able to at least grow in line with that. This year, CapEx among the major clouds is going to double. No one thought that going in. And if it can stay at like a 40% CAGR, and these guys grow in line with that, these guys are going to do really well.
You say it's nice to have. Down the road, will China be need to have, must have?
It's potentially. I mean, it would be nice if the American technology stack ruled over there. I don't know how to say it nicer, but you know, I just take it.
You sound like David Saxon when he was at the White House.
You know, David says a lot of things that make sense, in my opinion. But it would be better if it was an American technology stack, I think, for the world. However, you know, I do sympathize with some of the concerns that folks have. But I think that it's a race, and you have to understand that we have these hyperscalers here that have tons of wallet, and they have more wallet actually than the Chinese for now. And that's a plenty to really go expand this market. And labor's the TAM. Labor's trillions, and I think that there's a lot to go around. And China will have their share, and we'll have ours. And I think we're still well ahead. But
China has an entire government that subsidizes them and pushes them.
Yeah.
And we don't really have.
Yeah, right now, actually, we put out a piece today. The biggest risk, in our opinion, is backlash here. You know, I don't want to get into the political merits, but in terms of a stock where you have to, we really, in China, the great thing that they have going for them on their AI business is the government's going to just go unabated. And culturally, from what I read and see and talking to people, that there's a little bit more optimism about AI. Hey, let's embrace it and optimism. And then with the data centers, there's sometimes misinformation. There's the ability to recycle water. There's an ability to put power production behind the meter using natural gas or some other fuel to actually make it so consumers in the local area don't feel a pinch and actually can even get subsidized. So we need to do a better job marketing these messages and change the narrative and not let it be a political touch point that we blame because we need an excuse.
It's become one, that's for sure. Ben, it's good to see you. Thank you, buddy.
Great to see you.
Thank you. Ben Wright is there of Medius Research. Coming up tomorrow, Peter Chia of Academy Securities, the BNY CFO, Dermot McDonough, and David Levitz of JP Morgan Asset Management. From New York City this morning, good morning. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Futures higher as yields in oil fall. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA earnings could determine whether the chip rally still has room to run or could reignite fears of a bubble.
And Goldman may take the leading role of the biggest IPO ever. SpaceX is set to file publicly as soon as today.
Plus, Target posted its biggest sales gain in 4 years, but shares fall as the retailer flags cost challenges.
A lot of retail earnings. The big one's going to be NVIDIA, though. Typically, though, when NVIDIA reports, it hasn't really in recent years and quarters acted as a catalyst for the entirety of the market because of the run-up it's had. It is trading up higher in the pre-market, 1.5%. It's aiming to keep the AI rally going, which has faltered in recent days. It has a high bar to meet with sales growth expectations above 80% year over year, Matt.
But it has moved. The stock has moved significantly, even though it's such a behemoth, right?
Yes.
$5.3 trillion company right now.
The swings it has in just one day are pretty remarkable.
Yeah, it'll be amazing to watch. That's after the bell today. Ahead of those NVIDIA results, we're looking at chip stocks that are higher, and Micron is gaining, Advanced Micro Devices is gaining, Qualcomm is gaining, on pace to break a 3-day losing streak, although they've had an incredible year, right? Micron has basically almost doubled year to date. I was looking at SanDisk earlier. It's up like 480% year to date. So a lot of these chip makers are just off to the races.
And its 12-month forward PE ratio is 7.3.
For Micron.
For Micron,
yeah.
After the most recent sell-off. Let's discuss earnings. Bloomberg Tech co-host Ed Ludlow is joining us. Ed, it's the big one. It's NVIDIA after the bell. I was just saying the bar is really high. So where exactly is that bar?
Yeah, the bar's really high, but with the expectation that, it doesn't really matter what happens in the quarter gone. They want Jensen Huang to give some guidance, right? So top line growth of 80%, EPS growth 85% in an environment where the demand, as Jensen Huang told us on Monday, right, is vastly outpacing supply. That's the status quo. There are some overhangs on the stock, right? Most recently, China. Like what you guys were saying is so spot on. Through yesterday's close, in aggregate on the SOX, we were flirting with correction territory just from Friday, Monday, Tuesday.
Wow.
Because there wasn't really this net outcome from the president and his trip to China and Jensen going with him. We didn't have any certainty on that. But yeah, it's very elevated for sure.
The thing is, analysts expect them to beat and raise, right?
Always, yeah.
Which begs the question, why don't analysts just raise their estimates? But also, China could be not for the reporting quarter, but for the outlook, a really important piece, or is China actually a small piece for the outlook, Ed?
Yeah, you know, it's more psychological than anything else. Like, the base case assumption right now is zero revenues from China, and NVIDIA has talked regularly about it being a $50 billion opportunity. But that's what I mean. That's the part that needs to be reconciled. Because at NVIDIA's own conference in March, Jensen Huang was on stage talking about the idea that because they had those licenses from the US and they saw an indication they would get orders from China, they ramped up the supply chain. But clearly it's up to China, and China right now's position, based on what the president said and based on what Jensen told me on Monday, is they want to protect their own domestic players. So it doesn't move the needle really, you know, in the modeling for the sell side. It's just this idea that Jensen Huang and NVIDIA is right at the heart of the broader China story.
So much for the $50 billion TAM.
Right.
Everyone was so pumped, Ed. I've been saying the entire time, for over a year, okay, so they can sell into China, but the Chinese government keeps telling companies not to buy these things, and everybody was poo-pooing, you know, my negativity here. It turns out that parade has been rained on.
The thing is, there was a time where China was a critically important data center market, right, prior to the AI revolution. But there is an opportunity there, right? Tencent, Alibaba, Baidu are massive companies that can be seen as being like at hyperscale, you know, with a similar data center footprint to those here in the United States. The opportunity is there. And they, you know, as Jensen Huang would put it more academically, 50% of the world's AI research is being done out of China or by Chinese engineers and scientists. So that kind of is the why of why they want to be in it.
All right, Ed, thanks so much for joining us. Bloomberg Tech co-host Ed Ludlow. We're going to talk about SpaceX a little bit later, expecting more details on the IPO, or we'll talk about it right now, actually. Goldman Sachs said to be leading SpaceX's mega IPO, with the company expected to file publicly today. Bloomberg senior reporter Bailey Lipschultz has been covering this story for us. He joins us now. And Bailey, it's interesting, you know, because they have the Starship launch. It was planned for yesterday, then today. Now it's been moved to tomorrow, but it's so critically important, and the fact that they're going to have this public filing at the same time is pretty courageous.
It's pretty courageous, Matt, but I have been talking to bankers and investors over the last few days about this, and I've made that point to them, and their counterpoint is, well, at some point they're going to launch Starship. It doesn't matter if it's right before or right after the filing. It doesn't change the content of that S1 filing. And broadly speaking, if you were someone who can write, you know, $5 to $10 billion check, and we're down in Starbase, Texas a few weeks ago, meeting with the management team, sitting in on the presentation with Elon Musk, it doesn't really matter as much to some of them as it relates to the exact timing and figuring this out when you look at just the kind of gargantuan lead that SpaceX has against any other peers in getting massive rockets into space.
Bailey, what might we learn with this filing that we don't already know yet with SpaceX and their plans to go public?
The biggest thing, Danny, when I talk to investors is, how is the lockup going to be structured? Will it be something like what we saw with Cerebras, where they're letting out a few million shares every day, depending on how the stock performs in the aftermarket? That's critically important. And if there's any color or update on allocation to retail, whether they name out the likes of a Robinhood or SoFi, if there's any type of detail on how they could, you know, put shares into the accounts kind of more primarily for people who own Tesla stock or own the Tesla cars. There's a lot of things, just kind of those nuances are top of mind from investors' perspective, just given how much has already been kind of reported in the media from us and some of our competitors.
Well, we'll look for that filing as soon as today. Bailey, thank you so much. Bloomberg senior reporter Bailey Lipschultz. So pleased to say that joining us now is HSBC Chief Multi-Asset Strategist Max Kettner. Max, great to see you in the flesh. And look, you've been really forward in saying we are max bullish, and higher yields don't impact us because, well, one reason has been earnings are so strong. Then how important is NVIDIA today to keep the good vibes earnings continuing on?
Yeah, I think it's very, very important. Like NVIDIA today, if that were to disappoint, I think that probably would put a lot of the AI and the CapEx story in question. But let's face it, when we look at the tech and AI story, and particularly now this earnings season, you look at within the tech sector, within the S&P, your earnings beat rate has been 100%. Which is
that right,
insane.
100%
it's
in
like
all of
100%. Like, we've got every single company that beat earnings expectations. So it's kind of tough to be like sitting there like, oh, I think Nvidia is going to be the mother of all downside surprises.
Max,
like,
do you sometimes
really?
question the work of the analysts
Never.
who make up these estimates?
I would never question myself.
I mean, if you are, a longtime analyst and you've seen a company beat whatever number you put out by 20% every single quarter, at some point, don't you say, hang on a second, let me add 20% to my estimate?
Yeah, but look, I think it also depends on the earnings guidance. I think, right, corporates are probably pretty good.
But you know they're guiding down.
That is true. Yeah,
right?
That is true. But, I always say, look, don't hate the player, right? Don't hate the game. Like, that's what we deal
Max,
with.
if somebody beats you every single time with a drop shot, do you not go to net?
No, of course not. You stay all the way behind.
You stay on the baseline, right?
That's what you do. You
That's
stay
the way to
all
keep
the way
your
behind
job.
because, hey, this is, at the end of the day, this is how you work out.
Keep management of the companies happy, keep them talking to you with not, with estimates that set the bar low. Putting that aside, the other thing we're talking about is this massive IPO filing we're likely to get. So you get SpaceX, which is going to be the biggest IPO ever. Well, we're also likely to get OpenAI and Anthropic this year. How is the market going to digest these mega IPOs? Is it a reason to be concerned? Is maybe we sell off other things and passive portfolios to make room for these big companies?
So I think there is two ways to look at it, right? The bearish side is the supply angle that you've just touched on, so that actually we need to free up some space, like we need to sell some Tesla to buy SpaceX, something like that. I think the more positive side is if one of those really does come in at 1 trillion or above 1 trillion, I mean, we're going to have a heck of an IPO. Like, imagine if you guys at Bloomberg are publishing those headlines and like, hey, look at this, 1 trillion IPO, and actually the stock is up on the first day. Happy days. I mean, that is a heck of a bullish headline if you think about it. So, it depends what narrative you want to spin, I think. I think the supply, the supply story is a little bit overblown given how much money there still is on the sidelines. Remember 6 months ago, one of the dominating narratives around AI concerns first was, is AI, are we overspending on CapEx? We now realized, oh God, we're not, and we're actually short of chips. The second, probably more pressing narrative was funding concerns. Those guys, they're running out of net cash. They need to issue debt now. And where are going to get the money from? And particularly companies like Oracle, right? Oracle was all in the weeds of all these concerns. And then you had Oracle come out in February and say, look, we're going to raise $25 billion in debt, and you have $130 billion of orders. That just tells you how much money there is. When the number one sort of poster child, oh my God, this is the one where we're really concerned about, and they've got an order book of $130 billion. Why are we concerned about this? I think the supply story around, oh yeah, but we need to sell all this other stuff to just buy those IPOs, I think that's a little bit overblown.
By the way, rates don't matter, right? 4.6, 4.7% on the 10-year, 5 and change on the 30. Doesn't matter, right?
No, I think, look, from here onwards, if I had a blank sheet of paper and you said, right, I'm going to get, Matt Miller gives me $100 million of his immense wealth today to invest, I'd say, you know what? But actually, if you look at the ultimate terminal rate expectations as of today, which is sort of short end, right, front end expectations in 3 years' time. If you look at that, that's close to 4%. Effective Fed funds is at 363. So effectively, you're pricing 1.5 hikes 3 years out already. So what you would need to say, as of today, I think that's going to be 2.5, 3, 4 hikes. That's a bit much, right? 1.5 hikes kind of seems like, yeah, that could happen. That's a bit of a risk premium baked in there. But to go even higher, to be even more concerned from as we stand today, you're going to have to be a heck of a lot more hawkish from where we stand today. That really doesn't stack up.
It's tough. Okay, Max, we're going to keep you with us. Max Kettner from HSBC, staying through the break. We are looking at markets that are, futures that are higher right now as rates come down a little. You can see the 10-year down 2 basis points and Brent crude off about $3. Let's get a look at some of the single stock stories we're following for you. Homebuilder Toll Brothers raising its full-year guidance as orders hit their highest in 2 years, and Toll is up 4% in the pre-market.
Then there was Cava, the fast casual Mediterranean slop bowl, raising its annual sales outlook as it saw a rebound in demand despite consumers getting cautious around budgets. By the way, I say that with love. I love
Cava.
bowl.
Wow, 11%. VF Corp says its Vans direct-to-consumer business, I'm talking about the shoes made
skater
famous by
shoes.
Jeff Spicoli, has returned to growth for the first time in 4 years. Max is actually wearing some under the desk right now.
The checkered bands.
I guarantee he owns a pair. Coming up, Target falls as executives warn about a tough second quarter. We got Romaine Bostic for you next. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Let's get now to high interest. Look at what's making headlines around the world. Iran warns it would retaliate beyond the Middle East if the U.S. or Israel restart attacks on the Islamic Republic. The warning follows renewed threats from President Trump, who said the U.S. may have to give them another big hit if Tehran rejects American peace terms. When asked how long he would wait, he said 2 or 3 days, maybe Friday, Saturday, Sunday, something maybe early next week. So we'll watch for that. In the latest congressional primary results, President Trump's hand-picked candidate for Northern Kentucky, Ed Gallrein, defeats longtime Republican House member Thomas Massie. It's the clearest sign yet of Trump's grip over solid Republican states, as well as the massive influence of pro-Israel money in middle American races. There were tens of millions of dollars of Israeli-linked cash that fueled Gallrein's defeat and fought against Thomas Massie. And in terms of Standard Chartered, the CEO, Bill Withers, tries to reassure employees after backlash over his remarks suggesting AI could replace lower-value human capital. In a memo to staff, Winters wrote, "I know this may be unsettling when reduced to simple headlines or a quote out of context." But of course, we gave you the full quote in context yesterday. We played the sound of it. You know?
The quote was that they're trying to get rid of lower value human capital and replace it with like actual capital. But like that was the quote, so I don't know how you take that out of context.
Exactly.
Anyway.
He's welcome to come on the program and push back.
He often does join Bloomberg, and I hope he does soon. to the consumer story, which, let's be honest, is kind of related. Target, TJX, and Lowe's all reporting earnings this morning. Target had a good quarter. It raised its outlook, it had strong sales, but shares turned negative quickly once the earnings call began. Joining us now is Romain Bostic, co-host of The Close. I mean, Romain, it was a pretty quick turnaround. Is this just because their outlook is not as sunny?
Yeah, I mean, this is really the tale of two stories. What happened in the most recent quarter, the last 3 months, and what's actually happening in the here and now. In the most recent quarters, you're talking about the best comp sales growth in about 5 quarters, and quite frankly, one of the best performances they've had in about 4 years, 6%. A new CEO, he focused on baby toys, baby products, toys, as well as health products, and that boosted sales. Then the conference call started. James Lee, the CFO, started talking about gas prices, talking about the resiliency of the consumer, talking about tough comparisons for their fiscal second quarter, which is the quarter that ends in July. And you saw the shares go from up 4 or 5% in the pre-market to now down 4 or 5% in the pre-market. And that's going to be the story for a lot of retailers here. The first quarter, the first few months of this year probably did all right. What's up ahead for the second half? That's a big question mark.
Yeah, and TJ Maxx had a similar message that fuel costs are going to impact the outlook. Obviously, TJ Maxx, the stock has been on a tear over the last 5 years. It's up 140% total return, but it's starting to lag a little bit.
Yeah, TJ Maxx is an interesting story. I mean, they basically comp sales came in double what the street was looking for. We're talking about 6% growth. They actually tend to benefit, though, when you have economic downturns, because they have sort of the low-income consumer that goes there for the discounts. The high-end consumer trades down to TJX, and they actually tend to improve margins historically during economic downturns, because the way they source their goods, which is basically discounted merchandise from other brands that are struggling, they actually are able to pick up that merchandise at a better discount. So potentially they could actually see a big upside if we do get to an economic downturn.
By the way, Romain, we're very much so looking forward to the close day. We are every day, but you have NVIDIA earnings.
Oh,
it's a big one.
It's going to be a big one here. No retail story there, not yet, unless Matt, you're out buying GPUs for
No, well, I mean, the retail story, I think, is, you know, Max Kettner and this market investing in the demise of the consumer, right? The demise of the consumer. Low-value human capital is going to be the loser after AI, you know, takes over our jobs.
Well, you heard it from Bill Withers, and have you seen all of the commencement speeches, all trying to sort of let them know? You know, I've been to 2 commencement speeches over the last couple weeks. It's kind of interesting, the reaction by the audience relative to what the speakers are talking about with regards to the future.
I also think that's interesting, because my theory is that all of the young adults graduating from college right now have had 2 years to do nothing but like play around with AI. And they're all going to be much better at this than all of us ever were. Anyway, I'll end that rant. Romain, really looking forward to The Close today. That's Romain Bostic, co-host of The Close. Catch him from 3 p.m. New York time. It's one you have to watch today, as you do every day, but they'll walk you through NVIDIA's earnings. Still at the desk is HSBC Chief Multi-Asset Strategist, Max Kettner. Max, it's something I was talking with Peter Orszag yesterday of Lazard, who basically had before said we're at this roadrunner moment where higher energy prices haven't yet impacted the global economy. And yesterday he said it's happening. Higher prices are now finally starting to impact us. You can kind of feel it in what Romain was talking about with Target earnings. Are we finally starting to see the impact of inflation more broadly?
I think on growth, we've got to be way more nuanced. I think it depends whether you are an open, a smaller economy. If you look at the likes of ASEAN, if you look at those smaller, open Asian economies, I think they're really struggling, right? And we've seen that early on, that they've implemented those policies, you know, fuel controls and so on. I think in Europe, we are starting to see it, definitely, right? We are starting to see some of the business surveys down, right? Business commentary also being a lot more, you know, a lot more concerned. I think consumer confidence, which is more correlated in Europe compared to actual spending, there we are seeing some influence already, right? And we are seeing that reflected also in consensus estimates for growth, right? For top-down growth, absolutely. I think in the US, it's much, much less the case, because let's remember, what we're facing in the US is both for corporates and for consumers, is an incredibly K-shaped economy that at the end of the day, for the numbers that we care about, I care about my Bloomberg terminal, give me that one retail sales number, give me that one PCE number, quarterly PCE number. What's that driven by? That's driven by the upper 10, 20%. It's not driven by the lower 20, 30% in terms of incomes. And they're doing absolutely fine because they're not really that exposed to what is happening with wages, what is happening with energy prices. They're exposed to the wealth effect. Equity's up now, that's helped, right? And look at the tax refunds. Tax refunds are running, you guys know that, they're running almost 20% ahead of last year. Most of that money goes to the upper 50%. So actually in the US, we have a lot of tailwinds for that one, what's really driving that one aggregate consumption number. And the other thing that I would add is, let's remember that when you look at things like weekly retail sales, like the Chicago Fed one, or the like-for-like retail sales, we look at year over year. This time last year, we had a sugar rush of activity because of front-loaded activity because of tariffs. Remember that, right? Last year we had, oh God, everyone's trying to get ahead of tariffs. June and July, we had surprise indices coming off. We had a bit of a lull, right? Because this front-loaded activity was coming off a bit. I think there is a risk for the US, given those lower comps in the next 2-3 months, that actually growth will be looking even better because you've got good activity, but lower base effects in the next 2-3 months.
But Max, what about, so I'm looking at the S&P and the top companies by weighting. Obviously, NVIDIA doesn't, those sales are going to be great no matter what oil or jet fuel shortages there are in Asia and Europe. But Apple, Microsoft, Amazon, Google, I mean, these companies get revenue from overseas, right? It's even worse if you look at the Dow Jones Industrial Average. You've got Caterpillar there, you've got McDonald's, you've got Visa, American Express. These are companies that get revenue from overseas. So if Asia and Europe have a problem, does it eventually come back to US indexes?
I think to a certain degree, maybe, yeah. Right? Like for those, particularly for Europe, I think if there is some issues, particularly on the chip supply chain with Asia, right, coming, and particularly for something like Samsung with the strikes, yeah, that is, I think, a bit of an issue. Is that enough to make you bearish? I'd be doubting that, to be honest, because at the end of the day, like when you look at the S&P, I think there is going to be quite a few names that are struggling. But let's remember, if you look, for example, at the last the bottom half of the S&P, the last 250 names, that is 8% of market cap. Yeah. Right? So you've got 50% of the names accounting for less than a tenth of the market cap. So yeah, those companies, they're probably going to tell us, yeah, we're a bit struggling. But does it matter? Does that drive the indices? That's the K-shape, right? It's not only consumption that is K-shaped, it's also corporates that are K-shaped. And some of that stuff, right, I would say the more interesting and the more pressing issue probably is when people say, oh, there's no differentiation priced in. There is. You are seeing those guys, right? You are seeing those tech companies that are doing the CapEx. They are underperforming compared to your chips, your memory names. So it's not like, oh yeah, everything that's tech and everything that's Max 7 just goes up every day 3% and be happy. No, like we are seeing those names that are doing the CapEx, that are spending the money, they are underperforming quite dramatically compared to the ones that are receiving the money.
Does that mean you should also, considering it's this pillar really that's supporting the market, that you should either just not be buying, not touching, or even outright shorting consumer things, considering, I don't know, there's stories of earnings Romain was just talking about, issues with the labor market, maybe Intuit, Reuters reporting this morning that they're cutting 17% of their jobs to streamline ops. It feels like something has turned in this labor market. There was a story that for some jobs at Deloitte and Zoom, they're cutting maternity and paternity benefits, which feels really crazy.
Only for the poorest workers, though. Right? Only for the workers who need it most.
Yeah, correct. I mean, only a minute here, Max, but it feels like something is turning, and maybe that's a reason to be bearish consumer-related names.
I mean, at the moment, because we do have that geopolitical uncertainty, yeah, maybe you want to stay out of those names, but also let's remember that the earnings season, we've got an almost 85% beat rate. Like this earnings season now, we've inflected higher, right? We have an inflection higher from a high base. This is the sort of earnings season that you normally see in 2009 or in 2020, right, 2021, after a recession from a low base. We've had an inflection higher from a high base. The one thing that's been lagging is price action. So I would say actually the next step is lean into a broad-based recovery, lean into those cyclical names. Look at transport, look at home builders, look at XRT at retail. All of that stuff has been actually lagging so far. Okay. I think that's the next trade.
Max, thank you so much for joining us. Such a pleasure to have you. HSBC's Max Kettner. world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are higher here as we await NVIDIA earnings. That's after the bell, right? But we do see yields coming down a little bit, oil prices coming down a little bit, and we dropped in the cash trade yesterday. So a bit of a bounce from there on the S&P 2/10, on the NASDAQ 0.5%. An IPO at the New York Stock Exchange. Lincoln International, mid-level investment bank, raising almost $500 million. I think $420 or so million dollars in an IPO. So a lot of pats on the back there. Down at the NASDAQ, you've got Forbes ringing the bell, and there's no signage to explain why. And this guy is wearing a fedora, but we'll forgive him for that because they put out a list of the 50 top AI companies, and I'm excited to read it. Yeah. I have to say, I care. So maybe I'll buy. Maybe it outweighs the fedora, but only a little bit. I might actually buy a copy of the paper magazine.
Whoa, when's the last time you bought a magazine? Like, I can't even remember. Really?
I buy them a lot, yeah.
I mean, I pick up like a Business Week here in the office, but I'm not buying them.
The Economist, Road and Track, Car and Driver.
Can you get them all online? Why do you need the physical one?
Because I like to hold it. And if I'm on a plane, there's that point after takeoff and before landing when you can't use your phone, so.
Oh, they all got internet now. They all have Wi-Fi. Anyway, I'm looking at NVIDIA this morning. It's only up 0.5%. It was up more in the pre-market. It's going to have its earnings, of course, after the bell today. Can it keep the AI rally going? It has a high bar to meet. Sales growth expectations are above 80% year over year, and you tend to get some big swings priced into their earnings, post-day earnings session, Matt.
I'm looking at a headline here. James Murdoch buys New York Magazine, so he apparently wants that paper as well. Vox Media Podcast Network and Vox. So Murdoch making some moves. Target also posts its biggest sales gain in 4 years, but the shares, you can see, down 5.5%. As the retailer, Romain Bostic was just explaining to us, flags cost challenges in the current quarter. So it's not only oil that's become more expensive. Obviously, the price of gas. I filled up for $6.36 a gallon the other day. Put $110 worth of gas in my Challenger. Plastics, fertilizer, it's going to come through in food prices, so it's starting to hit, according to Target and TJ Maxx, the bottom line of it. Joining us at the desk is Citi U.S. equity strategist Scott Cronert. And Scott, I guess those little inflation concerns, you know, little yield concerns, not enough really to put a stop to this incredible rally. We closed still at 73.53 yesterday.
Yeah, I mean, look, we're bouncing
off of a pretty good move, I think, over the past couple of months. But look, let's be very clear about what we're looking at with the S&P 500. It's a bifurcated market. You have to make two market calls to essentially get the right perspective on this. You got half of the index that's trading off of the AI theme. I think that's pretty well identified at this point. Earnings there have been very strong.
Or like 10 companies?
Well, either way, okay, the market caps, and the weights come down.
The index.
Well, as a very direct, it's probably even broader than that, okay, I guess would be the point. You get into some sectors, such as industrials, and trying to weave through which one's AI direct and which one's just sort of second or third derivative. We can debate that. But the point here is that you've got that half of the market that's beating to a pretty clear playbook. The beat and raise, the revisions, the positive trajectories are all very much in place. The other half of the index is actually trading much like you would expect if we told you that you're going to have an Iran conflict with higher oil prices, the inflation read-throughs, and now the interest rate bump. It's all trading much more in line with how we saw the second half of 22 unfold. Okay, so essentially the playbook from here is, okay, how do you think of these two components of the market from here? Our view is pretty straightforward. We think on the heels of the Q1 run that's driven this tech component, it probably needs to digest those gains, but it's premature to come back and call a coast as clear for the other half of the market. So that kind of keeps us a little bit close to the best short term, but it's with an underlying constructive view towards the balance of the year.
Is there any mechanism whatsoever that the other half of the market and its struggles impact your overall outlook for what equities do this year? Or is big tech and AI and the spending there just so dominant that it can continue to mask it?
So this is really interesting because we talk about this a lot internally with the team. It's like, well, okay, what's one of the antidotes to higher inflation concerns and higher interest rate concerns on valuation? Well, it's earnings growth, right? So the stronger the earnings growth, you offset what you think would be the valuation headwind of higher rates. So we've had that, right? But you get to a point where the lift gets harder and harder. So a 4.5% 10-year going to 460. If we get to 480 en route to 5, it's probably a little bit different storyline. You're going to have to acknowledge, particularly in the heels of the Q1 earnings strength, that part of the market needs to digest.
By the way, could that happen after NVIDIA earnings? Because we kind of have this lull in earnings post-NVIDIA of like big things that could catalyze this market higher.
I mean, if I were to script this out perfectly, I think we back and fill into the end of the quarter, right? So we get the NVIDIA earnings. I expect that we're going to see a very solid result. I think these companies are very astute, and at the end of each quarter, they're leaving something in the tank for next quarter. So I think we've got that part pretty well identified. As far as that goes, though, it's going to be, in my mind, less and less about the actual amount of the upside and more about the persistence and visibility of the forward trajectories, right? So the way we're thinking about the NASDAQ right now is that, and the AI build-out, is that you're probably pricing in a good chunk of what earnings expectations should be for 26 and 27. Not sure we're pricing in 28, 29. So the persistence of the CapEx tailwind and the spending around this ultimately is what becomes mission critical. We think we keep coming back to that. We want these periods of pullbacks to buy into that.
At what point do higher prices and higher rates actually hit this market, though? I mean, at some point, after putting in $100 to the tank of my Challenger and spending God knows how many hundreds of dollars at Costco for groceries, I'm not going to be able to pay my $20 a month for OpenAI's ChatGPT, right?
Right. So those all become issues that we're going to have to contend with, and that's where you fall back on, okay, what's the duration of the conflict? At what point do you begin to unleash some of the supply that's waiting to come on the other side of the Iran conflict? And that's the big imponderable. That's what we're all contending with right now. It's really interesting, though, on the consumer component. We were looking at this. We wrote about it over the weekend. You look at consumer discretionary, and the earnings revisions have been persistently negative for over a year now. This isn't a new phenomenon. We've been navigating an increasingly complex situation around the consumer. Yes, we got wealth effect helping the higher end, and we know that the lower end is being encumbered by any number of forces, higher oil prices, inflation, and so forth. So at some point, you do need to get a line of sight towards end of the Iran conflict and oil prices. And so, heck, I'm watching the oil futures curve more than I have in quite some time. And what we really want to see is conviction that you're seeing $100+ crude on this path down to sort of a $70, plus or minus level. We're not there yet. We're not there yet. So that becomes the key point here. And that's why, honestly, I think a lot of my peers have been raising targets for the S&P. I'm not inclined to do that just yet.
It does feel like we keep moving the goalposts, and, not you, Scott, but the analyst community as a whole saying, okay, the worst case scenario is that the Strait of Hormuz gets shut. It gets shut. The worst case scenario is that it lasts 3 months. I mean, now here we are in May, and now it's this language of, well, maybe we can handle it. So what is the timeline in which it becomes a concern?
Yeah, so it's really a good conversation. For the past 2 months, we've been using this frog in the boiling pot of water analogy, where nobody really has the conviction or the visibility to really project it. So you keep waiting. You keep waiting. The longer you wait, the more the pot boils, and essentially you really have an issue. So we know that that's out there, but we are starting to handicap it. And so what I would just say in that, I think we look at the U.S. as best house in the global neighborhood around oil dependence or independence, if you will. And we look at big tech as arm's length from this issue. So we still think that within the U.S. stock market, we've got some areas that kind of keep us arm's length from the issue. At some point, though, it does become enough of an issue that we have to recognize it. But here's the trick from my seat. Let's say it extends another 3 months, and then you get the relief from oil prices. Well, what's happening is that at that point, you're going to want to buy and own that part of the market that's been most negatively impacted. And then that begins to set up for a springboard effect down the broadening path. So all of this is timing, right? So that's where we're kind of, fairly smug. We got a 7,700 year-end target. We're not changing that right now. I think we probably get a little bit of a digestion phase here. But as we get further into the year, you begin to get a line of sight to where higher for longer oil prices is an issue that builds up to a point where then when it does release or relief, then you're going to get a snap back the other way. So it still kind of sets us up, in our view, for pretty decent, risk-on circumstances the year unfolds.
Okay, Scott, you're going to stick with us. Scott Kroner of Citi. First, though, let's get a check on these equity markets. About 10 minutes into your cash equity trading day, and we are higher, snapping 3 consecutive days of losses where we dropped about 2%. We're only up 0.2%. Breath is somewhat even, but if you are buying into the AI narrative, a pretty good day for you. We have a lot of the chip makers rebounding. Intel, AMD, Micron at the top of the pile in terms of points that they are adding. NVIDIA kind of creeping into the top 10 before their earnings after the bell. So again, a lot of chip makers. TJX, they reported earnings. On the downside, you do have some companies that reported earnings. I was looking for Target. There it is. Target down 3.4%. So you also have a lot of other consumer names having a tough day. Costco, Lowe's, Intuit, according to Reuters, they're cutting 17% of their staff and refocusing on AI. Usually that's been good for companies when they announce job cuts, but for Intuit, that's not translating into any sort of gain for them. If you look into the sectors, utilities is really high, but it's all of the power companies. So you could make the argument that's also an AI rebounding. Companies like Dominion Energy, all of these things that are powering data centers. Infotech, I pointed out, NVIDIA's up along with the other AI chip names. So most of the sectors are up. The only losers are staples, financials, and materials. Again, some of those consumer-related names. Costco is down, for example, on fears of higher costs and maybe weakness into the future, as Target was pointing out, Matt.
All right, excellent roundup there. When we come back, we're going to get an excellent analyst. Mandeep Singh joins the conversation around the impact of NVIDIA's earnings. That earnings report coming out, obviously, after the bell. We're going to focus in on it and keep Scott Kroner from Citi here with us as well. This is Bloomberg Open Interest.
maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
"15 minutes into your trading day, let's get you some top calls. What the sell side is saying this morning. First up, we have one on Etsy, upgraded to a buy. From neutral at already following earnings, analysts see opportunity in its turnaround efforts, similar to what eBay did last year. And as far as we know, GameStop is not trying to buy them too. Etsy shares up only 0.5%. Next up, Nuo Brands downgraded to underweight from equal weight at Morgan Stanley. Analysts say that the company behind Rubbermaid and Sharpie face cost pressures amid the Iran war. And finally, Cigna cut to a hold from a buy at Deutsche Bank. The analysts say that the health insurer faces uncertainty as it transitions a part of its insurance portfolio. Shares that were up 2%. Is this Cigna? That doesn't look like Cigna. Surely not.
CIA Energetica de Minas Gerais.
That can't be right.
I don't think that's Cigna.
I don't think that's correct. Anyway, Deutsche Bank has got Cigna at.
Yeah, no, Cigna, the ticker is CI, and the stock is currently up 0.2%. So just a tenth of that move. NVIDIA's earnings are set to test whether the AI stock rally still has fuel or is nearing the breaking point. Let's discuss expectations and impact on the broader market. We have back at the desk with us Citi U.S. equity strategist Scott Cronert, as well as via satellite, Bloomberg Intelligence, global head of tech coverage, Mandeep Singh. So, Mandeep, you have yet to weigh in on this with us. Obviously, analysts are expecting them to beat and raise. Can they meet that expectation? Are we still seeing, pricing power and a growing TAM?
Yeah, look, Google yesterday gave a data point. Their token consumption has grown almost 7x in the past 12 months. And we know Google TPUs is about 30% of the accelerator market. NVIDIA is almost 70%. And from that perspective, when a market is growing 7x, even if NVIDIA doubles the supply this year, you can see, the demand far exceeds the supply of all these accelerators. And so from that perspective, with all the memory shortage and power constraints, this market continues to grow, very nicely. And I think that will be reflected in NVIDIA's results.
This is the thing, Scott, to bring you in is NVIDIA, Micron, all of these AI-related companies are seeing earnings grow so rapidly, even though they've run up massively too. Micron is still trading at something like a 7 times 12-month forward earnings. So how do you distinguish whether you're nervous about the big run-up or whether you look at these stocks and say, hey, they're really cheap and still trading at a bargain?
Yeah, for me, it always comes down to time frames. And we like to pull out PEG ratios when we're trying to get our heads around this. And PEG ratios aren't necessarily predictive, but they are very explanatory. Right now, when you look at the NASDAQ 100, which is going to include a lot of these, you're looking at a PEG ratio that's the lowest literally it's been since 2012, okay? So essentially, what does that tell us? That tells us that there's a cyclical expectation that's still being built into the price action whereby, yeah, we're discounting what you think earnings are going to be this year or maybe next, but I don't think it yet allows for the persistence of this CapEx-related playbook to take us out to the end of the decade. So again, that's the back and fill around the strong quarters, but then the power ahead, the surge ahead is still that this picks and shovels play presumably has a long way to go, and it's not yet fully reflected in the valuations.
That's right. So the term power makes me think of, and picks and shovels, really the bottlenecks here. So what are the other bottlenecks, Mandeep, in terms of NVIDIA's earnings report? Like what will we learn that they need, or what are their biggest constraints?
I mean, look, we know Anthropic has done far better over the past few months than OpenAI. And when I look at NVIDIA's exposure, it probably is more skewed towards OpenAI and, Meta and those frontier labs compared to Anthropic, where Anthropic has so far relied mostly on Google and Amazon for their training and inferencing. And so from that perspective, the shift in model providers and, Anthropic gaining the lead, and obviously Google token consumption being off the charts, kind of goes to show maybe, NVIDIA may have some pressure in terms of their model exposure. But like I said, when a market is growing that fast, I mean, NVIDIA has a lock on the TSMC supply, and that is where everyone will still continue to buy NVIDIA's chips, regardless of what is going in the model race.
Hey, Mandeep, just quickly, to Scott's point before about some of these chip makers, should we stop thinking about them in the cyclical way that we typically do for this cohort?
I mean, not until we close this 7x demand. So we know what the demand level is, and we know how fast the capacity is ramping up. Until that narrows, I think there is still a decent runway, but we know once we are close to equilibrium, the semi stocks would have probably moved by that point. So that's what I'm on the lookout for, is the gap between right now, the capacity is expanding, maybe 2 times, and the demand is almost 7 times. And that's where you want that narrowing of that gap between supply and demand to figure out when this will end.
Scott?
Yeah, so I mean, we're used to this differentiation within the semiconductor component, right? So the flash memory and related companies, historically, they've been viewed as, let's call it, more cyclical. And
commodities.
Commodities, if you will. And the moment you begin to see pricing pressure move and demand increase, the expanded capacity, and that begins to get you to the end of the cycle. The issue, and one of the tricks here, is going to be, okay, do you get that historic level of cyclicality, or do you find that there's a new continuum here, right? Where, yeah, granted, Mandeep is right. At some point, the spending surge is behind. You're going to get some flattening or some rolling over. But again, timelines here, does that take us all the way back down to the throes of a traditional cyclical downturn? Or is there a different level of stability that unfolds? If that's the case, then, which would say that a lot of the semis that are still trading as if it's a cyclical phenomenon still have room to re-rate.
has been so interesting. Scott, thank you so much for joining us this morning. Really appreciate your time. That's Citi U.S. equity strategist Scott Kroner and Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. Mandeep, thank you very much. Now, we discussed the high bar for NVIDIA earnings next hour with Goldman Sachs analyst Jim Snyder. That's in hour 2 of Bloomberg Open Interest. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Let's check on what's going on in terms of stocks here. 25 minutes into the session, we're looking at gains on the S&P 500 to 73.78. The NASDAQ up back over 29,000. It was briefly after those two indexes came down yesterday on rates concerns, higher rates, on oil concerns, higher oil. We're seeing those two things turn around now. So you can see here's the long bond just down a little more than 1 basis point, still at 517, but we have the 10-year also down, really rates down across the curve, and crude down. Brent crude at 108.79. We also have NVIDIA as really a focal point of this market today, even though earnings don't come out until after the closing bell. So NVIDIA shares not doing a lot, up about 1/3%, but it's a $5.3 trillion company. Google down just about 1/4%. Intel gaining 5.5%. The chips are doing well today. So Intel, Micron, and really across the chip sector, you have gains that could break a 3-day losing streak. I think Ed Ludlow was pointing out that since Friday, the SOX index is close to correction territory. So it's been an insane move, but that on top of crazy climbs as well. Target now down 7.33%. Earnings impressed the street. The shares were up in the pre-market, but then the CEO on a conference call said cost pressures are going to start to hit. So now Target is down. TJ Maxx is up. And we just had Romaine Bostic from the Close On pointing out that, you know, in tough times, people trade down to TJ Maxx. So it could be a beneficiary. Coming up in the next hour, Indriani Day on a narrow market breadth this earnings season. Plus, the CEO of Hasbro joins us on the cost pressures related to its toy business. The market thinks they're sufficient, and the shares are down 9%. This is Bloomberg Open Interest.
would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
From ABC News, I'm Sherry Preston. We've just gotten word that former Congressman Barney Frank has died. Frank was a fixture in Massachusetts Democratic politics for decades, a veteran House member and a gay rights advocate. He was 86 years old. Republicans on Capitol Hill are reacting to news that the Justice Department will this afternoon announce an indictment against former Cuban leader Raul Castro in connection with the shooting down of a plane carrying aid to migrants back in the 1990s. This is Florida Congresswoman Maria Salazar.
Today is the glorious day for those Cubans who had to leave their homeland unwillingly, the people that we represent in the city of Miami, only because of the cruelty and the wickedness of a group of gangsters, the Castro family.
3 Americans were killed in the shoot-down of that plane. On his way to deliver the commencement address at Coast Guard graduation this morning, President Trump talked about his endorsement of Texas Attorney General Ken Paxton over incumbent John Cornyn in the Senate runoff next week.
I did. They'll be all right with it. They want to win. I know how to win.
The candidate Trump picked to run against Kentucky Republican Congressman Thomas Massie did win over Massie, who was one of the few Republicans to push for the full release of the Epstein files. Could the Ebola outbreak affect the World Cup, especially in the state of Texas?
The outbreak is centered in Uganda and the Democratic Republic of Congo, and Congo's national soccer team is set to play World Cup matches in Houston in June. At the Centers for Disease Control and Prevention,
we're actively working with FIFA, ensuring that travelers and the American public remain safe.
Satish Pillai heads the CDC's Ebola response. The Congolese team has canceled plans to practice in areas of the country where the illness has been detected before coming to the U.S. to play less than a month from now. Jim Ryan, ABC News, Dallas.
Checking the markets, the Dow is up 20 points this hour, the S&P up 23. You're listening to ABC News. We're learning more about the teenage gunman who killed those 3 people at the Islamic Center of San Diego on Monday.
The FBI says the 2 teens met online, were radicalized together, and shared what agents call a broad hatred of different races and religions and anger over being rejected by women. Back in San Diego, the focus is on the lives lost. The daughter of security guard Amin Abdullah, who sacrificed his life to protect the kids in that school.
He stood against any form of hate. He took his job seriously to protect everyone here. He would want our community to stand together as one.
Remembered her father.
ABC's Sophie Flay. Americans are on the move ahead of Memorial Day. Here's ABC's Alex Perez in the Midwest.
Right now here in Chicago, traffic is moving, but brace yourself for congestion. One company that tracks these things says we can expect to see the heaviest traffic in Denver, New York, Washington, D.C., Boston, and Los Angeles. Wherever you are, the worst times to get on the road this holiday weekend will be Thursday from noon to 9 p.m., Friday from 11 a.m. to 8 p.m., Saturday from noon to 5.
Turnaround for Target. The retailer announcing that its net sales rose 6% year over year following a string of weak sales numbers. Single Gen Z women are outpacing men when it comes to buying a home. They accounted for 35% of all home buyers in their generation compared to 18% for men, according to the National Association of Realtors. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are also streaming live on YouTube and at Bloomberg.com. Scarlett Fu, Paul Sweeney, this is the Bloomberg Intelligence Program. We've got some red and green on the screen. We'll get to that in just a moment. Tyler Kendall's going to lead us off here, Bloomberg Washington correspondent. Get the latest political stories coming out of Washington, D.C. as the president heads up to the Coast Guard Academy for the commencement address. Ed Ludlow, B-Tech co-anchor on some of the top tech stories. I see Meta beginning its layoffs there. We got NVIDIA earnings after the close. That's big, so we'll get a little preview there. Anna Rathbun, CEO and founder of Grenadilla Advisory, get us her thoughts on the markets. And Matt Schellenhelm, Bloomberg Intelligence media litigation analyst, on this fight between Elon Musk and the OpenAI issues. There's a whole lot of stuff going on there in the world of AI, Elon Musk and some others as well. So we'll get the breakdown there. But right now, let's go to John Tucker and get a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by IBKR. Will the Fed raise rates by 25 basis points in June of 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day is June 17th. Mixed market right now. 9 of the 11 major industry groups in the S&P 500 are higher. Utilities right now are the top performer. I guess that's because people are cranking up the AC. I don't know. Intel, best performing stock in the S&P 500 right now. It is up close to 6% as we see a rally in chip stocks. And NVIDIA rising just about 0.4% ahead of the chip makers' first quarter earnings, of course, after the close. Wall Street forecasting sales going to rise 79% from a year ago to $79 billion. Now at Target, the shares are lower right now, down over 7%. It's a forward-looking mechanism. The markets here, executives at Target warning of tougher comps and more cost challenges ahead. With the Treasury yields hovering around multi-year highs, Keith Lerner at Truist Advisory says, you know what, the resilience of the stock market is going to get tested.
When you think about why markets have actually been somewhat more resilient relative to these headlines, you know, AI is a common theme for large caps, for small caps, for emerging markets as well. And we think that theme is intact, but also probably likely due for a little bit of a rest here.
S&P 500 up 16, up 0.2%, 7370 on the index. The Dow 54 points lower. The Nasdaq Composite Index is up 114 points. Brent crude 2% lower at 109.04 a barrel. Intuit also reporting after the close. And ahead of that, we're learning from this Reuters report, they're cutting 17% of their staff. So that works out to 3,000 workers. and we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on that YouTube thing, also at Bloomberg.com/video. That's where you'll find us here. As John was saying, we got red and green on the screen here. Let's see what some of the movers are doing today in the market. We're joined by Avalon Purnell, equities reporter for Bloomberg News. Avalon, what are you looking at today?
Well, we have to start off with Kava Group. That's ticker Kava, currently up about 4.3%, though earlier it jumped as much as 14%. That's after the Mediterranean restaurant chain defied downturn fears and raised its annual sales outlook. It also reported comparable sales for the first quarter that beat expectations. Kava partially has reasonable prices in the launch of its pomegranate glazed salmon to thank for the positive results. Morgan Stanley was writing that the results should support the stock and that it counts the rollout of that salmon as one of the focal points of the print.
Never eaten there. Have you?
Oh, you have?
I have, yeah.
Yes, I love it for the airport.
The
I
what?
feel like that's my go-to airport food.
Oh, is it? Okay.
Yeah.
All right.
It feels healthy, especially if you're at the
Exactly.
airport.
How
you
much
know.
do one of those things cost?
Well, most of the chicken and falafel bowls are less than $12. The salmon, on the other hand, you're looking at 15 plus.
Yeah, you're getting John Tucker a falafel bowl. No questions asked there.
No, I'll go for that.
All right, second on your list, Aviel.
Lowe's, that's ticker Low, currently dipping about 3.2% to hit its lowest intraday level since June. That's after the home improvement retailer reported a slight miss in comparable sales and operating margin. Management also said that it's expecting near-term pressure from higher transportation costs on the earnings call, which, as could be expected, isn't really making investors that happy. Barclays writing that while sales trends remain stable, they do expect a fairly muted stock reaction as the weather-related slowdown in April may have hit the company a little bit more than expected.
TJX. I hear it's a place to go. You can get some really cool things at a good price. Is that right?
You are absolutely right. That's the owner of TJ Maxx and Marshalls, currently climbing about 5.1% for its biggest intraday leap since August. And that's after it raised its full-year sales outlook as cautious shoppers continue to spend more money in its discount chains. Jeffrey's writing that the beat and raise quarter reinforces continuing strength in off-price companies. And it's also worth noting that TJX says that its full-year outlook now assumes higher fuel costs for the rest of the year. And as we already mentioned, that's something that we're keeping an eye on for all of these consumer stocks, but it's making it one of the top performers on the S&P 500 today.
All right, good stuff. Avalon Purnell, thank you so much. She is one of our equities reporters. And of course, for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. Where are we at here with this U.S. war in Iran?
I kind of feel like I think the president's comfortable right where we are. I don't think he feels the need to move in any direction. I was just listening to some of the comments today before he left for the Coast Guard Academy. He seems pretty comfortable right where kind of we are. And
but there's a lot of threats being lobbed around.
There are. And we had Paul Sankey, one of the best oil analysts on the street, come in here and say this morning, hey, get ready for $6 gas at the pump.
Oh boy, that's going to be a new high, not new high, but a new low for consumers when it comes to that new high for oil prices and gas prices. All right, let's check in with Tyler Kendall. She is our Washington correspondent to walk us through what we know about the war in Iran, because now Iran is threatening to retaliate beyond the Middle East if there's a resumption of the attacks on Iran. Where are we at with things?
Well, Scarlett, as you mentioned, there's been a fresh round of threats from both sides. We have this now renewed risk coming from Iranian state media via the IRGC, which said in part, quote, if aggression against Iran is repeated, the regional war that has been promised will be this time extended beyond the region. That's considered to be an escalation when it comes to the rhetoric, as Iran has continued to retaliate within the region. Earlier this week, the UAE confirming that a power plant had been hit and that Saudi Arabia intercepted multiple projectiles that had entered into its airspace. The broader backdrop here is that President Trump has threatened that escalation from the U.S. side is very much on the table. And as Paul mentioned, we heard from him speaking to reporters as he headed out earlier today. And in part, he said that he was in no hurry when it comes to striking a deal with Iran. But just yesterday, he threatened that we could see a big strike, and he is only giving the country, quote, limited amount of time to come to the table table for a deal amid what has been reporting that President Trump has been advised that some limited strikes may be enough to pressure Iran to reach a deal. Because at this point, the White House maintains that Iran's counter proposals are insufficient, mainly due to a lack of conversation around potential curbs on the country's nuclear program. But Paul and Scarlett, we know other big disagreements remain, including Iran's insistence for full financial relief, that there be payments for war damages, and that Iran retains control or at least a role in governing the Strait of Hormuz going forward, considered to be a non-starter for the U.S. as the U.S. maintains its own naval blockade. I'll quickly mention the Wall Street Journal reporting from yesterday that the U.S. seized another sanctioned Iranian-linked oil tanker as they try to crack down when it comes to the economic pressure and the Iranian-linked shadow fleet.
Is anything scheduled, Tyler, in terms of negotiations between the two sides, the three sides, maybe including Israel, I don't know, in Pakistan? Is there anything scheduled? It just feels like we're at a new normal of this is life.
That's a really good point, Paul. At this point, negotiations are continuing via phone, via Pakistani mediators. This White House has been very complimentary when it comes to Pakistan's role in this, and it is our understanding that Special Envoy Steve Witkoff, alongside the president's son-in-law Jared Kushner, also Vice President J.D. Vance, and Secretary of State Marco Rubio are those U.S. officials that are leading the U.S. side when it comes to negotiations. But at this point, no update on if we will see another round of in-person, face-to-face talks, because so far the U.S. has maintained that there hasn't been enough progress when it comes to the proposals. The latest reporting from last week was that perhaps the sides were moving closer to some sort of phased deal, where first we would see a reopening of the Strait of Hormuz, a lifting of the U.S. naval blockade, to give some time to negotiate the more complicated issues, such as Iran's nuclear program. But at this point, it appears that those efforts have stalled, as now President Trump says that military escalation could be on the table in order to change what at this point has become a status quo.
Tyler, I also want to get your thoughts on what's going on in China with President Xi Jinping and his Russian counterpart Vladimir Putin meeting. This comes shortly after President Trump and President Xi had met as well. Can you just compare and contrast what's being done between Russia and China versus what happened between the U.S. and China?
A pretty remarkable side-by-side if you actually compare these greetings. A lot of the pomp and circumstance, if you will, looks very similar, though China and Russia are really highlighting what they say is a strong bilateral relationship, and off the bat put out some 40 agreements they say that the two sides have signed related to trade, technology, even the building of railway infrastructure. Compare that to what seemed to be a little bit more of a difficult time to get concrete negotiations and agreements from President Trump's visit to Beijing. It underscores how these two countries are very closely linked, as Chinese state media does confirm that the two leaders did discuss the conflict in the Middle East. Of course, Iran and China, both big backers, China and Russia, big backers of Iran, but both have a vested interest in perhaps seeing the Strait of Hormuz reopened, considering that the majority of oil flows do go towards Beijing. It'll be interesting to watch as more countries become perhaps more vocal when it comes to an end in the war. We got this statement out from the Chinese president earlier today urging a, quote, comprehensive ceasefire as imperative. Restarting the war is even more unacceptable, he said. Paul and Scarlett, yesterday on this program, we had broke that people familiar with the matter said that NATO allies are looking at getting engaged potentially to help reopen the Strait of Hormuz. So we're seeing a lot more weigh in on some solutions to end the conflict.
All right, very good. Tyler, thank you so much for your reporting. We really appreciate it. Tyler Kendall, Bloomberg Washington correspondent. She's down in our Washington D.C. studio getting the latest on Iran. And it just feels like we've kind of settled into we being, I don't know, the market or just kind of the overall.
Well, the stock market stopped paying attention long ago.
Yes, or the zeitgeist, as Tom Keene would say. It's just kind of settled into this is kind of where we are.
Yeah.
And oil's going to be sitting up here at these elevated levels. And people seem to be kind of reacting and just kind of dealing with it.
I mean, the idea, of course, and this is something Mike McGlone has brought up over and over again, is that oil prices will come down because the president will do something or say something to make that happen before the midterm elections.
Yeah, I don't know. He just, the president doesn't seem, again, just judging by his comments this morning, I didn't sense that he sensed any urgency to kind of get a resolution here other than on his terms here. Now, that said, we've got oil down about 3.8%, WTI crude oil down about $3.80, sitting right at $100 per barrel. Brent crude down about 3.5% today, $107 per barrel, so a little bit lower here, but still elevated from pre-war levels. We'll have more coming up. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tuckery in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages all pushing higher. S&P 500 up 43 points, a rise of 0.6%, 73.97 on the index. The Dow 200 points higher, that's up 0.4%. The Nasdaq Composite Index 242 points higher, up just about 1%. So let's go some of the results. Target's earnings, they were good, but more cautious about the coming months. So shares lower, down right now over 7%. And then Lowe's, the sales growth missing estimates, shares down just over 3%. Kind of related, mortgage rates increasing last week to an almost 2-month high, and that's weighing on home purchases. The contract rate on the 30, 10 basis points higher, 656. The Philadelphia Semiconductor Index right now gaining 3.8%. This comes, of course, ahead of NVIDIA's earnings after the close. Elsewhere, the sell-off in bonds taking a bit of a pause, though yields do remain near some of the recent peaks. The 30-year is 5.15, 10-year yield down 4 basis points, but it's still at 4.62. And as we look at Brent, the international benchmark, that's down 4% at 106.57. And looks like Goldman is set to lead the SpaceX mega IPO, I guess. Expected to file publicly as soon as today.
I hope they do it before I leave, because I'd love to print this off.
Yeah. Morgan Stanley also is the lead
You're going to kill so many trees by doing that.
I know.
I mean, you'll be here at the wing of the printer.
Be like 100 pages.
I know.
Yeah.
Like, you're not going to be able to leave right away.
I know.
The most valuable private company right now. Somebody, well, I'm not going to go into it. Anyway, we check the markets for you all day long, right here
himself.
on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right.
And another thing.
Yes.
Mars. You know, this whole, don't get me going.
Don't get him going.
Oh, maybe you can get there. You're never going to get back with current engineering.
We've seen The Martian. It's possible. Matt Damon can do it.
He got back.
No, you're going to have to explain to me from an engineering perspective how you
from a
ever
Hollywood
get
perspective, it can be done.
No, it can't be done.
Mars, we're going to get there. And we'll get back. John Tucker, thank you so much. We appreciate it. Scarlet Fu, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio here. NVIDIA, after the close, folks, just to give you a couple numbers, NVIDIA market cap, $5.4 trillion. Stocks up 20% year to date, up about 65% on a trailing 12-month basis. So the belief is still there. They're reporting numbers after the close today. Ed Ludlow, BTech co-host, he lives for this kind of stuff. Ed, what are you and your fellow tech geeks looking for today after 4 o'clock?
Yeah, I mean, there's a real beat and raise expectation in this market with NVIDIA. It's been really interesting on the terminal to track, particularly on EPS expectations. Top line growth 80%, EPS 85% year on year. But in a funny way, like, the market's just not really going to be interested in what was said in the quarter gone. They really want Jensen Huang to continue to tell this story that AI has momentum, in the sense that all of the names at the core of it, NVIDIA being the most prominent, demand is vastly outpacing their ability to supply. And when I spoke to Jensen on Monday in Las Vegas, I mean, that's the message, right? Even if the supply chain for AI chips is doubling or quadrupling per annum over the next decade, I'm paraphrasing him, it won't be enough. And like in any historic market, Paul, is that not the most enviable position to be in?
Sure. I mean, this is a company that's just, I mean, when we got that revenue forecast from 3 years ago, it just kind of reset the whole discussion.
I mean, it blew everyone's minds, essentially, right? It's like, oh, this is a real thing. It became a cultural phenomenon in many ways. And here in New York, people were holding NVIDIA earnings watch parties in bars and cheering, and I guess taking a shot when they heard certain words. Does it still have that same cultural resonance, or has NVIDIA stock, which has been looking a little bit more earthly in the past couple months, certainly compared to some of the other Mag 7 names, kind of lost some of that cachet?
Yeah, it certainly is still in the culture, right? It's the world's most valuable company. It has a story through a central figure, Jensen Huang, right? And, you know, one interesting spin-off from that question, Scarlett, is why do people care so much about China for NVIDIA? So right now, and it has been the case for a long time, China has a base case assumption of zero revenues for NVIDIA. They're not doing business there. And we track so closely Jensen Huang putting himself at the center of the story, getting a last-minute seat on Air Force One, going to China. And what's so interesting on the stock is, like, just Friday, Monday, Tuesday, we almost got into correction territory, almost a decline of 10%, because the net outcome of that trip was zero. There is no new news on their ability to do business in China. Actually, none of the analysts model for it, really. It's a $50 billion market potentially, but doesn't move the needle. It's just the story about this man and his influence on the world running in parallel with the President of the United States going to China and trying to get something from it.
Ed, you're based out there in San Francisco. You have your finger on the pulse of Silicon Valley here. We get news, you know, Intuit laying off a bunch of people, Meta Platforms transferring people, laying off people. I mean, what's the feeling out there? Is AI going to be taking jobs from folks in the Valley these days?
You know, the news cycle of the last 24 hours, right? Meta shifting 7,000 to new AI roles, but cutting 8,000 into it, I believe there were headlines on it doing the same thing, cutting roles, but saying it's reallocating to AI roles. And then you have the whole Standard Chartered story, which I'm sure you guys went over. Yep. Right, but instead of this being like it was in just before the pandemic and post-pandemic bloat, which was about tightening the belt, it's more about reallocating. And there's a really interesting academic debate, which is inevitably like AI will render some roles obsolete, but still every single day, whether it's a venture capitalist, a CEO, or a software engineer, they keep telling me, and we just did a Wall Street Week episode on this, AI is making us better at our jobs. It's not displacing us. And we're working to a future now where if you're a manager, can you imagine this, guys? A manager, but the people or thing you manage is a team of AI agents. And maybe that's how our bosses view me, but that's the direction of travel.
I was speaking to having dinner with a 29-year-old technologist last weekend, works at a big tech company. He said the same thing. They're just working better, smarter, a lot more productive, like not 20% more productive, like 2, 3, 4x times productive. So I don't know. It just feels like it's a job.
Well, everyone wants these smaller teams. If what Ed is saying is true, then everyone's just an individual team in charge of their AI bots.
That's right.
Working for them.
Yeah, I could manage that. All right, Ed Ludlow, thanks so much. Appreciate it. Ed Ludlow, B-Tech co-host. He's out there in San Francisco for better or worse, but he's out there in the Valley doing his thing. He's been out there for like 4 or 5 years, and he's like a regular. He's driving. He's doing the driverless cars. He's doing all that tech stuff.
I mean, he basically looks like the Rivian CEO.
Yes.
that was before Rivian became a big thing. Yeah, anyway, our thanks to Ed Ludlow. We always appreciate him making time for us. Let's talk a little bit more about what AI means for the markets, how markets are digesting all the headlines out there on Iran, or in this case, not a whole lot of headlines because there doesn't seem to be very much movement. Anna Rothman is with us right now in New York. Yeah. In fact, she's CEO of Granadilla Advisory. Normally, she joins us through Zoom, but we welcome her here. It's great to see you, Anna.
Good to see you.
So let's talk a little bit first about AI. It feels like for several years, CEOs were just kind of in wait-and-see mode to see how they were going to incorporate this technology. And now they're making changes to staffing, but saying that, they're going to perhaps cut staff in favor of spending on AI. Are we at a point where companies are going to say these AI jobs or these AI investments are replacing people completely?
Yeah, I think it's going to take time for us to see that. When people say that, I think it's about making new hires. So I don't think they're replacing them yet because they're not as reliable at this time. So it's really about that productivity component. How can you make the existing worker more productive by implementing AI? So I think it's the marginal cost of labor rather than the existing cost.
One of the things we've been dealing with really for a long time, but it's been even more pronounced for the last 10 weeks or so, is inflation. And we're seeing it in the bond market. How do you guys think about inflation, and how does that impact maybe how you invest?
Yeah, so it's still multifaceted, right? So the inflation portion of it, I think, is a little bit of an overreaction because we don't know if it's going to stay. The PPI we got last week, it was very, very hot. But it was pretty much concentrated in transportation and warehousing where diesel prices were like double, right? Yep. So we don't know if that's going to seep into the rest of the economy. So there's a little bit of an overreaction, but nevertheless, we do have high yields. For small caps, it's more of a fundamental headwind, right? Because about less than 50% of small cap companies actually have floating rate debt. So that's a real cash flow problem for them. For larger companies, especially for like Mag 7s, still sell off in tech names. I think that's a knee-jerk reaction. It's more about multiple compression for them, but it's not today. It's maybe down the road. It just makes them look more expensive than they were before.
We've seen this bond sell-off, not just in the U.S., but globally, kind of ease up a little bit here. Yields are not, they're lower, actually. They've extended their losses in the last hour or so. But how worrisome was that to see bonds sell off like that and have the stock market pretty much shrug it off?
Yeah, I don't know if they're shrugging it off. I think today they're just taking a breather. It tells me that the spike that we saw in the last few days was just overdone, right? It's out of fear. And the fear really is about the Strait of Hormuz. A fear is not only about the standstill in the Strait of Hormuz, but it's about like, how long is this gonna take? How long will this be sustained? And then will inflation creep into the rest of the world while we wait? And it's really a binary risk. It's either it opens or it does not. And that's really difficult to price in. So overreaction is kind of normal.
What are you doing with energy here? Got to oil at $100 a gallon. Got to make some hay here, maybe, I guess.
Yeah, I mean, oil is hard to invest in because it's in the futures market, right? So that is more of a headwind. So, earlier you asked about how am I positioning things. It's really about how does oil impact inflation and how does that impact yields and therefore prices in the bonds, right? So it's really on the fixed income market side. I have kept duration short for 5 years. And that is, it's been a good place to be. And I think it will continue to be in a good place because of the binary nature I just talked about. The yields are just going to be very, very volatile. In some ways, I'm surprised at the level to which it has gone up. But I'm not surprised that it has been sustained in that high level.
How much of that increase in yield do you think is due to a higher term premium versus that knee-jerk reaction to oil prices?
Higher term premium, I mean, if we're talking about debt deficit, et cetera, I mean, the question is what will happen in 30 years, in 10 years? There's definitely a component of that, for sure, because with the war being also expensive and we keep asking for more money, it doesn't look like we're heading in the right direction of trying to reel in some of these costs. So yeah, I mean, bond vigilantes are definitely out.
Anna, thank you so much for joining us. Really appreciate it. Anna Rothman, she's a unique guest in this studio. She has a doctorate in music. How cool is that?
That's amazing.
Yeah, isn't that cool? And from the Cleveland Institute, which are, I think, it's very, very good folks out there. I've heard about that my whole life. Anna Rothman, Chief Executive Officer, Grenadier Advisory, joining us live here in our Bloomberg Interactive Broker Studio. We got some stocks moving higher here. I don't know. S&P's up 50 points. That's 0.7%. That's not going to sneeze at that. The NASDAQ up 250 points. That's about 1% here. And you're doing that in the face of, as Scarlett was just mentioning, yields are coming in here. The 10-year Treasury yield's coming in about 4.5 basis points.
It's like a tentative risk on as NVIDIA gets ready to report earnings after the close. The stock is higher for the first time in about 4 days. Certainly not recouping all of its losses, but that is the setup as we get into these earnings.
Yeah, I'm not going to pay attention to NVIDIA's earnings, but a lot of people will be, like Tim Stanovic and his colleague.
They'll be breaking it down.
Exactly.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages are higher. We're headed for the first gain in 4 days. Chip stocks rallying. Intel, best performing stock in the S&P 500. And right now, that is up over 8%. The company behind TJ Maxx and Marshall's climbing over 5.5%. They delivered stronger profit and revenue for the first quarter than expected. Investors looking for clues on whether the tech-led surge recently has more room to run. NVIDIA right now up 1.5%. They're going to set the tone for the markets when they report after the close. Jay Goldberg at Seaport Group. He's kind of lukewarm on the company.
Just to be clear, I think NVIDIA is a good company. They have good products. I think highly of Jensen, but they've just gotten so big. It's hard for them to excite expectations the way they used to.
Right now, the S&P 500, 43 points higher. The Dow up 263 points. The Nasdaq Composite Index up 231 points. The 10-year yield 4 basis points lower, still at 4.62. The long bond 5.15. It is down right now 3 basis points. Brent crude down 3.8%, 107.09. Mercedes-Benz unveiling an electric sports car, and since it's electric, it doesn't make any noise, so they're going to simulate gear shifts and reproduce the soundtrack of a V8 engine, trying to win over some Matt Miller enthusiasts. But it's fake. When you pump in the sound.
No, thank you.
I don't get it. But top speed, 186, and can go from 0 to 62 in 2.1 seconds.
Which you all have to do.
Well,
you need to go to 0 to 60.
Very useful when you're coming into the city at the Lincoln Tunnel in the morning. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, JT.
Please don't speed.
No, I don't do that. I do tailgate sometimes, so I have to work on that.
Oh, Scarlett.
I know. I'm working on that.
The 2-second rule. That's that guy's, right, John?
Yeah.
Right? Yeah, the 2-second rule.
Just hold off at every point and wait 2 seconds.
No, just when you the good distance between the car in front of you is
it's 2 seconds.
When it passes a landmark, say 1001, 1002, then you pass
I tend to count faster than the average person. That's my problem. But I'll work on that as well.
Driving with Scarlett.
Yeah, all right. Yes. We are an AI-obsessed market in every way, whether it's talking about companies that are making some changes to staffing because of spending due to AI, or awaiting NVIDIA's results, or watching a legal case involving OpenAI and Elon Musk. And it's really that one that I want to pick up on, because that's been going on for a couple of weeks, and it's really captured a lot of people's attention. Paul Sweeney, 2 billionaires duking it out, and it looks like Elon Musk lost, and he says he's going to appeal. I want to get a better understanding of what this lawsuit means and what it allows for. Matthew Schentenhelm is our media litigation analyst at Bloomberg Intelligence. He is joining us right now from Washington, D.C. So is it as simple as, Matthew, Elon Musk lost, Sam Altman won, so now OpenAI can go public?
I think that's the big takeaway from this. It's not completely over yet. As you said, Elon Musk has vowed to appeal this decision on Monday. But at this stage, things are looking much better for OpenAI. This was a pretty serious case because it had advanced this far. The judge had let it clear, a motion to dismiss, a motion for summary judgment, let it go all the way to trial. And Musk was seeking pretty severe remedies against OpenAI, not just over $100 billion in potential damages, but limits on the company's ability to seek private investor returns. Musk wanted the company to be limited to serve the good of the world first and foremost, and effectively that would cap private investor returns. Doesn't really work for an AI company. So Musk losing this with this jury decision that the judge adopted on Monday is a big step forward for OpenAI in avoiding this overhang.
Elon Musk says he's going to appeal. I know you have opinions on how successful appeals may be. What do you think in this case?
Yeah, so I think it's going to be an uphill battle for Musk at this point. Most appeals fail. And here, this appeal would go to the Ninth Circuit Court of Appeals. And Musk would be limited to arguing that the jury and then the judge got it wrong on the statute of limitations. The jury said Musk filed this suit too late, and there's a 3-year statute of limitations for breach of charitable trust claims. Typically, appeals courts look at legal questions. Was the judge right on that 3-year test as being the controlling law? Where appeals courts have trouble and have limited ability to intervene is factual questions. And here, a jury took up the factual questions of what did Musk know and when did he know it? And getting into the nitty-gritty of that, their conclusion that he should have sued earlier because he knew about any alleged wrongdoing earlier, that's going to be a tough thing for 3 appellate judges to second guess because they tend to defer on factual questions. So I would think Musk is a pretty significant underdog as this case goes to appeal.
So what did Elon Musk get out of this trial, this case?
Well,
does he come out ahead in any way?
He put a lot of pressure on OpenAI. I think some have argued that Sam Altman, he had a very difficult cross-examination, and maybe there were questions raised about his truthfulness. Some may view, and some may suggest, hey, maybe OpenAI isn't as pleasing a place for investment going forward based on that leadership. I think this was certainly motivated, arguably, by Musk's desire to compete with this company since he's no longer tied to it. And you could argue that maybe this, cast some dirt at the company in a way that may have set it back slightly. But I more likely than not, I think Musk losing this case is the big takeaway. I think that's a big win for OpenAI. And unless he can overturn that, I think OpenAI moves ahead. And I don't think Musk gets all that much at the end of the day.
So at the heart of this, though, was whether OpenAI should be, I guess, a kind of for the public trust, or is it a profit-making institution? Where does that whole concept stand now, the whole argument? Because, again, we may see OpenAI try to go public here.
Exactly. So the argument was a very unique one, that this was a breach of a charitable trust, that OpenAI basically created a charitable trust when it started as a nonprofit seeking to benefit the world. And Musk's claim was that by moving to a for-profit model, that breached that charitable trust, and that OpenAI couldn't move ahead to seek private investor returns because of how it started up. What Musk never really had, though, was any sort of written documentation. There's no trust agreement that says that. What there was sort of pieced together conversations and corporate filings and things like that to try to make that argument. So it was never a real airtight case on Musk's part. And so what this frees OpenAI to do is to go ahead to have a for-profit component. It still has the charity. It still has the not-for-profit, but it also has a secondary piece, the for-profit model, which fuels the business, brings in the money needed for an AI company to work. And so now that business model can proceed full speed ahead with this case out of the way.
All right, good stuff. Really appreciate your joining us today. Matthew Schentenhelm is our media litigation analyst at Bloomberg Intelligence, joining us from Washington, D.C. I feel like a lot of people were watching this, but for reasons that had little to do with the eventual IPO. It was more just a clash of personalities between Elon Musk and Sam Altman.
Yeah, exactly. And, they were once partners, not so anymore. But it really was, as Matt was suggesting, kind of about the future, the life of this company. And now, presumably with this litigation risk behind them, they can go to pursue some more growth strategy, which for them possibly includes an IPO.
Right. I mean, along with Elon Musk's own SpaceX, which merged with XAI and Anthropic. It feels like Anthropic has really overtaken OpenAI as like the hot new AI company that everyone's anticipating, maybe because it didn't have this legal overhang.
Yeah, I've got my little AI downloads here on my phone.
And
so
are
I've got
you
my little
using
window.
them?
I've got Chat, GPT, Grok, and I got Reddit in there just because I didn't know where to put it. So that's I learned Reddit the same day I learned about Chat GPT. So there we go. We got them all together. So
All right,
I'm
we're going to
fired
check in
up.
on your progress later on.
Yep, I'm all fired up on this AI stuff. S&P up 45 points, 0.6%. The NASDAQ up 230 points. That's 0.9%. The Russell, the small capper, is really outperforming today, up 1.82%. for the Russell 2000. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Looking at Target reported earnings, strongest sales gain in years, but they're a little cautionary, I think, in their guidance here. The stock's down 6% here today, although it's up 22% year to date. Jen Bartash, she covers this part of the retail space for Bloomberg Intelligence. She joins us from the BI offices in Princeton, New Jersey. Jen, talk to us about Target. What did they report? What's their outlook?
Yeah, hi, Paul. So Target had a really good first quarter, much better than most people expected. And I think that it really is a reflection that some of the tactics they're putting in place as part of their turnaround are taking hold and that consumers are responding. But as you kind of sort of implied in your introduction, they really didn't nudge much with regards to their guidance in response to a strong fiscal first quarter. And so I think people are looking at that as a very conservative outlook for the rest of the year.
The comp sales for the quarter that ended was pretty eye-opening, up 5.6%. That was the biggest increase since the end of 2021 and also 3 times the average analyst estimate. Is this more than just easy comparisons?
Well, in part, Scarlett, it's easy comparisons, but we also had other things like the tax refund season. There were some good tax refunds out there that people were spending. There were a few of those sort of tailwinds. And so when you strip that out, it's really about, how much of this is sustainable going forward. And because the company didn't really adjust much of their guidance for the balance of the year, it really implies that that pace of same-store sales is going to drop way off starting in second quarter. Still positive, but in the very, very low single-digit range.
Right. Could this be a case of Target managing expectations to lower the bar so much that it becomes an easy beat later on?
I think that it's not necessarily trying to really underestimate, but I think there is a level of conservatism there, and that's just really based out of the track record that they've had. When they go too soon in raising guidance, they get held with their feet to the fire, and then if they for some reason don't meet that, the stock gets hit even harder. And so I think that there's that level of prudence in there of saying it's only one quarter, there's 4 quarters in a year, 3 more to go. You know, let's see where we go. Now, if we get to second quarter and they have strong results and they don't make an adjustment, then I would say that they're definitely sort of under promising so they can over deliver.
Talk to us about this, the turnaround. What is Target trying to do, and are they making any headway there?
Yeah, so a lot of the issues with Target, they sort of lost their way with what they used to deliver in that sense of like Target and the joy and the discovery. And so they're going back into sort of key topics and key categories where they think that they can be differentiated. So things like baby, things like beauty, areas of health and wellness where they think that they can have a competitive advantage and bring people back into stores. So they've been changing their assortment, changing what's in the stores, and at the same time, I think what's maybe underappreciated is the amount of work they've done with their back house operations in terms of supply chain to really improve availability of products in the stores. There's nothing worse than a bad experience when you go in looking for something and it just isn't even there. So those are the kinds of like small wins that Target is starting to see that is helping to build a little bit of momentum.
Yeah, the comparison between Target and Walmart always seemed to be that Target appealed to the aspirational shopper in a way that Walmart hadn't quite mastered. Have those roles reversed? I mean, Walmart, we keep hearing about how there's a lot of customers trading down to Walmart now.
Yeah, I would say Walmart has definitely invested in recent years in categories where Target had always been a leader. Apparel is a really good example of that. So, Walmart has gone from being content of just being a fashion basics, where you go to buy your socks and your underwear, to being a little bit more fashion forward. And they have seen their apparel sales improving. So there's definitely more competition for Target in areas where they used to have a historical advantage. But we'll see whether this new refresh is going to be enough to overcome anything that they've lost.
Jen, you talk to a lot of these retail companies. What are they saying about the inflation we're seeing out there in the economy, particularly at the gas pump?
Yeah, it's a great question, Paul. And there are some reports out there that say that we haven't seen consumers have a huge reaction yet to the higher gas prices. When we look back historically, it's usually when gas prices are at a high level for a sustained period of time that you start to see consumer behavior shift. And that shift really takes place into going fewer stops, fewer retailers, maximizing your trips, that sort of thing. It's still a little early to see that much of a consumer reaction to high gas prices, which is why we haven't really seen that flow through in results yet. But the longer gas prices stay higher, the more that actually is an advantage to companies like Walmart and Target that have that broad assortment where people can make one stop and shop in multiple categories.
Or TJX, which is my favorite go-to place for all these things.
I know.
Anytime you can get a deal, I'm there.
Yep.
Jen Bartashis, thank you so much. Jen Bartashis, of course, covering Target for us. She's our senior analyst for retail staples and packaged foods. And Target definitely sells a lot of that, but it's always been trying to be more than just, your grocery store.
It feels like, I don't know, it feels like they've got everything. Walmart's got everything. I mean, where else do you need to go, it just seems like. But,
do they have an app the same way that Walmart does? Because Walmart's put a lot of money into their app.
And their digital sales are double digits I feel like Walmart's done a phenomenal job competing against Amazon.com. I mean, I never would have thought that in the beginning, but
well, I have some recommendations on how they can improve. But,
okay, interesting.
I'll speak to the guys there in charge.
All right, good to know. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with stocks trading higher, yields down, oil down, and Bitcoin higher. There you go. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning and happy NVIDIA earnings day as well.
Big after the close.
After the close. We'll be all over that. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Also, we are streaming live on YouTube as well. Paul Sweeney, Scarlett Fu, and John Tucker here with you. And to help you get through the next hour, we're going to bring in Mary Ross Gilbert. She is our senior equity analyst covering retail on TJX's earnings. A lot of people seeking out these off-price discounters, off-price retailers, and TJ Maxx certainly benefiting from that. Drew Redding, our U.S. home building analyst, will recap Lowe's earnings as well. We already heard from Home Depot. High borrowing costs, high housing prices is definitely damping some enthusiasm for these home improvement retailers. Michael Cugino is a president and portfolio manager at Permanent Portfolio Family of Funds to give us his sense of the markets and where we go from here. Oil prices lower today. Bond yields also lower as well after a very dramatic sell-off that began last week. And Kunjan Sobhani, our senior semiconductor analyst, will give us a preview of NVIDIA's results due out after the close. First, let's head over to John Tucker, who's got a Bloomberg Business Flash.
All right, let's start off with, risk on. All the major averages higher right now. 7 of the 11 major industry groups in the S&P 500 are up. Tech among the better performers. The Philadelphia Stock Exchange Semiconductor Index up 3.6%. Now ahead of NVIDIA's earnings after the close. Intel, actually the best performing stock right now in the S&P 500. Kava raising its annual sales forecast. Those shares, they are up 6.3%. And we also have word that Samsung has reached a deal with its labor unions that averts what had threatened to be a crippling strike at the memory chip maker, the biggest memory chip maker. As for yields, you mentioned that, Scarlett, they backed off, but still near multi-year highs. And Rayan Mitrione at the Callan family office says the higher treasury yields are going to continue to impact investors' risk appetite.
If we do continue to have this uncertainty out there, I do think yields can stay elevated, and that could create more volatility in the equity markets going forward.
Well, right now, the S&P 500, 57 points higher, 74.10 on the index. The Dow up 341 points. The NASDAQ Composite Index is up 284 points. Crude oil is lower. Brent is down 4% at 106.50 a barrel. The two-year yield down 5, close to 6 basis points, but still above 4.06%. The 10s at 4.59, so that's down 7 basis points right now. Harvard University, the faculty there voting to cap the proportion of A grades in undergraduate courses. So starting in the fall of 2027, no more than 20% of a class plus 4 additional students can receive an A, and students overwhelmingly.
But I think that's just A, right? A minuses are not capped? Because I'd read about this. A minuses are not capped. Paul is rolling his eyes at me already.
A solid gentlemanly C is no problem there.
I didn't get too many A's when I went to Harvard on the Hackensack.
That was a great dramatic pause.
Yeah, so fond memories. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
How was it at Cornell? I mean, did you feel like there was great inflation?
No,
I never even thought of that.
But I wasn't an engineer, so I mean, I was in humanities. I just wrote papers all day long. But yeah, there was no great inflation at all at Cornell.
Very good. Yeah, I never thought about it. But anyway, again, nothing wrong with the gentleman's C. I'll tell you that right now.
George W. Bush would agree with you.
Yes, exactly right. Nothing wrong being in the middle of the bell curve. So there you go. John Tucker, thank you so much. Appreciate that. Scarlett
Harvard
Paul
on the
Sweeney.
Hackensack.
Yeah, that's fantastic. We're in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube. All right, we got some green on the screen as John was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Tatiana Darrier, strategist for Markets Live at Bloomberg News. Tatiana, what are you looking at today?
Well, we have to start with NVIDIA, right? The name we are all watching today. Shares were fluctuating earlier, but are strongly higher right now. But go to the Markets Live blog and you will see that the track record is really mixed for this company. We have all the data on the terminal, and it shows that for the past 3 quarters, shares have actually fallen after blowout results. And that's because expectations are so high for this company, right? And especially after it already lifted its outlook in March. That should not be overlooked because the company lifted its outlook, near-term outlook, from $500 billion to $1 trillion through the end of 2027. That's the number everyone will be looking at if there are any changes there. And buy-side expectations in the past have been in the range of 2 + 2. That means beat your guidance by 2, beat your numbers by $2 billion, and then beat the forecast by $2 billion. So these are sort of, the lines between the numbers that you need to watch to understand the share reaction of the stock and of the market itself.
All right, so we will be all over that. In fact, Carol Master and Tim Sinovic will be all over that.
Carol's on assignment.
Oh, she is?
Yes.
So she's not doing it today.
Right, so we're going to have Emily Graffeo along with Tim Sinovic.
Excellent. All right, looking forward to that. Next up on your list, I'm getting hungry here, and this is a good one for that.
First of all, let's ask, have you eaten a kava?
Well, no. I was actually about to ask you guys if you have. It sounds very familiar.
I have, but I don't think I've had anything that people typically have, which is the bowls. I think I just got the bread once.
Okay, all right.
Yeah,
I'm going to try it because they're all over the city here, so I'll try it.
We are not part of their crowds, but people are dining there more and more. Existing customers are returning more, and more new customers are coming through the door. The company has reported up about 6% now after raising its annual sales outlook after a robust first quarter where comparable sales surpassed analyst estimates compared by Bloomberg. And this stands out against the warnings that we've seen from restaurant analysts and executives, not least from McDonald's, just last week, saying that the spike in gas prices and just generally the inflationary pressures that we're seeing from the Iran war could crimp discretionary spending. I mean, it's all there in the economic data as well, with real incomes turning negative. Well, that doesn't seem to be a problem for this particular company, which stands out, sort of defying the crunch in consumer budgets that has weighed on the industry.
All right. How about Lowe's?
Lowe's, well, this one's not as optimistic, with shares lower by about 0.5% now, was down more earlier. The home improvement retailer reported a slight miss in comparable sales and operating margin, but a small beat in adjusted EPS. This sort of mirrors what we've seen from Home Depot yesterday, which reported a shortfall in one of its key sales metrics. But overall, there seems to be some reassurance that the company reaffirmed its guidance despite talking about all this pressure. CFO saying that they're already seeing oil cost pressure, plastic, and resin prices, and despite that, they managed to stick to their forecast. And I mean, even Home Depot yesterday managed to erase that loss. So it looks to be one of those days when the rising tide in market is just lifting all boats.
Good stuff. Thank you so much. Tatiana Darrier, strategist for Markets Live here at Bloomberg. If you want to check out her work, you can type MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available wherever you get your podcasts. Let's talk about TJX, the owner of TJ Maxx. And in the UK, I think it's TK Maxx.
Is that right?
Yeah, I don't know why they changed the letter there, but Mary Ross Gilbert probably knows. She is our senior equity analyst covering retail. And TJX this morning came out with good earnings, hiking its sales outlook, a real contrast to Target. But Mary, this is a very different company because this is a off-price retailer as opposed to Target, which has its own brands and doesn't claim to be off-price.
That's exactly right, Scarlett. Really, the big difference here also is on the execution side. TJX is known for executing seamlessly. So they also guide conservatively, and you expect them to beat every time. And they also surpass analyst estimates because analyst estimates are usually a tad above the guidance that the company provides. So yeah, there was a lot of strength in the quarter, and I think both TJX and also Target benefited from higher tax refunds in the quarter. And it does appear that Target is improving their execution, but they're also cycling a 3-year stacked comp sales decline of 7.4%, whereas TJX is cycling a 3-year stacked comp sales increase of over 9%.
Ooh.
Again, the difference in the execution and the appeal of off-price, and especially now that consumers are having to cope with higher gas prices.
Yeah.
And then as earlier in your just recent broadcast there, you were talking about how the implications for that are raising costs of some products, and also, we could get freight. Right now, we're not seeing that because there's been some hedging in place. For example, with Target, that was one of the benefits in their margin in the quarter was on the freight side, freight hedging.
Mary, is there anything that TJX isn't doing well? You mentioned execution has been flawless, but that's kind of what investors expect from this company. What could it be doing better? Where is it perhaps leaving money on the table?
Yeah, that's a good question, Scarlett. It seems, I can't see where they're really leaving money on the table at this juncture. And if anything, what we continue to see every single quarter is the availability of excess merchandise. And this is across brands that that span the appeal from consumers at the very low end to consumers at the very high end. So we're continuing to see a lot more luxury merchandise. It looked like in some of these shopping hauls that were posted, there's a lot of product from Celine, Gucci, Yves Saint Laurent. I mean, it's amazing how much out there in luxury, and we're seeing that luxury is off right now. And so now you can get it at discounted prices in the off-price channel, at least with TJX and their runway model.
What's the growth strategy for a company like TJX? Is it more stores? Is it driving digital growth? Is it raising, average selling price? What's kind of the growth story for a company like TJX?
Yeah, so Paul, that's a good question. For them, it's really continuing to expand. So that is opening up new stores, and they are opening up more newer stores this year. I think they have on target over 100. But they're also expanding internationally, which is why they have these joint ventures in the Middle East. And they just entered Spain this year, so that's a new market for them. And then, of course, they also have an investment in Mexico. So they're sticking with the off-price channel, but expanding around the globe. And part of the reason why they're doing that is because they have seasoned executives that want to take on more responsibility, and this is a way to do it. Right. So they continue to see a long runway, not only in North America. For example, they're expecting to open somewhere around, I think it's like 7,000 stores. So they still have about 1,738 to go. So they have a big runway still.
Okay.
And by the way, they keep moving that target.
Right.
As they see more and more opportunities.
Mary, thanks so much for joining us. Appreciate it. Mary Ross Gilbert, Senior Equity Analyst covering the retail space for Bloomberg Intelligence. She's based out there in L.A. All right, folks, our next segment is sponsored by John Tucker and all the do-it-yourself people out there. Drew Redding joins us here, Bloomberg Intelligence home building analyst. Lowe's reported some numbers there, Drew. Are those crazy people that actually do the work on their own homes, are they still buying stuff? The video
so it was a largely inline quarter for Lowe's, 0.6% comp on same-store sales. They maintained their full year guidance, calling for flat to 2% growth, which I think was encouraging. So I think the underlying trends in the business are relatively stable, but I think that still reflect a number of challenges out there. The most important being what we're seeing in the housing market. Turnover still weak, about 20% below normalized levels. We haven't seen that meaningful lift in spring demand that we were hoping for. And now we have rates back up to 6.75% on housing, at least in the near term. At the same time, we've got consumer uncertainty, whether people are concerned about the outlook for economic growth, the outlook for employment. Now we have these geopolitical tensions. So all these are kind of weighing on that DIY consumer. And where we're seeing it, most importantly, is in a pullback in spending in those bigger ticket discretionary categories.
So for companies like Lowe's and Home Depot, they kind of have to wait out this cycle. They have to wait for things to improve, and that's a cyclical headwind that they, really have no control over. Where they do have control over is to create more productivity, create more efficiencies. What is Lowe's doing on that front?
Yeah, so you make a great point. Is they really can't battle what's happening in the housing market. But what they have been doing is investing for when the market eventually turns. And where we've seen it from both retailers is really on the pro side. So Lowe's has done a lot of investments, in crafting kind of a portfolio of products that pros really demand. They've worked hard on building out a loyalty program. They've done 2 pretty significant acquisitions of LBM and ADG, which will give them exposure not only to kind of the larger pro, where there's somewhat of an untapped addressable market for both of those retailers, but it'll also give them exposure to the home building space, which is an area that they have historically had no exposure. Now, as we've discussed before, the new home market is under similar pressure. We're seeing housing starts actually contract. But as you mentioned, it's really about positioning themselves for the next leg of growth when the housing market and the consumer starts to come back.
Existing home sales bumping along around 4 million per year. Where should that number be in a healthy market?
Yeah, so we've been there for a couple years. We're about 20% or so below normalized levels. So we should be, somewhere around the 5 million mark. I think the fact that we've been bumping along these levels with all of the different challenges that we've had, from rates to economic uncertainty to geopolitical uncertainty, tells us that we're at a bottom. We think that we can grow existing home sales low single digits in 2026 as more inventory starts to come onto the market. That's likely to come at the expense of home prices, which, as we know, are up over 50% over the last several years. So, for the home improvement retailers, the headwind associated with the existing home market has started to fade, but it just hasn't emerged yet as a catalyst for growth.
All right, good stuff. Drew, thank you so much. Drew Redding is our U.S. home building analyst, giving us a recap here of Lowe's earnings. On the heels of Home Depot's earnings, I guess it's not too big of a surprise, and Lowe's stock actually little changed at the moment. What do you observe to be the difference between Lowe's and Home Depot?
You're asking the wrong person, but I know we have somebody in the studio who can
John Tucker. Do you go to Lowe's?
I do both. Lowe's is, I find more women at Lowe's.
Well,
that's why Paul and I hang out there.
Well, I don't like the dusty floors at Home Depot. There's sawdust everywhere. I'm not into that.
Well,
Lowe's
what do you
is a more
expect?
pleasant experience.
Okay.
So I'm fulfilling your stereotype right here.
I have people, John.
No, I don't have people yet. I haven't reached that stage.
All right, very good. S&P 500 up 70 points. That's 1%.
Headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Let me start off with oil. The oil inventories, crude inventories, including strategic reserves, plunging by a record 17.8 million barrels last week. You have record exports starting to erode the domestic supply cushions here in the U.S. America, of course, has emerged as the major supplier to the world as the war leaves top buyers in Asia and Europe without access to Middle Eastern barrels. So there you go. Investors are going to be looking for indications about the growth outlook from NVIDIA, which can confirm that the semiconductor rally has more room to run ahead of their earnings. NVIDIA right now, those shares are up close to 2%. And Target shares falling about 6%. Executives warning the second quarter comparisons are the hardest of the year, so that could suggest a sales slowdown for the period. And Meta Platforms alerting thousands of employees today that they're being laid off. Staff being encouraged to work from home while the company cuts roughly 8,000 roles globally. S&P 500 right now up 70 points, up just about 1%, 74.24 in the index. The Dow up 460 points. The Nasdaq Composite Index up 348 points. That is a rise of 1.4%. And Brent crude, the international benchmark, that right now is down over 5%, 105.38 a barrel. Two-year yield down 8 basis points, still above 4 though, 4.03%. The benchmark down 9 basis points, the 10-year 4.57, and the long bond down 7 basis points. That's at 5.10. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
So that thing where Meta is making everyone work from home today while they tell people whether they've been reassigned or are losing their jobs, is that to prevent people from hanging out and commiserating together?
They just don't want them around? I don't know. Yeah, commiserating. I've done a few commiserating things in my career.
They're just like, if you're going to talk about it, you could do it on your own time. Right. Well, I mean, no one's going to be focused today.
No.
It's brutal way to find out.
Yep.
So good luck to folks in Silicon Valley. And I mean, this is not just in Silicon Valley. It's kind of across the board here.
This is globally, yeah.
Yeah. I mean, executives are definitely, they've turned the corner. They're no longer warm and fuzzy, as Matt Boyle has written about. They are much more straightforward, and some would even say ruthless about making sure that they are building and reinforcing a performance culture at the office. Let's go now to what this means for markets, because the earnings story this past quarter has been remarkable, and that's what's been driving equities higher. Michael Cugino is president and portfolio manager at Permanent Portfolio Family of Funds. He joins us now from San Francisco, a lot of where this kind of performance culture is happening. Michael, earnings look good. They continue to look good, and it feels like management is determined to make sure that they continue to grow at these levels. Is there reason to worry that the comparisons get more and more difficult over time?
Yeah, good morning. Yes, there is. And I agree, earnings have been strong. They've been a great foundation for stocks, and it's why stocks have, bled higher so far this year. Although there are some risks to the economy in that story. You guys mentioned the oil data in your last segment. Keep in mind that a lot of the world has been using oil that was previously out of the Gulf. It was on boats. It was getting into refineries. It was going to its ultimate location and being used by consumers. That's no longer happening. You cite the decline in the Strategic Petroleum Reserve. And where's the new oil going to come from? And if you do have some sort of an energy shock that turns into a real supply-demand problem, then recession potentially could be down the road as well. So yes, things look good. It seems like it could be the calm before the storm, and obviously the data, is ongoing on a headline risk. And so as long as the headlines are good and we don't get into a protracted situation that's bad economically globally, I would expect corporate earnings to continue at some level.
Michael, how do you think about U.S. versus non-U.S. exposure here?
Well, the U.S. is a little bit more insulated because we've got a strong domestic production program. However, as you mentioned, we're exporting a lot of it too. So I don't think anybody wins in an energy supply-demand mismatch globally. I think it probably affects everybody at some level economically. And the quicker we can globally get back to business, the better it is for everybody. And if not, there are going to be lingering and maybe gradually increasing negative effects of all this that could weigh on economic growth and corporate earnings.
Michael, what do you make of the bond sell-off that we got? It began really picking up last Friday, and it continued into the early part of this week. We're seeing a little bit of relief today, some dip buying emerging. But what is the message the bond market is sending, and who is it sending it to?
Well, there's another risk factor and another potential risk factor for corporate earnings, right? The expectation has been bond yields that hit their highs, whoever the new Fed chair, they're going to cut rates again. Although I think it's sunk into the market that higher for longer probably is here to stay. And not only that, but with market rates moving the way they have recently with the volatility and the upward surge, you could have higher rates and upward volatility. And that increases cost of capital. That's not good for corporate earnings. It's not good for consumers. Layer into that equation the ongoing accumulated budget deficit, not only in the United States, but in many industrialized countries. That puts pressure on rates and borrowing. And then you've got whatever ultimately occurs out of private credit and its impact in the public markets or whatever. There's been so much noise on that, but very little in terms of real damage yet, and there may not be. But all those factors are risky in fixed income, and that in itself is a risk to corporate profits and economic growth, and something that bears watching.
So real quick, Michael here, precious metals, we had gold up around 5,000. It's now pulled back to around 4,500. How do you think about that?
I think in the long term, gold's going up. And I think the factors are a couple of things we just mentioned. Inflation, again, latest inflation numbers have not been great either. We're nowhere near the Fed's 2% target. And globally, inflation is sticky as well. You layer that into the demand for the metal, investors, consumers, central bank buying, alternative currency, market share dings to the US dollar globally, potentially. And I think that makes a very strong long-term case for gold. No question it's sold off in the short term here. Gold's a volatile asset. It's not surprising that it did that. And I think recently, gold in the short term in crisis tends to sell off because it's liquid. And I think investors, when they're looking for liquidity, it's an easy thing to get using gold. And so you tend to see some sort of a short-term decline. And then it regains its footing on the longer macro cyclical story when more data becomes known. And so I think it's behaving very, very normal here. Yep. And maybe even more so in light of the fact that the interest rate volatility, the potential for maybe a rate increase versus a rate cut, potentially no more cuts, a new Fed chair. I think it's behaving pretty strongly. It's a trading range right now, no question. But long term, we're bullish, and we believe it's going to go much higher from here.
All right, good stuff. Michael Cugino, President and Portfolio Manager at Permanent Portfolio Family of Funds, joining us on the markets. And speaking of the markets, a big one is reporting today. And I say that because NVIDIA is a single company, but we've crunched the numbers. And in terms of market value, NVIDIA is worth more than the benchmark indexes of Germany and France combined.
Oh.
Yeah, exactly.
Wow.
Exactly. NVIDIA is also reporting earnings after the close today. So for that, let's bring in Kunjan Sobhani. He is our senior semiconductor analyst to preview the results. What is the message that Jensen Huang wants to deliver here? Because he's spoken not so long ago, and people have a pretty good sense that, demand for its AI chips is pretty much, feels like it's kind of bottomless.
Yeah, it is. I mean, look, the beat and raise is now table stakes. I don't think a regular cadence of that is going to have a lot of impact on sentiment. I mean, if they are able to clear a 90 billion hurdle for the next quarter, that should make the buy side bulls really happy. But again, not enough to move the needle in a very overcrowded long. Like when we look at the buy side exposure, they're significantly overcrowded in terms of semis, including Nvidia. I think what investors are really looking for a reassurance that the Rubin ramp is still intact. There has been some noise around supply chain issues or liquid cooling issues. So we want to hear from him saying none of that exists, that it's just rumors, and that the outlook for that $1 trillion massive safety net debt he has mentioned remains intact and in fact is even growing.
I know, Kujan, you and other analysts on Wall Street have lowered or have kind of adjusted your revenue estimates to exclude China completely. What do you expect to hear from Jensen Huang about China going forward?
Nothing significantly new at this point. We don't expect them to show any China numbers in the anytime in the near term. At least the comments we heard from his trip to China with President Trump seemed positive, but there was no timing given. There was no official announcement that we have heard. So that puts us again to the sidelines, like we don't expect anything to happen sort of this year.
In terms of stocks that will be most vulnerable to whatever NVIDIA says, which names would you look to?
Well, the other AI, they are the bellwether when it comes to the demand signals. So other AI names like Broadcom, Marvell, AMD, ARM, Intel to some extent should be a group that gets impacted based on what they say.
What is the competitive landscape right now, Kujan, for NVIDIA?
Yeah, their competition keeps on rising, especially from the ASICs. Two of the biggest, its customers, Google and Amazon, have now a very mature and sophisticated ASIC solution, which means they have their own sort of GPU equivalent chips that they are not just using for themselves, but now are selling to external companies, which could have been customers or are customers for NVIDIA. So this is where the competition is rising. But again, most of the investor community understands this, and the risks are sort of also priced in, and that's why you see this significantly low multiple.
Yeah, that's a good point. I think back to Google and Blackstone creating this AI cloud firm using Google's tensor processing units, which not only are they making their chips, but they're also selling it to ventures that they invest in.
Yeah, exactly.
Circular financing.
And for folks that are going to be paying attention to the NVIDIA earnings after the close here, use the MODL function on the Bloomberg terminal. It breaks out forecasted revenue by Wall Street, and it gives you a good sense to kind of benchmark kind of how the actual results come out. Kunjan Sobhani, Senior Analyst Semiconductors for Bloomberg Intelligence, joining us from San Francisco. There, again, you type in the NVIDIA ticker, equity, and then MODL, and you adjust it for quarters, pop in there Q3, and it gives you kind of what the street's looking for in the range from the high to the low on all the key data items on the income statement and balance sheet.
If you look at the analyst recommendations on NVIDIA, it's laughable. 76 buys, 3 holds, and 1 sell.
And we had the 1 sell on that analyst on this morning. On
Jay Goldberg of Seaport.
Yep. So he likes the company, not the stock right here.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So the S&P 500 breaking the three-day losing streak, and you have chip makers jumping right now with NVIDIA's sales. They're estimated to have grown at the fastest clip in more than a year. Of course, we're going to learn all about it after the close of regular trading this afternoon. Target hitting the bullseye in the most recent earnings, but they're also warning of challenges ahead. So shares, they were higher earlier. They've turned around after company executives warned of more cost cuts or cost challenges ahead. Target down 4.2% right now. Cautious shoppers on the hunt for deals. As a result, the discount retailer behind TJ Maxx, Marshall's, Home Goods, raising the sales growth expectations for the year. TJX, those shares 6% higher right now. You know, with higher energy prices and higher bond yields, David Kelly at JP Morgan Asset Management, he says the Fed right now is on hold.
What I don't believe is I do not believe this Federal Reserve is going to raise rates. I think it's kind of interesting. The new Fed chair is going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards.
Right now, the S&P 500 up 64 points, 74.18 on the index. The Dow up 462 points. The Nasdaq Composite Index 320 points higher. A Brent crude down 5%, 105.67. The 10-year yield 9 basis points lower right now, still about 4.57. The long bond down 7 basis points. That's at 5.10. Oh no, it's the end of an era.
Go, we're ready.
I'm crying in my beer. Schlitz beer.
I know.
They've been brewed in Milwaukee since 1849.
Are they in cans or jars?
Doesn't really matter.
All right, here's my Schlitz memory. This is how far back it goes. You pulled the tab off. It wasn't even a pop top. Remember going back that long?
Yeah.
Dude, that was my Schlitz memory.
And then if you were cool, you'd put the tab in the can and then drink the can. But anyway, yeah, going away. Owner Pabst Blue Ribbon says you'll see the final 80-barrel batch get brewed this Saturday. I'd like a piece of that. The old man used to drink it. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett, cheers.
All right, cheers. Thank you so much, John Tucker. Cheers to those deal makers in the energy space as well, because there's a big energy deal that we got to talk about here.
I could get paid being an energy banker. There's so much stuff going on.
Yeah, there's a ton. I mean, there's a ton of demand for energy, and we know where it's all going towards. It's all going to power all the AI. Let's talk about NextEra and Dominion. A massive deal. The only question is whether regulators will go through with it. I mean, among others, but that seems to be the primary one. Kevin Phillips is managing partner at PEI Global Partners, and he joins us now. He's got a background in deal making, having worked in Jefferies and at Credit Suisse as well. So thank you for joining us in studio today.
Thank you, Scarlett.
So tell us what you think about this NextEra Dominion deal. It's a huge one, and of course, it's right there, and it has to do with data centers and the need for energy right now.
Absolutely, it's an enormous deal, not just for power and utilities, but really for any space. It's a $400 billion combined enterprise value. I think, and what it means for us is you have two major reasons. I think NextEra thinks this makes sense for them. They can capitalize on the growth coming from AI and data centers, both on the regulated side, but also maybe a little less obviously on the non-regulated side, because from a capital standpoint, it frees up NextEra from a balance sheet perspective and a flexibility perspective to invest more into non-regulated power, even outside of, say, Virginia and Florida and all these service territories. And that's where our business really is focused on the non-regulated side. And so NextEra is a huge player in investing in non-regulated as well as regulated, and we're looking forward to seeing them being, having more capital available to invest in the non-regulated side in our space, supporting power developers.
So all people, like just lay people like Scarlett and I, we hear about on the AI thing is one of the gating issues is your business, is the power business. How do you guys, can we solve for that problem? Because it sounds like the demand for power is maybe more than we have on the grid right now.
Yeah, Paul, absolutely. It's a huge question. I think, can we solve for it? It's not immediately. There are massive bottlenecks to getting new generation onto the grid, and the bottlenecks go anywhere from interconnection queue, trying to actually bring power plants onto the grid to be able to sell their megawatts, and all the way to the supply chain for power, where are the new gas turbines coming from? Where are transformers coming from? If you're on the wait list for a new gas turbine, it could be 2030s and beyond right now. So there's huge demand, as you guys are pointing out, from hyperscalers, from AI, and meeting that anytime soon in the amount of that demand is it's not going to happen. It's just going to take time to get the grid to where it needs to be.
Paul always talks about how we should not just be renewables versus old school energy, right? Fossil fuel. We should be everything. So what kind of role do renewables play in all of this? I mean, I know that we just talked about how none of this is going to happen immediately, and renewables will take time, especially because we have an administration that doesn't really favor green energy right now.
Look, I think I agree with Paul. I think it needs to be all the above. I mean, that's our business, whether it's renewables or new thermal. I think we need all of it to meet the enormous demand that's coming. On the renewable side, look, yes, I mean, we hear about headwinds from from the administration with respect to renewables, no question about it. But there are two sides of that coin. For every offshore wind issue with the administration that you're hearing about, last week, Fervo went public. I think market cap's above 10 billion today. That's a geothermal developer who's coming up with new technologies for drilling geothermal. So the Trump administration is actually very supportive of Fervo geothermal. So it's not always easy to discern exactly where the policy winds are going to go, but it's not all of one or the other with respect to renewables.
So where are we? What's the new technology? I guess for you, as I look at this big deal that we were just talking about, the Next Era and Dominion, are we going to see more M&A in your space, do you think?
I think absolutely. I mean, this is a particularly brilliant deal for NextEra because of the reasons I mentioned, where they can have this additional flexibility from their balance sheet to be able to invest in non-reg, but also because they're capturing the regulated growth and probably the most, the service territory that's most levered to the AI, hyperscaler thesis. But are we going to see more? I think so. I think especially on the non-reg side, I think you've got, just a tremendous amount of capital that needs to be deployed, and so anything that you can do from an M&A perspective that improves the balance sheet flexibility is I think welcome, and I think others are going to catch on that maybe buying even another big utility could make sense sometime soon.
Okay, so are regulators going to let this happen then? I mean, what would be the main objection?
Well, it's a great question. Look, I think the regulators are rightly focused on, does M&A have a negative impact on prices for consumers? Like, what does this mean for consumers? And I'm not a regulator. It's hard for me to, suss out exactly how the regulators are going to treat this, but I think it's important to keep in mind that, as you're, thinking about how the regulators are going to treat it, if you're able to get more gen on the grid, if we have more financial flexibility, if NextEra is able to invest more into power long term, that's what, that additional supply coming online to meet this demand is what's going to make power affordable again. So if you start to constrain M&A or constrain financial flexibility, I kind of worry we get into this, potentially unpleasant situation where, the supply is not there and consumers are even worse off.
Kevin, thanks so much for joining us. Really appreciate it. Kevin Phillips, managing partner at PEI Global Partners, joining us live here in our Bloomberg Interactive Broker Studio, talking energy. Again, we had that big M&A trade just in the last few days. NextEra, Dominion, monster deal there. Maybe we've got some more coming up in the future. And just looking at energy right here, we're going to pull back finally a little bit in the oil prices here. We got 5% pullback in WTI crude oil, just under $99 a barrel, and about 5% on Brent, around 105.
Yeah, you look at that Dominion NextEra deal, that is the second biggest of the year, right behind SpaceX and XAI.
Interesting. Okay. All right. I'm waiting for the SpaceX this one drop today, baby.
It's supposed to happen at some point today.
I know. It's going to, right when I leave at 12:01. It's going to hit, so I'm with it tomorrow. S&P up 72 points. That's 1%. They got the NASDAQ up 1.4%. The Tom Keene VIX now below 18. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, it is Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. We're waiting for a couple things today. NVIDIA earnings after the close, and we're also waiting for the prospectus, the S1, to come down for SpaceX, reported widely to be sometime today, but that's kind of what we're looking for. Those are two big movers for this market. Anthony Hughes, Equity Capital Markets reporter, he's waiting on that S1 as well. He's at Bloomberg News joining us here in studio. Anthony, when do you expect to get that S1? Is it going to be today, do you think, later in the day? Because a lot of people are really waiting on this and refreshing their computers all the time.
Well, Paul, I think there's a very high expectation that's coming today from various sources. And exactly when is not clear, but I think we sort of established yesterday that it was going to come in the afternoon, and I think some people think it's going to come post 4 o'clock. And if you look at the history of IPO filings, that they often come late in the day. This could be different because it's Elon Musk and anything can happen. I mean, you also have to always put on the caveat that things could change and this could get delayed a little bit because the timetable does seem to have been accelerated in the last week or two. So, which for reasons which are supposedly linked to faster SEC review, but I think also you could perhaps SpaceX also wants to get it going as quickly as possible because it helps with things like index inclusion, which will assist in the aftermarket trading of this stock.
Bloomberg News out with some reporting. Bailey Lipschultz from Bloomberg News. Goldman Sachs has the leading role on the deal. Morgan Stanley also very prominent role with some of the other big banks. Is it any surprise there? Anything to read into the Goldman thing?
Yes, I thought you might ask that. I think, funnily enough, the prediction markets over the last few days really strongly went in the favour of Goldman Sachs, and I think so in that sense it wasn't a surprise. But I think a lot of people were thinking Morgan Stanley would get the job, and I think that's because Morgan Stanley had a close relationship with Elon Musk during the Twitter X transaction, if you remember. But if you really have a longer memory, and you look at Tesla's financing, equity finances, convertible bond finances since Tesla went public in 2010, Goldman Sachs led most of those. Okay. So Goldman Sachs has a very established relationship with Musk and his companies. So it's not a total surprise. I think the other thing is that some of the headlines will say this is Goldman leading the deal. I think they obviously are lead left per our reporting or per the reporting, but does that mean they're leading the IPO? I mean, that's a bit of a loaded word. Right. I think Morgan Stanley is playing a heavy role in the IPO as well. So it's possible that the first among equals, or that top 5 layer of banks are having significant roles in this IPO and may earn the same fees in any case. But that you do need a quarterback, and it may be that Goldman and Morgan Stanley are kind of playing that quarterback role.
In some of the firms I worked at in this IPO stuff, we would trade away the lead left position to get the manager role, which means we could open the trading and trade the stock on the first day and really have, because that would give us, we thought we could make more economics many times, particularly if we thought it was going to be volatile. And it would just give my trader the ability to be the axe in the stock for 3 months, 6 months, and if he or she did a really good job, maybe forever. It's one of those things that can pay off over time. So is the expectation here that this is going to be an easy sell because it's Elon and it's space and it's cool, or is it going to be a tough sell because I don't know if these guys are making any money and you want me to give this monster valuation and all the size and everything?
Well, it's a big question, and I think as we sit here today, I think people I'm talking to almost have a feeling of certainty this is going to go off very well. And I think one thing you won't see today is you won't see the valuation and the price range. So when people say this is going to go really well, I mean, you have to put the caveat that you want to see the valuation first and actually decide whether you think it's cheap or expensive, like any IPO. But I think the reality is that there's a lot of demand that's already lined up for this IPO, and we're going to see institutional demand, and this is going to be a very big stock, obviously one of the biggest companies in the world, so everyone is kind of going to have to be there, and that should ensure it's going to be very strongly subscribed and trade well initially. I think the other thing that's happening here is I think the bankers, from the impressions that I get, are going to do a lot of specific thinking about how this trades in the aftermarket, and I think through things like a lock-up arrangement that is very carefully managed to have to be very staggered through that first 6 months, and you've got index, and that will be coordinated with index inclusion, and that could allow SpaceX to have maybe avoid this situation which you've seen on many IPOs where they go really well out of the gates and maybe for the first few weeks even, and then they really pull back hard. And I think with so much money and prestige and reputation at stake, there's a lot of thinking about this, which is a lot of hard thinking amongst the banks about this. So I think that's a little bit of another story of this with this IPO.
Well, I guess some good news for them is that the Cerebus IPO was extraordinarily successful, priced at $185, traded as high as $330. It's holding on at $292 here. So that one's traded well, made money for investors. So maybe that'll be a good omen for SpaceX. So we'll hopefully look for that sometime today. Anthony Hughes, thanks so much for joining us. Anthony Hughes, equity capital markets reporter. I think he's going to have a very busy remainder of 2026. You got SpaceX, maybe even got some of the AI trades like Anthropic and OpenAI. They may tap the public equity markets. Who knows? For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Markets are moving higher today. S&P 500 is up 66 points, 0.9%. The NASDAQ's up 330 points. That's 1.3%. And the Russell doing even better. Russell 2000, the small cap, is up 2.3% here today. WTI crude oil off almost $5, just about 99.
From ABC News, I'm Chuck Sievertson. The Justice Department is expected to announce charges against Raul Castro, say sources familiar with the matter to ABC News. Charges are expected to include murder for the shoot-down of 2 planes carrying humanitarian aid to desperate migrants in the 1990s that killed 3 American pilots. Congresswoman Maria Salazar, Florida Republican, is in favor of regime change.
Cuba is the epicenter of evil in this hemisphere. President Trump has set this agenda, the America First agenda. Well, Cuba falls right into it, because when it comes to the island, that is perfectly within the plan.
2 police officers who defended the Capitol in the January 6, 2021 attack by Trump supporters are suing to stop the creation of the Trump $1.7 billion fund to compensate people who claim they were victimized by the federal government, potentially including rioters from that day. ABC's Peter Harlambous.
Former Capitol Police Officer Harry Dunn and Metropolitan Police Department Officer Daniel Hodges alleged the compensation fund would not only encourage those who committed violence in the name of President Trump, but also directly finance their operations, calling it, quote, the most brazen act of presidential corruption this century.
Republican Congressman Thomas Massey of Kentucky conceded to his primary opponent, ABC's Jay O'Brien.
This is significant because it's the latest in a string of successful primary challenges we've seen President Trump mount against Republicans he perceives as disloyal. Those state lawmakers in Indiana. He ousted sitting Republican Senator Bill Cassidy with a Republican primary challenger, a Trump-backed challenger not long ago. And now, of course, Thomas Massey.
1 week before a runoff in Texas, President Trump endorsed State Attorney General Ken Paxton over Republican Senator John Cornyn, who says he's still running for re-election. Sources tell ABC News that former Massachusetts Democratic Congressman Barney Frank has died. You're listening to ABC News. Americans are taking to the skies and hitting the road today, the start of the Memorial Day holiday travel weekend. ABC's Alex Perez in Chicago.
Wherever you are, the worst times to get on the road this holiday weekend will be Thursday from noon to 9 p.m., Friday from 11 a.m. to 8 p.m., Saturday from noon to 5. Now, for the return trip home, experts say Sunday will be the day with the least amount of traffic, but Monday will be busy with the worst traffic expected between noon and 5 p.m. The best advice if you're traveling on Monday, leave in those early morning hours.
Despite higher gasoline prices, the majority of people, or about 39 million people, will be traveling this holiday weekend on the road. It's the end of an era for foodies in Las Vegas. ABC's Hannah Battah.
The Heart Attack Grill, known for its indulgent menu, offered for free to those weighing more than 350 pounds, has announced it will close. The restaurant became world famous for its massive portions, hospital gown dress code, and spankings for customers unable to finish their food. The restaurant jokingly saying, "We're proud of our 21-year impact on America's waistline."
Las Vegas has recently seen a significant downturn in tourism. The restaurant's owner says he intends to relocate the Heart Attack Grill outside the city. Consumer demand leading to a change for Jell-O. It will now introduce Jell-O made with fruit juice and 25% less sugar. Chuck Sievertson, ABC News.
Live from Atlanta, Georgia, this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump leaves his mark on the midterms. Welcome to a special edition of Balance of Power. We're live from Georgia this day after primary elections in 6 states, including this one. I'm Joe Matthew alongside Kaylee Lyons. As I mentioned, Kaylee, the president brought down another member of his own party yesterday in Kentucky in what was the most expensive House primary in history.
Yeah, more than $30 million spent to oust Republican Congressman Tom Massey. Ed Gelrein was indeed the victor in that race, and therefore it was another victory for President Trump, who wanted to see this outcome. Whether or not it was a wise use of resources, I guess that's a question we'll have to pose to our guests this hour, knowing, of course, that plenty of resources were also spent here in Georgia in a crowded Republican primary for Senate, where the president did not make an endorsement, and it indeed is going to a runoff between Mike Collins and Derek Dooley.
The inverse scenario, I guess, here. Without a Trump endorsement, you don't get a conclusive result, although there is a Democratic nominee for governor. We're going to run through all of these races coming up, including the Trump effect. Remember, this follows the dispatching of Bill Cassidy, state lawmakers in Indiana, and I could keep going. We'll talk to Nancy Cook in Washington about the Retribution Tour.
Yeah, the Retribution Tour, and it, I guess, isn't necessarily over, although I think these are all of the pins that the president wanted to knock down for now. But we'll get into all of that with Nancy. We also, of course, have to continue to keep tabs on the market and equity markets that are eagerly awaiting NVIDIA's earnings after the bell today. So let's take a look at where we're trading in advance of those results as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, NVIDIA shares pushing higher right now, up by 2.1%. A lot of cross currents here. We've got crude oil. You guys been looking at that, trading below $100 a barrel. WTI right now, 98.66. It is down by 5.3%. Long-term yields down from the highest since 2007 right now. The 30-year, 5.11%. Bottom line here, we got that slide in oil prices. That is helping lift equities. We're holding close to session highs right now. Midday, we've got the S&P up 69, up by about 0.9%. Dow Industrials now ripping higher by 513 points. That is a gain of 1%. NASDAQ up 347 on the composite index, up 1.3%. The NASDAQ 100 index up by 1.4%. And our Mag 7 index, of which NVIDIA is a part, up now by 1%. Again, NVIDIA after the bell today, higher now by 2.1%. 10-year 4.57% with the 2-year 4.04%. The 30-year 5.11%. Spot gold up 1.2%, 45.34 the ounce. West Texas Intermediate crude, we mentioned, with a $98 handle now, below $100, down 5.4%. Barrel of Brent, the global benchmark, 105.11. Brent crude down now by 5.5%. Joe called it the Trump effect. Wall Street certainly taking note of last night's defeat of Thomas Massey in a congressional primary in northern Kentucky. The victory comes despite national surveys showing the broader electorate souring on the president's handling of issues. Monica Guerra is head of policy and geopolitical strategy at Morgan Stanley, and she was a guest this morning on Surveillance.
It doesn't change my expectation that the Democrats are likely to take the House. What's interesting about it to me isn't that Trump's candidate won, it's how he won, and that they had to put $33 million into that primary. That is notable because that means you don't spend that money unless it's competitive.
Morgan Stanley's Monica Guerra interviewed this morning on Surveillance. Keeping an eye on Target shares after earnings, down now by 4.1%. TJX, parent of TJ Maxx and Home Goods discounters, they are surging now by 6%. Also out with earnings, we heard from Lowe's. Lowe's shares, little change right now, up by about 0.1%. Home Depot, it reported yesterday, up now by 1.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Atlanta. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Joe and I are indeed in Atlanta, or Hotlanta, which is certainly living up to its name today. But we are still here in the aftermath of yesterday's primaries, which, of course, didn't result in definitive outcomes in all cases. There are two races that will be going to a runoff scheduled for mid-June. The Republican Senate primary, it is not yet decided who ultimately will be facing off against the incumbent Democrat Jon Ossoff. And then the gubernatorial race on the Republican side also heading to a runoff between Burt Jones and Rick Jackson. Knowing, of course, that while President Trump did make an endorsement in that gubernatorial race, he did not do so in the Senate, which raises the question of whether or not the president could have been the one that avoided this getting to a runoff, knowing that there were plenty of races where President Trump was willing to make his voice heard, and Kentucky was a big one, northern Kentucky, that is.
The lack of a presidential endorsement and the fact that Brian Kemp chose not to run. made this a bigger field, and I guess one that was not able to be decisive last evening here. So John Ossoff essentially gets another month to cruise and not spend as much money, just focus on his own campaign while Republicans figure out who will run against him. Keisha Lance Bottoms, I guess, will have the same luxury in the gubernatorial contest.
Yeah, but she was indeed the victor in the Democratic primary. So that will be races that we are, of course, watching, knowing Keisha Lance Bottoms was able to secure the endorsements of the likes of former President Biden, his very first endorsement,
Early
in
on.
fact, after leaving the presidency.
So we want to get into all of this, not just here in Georgia, but what happened last evening in Kentucky. Remarkable. The most expensive U.S. House primary in American history, and it did not end well for Tom Massey, knowing that some $32 million was spent in this race, Kaylee. It wasn't just the presidential effort to dispatch him. It was an enormous amount of pro-Israel money, AIPAC. We heard from him repeatedly that Miriam Adelson had put so much money into the race that she couldn't pay for the ballroom any longer. And we want to get a better sense of what the president's making these decisions based on, which race to weigh in on, what the actual aftermath is, and how this helps Republicans maintain majorities in Washington. Nancy Cook is our Trump whisperer and joins us live from our Washington bureau. Bloomberg News senior national political correspondent who spent quite a bit of time in Kentucky ahead of this race. Nancy, now that we know how it ended, what does this tell us about the president's grip on the party?
Well, I think that it tells us that Trump still has an incredibly strong grip over the MAGA base. And we saw that in Louisiana, as you said, we saw that in Indiana, where his White House really waded into state legislative races, which was remarkable. And also we saw that in Kentucky. You know, the White House really made a big push to unseat people who had defied Trump on a range of issues, either on redistricting or on, Senate confirmations, or Massey, who kept defying the president on his support for the war in Iran, or the tax bill, or the release of the Epstein files. And so these elections, this was basically a Trump revenge tour. And the purpose was to show that Trump is not a lame duck, even though he's not running for president again. He still has a lot of political power with his base. And I think that that's the message that the Trump people wanted to send, and they sent it. And we saw, several of Trump's top political advisors crowing about this on social media last night, posting a lot of messages that were full of bravado, a lot of memes. They seem quite like they're riding really high at this point.
Well, and on the notion of the president's control of the base of the party, Nancy, it's one thing to be able to exert that in the primary, but how does that carry on as we advance toward the general and the actual vote in November?
Well, that's really the problem facing the Republicans. There was some new polling that came out from the New York Times and Siena that just showed how underwater Republicans are with independent voters. They don't like Trump's handling of the economy. They don't like the cost of living issues. They're worried about the war in Iran. And part of the reason that Trump was successful in 2024 was because he took that MAGA base of voters and expanded it. And that, he reached out to young men, Hispanics, black men, health-conscious voters who liked his whole MAHA agenda. And a lot of those people have swung back towards Democrats or just back to being independents. The Trump coalition that helped him win in 2024 is no longer intact. And so my question for November is, how are Republicans going to make up that ground? Because you cannot win general elections just with that MAGA base. You have to add to it. And that's really where their challenge lies.
Case in point, Texas, Nancy. I'd love your thoughts on the president's decision yesterday to, at the very last minute, weigh in on the runoff for Senate in Texas. He went with Ken Paxton, the MAGA candidate, if you will, the attorney general, over a long-time establishment senator, the incumbent John Cornyn, who just not that long ago, a couple of years ago, was considered a prime candidate to be a majority leader in the Senate. The conventional wisdom in Washington is that makes it a lot easier for Democrats to flip that seat. What do you think?
I think it does make it easier, and it also means, Kaylee was talking a lot about how much these races cost. It also means that Republicans are going to have to spend a ton of money on the Paxton race. Paxton campaign does not have a lot of money right now, and so the Republican Senate operation is going to have to pour, as much as $150 million, maybe more, into that race just to try to keep Paxton, viable. I do think that Democrats have not elected a member to the Senate in many, many years. It's sort of a white whale for Democrats. So I do think it is a long shot that James Tallarico gets elected. However, as there's been this intra-Republican warfare between Ken Paxton and John Cornyn, James Tallarico, the Democratic candidate, has had time to raise money. Last week, he was campaigning with President Obama. He has about $27 million on hand. He's just had time to give speeches, meet voters, unveil policy proposals, and that's a huge advantage to him.
Well, and when we consider the implications for the president's agenda, Nancy, obviously whoever ends up in control of both chambers after the vote in November is going to influence things in the final 2 years of Trump's term. But what about his agenda in the meantime? We saw Senator Bill Cassidy, who was successfully primaried by and now is going to be ousted from his seat because he couldn't even make the runoff by a Trump-backed challenger. He wanted Cassidy out. Cassidy voted against him yesterday in a War Powers procedural vote in the Senate. I wonder if we might be able to add John Cornyn to that list as well, and if all of this is going to make it harder for the president to get things done that he wants done on Capitol Hill.
I think that's a great point, Kaylee. I mean, by unseating these actually very conservative, Republicans, John Cornyn is, we don't know what will happen there, but John Cornyn is a reliable conservative voter for Trump. So is Bill Cassidy in Louisiana. By sort of working against these people, what Trump is essentially doing in the Senate is creating more potential critics. And we saw that with Tom Tillis, who is a Republican senator who Trump has really gone after. Tom Tillis is now a thorn in the side of the White House. He held up for a while Kevin Warsh's nomination to the Fed, which Trump really wanted. He critiques Trump. I think that we will see, this will encourage senators who aren't running again or who have lost their primaries to really stand up for things like, should they have the power, should they be able to vote for support of a war in Iran? It's just going to create more Trump critics in the Senate and in Congress. And this is at a moment when I would say the relationship between the White House and Capitol Hill is already a little bit tenuous. Capitol Hill, I think, is starting to bristle at the amount of control that the White House wants to have over it. And I think we'll just see a further, breakage of that relationship.
All right. Nancy Cook covering all things politics for us here at Bloomberg. Thank you so much, as always. And when we consider that list of where we might be seeing breaking points between the White House and Capitol Hill, you could add funding for the ballroom to that. We could actually know what the fate of that is going to be in the Senate within the next day or two as they start procedural votes and moving forward on the reconciliation.
It's going to be a doozy of a vote-a-rama just on those two issues alone as Democrats try to pin down Republicans on some issues that they might not want to be weighing in on right now. And we'll talk about that a bit more with an update on Iran. Nick Wadham's going to join us from our national security team straight ahead here on
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. S&P right now holding close to session highs, but the big story, the sell-off in crude today. WTI under $100 a barrel, down now by 4.7%. We have got West Texas Intermediate crude 99.29 a barrel. Right now, Brent, the global benchmark, 105.77 barrel of Brent right now, down by 5%. S&P 500 index 74.09, up 55. That is a gain of 0.7%. A slide in oil and hopes for a deal, lifting stocks and bonds. Right now, we have got the Dow up 489, up by 1%. NASDAQ up 286, up by 1.1%. The Russell 2000 index up by 2.1%. And the Bloomberg Mag 7 index up by 0.8%. NVIDIA, of course, a part of that Mag 7 index. NVIDIA reports after the close of trading today, up now by 1.6%. The 10-year, 4.58%, with the 2-year, 4.05%. The 30-year, 5.11%. Gold up $44 the ounce, 45.26, up by 1%. And West Texas Intermediate crude again, 99.33 a barrel, down by 4.6%. Intuit is cutting about 17% of its staff, roughly 3,000 workers. That according to Reuters, citing an internal company memo. Intuit will be reporting today after the close of trading. And Meta Platforms is alerting thousands of employees that they are being laid off, part of a previously announced restructuring aimed at reducing costs as the company invests heavily in artificial intelligence. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Atlanta. Hotlanta's Balance of Power continues. And once again, your hosts, Joe Matthew and Kaylee Lyons.
Yeah, I'm not looking at the temperature today here in Atlanta.
Yeah, it's hot. Hotlanta is hot today. Something else that's hot, a hot headline did just cross the Bloomberg terminal. I do want to mention, this is reporting from the Wall Street Journal. OpenAI preparing to file for an IPO in the coming days or weeks. Wow. Their headline says very soon. They are citing people familiar with the matter. Apparently Goldman and Morgan Stanley have been helping them draft their prospectus to file confidentially. But again, the Wall Street Journal now reporting that IPO from OpenAI could be coming in the coming days or weeks. Of course, AI is going to be a big focus of conversation later this afternoon as well, when NVIDIA reports after the bell. And we'll see what kind of demand the chip maker is facing. But that's just one of many stories that we are following from here in Georgia.
Big day for Goldman Sachs, too, leading the SpaceX IPO that we also are waiting for paper on, and we haven't even brought up Anthropic yet. The matter of new issues is going to be looming large as we work our way into the second half of the year, and curious to see where all of the funding for these new deals comes from and what it will mean for, of course, adjacent stocks in the space. We're live in Georgia for a reason, picking up the pieces here following primary night. We've got a lot of races that we're going to pick through, not only here in Georgia, but the other 5 states that were voting yesterday when we assemble our political panel. Coming up ahead, we have a special Peachtree panel for you here today in Georgia. We also need to acknowledge news from overseas with a new warning coming from Iran, Kaylee, a warning that it would retaliate beyond the Middle East if the U.S. or Israel attacks it again. And that is the very thing that the president's considering now.
Yeah, and the president seems to be leaving his options open. He actually right now is giving the commencement address at the Coast Guard Academy in Connecticut, and he talked about Iran. He said, and this is a direct quote, "The only question is, do we go in and finish it up, or are they going to be signing a document? Let's see what happens." Wow. The idea here being maybe binary outcome. Either there is a deal that is inked, or the U.S. military goes back in.
I want to compare notes with Nick Wadhams while we have the opportunity. Nick joins us now with our live view. If you're with us on YouTube of the president speaking at the Coast Guard Academy, Nick Wadhams runs our national security coverage from Washington. And do we have a sense here, Nick, how the administration might be interpreting this latest warning?
Well, I think what you're seeing here basically is a war of words where both sides are essentially looking to force the other to back down. I mean, you know, it's just very stark to me when the president says we're going to go in there and finish the job. I mean, that's what they said they did in the first 2 months or so of these strikes that began February 8th. It's also what they said they did last year when they attacked Iran's nuclear program. And even U.S. intelligence assessments are saying that Iran does retain some missile launching capabilities and obviously has not capitulated. So, you know, the question for me is when President Trump says they're going to finish the job, is that something the U.S. military is even really capable of doing, short of a massive, even greater escalation, possibly involving boots on the ground, which the president, I don't think, really wants to do. And then on the other side, you have Iran obviously saying, okay, they're going to hit targets beyond the Middle East, which would be obviously an attempt to increase leverage and disrupt markets and put even more pain points on the U.S. to force the president to back down.
Well, how wide is that radius, Nick, that Iran realistically could target if they were looking to widen this? We remember earlier on in this conflict when they sent a missile that almost reached Diego Garcia. It was far beyond the capabilities we understood Iran to have. Is that the limit? Do we really firmly know?
Well, you know, I mean, the full extent of Iran's missile capabilities are not precisely known, but obviously that Diego Garcia hit, I mean, thousands of miles away, that was a real wake-up call. You know, it doesn't look like Iran has the capability to hit the United States, but certainly targets well beyond the Middle East, potentially in Europe, are certainly within range. I mean, obviously, there's a risk there for Iran, too. If you start to hit those targets, then you pull in even more countries that have been sort of keeping their distance from the United States or have been wary about entering into this or backing the United States or contributing any form of military assets. So there's a big risk there for Iran. But, you know, I think what you're really seeing here is both sides essentially just trying to up the stakes and give a sense for what the potential consequences could be, even if ill-defined, to try to get an off ramp.
So we're in the final stages, according to the president, but he's also prepared to deliver another big hit, as he says, if there's no deal soon. Should we assume that big hit would at last target civilian infrastructure, albeit shared with military? He's talked many times about power plants and desalination plants. Is that a big hit?
Right. I mean, so this is the big question we're all trying to figure out. What are the targets that the president could strike that go beyond or exert even greater pressure on Iran beyond what he's hit before? And there you do start to drift into potential targets that are of legal, questionable, legal justification that could potentially be a war crime. I mean, if you really start to go after civilian infrastructure. But obviously, a lot of the speculation is around the energy infrastructure to really choke off Iran's ability to get any revenue at all and try to bring it to its knees that way. So, yes, very much looking at the possibility that he would start to hit energy infrastructure. Downside there, of course, for the president is that would cause markets to go even more haywire, and there would be even more political blowback if you started to see extensive, high number of civilian deaths.
And Nick, finally, as we consider the prospect of a return to kinetic action in the Middle East, many are also wondering if we're going to see kinetic activity when it comes to Cuba. Reuters is now reporting that Raul Castro has indeed been indicted. Of course, the brother of Fidel Castro, in many ways still a de facto ruler in Cuba. This is tied to the shooting down of aircraft in the 1990s. Obviously, this is something perhaps decades in the making. But we saw when Nicolas Maduro was indicted, the U.S. went in and got him to face that indictment. Is that likely to happen in this instance?
I mean, that's sort of what we're seeing the game plan. I mean, I think that's partly what the administration is doing to very much create that impression. Of course, Raul Castro is more than 90 years old, so is the United States going to go in and do a raid and take a 94-year-old ex-leader out of the country? But it does look like a similar playbook. I think what you're seeing here again is that effort to really ramp up pressure to force Cuba to capitulate. And the thing that President Trump has going for him, if you can use a phrase like that, is, look, there are at least two examples where he followed through on those threats. So very few people thought or had the idea that the U.S. was going to go in, and do a raid that would capture Nicolas Maduro on their 2026 bingo cards. Same with a full-scale attack on Iran. So, you could have described that, oh, this is just bluster. This is the president making threats he's going to not carry out. Well, he did carry them out. So I think if you're Cuba, you're thinking very much nothing is off the table. It's entirely possible, and the game plan looks very similar. So needless to say, it's going to be a very busy few weeks for all of us as they ramp up CIA intelligence overflights on Cuba, and it certainly looks like they're beating the drums of some sort of military action in the coming months.
Well, we could have more on this even within the hour. Nick Wadhams, thank you so much, Nick, for being with us here live from Washington. This is a story that could be developing throughout the day here when it comes to Cuba. We'll let you know what we learn. One that's already developing by way of the stock trade is the after-the-bell earnings report from NVIDIA. This is the granddaddy of them all, as we like to say, and Bloomberg's Ed Ludlow, the co-host of Beat Tech, joins us right now from San Francisco with a quick look ahead. Ed, it seems like we're feeling pretty good, up about 2% here, realizing the stock is a bit off its recent high at 236, I believe it was. We're in the $224 range here. Are we worried about coming in too hot?
Yeah, look, there is a massive beat and raise expectation for NVIDIA where whatever they say about the numbers in the quarter gone, it doesn't really matter. It's all about what Jensen Huang says about longer term momentum in AI, right? You know, the numbers are staggering. They will grow top line 80%. They will grow their profits on an EPS basis 85%. But every time what the world looks for is basically this figurehead to say, the status quo is the demand is really, really great and the supply is not keeping pace with that. And so that really will be the story. But as you guys know, and it's reflected in the markets, the overhang, whether rightly or wrongly, whether it makes material difference to the finances, is China. And we need to reconcile some inconsistent statements on China over the last 6 months.
Ed, I also separately, as we consider the artificial intelligence that NVIDIA chips are helping power, OpenAI, according to the Wall Street Journal, is preparing to file for an IPO in the coming days or weeks. This is, according to people familiar with the matter, looking to go public as early as September. What can you tell us about this?
Yeah, so the journal's reporting, citing sources, that OpenAI is working with the bankers to file confidentially in the coming days or weeks. The September IPO readiness report is interesting. We had kind of been reporting that there is this race between OpenAI and Anthropic to go public around October time. So that is consistent. The one important thing the audience needs to understand is why now? Well, as Bloomberg Intelligence have written about, as we have reported, the trial and suit by Elon Musk against OpenAI's co-founders Sam Altman and Greg Brockman was a bit of an overhang on the company. And so now that the jury had rejected Musk's claims, saying that he was too late, he left it too late to bring the suit, that kind of has freed the company up to move forward with this, it would seem. Though, you know, of course, Elon Musk and his lawyers say that he'll appeal. So that's the dynamics. And, you know, Joe, you and I talked about this the other day, right? SpaceX, likely the biggest IPO of all time in the month of June. There was this dynamic about, well, how much does that suck the oxygen out of the room for an IPO for OpenAI and or Anthropic? And so that's part of the dynamic as well.
All right. Bloomberg Tech co-host Ed Ludlow. We'll be checking back in with Ed later on after the bell in the aftermath of NVIDIA results, which, of course, we will be covering for you live from the campus of Georgia Tech here in Georgia. And we'll be bringing it right back here to Atlanta coming up next. We'll turn to our political panel as we break down the results of yesterday's primaries, not just in this state, but in the 5 others that went to the polls yesterday. So that's next year on Balance of Power on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We're off session highs, but still looking at a move higher for the Dow, the S&P, NASDAQ, and the NASDAQ 100 index. And we'll throw in the Bloomberg Mag 7 index because NVIDIA is a member of that index. It reports today after the close of trading. NVIDIA shares right now up 1.7%. But bottom line here, stocks higher. A slide in oil on hopes for a deal to end the war in Iran, lifting stocks and bonds. S&P at 7407, up 53 now, up 0.7%. We have got the Dow up 465, up 0.9%. NASDAQ up by 1.1%. The NASDAQ 100 index up 1.1%. And the Russell 2000 index now surging by 2%. All of this with the VIX below 18, the 10-year 4.58%, the 2-year 4.05%, the 30-year 5.11%. Gold is up $46 the ounce. Spot gold now at $45.28 the ounce, surging 1%, while West Texas Intermediate crude 98.67 a barrel, down 5.2%. Barrel of Brent, this time yesterday it was right around 111. Today Brent 105.33, down by 5.3%. We're just over an hour away from the latest FOMC minutes, the last Fed meeting for Chair Jay Powell. Kevin Warsh poised to take over the central bank. He is facing pressure from the White House to deliver interest rate cuts and growing resolve from his colleagues to stand pat. So what to expect from Warsh when he takes over later in the week? Kathy Bostjancic is chief economist at Nationwide Mutual Insurance.
I think he's inclined to argue for lower rates over time. I think he would really even find it difficult now to come in and argue that the Fed should, in the near term, be cutting rates.
Kathy Bostjancic of Nationwide Mutual interviewed on surveillance. Goldman Sachs has the leading role on the cover of SpaceX's mega IPO. Morgan Stanley also listed as a lead bank. Goldman shares are up now by 4.5%. And former Cuban President Raul Castro has been indicted in the U.S., that according to Reuters, citing a senior Trump administration official. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Atlanta, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you, sir. Great to have Charlie on board today as we join you live once again from Atlanta, Georgia, this day after the primaries. And it's not, of course, Georgia alone. 5 other states. We've got a half dozen to run through here, and we're going to go to ground with you here in the great city of Atlanta with our political panel. Kaylee, we've got 2 runoffs that we're going to be tracking coming out of Georgia now. Kentucky's sucking a lot of oxygen out of the room, but these are really important races. First, we need to decide who's going to be running against Senator Jon Ossoff. And in the gubernatorial race, we do have a Democratic nominee in Keisha Lance Bottoms. Now we'll have to figure out who she's going to run against.
Yeah, of course, she being the former mayor of Atlanta, where we're broadcasting from. But yeah, she will either be up against Burt Jones, who of course is the current lieutenant governor, is backed by President Trump, or healthcare billionaire Rick Jackson. They will be heading to a runoff. Well, Congressman Mike Collins and Derek Dooley, a former Tennessee football coach who has been backed by Georgia Governor Brian Kemp, are heading to the runoff to go up against Jon Ossoff for the Senate seat. So it's a lot to get into.
It sure is.
And let's play it to our political panel who is joining us here in Georgia. Chris Bruce is with us. He's policy director for the ACLU of Georgia, alongside Katie Frost, Republican strategist and former executive director of the Georgia Freedom Caucus. Welcome to you both. Katie, just to begin with you, as the Republicans, 2 different Republican races are heading to runoffs here. What happens between now and June 16th to change the dynamics and create definitive winners in both of these?
Well, runoffs always depend on turnout. As someone who ran a bunch of campaigns, many of them that went to a runoff, the runoff period, that is the most intense and stressful period of any campaign, because you have to rely on your candidate to actually drive turnout. You're not going to be, especially if you're down ballot, you're not looking for other interesting things to happen. So this is going to be very important. There are also going to be a lot of some smaller state Senate runoffs that are going to be happening too in the Republican Party. So they're going to be looking to see how much momentum and energy is coming out of the gubernatorial and senatorial campaigns. But for Rick Jackson, you have to look at that and go, you spent over $70 million of your own money to finish in second place. How much more are you going to spend over the next 4 weeks?
Incredible dollars at play here. Let's talk about the actual nominee, Keisha Lance Bottoms. Mr. Bruce, it's great to have you. You worked on the Abrams campaign for governor in 2022, so you understand how this works. she's got some time on her own to start off with here, while Republicans duke it out, try to figure out who their nominee will be. How does she best use that time?
Well, that really goes into what happened. Many people expected a runoff in the Democratic gubernatorial primary.
Yeah.
It didn't happen.
Yeah.
In fact, she vastly overperformed in many areas. So Democrats have a message that they're going off of. She is the front runner, and she's the leader of the party at this time. She needs to make sure that all of the other people who are running coalesce behind her, as well as the rest of the Democrats in the state.
Well, so how does she do that if Stacey Abrams could not? What needs to be different in this 2026 cycle versus 2022 for her to actually be able to flip what is currently a Republican-held governorship blue?
Yeah, and I'll go back to the simplest. It's all about turnout. When we're talking about what Democrats are about with messaging, affordability, health care, education, she was able to get that message through. And that is something that's reverberating with not only Democrats, but Georgians. And she needs to hit all parts of the state, not just Metro Atlanta, to make sure that happens.
Interesting. Give us your side of that story, because obviously you've got the same period of time to work with, and you're going to be on TV a lot, duking it out with each other.
Well, here's what I would say about the former mayor, Keisha Lance Bottoms. Yes, she does have more time, but she also has a record, and it's not one that's going to resonate well with Georgia. There were a lot of serious problems in Atlanta during her tenure as mayor, and a lot of frustration as our city was having rising crime, and there was a lot of rioting in the aftermath of 2020. She was trying to audition to be vice president for Joe Biden rather than actually doing her job as mayor of Atlanta. There was a lot of frustration in Atlanta, and there's a reason she did not run for re-election. She would have been defeated. So I, frankly, expected her to be the nominee. I didn't think there would be a runoff in the Democratic side. So I think, they have their nominees. We're going to have ours pretty soon, and I'm optimistic going
Who's a
into
more
November.
formidable Republican to run against her?
You know what? I think it's going to be the Republican message. Who the messenger is that's carrying that across.
This is a generic ballot race for you.
As a generic, absolutely. It really is.
Well, of course, one of the most vocal messengers of the party is the leader of the party, President Trump, who made his voice known in certain instances in yesterday's primaries. Yes, in the gubernatorial race here in Georgia, but others as well. Primary politics, obviously, though, Chris, are very different than general election politics. Even in a primary where a lot of candidates have wanted to draw President Trump closer, do you see the need to distance themselves from him the closer we get to November, at risk of Democrats playing off of that relationship?
What I'm mostly interested in, I think we all are, the Senate race. So you have a Trump-backed candidate and a Kemp-backed candidate at this time. When it comes down to it, Brian Kemp was able to defeat Donald Trump and Stacey Abrams at the same time when it came to the past gubernatorial election. Now having these two senators go up, we know one thing. John Ossoff goes in very well. He is the second highest senatorial candidate to raise that much funds, and these other two candidates are not coming even close. So he's going to continue on with his message of what he's bringing back to Georgia, and the Republicans have to have their message as well.
Yeah, I keep reading that he's the most vulnerable Democrat on the map here, and a potential flip for Republicans.
Well, of course, he is the incumbent in the only Democratic incumbent in a state that Trump won in 2024. So I guess that is where that comes from. But I'll ask the same question to you, Katie. Primary politics versus general election politics. Where do you want the president to fall in terms of your closeness to him if you're a candidate moving on to November?
Well, I'll say just for a moment to the fundraising element. That Senator Ossoff's third state that he receives funding from is actually Georgia. The overwhelming majority of all his fundraising comes from California and New York. So he may be able to get donations from those states, but they won't be able to vote for him. So that's going to have an impact going into November. But as far as where do you want President Trump? Look, if you're, say, Mike Collins, who is the front runner at this moment, he had a 10-point spread lead. You look at someone like him, he is very closely aligned with President Trump, although he has not been officially endorsed by the president. But he's someone who has gotten legislation passed and signed by both the Biden and Trump administrations. He's someone who's able to deliver for his state regardless of who is in power. And that's a message that will resonate. Someone who wants to work with people and actually deliver for their state. He got some regulatory reform under the Biden administration, and of course the Lake and Riley Act as under the Trump administration, which was kind of his hallmark piece of legislation, the first piece of legislation President Trump signed in his second term.
Who's got a bigger influence on Republican outcomes here? Is it Trump or is it Brian Kemp? Because the conventional wisdom there again is he didn't run for Senate this time because he wants to run for president.
Or do you toy with the idea of running for president and then run again for the Senate in 2028?
So you don't have this 2-year thing and take another swing at it later.
Against Senator Warnock, who is arguably maybe a little bit of a weaker candidate, and then it'll be a different political environment in 2028, and that might be more.
Is that your hope?
That's my projection. We'll see what happens.
Okay.
Well, it will be different in 2028 for a lot of reasons. Also, because the congressional map here in Georgia is likely to look different. Governor Kemp is calling a special session for the day after the runoff next month, June 17th, to redraw the congressional maps in the aftermath of the Supreme Court's Voting Rights Act ruling and the ability that now exists to kind of erase majority-minority districts. How is the ACLU thinking about it? How are you getting involved in that fight, if at all, when we look at the redistricting effort, frankly, not just in Georgia, but across the South?
Oh, what I would say is Georgians are very savvy. First off, Georgians broke a record when it came to early voting turnout.
Yeah, 1 million.
That's starting there. Georgians also know with what message they want to resonate with. So in 2020, they elected John Ossoff and Senator Warnock. In 2022, they elected Senator Warnock and Brian Kemp. They were able to designate within a message. The message that I would say to them, as well as all Georgians, is people should pick their elected officials, not elected officials picking the people. Brian Kemp calling a special session when it is not needed at all to gerrymander districts really shows that you have a weak message, saying that you cannot pick up on policy, you have to pick up on cheating. And gerrymandering these districts is what we expect, and the ACLU will be there to fight with the people on the ground and let their legislators know you can try to draw the lines, but you cannot stop the people.
What did you make of the turnout then for the state Supreme Court seats last evening? There seemed to be an enormous amount of energy behind this, the Democratic movement at least, because of redistricting.
Energy and money.
Yeah.
When it comes down to it, if you look at Miracle Rankin, she actually percentage-wise outperformed Kamala Harris. So you see a continuous trend of an upbeat of people actually paying attention to these elections. And our Supreme Court race is nonpartisan. Yeah. So it's something that goes along, again, with a message that reverberates with the people.
I would respectfully counter on the Supreme Court element. We had Jen Jordan, who was the Democratic nominee for Attorney General running, and she lost Clayton County. That Vice President Harris won by 69%. Sarah Warren, who was seen as the more Republican-aligned candidate, actually won that county by 1%. So it was a 70-point swing.
All right. Well, we've covered Georgia pretty well, and thank you both. I do want to quickly get your take on some other primary news from yesterday. The downfall of Thomas Massey in northern Kentucky teaches other Republicans who are considering how they want to handle the requests of the president. Tells them what?
What I would say is you look at Thomas Massey. He went head-to-head with President Trump in 2020. President Trump tried to field a challenger against him, and he won with over 80%. But then there was definitely a lot of people, in the Republican circles felt there was a slight shift in him over the last 6 years, and he got very comfortable with challenging the party, and they weren't quite sure to what end. Marjorie Taylor Greene here in Georgia kind of had a similar thing. Yeah. She became a bit of a darling of the media. When you do that, that sows instant distrust among the Republican primary electorate. So
is this unique to Tom Massey, or is it a lesson for everybody else?
I would say it's a lesson that you need to, if you're going to stand up to your party, you need to be very clear as to why you were doing it. And you can be combative. You can disagree, but have a very clear reason why. In 2020, he was pushing for everyone to come back and vote in person on budgeting procedures and not do remote voting during COVID. And people went, okay, I can understand that. I get that. But then there was some confusion over some of his recent messaging with Republican primary voters.
He was pretty clear about the Epstein files, of course, and that seemed to be the final sin in this relationship. And he's also going to be around for another 7 months. Christopher Bruce, you've got Bill Cassidy in the Senate, now Tom Massey in the House. Could spoil the party for Donald Trump in a lot of different ways.
Well, let's look at what's happening across the country. Yeah. We've seen Democratic wins around. So this is an unpopular president. Let's just say it up front. One that is focused on wars abroad and on ballroom instead of really the needs of affordability and
when the call's coming
prices.
From inside the House, though, this is a family matter. This is Republican on Republican action that we're talking about here. Can Democrats make that their own opportunity?
Well, yeah, exactly. And that's what Democrats have as far as their game plan. Republicans need to coalesce around each other, really come up with a real plan to stand up against an unpopular president. Will they do that? That's the real question.
We have a lot of questions around this today. Yeah. That's why we brought you two in, and we appreciate your insights very much, Katie. It's great to have you back. Katie Frost, Christopher Bruce, a great panel, and appreciate a smart conversation here. We're going to spend the next hour, of course, live from Atlanta, picking through results from last evening and also keeping our eyes on geopolitics. Kaylee, we're not sure what the next move is going to be with Iran, but now Iran is warning the administration that further attacks will prompt retaliation beyond the Middle East.
Yeah, it's something we'll continue to talk about as we turn to an expert in geopolitics from here at Georgia Tech, where we are broadcasting to you live in this special coverage from Atlanta, Georgia, in the aftermath of what was primary day here and in several states across the country. So stick with us on Balance of Power right here on Bloomberg.
Make sure.
From Atlanta, Georgia, this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump reasserts control over the party. Welcome to a special edition of Balance of Power, live from Atlanta, Georgia, this day after. I'm Joe Matthew alongside Kaylee Lyons. We're on the campus of Georgia Tech. And Kaylee, we're looking now at runoffs for two different Republican contests here in Georgia, while the president managed to vanquish a longtime rival in Kentucky.
Yep, in northern Kentucky, Congressman Tom Massey lost his primary, and therefore the president is notching another victory in terms of sitting incumbents that he wanted to see ousted from their positions. But you're right, here in Georgia, where he wasn't as vocal, he did endorse in the gubernatorial race, and the man he endorsed, Lieutenant Governor Burt Jones, is headed to a runoff with healthcare billionaire Rick Jackson. But President Trump did not weigh in on the Republican Senate primary, which now, too, is going to be decided in mid-June between Congressman Mike Collins and Derek Dooley, the former Tennessee football coach who's been backed by the governor of this state, Brian Kemp.
And so we gauge the Kemp versus Trump effect here in Georgia. The Trump effect is pretty clear, though, within the party and across the board last evening, which we'll be talking more about with Tyler Kendall coming up. She'll have the latest for us on Iran as well. And something special this hour, the former mayor of Atlanta, civil rights icon, former congressman from Georgia and former ambassador to the UN, Andrew Young, is going to join us right here on our set.
Yeah, we're really looking forward to that conversation, especially his thoughts on the Calais ruling from the Supreme Court that gutted Section 2 of the Voting Rights Act and has paved the way for states like Georgia, at least in 2028, and others across the South to redraw congressional maps and get rid of majority-minority districts. So we're very much looking forward to that conversation. But we have to begin, as always, with a check on the markets, because it's a pretty big day for markets, too. NVIDIA earnings are on their way after the bell, so let's get a check now as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. And ahead of that report, NVIDIA shares are moving higher now. They're up by 1.8%. Developing story, OpenAI is said to be preparing an IPO at more than a $1 trillion valuation. That, according to a headline right now on the Bloomberg from the FT. OpenAI, according to the Journal, is preparing to file for that IPO in coming days or weeks. Stocks higher across the board right now. The S&P 500 index, however, off session highs, still up 60. That is a gain now of 0.8%, 74.14 where we stand on the S&P. Dow Industrials still below 50K. Right now, the Dow, though, up 495, up 1%. NASDAQ up 304, up by 1.2%. The NASDAQ 100 index up 1.3%. And the Russell 2000 index outperforming, up 2.1%. Our Mag 7 index up 0.9%. NVIDIA, of course, a part of that index, up now by 1.9%. All of this with the VIX below 18, a 10-year at 4.57%, the 2-year 4.04%, the 30-year 5.11%. Gold up $51 the ounce to $45.34, up now by about 1.1%. We do have silver pushing higher by 3%. Silver $75.93 the ounce, and West Texas Intermediate crude, certainly WTI, certainly oil in general, affecting sentiment today. WTI 97.78. It is down now by 6.1%. Barrel of Brent 104.53. Brent crude down by 6.1%. A slide in oil prices and hopes for a deal to end the war in Iran, lifting stocks and bonds, again, as traders await those numbers coming out of NVIDIA. NVIDIA after the bell, and again, NVIDIA shares up now by 1.8%. Also ahead of that report, UBS analysts are predicting that ASML holding shares will rally almost 50% in the next 12 months due to increased memory demands and technology investment. The analysts have hiked their price target to 1,900 euros. They have also named ASML as one of their top picks, citing a tightening industry environment and a more prolonged investment cycle. ASML ADRs here in the U.S., they are gaining now by 5.6%. Job cuts at Intuit. Intuit will be among the names reporting after the close of trading today. Right now, we do have Intuit shares down by 3.9%. According to Reuters, Intuit said to be cutting about 17% of its staff, roughly 3,000 workers. Recapping, S&P up 58, up by 0.8%. Back we go to Atlanta. They're covering it all. Once again, your host is Balance of Power continues. Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We are covering it all indeed, from the results of yesterday's primaries here in Georgia and in 5 other states across the country to geopolitics, which we're tracking on a number of fronts as we await a decision, it seems, from President Trump potentially in coming days to either move forward with continued military strikes against Iran or pursue an actual deal. But we're also tracking Cuba as we've seen, obviously, increasingly aggressive rhetoric coming from the administration, trying to pressure the Cuban regime. And now the DOJ, the U.S. Department of Justice, is making a filing in a federal court in Florida, an indictment against Raul Castro, of course, the former president of Cuba, the brother of Fidel Castro, still in many ways a de facto leader in Cuba. This is tied to the shooting down by the Cuban Air Force of planes in the 1990s, but many see this as essentially potentially a precursor to a greater pressure campaign, a la what we saw in Venezuela with Nicolas Maduro.
Unclear whether we'd be going to seize him as we did Maduro. But look, the president's been talking about this for weeks, I suppose months now, just recently saying Cuba is next after operations in Venezuela that led to this, and now, of course, with Iran. The acting Attorney General, Todd Blanche, is going to be holding forth in a news conference a short time from now. We'll keep ears on that, Kaylee, to see if he speaks to this. And, of course, we've got the matter of Iran, now with a new warning to the United States, suggesting that it will attack U.S. interests or allies outside of the region, outside of the Middle East, if America indeed resumes kinetic action. The president is being briefed by senior military leaders on potential options with regard to that right now. And ahead of our conversation with iconic civil rights leader Andrew Young, we want to compare notes with our Washington correspondent Tyler Kendall, is on the scene right now in Washington with the latest on all of this. Tyler, do we know any more about this indictment in Cuba, Raul Castro?
Expecting additional information to come from the Department of Justice as they hold this event in Miami. But as you mentioned, it really does dovetail with what has been, at this point, months of pressure from the U.S. on the Cuban regime to capitulate to U.S. demands. We've seen really a strong economic sanctions list put on Cuban officials just earlier this week. Also, the potential threat when it comes to military action, and it appears that this indictment is going along with that. Earlier this week, the U.S. unveiling a sanctions regime against not just top Cuban officials, but also the country's spy agency. At this point, Cuba's energy sector has really taken a hit over what has been a blockade of oil ever since we saw the U.S. go after the Venezuelan regime and the capture of Nicolas Maduro. And that is really where we started to see President Trump's efforts and focus center on Cuba when it comes to his rhetoric and the changes that he wants to see in the country. Today marks Cuban Independence Day, and we did get this statement earlier today from President Trump where he said, in part, quote, "We look forward with confidence towards a new golden age for the island and its people." He also touted what has been a buildup of U.S. military assets surrounding Latin America, going on to say that the U.S., quote, "will not rest until the people of Cuba are free." We did get a response from Cuba's foreign minister, who hit back on some comments from the U.S. Secretary of State Marco Rubio earlier today, saying in part on a post on X that the Secretary of State, quote, "is repeating his deceitful script and trying to blame Cuba's government for the ruthless harm the U.S. government is causing the Cuban people." This is something that we are going to be watching very closely in the months ahead, as this administration has prioritized some serious change when it comes to how it is looking at foreign policy and the balance of the global order.
Well, and that certainly is also on full display in the Middle East and Iran. Tyler, we've heard from President Trump on Iran a few times today, including in giving a commencement address at the Coast Guard Academy in Connecticut, saying the only question is, do we go in and finish it up, or are they going to be signing a document? Do we have any sense as to whether the White House thinks they're closer to option A or option B?
Well, at this point, Kaylee, President Trump appears to be keeping his options open. He did say that he felt that they were getting closer to a final deal in his words, as he maintains that diplomacy is still a viable option. Yet at the same time, we haven't seen the president take the threat of escalation off of the table. And it was interesting to also hear him today confirm reporting that so far the U.S. has seized at least 3 Iranian-linked oil tankers, as this White House maintains that the naval blockade is not going anywhere. That is part of what at this point has become a sticking point in these discussions, since the White House says that so far all of Iran's counter proposals have been insufficient, mainly because we haven't seen much of a discussion around potential curbs when it comes to Iran's nuclear program, though we know other differences remain, including how Iran views the naval blockade, how they want to retain some sense of control over the Strait of Hormuz once the conflict is ended. They want to see full financial relief and also payments in regards to war damages. At this point, the U.S. has said that it's not going to budge on these issues as we wait to glean any more details about what is happening privately, since so far publicly the two sides appear very far apart. And as we get to this threat from President Trump, on one hand he has said that he's not in a rush to make a deal with Iran. On the other hand, he has said that he's only giving Iran limited time to come to the table on a deal, amid reporting that he has been advised that perhaps limited strikes on the country could pressure Iran into making a deal. We did get a new threat from Iran today, vowing to hit targets outside of the Middle East if the U.S. or Israel attacks Iran again. That, of course, is raising some concerns and flags here about just how far this conflict could spread, because Joe and Kaylee, earlier this week, we did say Iran take some action against regional allies, including the UAE seeing a power plant hit, and Saudi Arabia confirming that it had intercepted multiple drones that entered into its airspace.
All right, Bloomberg's Tyler Kendall reporting live from the North Lawn of the White House. Thank you so much. And I'm pleased to say now live from here in Atlanta, Georgia, where we are coming to you live on Bloomberg TV and radio. We're joined by civil rights activist Andrew Young, who of course is also a former Democratic congressman from Georgia and the former U.S. ambassador to the United Nations in the Carter administration. Mr. Ambassador, welcome to Bloomberg.
Thank you
very much.
So
nice to be with you here in Atlanta. And we have much we want to discuss with you about domestic politics, but as ambassador, you too had to deal with the challenge of Cuba. You had some harsh words for the regime, and it now seems that the Trump administration is looking to pressure the Cuban regime further with the seeking now of unsealing an indictment against Raul Castro. What will it take to change the circumstances, the relationship between the U.S. and Cuba, but also the circumstances the Cuban people find themselves in?
Well, I don't know, you know. In all my travels, I've been all over the Caribbean, but I've never been to Cuba. And I deliberately stayed away because I think Cuba's on its own, and we got enough troubles here. I'd rather us make America work for all Americans. And as that happens, we'll have a natural interchange. We do pretty good with Jamaica, with Trinidad, with Dominican Republic. We get along with our neighbors as long as we're not trying to run their business. And we have enough trouble right now, and we certainly do here in Georgia. And the United States right now is in deep difficulty in more places than ever in my lifetime, I think. I was never as nervous about the Second World War. And I'm old enough to remember Franklin Roosevelt saying the only thing we have to fear is fear itself. And I believe that. And I was confident that what was happening had reason, it had structure, it had a long-range disciplined plan, and I never had any doubts that we'd win. I think we keep jumping around from one place to another, and I don't know what we've done about Venezuela. I was in Venezuela when I was ambassador, and Venezuela was a good friend of ours, and they didn't have a democracy, but as we traded, they upgraded their economy. Little by little, they were getting better. And I don't know where things are now. But this election was, well, I don't know what it was yet. And I think that it's a reaction to the jumping around of the present administration.
This election, this primary election.
Yeah.
Well, I'd love to hear from you on the issues facing Georgia. I appreciate your weighing in on international affairs. We could ask you just about anything based on your resume, but with regard to Georgia, and the rewriting of congressional maps. You had quite a quote, Ambassador. You said the Supreme Court can go to hell over the decision on Section 2.
I mean that literally. I'm not talking about hell on earth. I'm talking about forever.
Actual hell.
I'm basically a preacher. And there is good and there is evil.
Well, what's your message to Brian Kemp, who says it's time to rewrite Georgia?
Well, my message is that Georgia has done really well. And Georgia has done well. Well, I moved here in 1960. And since then, we've developed a mass transit system, a wonderful highway system. The economy has exploded from less than 500,000 people to closer to 8 million now, almost. And things, we send more people to college than any other city in the world. 60% of the people in Atlanta have been to college, according to one of these big surveys.
Yeah.
And we're doing well. And I don't know that right now we're thriving on the private sector. We're looking forward to the World Cup coming here.
Yes, sir.
Yeah.
And the last big jump we made because 30 years ago we had the Olympics here. And the Olympics, we raised $2.5 billion privately. No city money, no state money, no federal money. And put on the Olympics, and everybody profited. 41% of the money we spent with minority and female-owned businesses. And a fair, aggressive economy that's open to all the world fairly and that protects the values. Well, right now in Atlanta, we have almost 200 nations represented in the schools in Atlanta. And everybody's learning here, and everybody, some of them stay here, some of them go back home. But that's the way we have built trade with the city.
Redistricting start to undo that progress?
What's that?
Does redistricting start to undo the progress you're describing?
Well, I don't know what it'll do. See, I was redistricted out of the 5th Congressional District when I ran for Congress the first time. I was put in a district with Noonan, 40 miles south of where I lived. And the district went 40 miles north of where I lived. And I didn't have a chance to win. But I laid enough of a foundation there that 2 years later, I had no problem winning. I thought it was going to be a problem because it poured down rain all day on Election Day. And it rained from Monday afternoon till Tuesday night after the polls closed. And yet we had a 75% black turnout.
Wow.
There's no way I could have calculated. And I got close to 30% of the white vote. I didn't know that in 1972. I couldn't expect that. But in the time between 70 and 72, I ended up involved in a lot of strikes where, because they were mostly racial, and I was chairman of a community relations commission, I ended up being able to settle them very easily just by talking to everybody.
So you could do, and excuse me for interrupting, Ambassador, you could do that in the 70s, but I wonder now that the Supreme Court, with the Calais decision, has effectively paved the way across the South, not just here in Georgia, for the drawing out of majority-minority districts, what the lasting consequence is going to be.
Well, it's not going to be good. And I don't know. One of the things I think of is how well the South has done in football. I mean, all the great football teams across the South. And they're that way because years ago, Bear Bryant got really beat by his team in Philadelphia. And he finally said, if we're going to play football, we have to have speed, and more speed, and I don't care what color it is. Now, that's when all of the South began to rise up in the nation. If you're going back to redistricting and moving black folk out of key positions, it's not going to be good. It's not going to be good for anybody. It's not going to. I mean, there are more rich white people. There are more white people going to college than there were 20 years ago. See, and I think the way this city is going, and there's a judgment day coming. It might not be this election, but I just have real confidence in the American people, and I have confidence in our Constitution.
We'd love your read on the gubernatorial race before you leave us, because you ran, Stacey Abrams ran twice. Now Keisha Lance Bottoms has an opportunity to be the first black governor of Georgia. How does she win? How does she beat the Republican who will be chosen in that runoff with Brian Kemp's backing, possibly?
Well, Brian Kemp was a moderate guy when he got elected. Everybody liked him. And most of us would think that he's been a fair governor. But that meant that he withheld 11,078 votes from President Trump. He didn't change those votes.
Yeah.
Right.
And he governed Georgia. If he's playing national politics, there's another judgment to be made.
How about Keisha Lance Bottoms? How does she become the next governor?
She becomes the next governor by really the two Republicans. Their campaign ads have been antagonistic since the very beginning, and it's not going to slow down. They will take Keisha Lance Bottoms for granted, but when you look at the slates that have won, it's amazing how many women are there.
That's right.
And not only that, how the civility of women in politics, the politeness, the brains. We got a lot of smart women running around here, and anybody that plays them cheap is going to get beat.
Fascinating. Looking to a judgment day here in American politics, Andrew Young, the civil rights legend, former congressman, former mayor of this great city of Atlanta. You must be dazzled by this skyline with Google looking down on us.
When I was elected, none of this was there.
Well, we understand that, and that's partly why we came down here today, was
we're
to gauge the
glad to
progress
have
of
you.
Atlanta. Thank you for joining us today, and appreciate your conversation, Ambassador. Alongside Kaylee Lyons, I'm Joe Matthew. We've got a lot more ahead here in our special coverage, a special edition of Balance of Power, live from the campus of Georgia Tech in Atlanta.
Yep. And before we get to more here on campus, we'll turn to Wall Street, where Charlie Pellet is tracking the trade for us today. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, we got our own Judgment Day coming up after the close of trading. That is when we hear from NVDA all about NVIDIA. NVIDIA shares pushing higher right now ahead of earnings. NVIDIA right now up by 2%, by the way. Also reporting after the bell, we will be hearing from Intuit. That stock also trading lower right now ahead of earnings. Intuit now down by 4%. Bottom line here, the Dow, the S&P, NASDAQ, they are all pushing higher. We're seeing a slide in oil prices on hopes for a deal to end the war in Iran. That is lifting stocks, also bonds, and right now we have got the S&P 500 index up 62, 74.16 where we stand. A gain right now of 0.8%. To be sure, we are off session highs. The Dow Jones Industrial Average now higher by 547, up by 1.1%. NASDAQ up 309 for the NASDAQ Composite Index, a gain of 1.2%. The NASDAQ 100 Index pushing higher by 1.3%. But look at small cap caps today. The Russell 2000 index of small cap shares, it is gaining by 2.2%. All of this for the Mag 7 index. The Bloomberg Mag 7 index up now by 0.9%. Again, NVIDIA part of that index. NVIDIA shares ahead of earnings up by 2%. The VIX below 18, a 10-year 4.57%, the 2-year 4.04%, and the 30-year now at 5.11%. Gold is up 1.2%, 45.35 the ounce, while West Texas Intermediate crude slipping now by 6.5%, back below $100 a barrel. WTI 97.34, barrel of Brent, the global benchmark, just above 104 now. Barrel of Brent crude down by 6.3%. Bitcoin 77,430, Bitcoin up by 0.6%. OpenAI is preparing to file for an IPO in coming weeks. It's targeting a public debut sometime in the fall. The company is working with Goldman Sachs and Morgan Stanley to make a confidential IPO as soon as this Friday. According to the FT, this could be a $1 trillion IPO. Intuit cutting about 17% of its staff, 3,000 workers, that according to Reuters, citing an internal company memo. Meta Platforms is alerting thousands of employees that they are being laid off, all part of a previously announced restructuring aimed at reducing costs while the company invests heavily in AI. The company began notifying workers around the world this morning, starting with employees across Asia who got the note at 4 a.m. Singapore time. Meanwhile, the Irish Times says Meta is planning to cut 20% of its Irish workforce, or as many as 350 jobs. Dublin serves as Meta's European headquarters. Shares of Meta Platforms, they're up 0.3%. Intuit, by the way, ahead of earnings, down now by 3.9%. So again, recapping here, we are looking at an update for the Dow, the S&P, and NASDAQ. The S&P 500 index at 74.15, up by about 0.8%. The Dow Jones Industrial Average up 538 on the Dow. That is a gain now of 1.1%. The NASDAQ Composite Index up 308, higher by 1.2%. And the Russell 2000 Index higher by 2.2%. Looking at the 10-year, 4.57%, with the 2-year 4.04%, the 30-year currently at 5.11%. All of this as crude oil continues to decline. Right now, West Texas Intermediate down 6.2%. Back we go to Atlanta. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet checking the markets for us comprehensively. Thank you so much. I am indeed Kaylee Lyons alongside Joe Matthew here on Bloomberg TV and Radio, where we are broadcasting to you live from the campus of Georgia Tech on this day after the primaries here in Georgia. It, of course, is a story that we're following. What we've heard frequently in our 3 days here in Atlanta has been that there are a few things on the mind of voters as they head into the polls yesterday. One, of course, being the economy, but more specifically higher gas prices emanating from the conflict in the Middle East, the closure of the Strait of Hormuz, and an unclear outcome when it comes to Iran, which the president is still keeping us guessing about today, frankly. He suggests that we could see a deal, or we could see the U.S. military going back in to strike certain targets.
And we've seen this part of the movie before with the conflicting signals, which in itself may be a strategy if you talk to the president's supporters. It's interesting today to see the relief in interest rates after the president said final stages. Those are the words. The deal is in its final stages. Well, almost in the same breath, to Kaylee's point, said that there could be a big hit. We're going to hit him again hard if a deal doesn't come together. And so maybe the professor can help us sort all of this out. As we mentioned, we're live on the campus of Georgia Tech, and we're joined by the Associate Professor in the Sam Nunn School of International Affairs, Professor Rachel Whitlark, non-resident senior fellow at the Atlantic Council Scowcroft Center for Strategy and Security. Thanks for meeting us here on our set today. It's great to have you. These mixed signals might have a certain impact in the president's view, but it's certainly keeping the market confused. Are we closer or further away from a deal?
You know, frankly, I think it reflects the sort of competing tensions that the administration is trying to juggle at the moment.
Yeah.
I think you've heard the president over a couple of days now say, you know, looking for a quick solution, the possibility of robust military escalation is on the table, but also preserving the diplomatic off-ramp. And I think those competing tensions reflect the larger cacophony of noise, as you were saying, the domestic concerns, the congressional concerns, the allied concerns. There's a lot going on here, and I think the duality reflects that we don't really know yet how this is going to conclude or where it's even going to go next, and so that is reflected in this tension.
Well, we know the conclusion President Trump wants. He says he wants to guarantee that Iran can never have a nuclear weapon. Can you reach that conclusion via kinetic military action, or can you only actually get to that point with diplomacy and a negotiated deal?
Kaylee, you've gone right to the heart of the issue here. It is incredibly difficult to use military force to destroy permanently a country's ability to acquire nuclear weapons. What we have seen historically is where military force has been successful, and I'll use that loosely. It has been more productive, at least in instances where countries have small, new, centralized military programs, and military and nuclear programs specifically. And that is the opposite of what we have with Iran. Iran has been working on a nuclear endeavor for decades. They have learned from other countries who've been on the receiving end of military force, say Syria or what have you, and they are smart. They have hardened their facilities. They have dispersed their facilities. They have built in redundancies. So military force can get you to degrade the capacity, it can delay it, it can impose costs, but fundamentally it's about a political decision.
Yeah.
You need the regime to decide that this is not something that they see in their interest, and we've been waiting for that for a very long time.
Well, we sure have, and it seemed to be, I guess we could call it a miscalculation by the administration on the political leadership, potential future political leadership of Iran. The president has already suggested or declared that regime change has taken place, but imagine a world in which there was a U.S. strike that broke Mahmoud Ahmadinejad out of his house arrest and put him at the top of the regime. The New York Times has a big scoop to say this was plan A for the administration. Apparently he was too badly injured to make this happen. What would have taken place in that world?
You know, it's each next iteration of this story, there's something more wild than what we've been thinking about with that.
Does it imply a misunderstanding of the politics domestically in Iran?
I think it implies a misunderstanding of what military force was going to be able to do quickly in Iran. And whether it's Ahmadinejad in particular or someone else, my sense is the hope was both in the United States and potentially in Israel as well, that military force would quickly lead to an uprising, whether a Kurdish intervention, some kind of more moderate regime coming to power in Iran, and both in terms of the successor to the Ayatollah, who appears to be more radical rather than less, and you know, the possibility of Ahmadinejad coming to office, which seems to have not gotten anywhere real fast, suggests that they had high hopes for something that was going to be a much more a quick success, and that has not been borne out.
Of course, that was also the hope of Operation Midnight Hammer, and the president to this day still maintains that it was the quick success that the U.S. was looking for, that it led to the obliteration of Iran's nuclear program, but we are still here talking about said nuclear program, and he keeps coming back to this issue of the nuclear dust, the enriched uranium still in Iranian possession. He has, in just the last few days, referred to it as psychologically important for the United States to retrieve. He, in an interview last week, suggested that it was important to get that remaining enriched uranium for essentially public relations purposes. Can you talk to us about the consequence of being able to obtain that, guarantee Iran no longer has it, what they could do with it, even if it is dust, quote unquote?
Right. So my read is that it's more than dust, right? What we are talking about is significant quantities of enriched uranium. And before last summer's military campaign and this military campaign this year, you know, the best estimates from the International Atomic Energy Agency were that it was enough material to make multiple nuclear weapons following a political decision to do so, which they have not made. And so that material is consequential. We'll get to the politics and the rhetoric and the psychology of it, but it is consequential in terms of a future decision to pursue nuclear weaponization. And one of the consequences of this military campaign and last summer's is that the IAEA inspectors have been kicked out, and we have far less insight into what is going on the ground, what is happening on the ground with the nuclear materials, this and otherwise. And so I am deeply concerned about where that material ends up. And I'm also very concerned about what the military operation would look like to go in and get it.
Right.
This is not a trivial undertaking, and we've seen that this has been a robust campaign where the Iranians have been able to hit back and persist and persevere over weeks and months. And so we're not dealing with an easy mission by any means. So I think the president is correct that this is important, but I think it misses the larger picture to just think about it as a psychological thing.
Well, he was trying to make the rationale to suggest that we're watching it 24 hours a day. We've got satellite coverage. They can't get near this without us bombing them, knowing that it would take thousands of troops to excavate that material in a very delicate mission to get it out of the country or safely disposed of somewhere. When you consider the cornered animal that this regime could be if the United States resumes strikes, would they be able to get to that material or not?
You know, it's hard to know because we don't know what that resumption of military activity would look like on the part of the United States. I can say that we have been burned before as an international community that thought it had great insight, great satellite coverage, great intelligence, and there are things that we were surprised by, you know, in the Iranian case and otherwise. And so that makes me skeptical that we have anything close to perfect intelligence or insight into what is going on. And it's hard to think about pursuing this kind of an operation without hostilities, and it's even more complicated during an active war zone and with everything else that would be going on. So I don't think we should minimize or trivialize what it would take.
Well, so I want to get back to the idea of monitoring that Joe was talking about, that the U.S. military via satellites is able to keep an eye on what Iran is doing. If we eventually, and it is an if, get to some kind of negotiated agreement with Iran where they have said that they will stand by a moratorium of X period of years on enrichment, how can that be guaranteed if you don't have the IAEA in there with inspectors actually being able to directly monitor up close and personal that activity?
I think the short answer is you can't. I think, to my mind, what I would hope is that any agreement, any negotiated solution that comes out of this experience involves the IAEA and deep and intrusive inspections. Not for nothing, the previous Iran deal that the Obama administration had negotiated had included what I think the nuclear community had perceived to be the most intrusive inspections regime the world had ever seen. I hope we can get somewhere close back to that in order to be able to have the on-the-ground monitoring that I think is nothing short of necessary.
What would be the psychological impact of the next big hit, as the president says? He's threatened power plants, desalination plants, infrastructure that civilians share with the military. If he actually followed through with that, knocked the lights out, and killed a bunch of people, does it bring us closer to a deal, or does it get the regime into more of a war footing?
You know, it's a really hard question, and I think one thing we can say so far is that the regime and the population have demonstrated themselves to be terribly resolved, right? They are not going quietly. They have not folded, right? We haven't seen...
And the people have not risen up?
The people have not risen up, despite any kind of projections about what that would look like from the U.S. Or the Israelis. So I'm personally skeptical that that is what we would see. I think we can point to the fact that there may be one major paradox to using military force as a counter-proliferation strategy, right? If you are using military tools to try to convince someone they don't need nuclear weapons to protect themselves, you may actually paradoxically, counterintuitively, convince them that that's the very thing that they need. So I worry about the implications of that, you know, going hard, hitting the population, the electrical grid, et cetera, that it might just further harden an already hardened regime towards this goal that we're ostensibly trying to prevent in the first place.
Well, we're so glad you could join us, Professor. I hope we don't have to come to Atlanta to get you back on. Rachel Whitlark here on the campus of the Georgia Institute of Technology. Many thanks to you for being with us. I'm Joe Matthew alongside Kaylee Lyons in Washington. And we do have breaking news. As we told you was likely coming, the indictment is now official. Kaylee, the United States is charging Cuba's Raul Castro with murder in a 1996 incident involving a downed aircraft. The acting Attorney General, Todd Blanche, is holding a news conference right now at Miami's Freedom Tower, rolling out the details of this indictment. We've got Miles Miller with us right now with a live report. Miles, what do we know?
Just going through the indictment here, what we know is that this all relates to the 1996 shoot-down of what was really a civilian airplane, right? The Brothers to the Rescue Group, sort of an exile group from Cuba that was flying a mission here. The attack happened nearly 30 years ago, but the poignancy of this announcement today is significant. Obviously, as you know, the United States has been trying to put pressure on the current regime in order to figure out ways to get the private sector there flowing, but also to get oil flowing there as well. They are having this indictment announcement today at Freedom Tower in Miami, which was the very place where so many Cuban refugees were processed here in this country. But as you go through sort of some of the charges here, we're talking about conspiracy to kill U.S. nationals, destruction of an aircraft, and murder. And he's not the only one, Raul Castro, that's being charged here, including a former Cuban military official, also charged, the pilot of the fighter jet that actually fired from that plane, charged as well. And this announcement coming from the acting Attorney General, as well as the second in command at the FBI. What does this tell you? It tells you that this is something that President Trump has been pushing for quite some time, and it really sort of harkens back to some of the issues that have been going on with U.S.-Cuba relations for decades. These families have been pushing for criminal charges in this case for almost 30 years, and you knew that there was a ramp up to this, especially when the CIA director made his way to Cuba just weeks ago.
Yeah, remarkable images of John Ratcliffe in Havana. Miles, will Raul Castro actually face this prosecution? Is the U.S. going to either by force or other means get this 94-year-old to the United States to face this indictment in our criminal justice system, like we saw with Nicolas Maduro?
Yeah, that's sort of the million-dollar question here, right? You know, obviously Cuba has no extradition agreement with the United States, and would they even consent to an extradition of their former leader? Likely not. So, you know, what will this look like? Will this look like the U.S. going in with force? Will this look like some sort of, you know, sort of deferred prosecution agreement? You know, I think that the goal from talking to sources last night was that perhaps they could put pressure on Castro's son, who, you know, is doing a lot to sort of lead the country. Could they put pressure on him to sort of open up some of those channels to private enterprise, to be able to get more oil and gas into the country? This may be a mechanism. May they be able to get, you know, the pilot, and maybe would they be able to get some of those military officials? Probably, but Raul Castro will be a big target. And what would it look like if the U.S. were to go into Cuba and try to extract him? You know, I think one of the people I spoke with yesterday was saying, you know, it would be something if they did that, but it's highly unlikely. So this could just be a political move. You know, when you're seeing the head of the CIA, you know, sitting at that table in Havana really about a week ago, it really shows how high the stakes are here.
All right, Bloomberg's Miles Miller reporting live from Miami, where this indictment was just unsealed. Thank you so much. Again, the acting Attorney General Todd Blanche detailing this indictment as the U.S. And the DOJ has charged Raul Castro of Cuba with murder tied to that 1996 incident. Just one of the many headlines that we have been dealing with this hour. I would also mention we just saw in the U.S. House of Representatives back in Washington the passage in the House of a housing bill, the amended Road to Housing Act that the House took up after passage of the Senate, made some tweaks to. They will now send it back to the Senate. But this is, of course, in the aftermath of President Trump pushing for housing affordability legislation, trying to address an issue on the minds of many in these midterm elections. And that was certainly likely the case here in Georgia and elsewhere in primaries yesterday.
That's for sure, and trying to eliminate the institutional presence in the single-family home market, hopefully in an effort to unlock sales here. But, of course, this is a very stubborn housing market, and we've got interest rates that are not making things easier most recently. But, look, we talked to a lot of lawmakers on this program, Kaylee, and this was seen by many as the last bastion of bipartisan action in Washington. It was not so much D's and R's arguing as it was the House arguing with the Senate. Maybe we've gotten around that now.
Yeah, I guess we'll see what the Senate does with this amended legislation. But as we consider this wider housing and affordability issue, I'm pleased to say joining us here on the campus of Georgia Tech is someone who usually resides in Bloomberg's Atlanta bureau. Michael Sasso is an economics professor for us here at Bloomberg and is joining us now on Bloomberg TV and radio. Michael, good to see you here in Atlanta. When we consider this housing question, and we know that this is an issue across the country, but what makes Georgia, what makes the United States South different from the rest of the U.S. in that regard?
Well, you just mentioned the institutional investors, and that's a huge issue here. I mean, nationally, I think the industry, the single-family home rental industry, has said it only controls about 3% of the rental homes around the country. So that kind of mitigates the impact, or that's what they're trying to get across. But here in Atlanta, the Metro Atlanta has around 30% of its rental housing stock is controlled by institutional investors. Wow. So so for the people who want to see some kind of restrictions, that's what they point to. Yeah. There's likely to be a much bigger impact in a place like Atlanta than there is maybe in Topeka or wherever.
Well, 30% is a big number. If this became law and those firms were forced to sell all of those homes, what would it mean for prices here in Atlanta?
Well, I'm not clear. Last I'd heard, I think they were trying to unfang. I'm not sure where the latest. I think
particularly when it comes to build to rent.
Right. And I think a lot of the industry has shifted. Frankly, a lot of the homes have gotten so expensive, and there's not a lot of movement. Right. So a lot of the companies have shifted to build to rent. So I think some of them, I'm not sure they're completely okay with cracking down on institutional ownership purchases, but they're a lot more okay with it than were this 2 years ago when the market was insane. Sure.
Well, and obviously, when we consider market dynamics, you still have the stubborn fact that interest rates and mortgage rates are still a whole lot higher than they were, say, 5 or 6 years ago, and therefore people who are locked in at those lower rates are not eager to be moving at this point when we consider these wider supply challenges that all of this feeds into, and there's no sign that is going to improve anytime soon.
No. What I've seen some mortgage bankers association projections that we could be at 6.3% mortgage rates through end of 2027 or so. So I don't know when we're going to get back to I have a 2.8% mortgage. It seems like a dream, right?
You are.
In the Metro Atlanta suburbs. I don't know. Unfortunately, I don't know when we're going to get back to that.
Well, obviously, this could be answering all of the questions we have about housing, with price pressures pushing interest rates higher and a Fed chair who might be handcuffed by what's happening in the Strait of Hormuz on the other side of the world. If we do see continued increases in mortgage rates, does that just keep people nailed in place? Does it prevent more first-time home buyers from coming into the market, or both?
Yeah, you're absolutely right. I did a story, I think it's about 8 months ago or something, and the average first-time purchaser of a new home is now 40 years old.
Imagine that.
And that's pretty amazing.
Yeah.
And so I don't know what's going to move. I think even housing experts are stumped about what's going to move the market. I mean, with rates as high as they are, tied to treasuries, with people stuck in their homes. I mean, it's kind of the administration's trying to do some things. At one point they were claiming builders were price fixing. Other time they're talking about the buying mortgage-backed securities. All of these seemingly have a fairly limited impact. Right. There's not a lot of much they can do to really move the needle on this.
Well, and finally, Michael, we were joined at the top of the hour by Andrew Young, of course, civil rights activist, but also former mayor of Atlanta decades ago, when he was describing to us the city that was very different. He said the skyline behind us here didn't exist when he was mayor. It's a city that has grown very much so, and we've seen a lot of population growth in cities throughout the South, not just happening naturally, but because people are choosing to move here. Can you talk us through that dynamic here in Georgia and in the region more largely?
Yeah. I did a story a couple, 2 or 3 years ago. It was, the number of just a huge surge of people moving into the region. Some of that has frankly slowed, particularly some of the big cities in the South: Atlanta, Miami, Tampa, Orlando, Dallas. Some of them are even seeing what they call net domestic out-migration. It's a fancy word for domestic folks who live here are choosing to move out. Yeah. And when you just look at that domestic population, this is really unusual for some of these markets. They're seeing more domestic out-migration than in-migration for the first time in a while. And so that's a big change in the market. And we'll have to see if it sticks.
Maybe a duck can fix it. That might sound strange, but we're actually going to be joined by a duck next. Is that why you came to see us from the Bloomberg Bureau?
Well, I heard in the green room they talked about ducks, but I thought like little fake ducks.
No, we got a big, real duck.
I was excited to
this
see
skyline we're talking about, I see Google looming, Aflac's another one. They're going to join us next here at our set on the campus of Georgia Tech with the Aflac duck. That this is not AI, it's not digital, it's real. How did we get into this?
We're going to have to talk to management about that.
No, this is going to be fascinating. Hold on for this. We're going to talk AI. We're going to talk about the customer experience and exactly what AI is doing for this fascinating company here. Live from Atlanta, alongside Kaylee Lyons, I'm Joe Matthew. First, we want to update the markets, and for that, we turn to Charlie Pellet, live from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We got it all, from ducks to bulls, bears. I got you covered on Wall Street with the Dow, the S&P, NASDAQ. They are all advancing right now, solidly in the green. S&P 500 index 74.18, up now by 65 points. That is a gain right now of just about 0.9%. Dow Industrials up 580 now, higher by 1.2%. The NASDAQ Composite Index up 328, NASDAQ higher by 1.3%. A slide in oil, lifting stocks and bonds on hopes for a deal to end the war with Iran. Also, a lot of optimism about NVIDIA coming up after the close of trading. NVIDIA higher now by 1.7%. Broader tech rally underway. NASDAQ up 330 now, up by about 1.3%. S&P up 65, up 0.9%. Dow Industrials up 587 on the Dow. That is a gain of 1.2%. The 10-year at 4.58%. The 2-year 4.05%, and the 30-year 5.11%. Gold up $50 the ounce, $45.33. That is a gain for the precious metal of 1.3%. West Texas Intermediate crude below $98 a barrel now. WTI 97.83. It is down by 6.1%. Brent, the global benchmark, 104.73. Barrel of Brent right now down by 5.9%. Bitcoin up 0.8%, 77,555 on Bitcoin. Beyond Wall Street, the U.S. has charged former Cuban President Raul Castro with murder relating to the 1996 downing of 2 civilian aircraft operated by Brothers to the Rescue. Those charges announced moments ago by Acting Attorney General Todd Blanche. S&P up 0.9. That is a Bloomberg Business Flash.
Yeah. Wow. He might get involved with you.
All right, Charlie Pellet, thank you, sir. I wasn't kidding around. If you're with us on Bloomberg TV, you now know that I was not making this up. And, well, if you're on YouTube, the same. Dial us up, Bloomberg Business News Live on YouTube. Kaylee, it's never happened before on Balance of Power that we've been joined by a duck. We got to go wide on this here, right? Now, it's not just a duck. This is Aflac, the duck. That's his name. The name.
He's looking right into my eyes.
Yeah. The namesake of the great insurance company based here in Atlanta. Look at that close-up, man. You were born to be on TV, my friend. And Keith Farley is with us as well, the Senior Vice President with Aflac. Do you guys travel together usually?
We do. When I found out there would be 2 of you, I figured there should be 2 of us.
This is our power panel. I talked about the Peachtree panel, and I think we found it. Are you feeling okay? We're going to... No, okay,
that just means he's excited.
I'm excited as well, yeah.
That's like a wave.
I think this is already getting better. So, we'll have questions for the duck, Keith, but the whole concept here is AI. We've been hearing about it all week. We're on the campus of Georgia Tech, of course, where they're doing amazing work. We're about to hear from NVIDIA after the bell. And companies like yours are trying to seize on this new technology to try to make the customer experience better. This is a real duck, by the way. It's not AI.
No AI here.
How are you using AI to make the business work more smoothly?
Yeah, so I would say while the duck is an AI and it's real, we do look at how we can use AI to improve our customer experience. And for us, what we do is we try to strike a balance between what is truly authentic and human. And when we think about the business we do, we're the #1 provider of cancer insurance in the U.S. and Japan. When someone's been diagnosed with a disease like cancer, they don't want to talk to an AI. They want to talk to a real person on the other end. So what we try to do is figure out what things could we do to free up time for that human so that they can have more conversation with the people, while things in the back end, like maybe the after call notes or the change of address and some of those more rote things can be done by the AI. We try to remind our employees that the first A in AI is artificial. And when you've been diagnosed with a disease like cancer, or you've broken a leg or had a heart attack or stroke, sometimes you want another A, and that's the authenticity.
How about that?
Well, so when we consider the ways in which you still need humans for a lot of this, and the idea that artificial intelligence can at the very least improve some things that don't require that kind of compassion, if you will, can it at the very least result in faster claim processing, people hearing back, getting their payout sooner?
Yeah, it frees up time. So if you think about when a claim comes in, we can have AI take a look at it and highlight and call out all the things that happened and give a quick summary. Then the employee can go in there and make the decision, hey, what's going to be covered and what's not. But it really helps in terms of ingesting the claims, bringing them in faster, to give that faster experience from a claim standpoint.
Really interesting. As this technology accelerates, do you have a division at Aflac that's experimenting with different models? How do you know when it's time to implement something?
Yeah, so I'd say for the last 2 years, it's really been pushed from the top down.
Yeah.
There's been a lot of interest, and so we don't have a specific division other than maybe IT, but really from a business standpoint, we've said that every employee should lean into AI and figure out how can it make your job easier, better, and faster, all in the name of providing for that customer.
Well, and when we consider your customers and the kind of activity that you are seeing, does it tell you anything about the economy? As obviously there is a lot of economic anxiety that stems from artificial intelligence and whether or not we're going to see material job displacement, but there's other factors in this economy, higher price pressures and the like. How does that translate into the insurance business?
Yeah, I think for us and the type of insurance we do, because we provide coverage that, you know, if you get sick or hurt, we're going to provide extra financial coverage. So in these challenging financial times, we see Aflac as a perfect fit for everyone, because the last thing you need here is an unexpected event.
Yeah. We've got a minute. Is the duck insured?
The duck is heavily insured. He has all of our Aflac policies. He's the only animal in the world that we're allowing to have these policies.
Is
Other
that
than
right?
that, it's just Americans and Japanese.
This is amazing. I mean, I can't get over how well behaved. What's the duck? What's Aflac's handler's name? Thea and Karen. You guys are amazing. I can't believe this.
He's been on TV a time or two before. So
How old is Aflac?
He's used. Aflac as a company was started in 1955.
And Aflac the duck?
The duck didn't come out until 2000. So January 1st, 2000.
All right, this has been amazing. I feel like we've had a good panel with the two of you here. I appreciate your weighing in, Aflac. We learned a lot from you today as well. You're always welcome here on Bloomberg. I think we made a new friend.
Yeah, we're going to have you both back.
Keith, thank you. Keith Farley. I don't know if we've worn out our welcome. We're going to go hang out with the duck here. Hey, Matt, we did it. Matt Shirley, thank you for introducing us to Aflac. Alongside Kaylee Lyons, I'm Joe Matthew. We're live in Atlanta. We'll meet you on the late edition of Balance of Power at 5 p.m. Eastern. How do we top this?
On Bloomberg TV.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live from the Bloomberg Business Week studios in New York, on TV, on Bloomberg Radio, on Bloomberg Originals, and YouTube. It is Bloomberg Business Week Daily. That is Emily Grafeo from the Bloomberg News cross-asset team. She's in for Carol Masser this afternoon and tomorrow as well, and we are just seconds away from the minutes from the third Fed decision of 2026. It was back on April 28th and April 29th. It was Jerome Powell's last as Fed chair. Our Bloomberg economics team noting that the minutes will give more insight into the split rate hold decision and show, quote, many or even most participants saw a case for neutral language. Those minutes now just crossing. A redhead on the Bloomberg terminal, the Fed saying that many preferred removing easing bias from the statement. The Fed also saying the majority saw a hike likely warranted if inflation persists. The officials generally judge rate pause will be longer than previously thought. In Washington, D.C., Michael McKee is Bloomberg News Federal Reserve reporter. He is international economics and policy reporter. He's standing by for the latest. Hey, Mike.
Well, it does appear that the minutes of Jay Powell's last meeting as Fed chair show that members were more concerned about the possibility of a rate increase down the road than perhaps the markets were thinking. High energy prices contributing to inflation because of the Iran war, amid concerns the war could drag on long enough that inflation expectations become unmoored. While participants generally expected that tariff-driven inflation would ease during the course of the year, some noted tariffs could be increased, leading to additional upward pressure on prices. And given all that, almost all participants noted there was a risk that the conflict in the Middle East could persist for an extended period, or that even after the conflict ended, the prices of oil and other commodities could remain elevated for longer than expected. The vast majority noted inflation could take longer to return to target than they had previously expected. A majority of participants highlighted, the minutes say, that some policy firming would likely become appropriate if inflation were to continually run above the 2% target. To address this possibility, they continue, many participants indicated that they would have preferred removing the language from the post-meeting statement that suggested an easing bias. And remember, it was a 9-3 vote to remove that bias, but apparently a number of additional participants who weren't voters agreed with the three who wanted to take it out. Overall, the economy was performing well. The minutes say the labor market appeared stable, although uncertainty about the future outlook for the economy might have been holding down hiring. There was also an extended discussion of financial stability, with participants concerned about the possibility of losses in private credit that might lead to a broad credit contraction. A few worried about hedge fund participation in the Treasury market, noting that unwinding of leverage positions by those institutions could generate broader financial market pressures. And many mentioned concerns about cybersecurity. Tim and Emily?
My ears perked up when you said private credit. I mean, how unusual is it to see the central bank opining on a specific asset class in these minutes? And do we have, I know you're just reading them right now, but do we have any more insights into more risks that they flagged on that sector?
We don't really have any more. It doesn't go into great detail about it, but remember, private credit's been in the news a lot, and there have been some funds that halted redemptions, and so there are questions about what that would mean, and so apparently members decided that they were going to discuss it, and they did express some concerns, perhaps more than we've normally heard, certainly from participants in the private credit space who say it's not a risk. Fed officials see that there perhaps could be something out there.
Hey, Mike, on the war, that got me thinking about what the Fed actually can do when it comes to a higher inflationary environment as a result of higher oil prices. It's not like the Fed can bring down oil prices. They can only tamp down demand. What does an extended period actually mean in Federal Reserve speak, and how it could affect rate policy?
Well, they don't specify, but it probably means months, and they're talking about more than just high energy prices. They're talking about high energy prices feeding into other parts of the economy, and parts of the economy that perhaps use petroleum to make products or to deliver products, and that would push inflation expectations higher as a broader price increase started to affect Americans. And that's what they're particularly concerned about. And what they did seem worried about is that this conflict could, and so far has, lasted a lot longer than the administration suggested it would. And so as long as that continues, that increases the risk of the inflation expectations problem.
Michael McKee, Bloomberg TV and Radio, international economics and policy correspondent, live at the Federal Reserve in Washington, D.C. Thanks for that, Mike. Well, now to the most anticipated IPO of the year, one of the most anticipated IPOs of the year. No, we are not talking about SpaceX. OpenAI is preparing to file for an IPO in the coming weeks. It's targeting a public debut sometime in the fall, this according to a person familiar with the matter. The Wall Street Journal reporting on OpenAI's IPO filing plans earlier on Wednesday. Reuters had reported in October that the IPO could value the company at as much as $1 trillion. I want to bring in Ed Ludlow, the co-host of Bloomberg Tech on Bloomberg TV. He joins us from our San Francisco bureau. Ed, we were going to talk to you about SpaceX at one point, today or this week. That's what we've been talking about. And then we see the news that OpenAI could be filing in the coming days. What else can you tell us?
Curious timing.
Is it because of? Yeah. Is it because of the lawsuit, or is it because of what SpaceX is doing? Are these? There's a lot of Elon tied up in this.
Yeah. So our source at Bloomberg is saying that it's coming weeks. The Journal had said coming days. And there is a distinction between that in when you're filing. The net is OpenAI being in a position where it could be ready to IPO September. We had been much more firm in our reporting on Anthropic, that Anthropic was looking at October for an IPO, but very much framed in a race, right? So to answer your question, the overhang was the trial. Musk suing Sam Altman, the CEO of OpenAI, and the other co-founder, Greg Brockman. And indeed, Bloomberg Intelligence has written about this in their research, right? Once the jury decided to reject Elon Musk's suit, even though Musk plans to appeal, it removed an overhang on the idea that OpenAI could move forward to a IPO, in part because of the potential financial penalty that Musk was pursuing. That's where we stand.
But still, Ed, the timing curious for maybe a few more reasons as well. I mean, we have SpaceX also preparing to go public. We have Anthropic. You have to wonder whether all of these firms are kind of rushing to tap into the public markets before the AI momentum slows down.
Yeah, I guess that's an important point. Whenever you have a big IPO, particularly a technology IPO, there always has to be a story behind it, right? Mm-hmm. Our reporting is that SpaceX's S1 could flip public today. Brace. It could be a wild few hours to come. But there's also the issue of is there infinite liquidity in capital markets? If SpaceX is going to do the biggest IPO of all time at a valuation of more than $2 trillion, raise $75 billion, and then do the math on how much of the company they offer, does that take the oxygen out of the room for an OpenAI or an Anthropic, right? If OpenAI and Anthropic both want to go public, towards that September, October timeframe, end of the year, that gives investors a really interesting choice. And part of what we've been reporting over the last 6 months in aggregate is Anthropic has a lot of momentum right now. And the big take overnight is a case study of SoftBank being very concentrated in OpenAI.
Yeah.
These are all considerations.
I love that story. If you missed that one, check it out on the Bloomberg terminal. Today's big take, as Ed mentioned. Ed, on the Anthropic side of this, does timing matter who's first? And because if we think about these two different companies, the way that they're valued and what they offer, is it fair to say that investors will be making a choice of one or the other?
It's very bifurcated in private markets. There are those that stick to OpenAI, right? SoftBank is an interesting example. There are several venture firms and late stage or private growth equity investors, indeed sovereigns, that have exposure to both. the latest reporting from us is that, Natasha and I reported, I think it was last week, week before, Anthropic is now sort of taking more seriously raising money in the private markets, like more than 35 billion at an evaluation between 900 billion and 1 trillion. The reports on what OpenAI's valuation would be in an IPO is 1 trillion. And basically the way that it's put to me, Tim, out here on the left coast or the west coast is you have Anthropic, OpenAI, Google, Meta, XAI, several lanes, but in the market, is there room for all of them? And that conversation comes up quite a lot.
And I mean, you have to wonder also, like, how much money, how much more capital do they really need to raise? Ed, can you tell us a little bit about, like, what are really the stated goals, at least for OpenAI, for what they would do with this new capital that they would raise from an
Well,
IPO?
they do. The argument that OpenAI, to their credit, has been consistent on is that if they had more compute, users of their technology would not be constrained, right? That's something that's been talked about on social media just in the last 24 hours. But they could also offer more stuff. The concern is different. The concern is that the revenue growths just simply do not keep pace with the spending growth to justify an IPO, right? When you go public, you through the mechanism of the filing, you open that up to the world about your business and the finances of that. And, in the world of tech, profit isn't always important, but investors still want to kind of see what the plan is longer term, the total addressable market and the road to profit. And so that's more of the calculus with OpenAI specifically.
Well, let's talk about those books, Ed. I mean, it's a private company at this point. It's, we don't know. We don't have full disclosures at this point, but what can you tell us what has been reported when it comes to OpenAI's books? What numbers do we know?
I'm trying to scramble to pull up my notes now, but basically, the revenue run rates in the tens of billions, and OpenAI's own projections for the coming 12 months through to 2030 is for a lot of growth. But you have to remember that OpenAI is on the hook for also almost $1 trillion of projects around the world, largely relating to infrastructure, where there's a mix of it's committing capital, or a partner is committing capital on its behalf, or it is on the hook to be the lead tenant and lease that capacity, but somebody else has built it. So that's the underlying concern. Revenue in the tens of billions, but the exposure, the committed spending over time being in the hundreds of billions, and that being worrying.
Did I hear you say anything about profit?
Yeah, I don't. I just don't think we're anywhere near that, right? How in the economics of AI, for a company that trains a model and then deploys it through a series of products, it's on a dollar per token basis.
Okay.
Right. That's the study, but your compute costs will directly factor into that.
There are some people out there, Ed, who may be old-fashioned and say maybe a company should wait until it's profitable, at least for a few consecutive quarters, to go public. Is that a different era?
Oh, I don't know. As a student of Silicon Valley, and one of the reasons I came here to San Francisco, like the people that back those companies at an early stage, right through to taking them public. Whether it's software or hardware, there's not really that focus. We should not get into this, but it's like I remember the days where people were fixated on whether Uber would have positive EBITDA.
Yeah,
and it's like,
and there are plenty of companies, we should know, there are plenty of companies that do go public that are not yet profitable, and there's definitely investor appetite. No question.
Yeah. The one thing I would say real quick, remember Rivian, right, was the 6th biggest IPO in US history. And that was in 2021. Yeah, here we are, they're still not profitable. So, that's a good indicator.
Who is poised to benefit most from the OpenAI IPO? And I imagine some of the investors in OpenAI right now are some of the ones that are also tied up in these other large companies potentially going public soon.
Well, it's a mix of the strategics, which are other technology companies. I would say to the audience, go and read our reporting, which was linked to the trial between Elon Musk and Sam Altman, again, dismissed by the jury and the judge, but about Microsoft's economic gains from its initial investments in OpenAI. And then at the other end of the spectrum, you have somebody like Vinod Khosla of Khosla Ventures, a venture capitalist who wrote one of the first institutional checks into OpenAI at the time that was at issue in that trial, like very early stages where it was a very different beast. And so over time, and then the people themselves, right? Sam Altman has a very curious lack of stake in OpenAI, which you can read about, Greg Brockman has a more sizable stake. You know, the individuals at play as well. That is what's at question here.
Ed, remind us how OpenAI has been changing its business, sort of trimming or more focusing on certain parts of its business ahead of an IPO. I'm thinking about Sora, for example.
Yeah, so like, you know, Sora was an interesting project. There was a partnership and sort of financial relationship with Disney that was scaled back. You know, Sora being a tool that is a text-to-image tool. So when we talk about generative AI, generative can mean you create something that's in different forms. We're very accustomed to ChatGPT, where the input is text, the prompt is text, and the output is text. In Sora's case, it was image, but it didn't, you know, both on usage and the compute costs and the net results of it didn't really work. So that's part one. The other part, you know, and this is where it pits itself more closely with Anthropic, and based on our recent reporting, Elon Musk's XAI as well, is going after the enterprise customer. You know, think in the world of finance or healthcare, etc. Getting those organizations at scale to use either the underlying model or to use the tool, that has been an area where Anthropic really focused, and it's been a big driver of revenue for growth for them. OpenAI's origin was ChatGPT. Everyday people like you, me, and Emily just using ChatGPT for hours and hours, but they want that enterprise business to kind of outpace it.
Right. I'm very curious if there's going to be any use of ChatGPT, at least on the banking side. They're probably not allowed to do this, but drafting these prospectuses. But that's not my question for you, Ed. My question is, of course, when the paperwork finally comes out, can you sum up like the one or two big questions that you have about this company that will potentially be revealed in this paperwork?
Wait, we're still talking about OpenAI?
Yeah.
Well, so this is the thing, right? So, like, there's mechanics to this. What we're talking about is, in the first instance, reports from various media, including Bloomberg News, that they are thinking of filing confidentially. It hasn't even happened yet.
Right.
Then there's a period of time where you don't know what's in it unless you know somebody pretty high up on the inside until it flips public. That's the moment we're waiting for today with SpaceX. SpaceX filed confidentially May 4th, not May 4th. Tim, when was I in Florida for Artemis? The beginning of April.
Yeah, beginning of April.
Yeah, so then that was when we reported, citing sources, the confidential filing. What happens after that is it goes back to the SEC. The SEC makes recommendations for how it could be changed and updated. And at some point, it goes public. And that's when you find out about everything. So I'm not answering your question, Emily, but I think we're probably a little ways off from learning. But it's about financials, where they see the addressable market, and then surprises along the way, like the structure of the company,
but
ownership.
I'm really glad you went to SpaceX, and that's where I want to end just in the last minute with you or so. And it's about SpaceX AI, as it now is, versus, Anthropic and OpenAI, specifically in the context of OpenAI and a potential IPO. Because SpaceX now has XAI as part of it, does that pull some oxygen/interest from OpenAI and Anthropic?
Yeah, so like one easy answer is like debt. So when SpaceX merged with XAI, the SpaceX part was valued at about $1 trillion, the XAI part $250 billion, so the combined entity $1.25 trillion. But SpaceX also took on XAI to its balance sheet, which would include debt. So then that should be disclosed in the S1 when it gets flipped publicly. There should be something in there about that. It's like also the story. Why is a rocket company who's building constellations of satellite for internet, Starlink, and wants to build data centers in space, acquiring a frontier lab? That should kind of be answered, right, in the document and prospectus, because it will help investors understand it ahead of the IPO.
And there's also the question, Ed, that we don't have time to answer, what it means for Tesla and Tesla shareholders, because that's part of the conversation too. Ed Ludlow, the co-host of Bloomberg Tech on Bloomberg TV. Coming up next, well, we're going real estate and more. That's on Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Oil is slumping. Equities are gaining on hopes of a deal to end the war in Iran. Also, as retail companies delivered solid earnings. And, of course, coming up after the close of trading, NVIDIA, the big event. NVIDIA shares ahead of that report, up now by 1.6%. Right to the equity numbers, with the S&P up 65 at 74.18, higher by 0.9%. Dow Industrials up 561 on the Dow, a gain of 1.1%, while NASDAQ up 336 for the NASDAQ Composite Index, a gain of 1.3%. The Russell 2000 Index of small cap shares up now by 2.2%. 10-year 4.57%, the 2-year 4.04%, and the 30-year 5.11%. Gold is up 1.2%, 45.35 the ounce, while West Texas Intermediate crude oil 98.32 a barrel. WTI right now down 5.6%. Barrel of Brent crude just below 105 a barrel, down 5.1%. Again, recapping here, stocks are moving higher. S&P up 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Tim and Emily, that is a Bloomberg Business Flash.
Hey, Charlie, thanks for that update. Lots of news this afternoon. It's not just NVIDIA earnings after the bell. It's not just a potential OpenAI IPO. It also has to do with what's happening around the world, and specifically in Cuba. The U.S. charged former Cuban President Raul Castro with murder, sharply escalating a standoff with Havana as the Trump administration attempts to force change on the island after nearly 7 decades of communist rule. Miles Miller is following this story. He's Bloomberg News senior reporter who covers law enforcement. He joins us from our Miami bureau. Miles, what's the latest?
Yeah, so this indictment really boils down to an indictment against Raul Castro, some heads of the military, as well as the pilot involved in the downing of a plane that was being flown as a rescue mission. And among the charges are the conspiracy to kill U.S. nationals, as well as the destruction of an aircraft and 7 counts of murder. Let's take you back to 1996, February 24th, 1996, the shoot down of the brothers to rescue planes over international waters. That is the pretext that the U.S. government is using to indict Raul Castro. Now, you may be thinking, is this possible? Will he be able to be brought to justice in the United States? We just heard from Todd Blanche, the acting U.S. attorney, who says that they expect him to come here by some means. Now, what we learned is that he won't speculate on just how he'll get here, but we heard from the Cuban government about 30 minutes ago, and they say that these charges are basically hogwash and that they have no bearing. So it doesn't seem as though the Cuban government will be getting Raul Castro here anytime soon. He's about to turn 95 years old, but the U.S. government expects him to answer to these charges, very serious charges. 400 people in that room in Miami, just a few blocks away from here, to see justice served in this case.
Miles Miller, Bloomberg News senior reporter who covers law enforcement, joining us from our Miami bureau. We'll be sure to bring you updates as they do cross. Meantime, as Alex Semenova reminded all of us yesterday, bears have had a tough time over the last few weeks. This epic rally, 17% in the S&P 500 since the end of March. One of those bears is Thomas Thornton. He's president of hedge fund Telemetry. He joins us here in the Bloomberg Business Week studio. Also with us is Alexandra Semenova. She's Bloomberg News stocks reporter. Good to have you both with us. Tom, I just want to start with you. First of all, thank you for coming on. I love the IBs you send me all the time with the technicals, pointing out what you're seeing in the market. So it's good to have you on set. You see a lot of risks out there right now. What are you seeing that you think other people are ignoring?
Well, I think the biggest risk right now is positioning, clearly. And I'll start at the top.
Yeah.
The Bank of America Global Fund Manager Survey came out yesterday, and it showed that equity exposure is at the highest level ever. I mean, we're going back to 2000. So we then drill down and say, well, where's everybody, in this market? Technology versus the S&P made a new relative high with the S&P. Okay, great. No other index did, or sector did. That's a troubling first, clue right there. And then if you run the semiconductor index versus the XLK, which is the technology ETF, you see that semis have clearly done it in magnificent form since the beginning of the quarter. Then, if you think about Goldman Sachs, their prime brokerage business, they put out great data, and they said that almost 20% of their clients, hedge funds, institutional investors, are weighted towards semiconductors. Okay, that's a lot. Now, if you think about the DRAM ETF, it's $10 billion apparently today, and maybe it's a little bit more today, but in 6 weeks, $10 billion is a record. Now, this is not necessarily normal behavior, and these are not necessarily normal long-term ETFs being set up. Now, Korea, I'm reading about Koreans ages 50 to 60 plus that are turning in their life insurance policies to buy the Korean market that has gone parabolic. 50% of the Korean market are two stocks. They're memory stocks, Samsung and SK Hynix. Now the Koreans, the leverage ratios are off the charts. So not only are they speculating in their markets after a big run, it's very narrow. And to me, I think positioning trumps fundamentals right now. The fundamentals, every semiconductor technician or CEO will say, oh, they're great. Everything's great. We've got a long lead time. They say that every cycle. Maybe this cycle's gone a little longer. I'm guilty of thinking that it would end. So that's where people are. The boat is a great boat, but everybody's on one side and it can still tip over.
You mentioned, Tom, all these areas of the market where things are getting euphoric, the DRAM ETF, Korean equities. We're also getting SpaceX going public at a time where things are already looking a little bit too enthusiastic. What does this add to that existing euphoria, and does that make you more concerned? We also have a pipeline of other mega IPOs, OpenAI, Anthropic. What is that telling you?
Well, a lot of the valuations are sort of made up. And if you think about, they made up the XAI, $250 billion. They merged it with SpaceX. Of course, Elon Musk is the largest holder of both, so he gets more power. You had 11 of the partners at XAI leave. You had 80 programmers leave. I'm not quite sure what is there for $250 billion, but the IPO will probably work. It's a small float, and the small float IPOs tend to go up. Everybody gets excited about it, but the valuation doesn't make any sense to me in this decade. So I'm not going to be buying it at all. And it could go up. Everybody loves Elon. They'll probably merge with Tesla. Tesla's business is starting to falter. So it all just sort of makes sense for Elon.
You were talking about positioning and how that's driving a lot of the equity market gains that we've seen. And I'm curious how you kind of see that ending, because it seems like what you're saying is the reason why stocks have kind of shrugged off the rate rise, the volatility in oil, is because people are continuing to pile into the market. How do we know when people will stop doing that?
One of the things that is actually gives me a little hope is that we're starting to see a lot of stocks hit new 52-week lows. And again, the technician nerds that I'm talking with, like the Jonathan Krinskys out there, we're all looking at seeing more new 52-week lows than highs, and that's remarkable because the S&P is up around 24% year over year. So if you're seeing new 52-week lows, things underneath are really a little shaky. So I think there's going to be some sectors and ideas that make sense to buy, that the valuations get to levels that you can do.
We're going to get a read on NVIDIA after the close today, and I think that will set a big part of the conversation moving forward for a lot of these companies. But if we go and utter those words that nobody should ever utter, which is this time different, then maybe we think about it in the context of productivity gains and productivity increases as a result of this technology, which some have called a new industrial revolution. Is that wrong?
No, I think that AI is here. It's it's fascinating. It's getting better.
But it's overvalued. I
think there are certain places that show overvaluation, and I think the biggest bottleneck for this, well, there's a couple: funding, all the build outs. There's a lot of circular stuff. A lot of people have talked about that. But I think the main one is powering the data centers. And I still think that that is going to be the difficult thing, to turn on the lights. You can build out the data center, but you really need more power. And power plants take time to build, take time for approvals. So I think that if anything starts to wobble in this, you might see some push-outs as far as when the data centers are going to get built. Again, the funding issues, higher rates, that's not helping. Private credit stuff is still out there as a risk. So that would be the one thing I'm watching right now.
It feels like people continue to be unanimously bullish despite all these risks that we're all very aware of. What has it felt like for you to be a contrarian? How painful has it been?
I've aged 20 years in the last 6 weeks. I can say that my P&L has not benefited, it's really suffered. But I also know that since I've been in the markets a long time, I've seen these things happen. They tend to stretch a little longer, like this one. But when you see the narrowness of where people are, you see the type of people that are buying these things late after a big move, I have confidence that I'll be proven right. And, it's not that I'm, overly bearish all the time. I do find times where I get overly bullish.
What does right look like to you?
What do you mean by that? Like,
you said you'll be proven right over time. What is that? Does the S&P 500 have to fall to a certain level for you to feel like you've been proven right? Does NVIDIA's valuation have to fall? Where does that manifest?
Well, I think that just because of the positioning right now, I think there could be a catch down to where the rest of the market is. And it's not necessarily saying the businesses are under, are bad or something really bad is happening. I just think that people will see and maybe panic and sell, and they're levered again. So I think that's kind of where I see things. And I was covering part of my NVIDIA short at the lows. I covered, some of my technology stuff, semiconductors. I didn't cover enough. Let's just, I want to, but that's it's been rather extraordinary. When you had 18 days in a row of the semiconductors going up, I seriously was, questioning things myself, life,
You're getting philosophical. Look, I don't think you're the only one. Right now, there are certainly a lot of vocal bulls out there, and we appreciate the way you're thinking about things and you sharing it with us on Bloomberg Business Week Daily.
Well, thanks.
A big thank you to Thomas Thornton, president of hedge fund Telemetry. Also, Alexandra Semenova, Bloomberg News U.S. stocks reporter. We did mention that we have NVIDIA after the bell today. This on a day where we are seeing the S&P 500 snap a 3-day losing streak. The S&P up close to a full percentage point right now, 74.22. The NASDAQ Composite up 1.4%. The Dow up 1.2%. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil is slumping. Stocks are pushing higher. Equities are gaining. Oil prices are dipping on hopes of a deal to end the war in Iran. Also, we got retail companies delivering solid earnings. And speaking of earnings, NVIDIA reports after the close of trading. NVIDIA shares right now, they're up by 1.5%. Tech is rallying. NASDAQ up 1.4% right now. The NASDAQ 100 index up 1.5%, keeping it all in context. S&P 500 index up by 1%, higher right now by 71 points. Dow Industrials up 610 on the Dow, up now by 1.2%. The 10-year 4.57%. The VIX just below 18 now. The 2-year 4.04% with a 30-year at 5.11%. Gold up $58 the ounce to $45.51. Spot gold up 1.3%. West Texas Intermediate crude now below 98 a barrel. WTI down 6.1%, 97.82. Barrel of Brent 104.68. Brent crude down now by 5.9%. Bitcoin up 0.6%. Bitcoin at 77,443 on Bitcoin. OpenAI is preparing to file for an IPO in coming weeks and is targeting a public debut sometime in the fall. Companies working with Goldman Sachs and Morgan Stanley to make a confidential IPO filing as soon as Friday. Goldman up 5% right now, Morgan Stanley up 4%. Recapping, S&P up by 1%. Tim and Emily, that is a Bloomberg Business Flash.
All right, thanks for that update, Charlie. Do appreciate it. Our Bloomberg News team reporting today that Scion Group and Ares Management bought 12 U.S. student housing properties. This is a fund from Ares for roughly $910 million. It's the first deal for this newly formed partnership. The venture purchased the properties from Harrison Street Asset Management, the sites near schools including the University of Notre Dame outside of South Bend, The Ohio State University in Columbus, James Madison University in Harrisburg, Virginia, among others. Rob Bronstein is with us. He's CEO of the Scion Group. It's one of the world's largest owners of off-campus student properties. Also with us here in our Bloomberg Business Week studio is Nora Melinda. She's markets correspondent for Bloomberg TV. Rob, the new partnership will focus on acquiring these off-campus buildings. They're near the top universities, growing enrollments. Other markets where you purchase these properties, Tempe, Arizona, Binghamton, New York. Where else are you looking that you haven't bought?
Sure. Well, I have to say, as a University of Michigan grad, I'm not thrilled that you're calling the University of Notre Dame and Ohio State top universities, but we go with the
Well, my wife went to the Ohio State University, so some might say I'm a smart man for saying that.
Yeah. You know what? We really like flagship state universities, particularly in growing Sunbelt states, and even more so where they have a STEM focus. So, for example, some of our largest campuses would be Texas A&M, University of Florida, Florida State, Purdue University. We're at about 90 campuses now. There's probably another 20 to 30 that would fit our investment thesis. And by and large, they fall within that theme of large, I would say at least 20,000 students, typically 30, 40, 50,000 students. We tend to prefer public over private, but it's situational. And again, schools that we think really represent a strong return on investment as far as the tuition dollar.
Yeah, talk a little bit about how the return in student housing compares to other commercial real estate sectors. How do you actually generate a return here?
Well, look, we actually, we've been at it for 26 years. We've been ever refining the skills and the capabilities we have. We think we've built, really the premier operating platform for student housing. It has certainly similarities to other types of commercial real estate, particularly multifamily, senior housing, but there are a lot of nuances that are specific. Some of them include the fact that we're dealing with 18 to 24-year-old consumers who are tip of the spear as far as technology adaptation, the fact that they're often looking for a different experience as they matriculate in their sophomore, junior, and senior year, and things just move at a really, really fast clip within student housing. That certainly, when we talk to people in other areas of commercial real estate, that's their observation of students. And again, I think it's the age and the stage of life that our customers are at. One of the reasons why we and others have found the sector to be so resilient is because of just how much families prioritize higher education for their children. A great story I like to tell is our chief operating officer came from Disney, and he said, families like to save for 4 to 5 years for a Disney vacation. I said, that's great. Families save for 18 years to get a college degree, and maybe even before the kid is born in this country. And that's really what makes it so strong and so resilient, is the importance that we as a society place on being able to give this to our children, our grandchildren.
Rob, how are you thinking about demographic shifts, affordability pressures, and just broadly changing enrollment patterns right now?
You know what? I feel gratified that we've been focused on this for a decade. Since I'd say about 2015 or 2016, we've been extremely focused on the schools and then the properties within those schools that represent the greatest value. So, the 105,000 beds that we own and operate across the country, and this new acquisition fits squarely within that, is in the 50th to, I'd say, the 75th percentile in rent price. And we think that casts a very wide net as far as value and affordability. I think that people are absolutely right to be concerned about some of the highest end product that is being added with just ever more amenities and ever more cost. That's not where we play. That's not where this portfolio is. So I think you want to look first and foremost to a university that represents a good value. And so getting an engineering degree from a public university, for example, is about as strong as value could be. And then once we're at a school like that, if we can cast a wide net of product locations and floor plans and price points that across the board deliver value, that's where, we feel really comfortable for us and our investors being.
How do you think about the idea of fewer foreign students really impacting the pool of potential renters when it comes to student housing?
Across our portfolio, it's typically in the low single-digit percentages. It's 1%, 2%, 3%. And by and large, those are graduate students. Our portfolio is predominantly undergrads. I will tell you, compared to other international markets where students coming from overseas are a very, very large component. If you look at Australia, or if you look at the UK and Spain, for example, those are heavily dependent on students coming from the US, coming from Korea, coming from China. That's not been the case in the United States, never been the case in the United States. What's really unique, I think, about the US compared to other markets is just not only first of all, we're by far and away the largest market for higher education in the world with over 20 million students. But on top of that, the lifestyle for undergrads in the United States is to often travel hundreds or thousands of miles away and have a true residential experience. That's not as much of a phenomenon as you go around the globe. And so for our portfolio, again, we may have certain assets that might be 5 to 10% international students, but by and large and across our portfolio, it's around 1 to 2%, and I don't really see that changing.
Just in the last 45 seconds here, Rob, I know some might not agree that these are top universities, but the universities that I mean, I would, but I don't know how Rob feels. Some of these are really competitive schools, though. These are
not happy about Notre Dame, but we'll make it.
These are really popular. There's a ton of demand for students to go to these schools. Some, smaller regional schools are actually losing enrollment, though. So I'm wondering how much is this really a bet on these elite universities continuing to consolidate demand versus a bet on, student housing in general?
You are 100% right that a long overdue consolidation is occurring in U.S. higher education. I think that smaller liberal arts colleges and lower tier public universities are going to continue to be under pressure. Fortunately, this portfolio and our overall 161 community portfolio has long been has solely been focused on larger, typically public universities. So that trend is happening. It's not going to reverse. I think when you look at other sectors of the economy, like healthcare, for example, I think higher education is undergoing a similar type of consolidation. And absolutely, the winners will be the largest, most resource school, and particularly the ones that I think that families can really, it's a no-brainer that they're getting a lot of return on their tuition dollar investment.
Rob Braunstein, CEO of the Scion Group, joining us from Chicago. Also with us, Nora Melinda, markets correspondent for Bloomberg Television. A big thank you to both of you. Just some breaking news that we're getting. A runway at LaGuardia has been shut down after a sinkhole was spotted nearby. The runway was immediately shut down, and travelers should expect delays and cancellation, according to the airport, particularly with forecasted thunderstorms expected later today.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. We are just over an hour away from the close of equity trading, and the S&P 500 is snapping a three-day losing streak, up right now 0.9%. The Nasdaq Composite up 1.3%. I'm pulling up shares of NVIDIA because that is reporting after the bell. They're up 0.7% off of earlier highs. This is a company that is the most valuable company in the world, a $5.3 trillion market cap. It was just a couple weeks ago when we were talking about it's pretty close to $6 trillion in market cap.
Right. Well, that's a good point that you raised, because just a few days ago it had raised something like $900 billion in market cap. But we are seeing a rally today, not just in NVIDIA, but